Welcome back to Power Breakfast on CNBC TV 18. Now getting you the updates from the US market. Wall Street rose on Thursday, extending gains from the previous trading session as easing geopolitical fears triggered a broad-based rally across markets. The Dow Jones advanced more than 300 points, recovering from losses seen earlier this week. The S&P 500 also moved higher, ending the day up more than 0.5%. Let's go across to CNBC's Peepa Stevens to get us that update and wrap on what happened on Wall Street.
U.S. markets were up across the major indexes in Thursday trading as Wall Street posted its second straight day of gains after President Trump called off European tariffs over Greenland. The Dow was up 307 points, the S&P gained 38 points, and the tech-heavy Nasdaq rising 211 points. The Personal Consumption Expenditures Index for the month of November was released by the Bureau of Labor Statistics Thursday. It's the Fed's preferred measure of inflation, and it showed the rate at 2.8%. That's still above the Fed target of 2%, but in line with economists' expectations. It released October numbers at the same time, both delayed because of the government shutdown. The figures showed a 0.2% increase each month for both the headline and also the core numbers, which exclude volatile food and energy prices. President Trump today sued JP Morgan Chase and CEO Jamie Dimon for $5 billion for allegedly debanking him by closing his accounts and those of related entities in the wake of the January 6th insurrection at the Capitol. The president's suit says the move was made for woke political reasons. In a statement, the country's largest bank says it believes the suit has no merit and that while it does not close accounts for political or religious reasons, it does close accounts when they create legal or regulatory risk for the company. Shares of JP Morgan were up about 1% today. That's what's happening here in the U.S. Back to you in Mumbai.
Thanks so much for that. But now let's move on and get you the latest update on Trump developments in a special segment, Trump Watch. First update for the day, U.S. President Donald Trump held a signing for the Board of Peace during the World Economic Forum in Davos in Switzerland. Trump was joined on stage by leaders, foreign ministers, and other top officials representing 19 other countries, including Argentina, Qatar, Azerbaijan, Indonesia, Hungary, Bahrain, Morocco, Pakistan, and Saudi Arabia, to name some. Now, moving on, also comments came in on from him on the Fed chair. He said that the candidates to serve as the next Federal Reserve chair have been interviewed by him, and he has finished that process. It was reiterated by him that someone is already in mind for the job. The announcement is expected very soon, and he said a highly respected and well-known individual is something that he described as someone who will perform well in the role. Moving on to some updates on the Greenland front from Trump. Trump said that the deal was still being negotiated. He said that the time limit is infinite, meaning this deal, when and what the negotiations take place, there is no timeline for that, and it will be there forever. Listen to what he had to say.
We can do anything we want. We can do military. We can do anything we want. And it's being negotiated, and let's see what happens. I think it'll be good. We're all going to work together, and actually NATO is going to be involved with us. We're going to be doing in conjunction, parts of it in conjunction with NATO, which is really the way it should be. U.S. won't have any expense because we're not going to have expenses other than building the Golden Dome. We're going to build the Golden Dome, and we'll have participation in that also. The cost of the Golden Dome, we'll have participation in that also.
Now, moving on to updates on the Russia-Ukraine front, he said that he had a very good meeting with Zelensky. He said that the end of the war in Ukraine has been facing some hurdles for the last 1 year, and the same hurdles that have been continuing. But now seems like Putin and Zelensky want to make a deal. That's the word that's coming in from President Trump. Now, also, in terms of updates on Iran, he said a big force is going towards Iran, but adds that he would rather not see something happening in Iran. To end with, in terms of updates there, he spoke about meeting with the Chinese President Xi Jinping in April and said that Xi Jinping would be visiting US maybe towards the end of the year. So that's all we have in terms of today's Trump Watch edition. Up next, we're going to actually take a very short break and come back with some excerpts from our conversation with Bain Capital's chairman. Stay tuned in for that conversation from Davos. Welcome back to Power Breakfast on CNBC TV 18. Now getting you another exclusive from Davos 2026 in a conversation with Shireen Ban. Bain Capital's Chairman Manny Masida says that India is no longer a small global power with the kind of population and the opportunity in the domestic market. Listen in to what the take was.
Let's talk a little bit about India in the context of Carney's medium power thesis. And do you believe actually the medium powers or countries who are not firmly placed between this US-China battle will in fact benefit from what is going on today?
I would probably place India squarely. I don't know. I would not consider you a small power. You know, the world's largest population, the world's a very attractive market. So. Just the recognition of that, and I don't know that the world is as simple as it's two poles and where are you. I guess that's part of his thesis. You have to play multiple sides. You have to understand. And so the fact that India is building, let's call it multiple bilateral relationships with different countries it's arguably it's a good thing. And it's the right thing. And you have to play that and balance it. And by the way, you know, those are country strategies. Companies are doing versions of that strategy too. Because it goes to, well, where do I do business? Which suppliers do I go to? Where do I hire and move my talent? And for all that's happening, you know, as you and I have talked the last few years, India is a high priority market for the multinational corporates and private investors relative to the other markets in the world, right? It's a great domestic market. It's upgrading its capabilities in infrastructure, in AI, in energy. You know, China used to be higher foreign direct investment than India. Well, India passed China.
Now, at the World Economic Forum in Davos, new tensions between Washington and Europe over Greenland drew attention. But Ukraine's president worked to refocus leaders on a longer war. What Zelensky said and launched an attack on European leaders over their support for Ukraine. The Ukrainian president declared Kyiv was living in a Groundhog Day, adding that Europe loves to discuss the future but avoids talking action against Russia. Zelensky also met with President Donald Trump, who says efforts towards a peace deal continue, though no breakthrough is still in sight. Okay, that's all the time we have on this edition of Power Breakfast. Thank you so much for tuning in. Up next are Bazaar Morning Call.
Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. Welcome to Friday's edition of Bazaar Morning Call. We're coming to you live from the CNBC TV 18 Motilal Oswal studio. I am Rima. With me is Nigel and Prashant will be joining in just a bit. Nigel, finally, we've come to Friday. It's been a tough week for our markets. Despite the recovery that we had yesterday, where we snapped a three-day losing streak, week to date, the Nifty is still down 1.5%. The midcap index is down 2.5%. The good news is global cues are a lot better as we begin trade. For the second day in a row, Dow rallied. And with the up move that Dow had on Thursday and on Wednesday, it's pretty much erased all of Tuesday's losses. Yeah. So week to date, the US markets are flat, but the Indian markets are under pressure. So the question is, will the recovery that we had yesterday extend itself? The GIFT Nifty will come up for you on your screen. For now, it's flat, but most of Asia right now is higher in trade, so they're pushing up. There are two other important internals. One, it's going to be a very heavy earnings day. There are three Nifty companies which report their numbers. You've got a Shriram Finance, you've got a Cipla, and then you've got JSW Steel. But Monday is a holiday. So when we open for trade on Tuesday, the Saturday earnings will also be, we'll be reacting to the Saturday earnings. And on tomorrow, you've got a Kotak Mahindra Bank and Ultratech. So today is going to be a very earnings-heavy day. And gold and silver, what can we say about that? It's just getting so precious. Gold is now almost inching towards 500,000 an ounce in terms of futures. I think we're close to 49.60. And silver is pushing towards $100 an ounce. So incredible move seen in gold and silver. There you have those rates. Almost 5,000 on gold and almost $100 on silver. But it's been a very volatile week for our markets, Nigel. And the good news is today's Friday and Monday is a holiday. It's an extended weekend.
Well, that's right. We get ourselves set for a long weekend. But today there is very, very important trading session. I said this because it's ahead of a long weekend. So the end of the week volatility as well could pick up, particularly the broader markets going by the pain that we're seeing. There could be some squaring off of positions as well with regard to the broader market stocks. So we'll keep an eye out on that. Also, it's just one day ahead of the monthly expiry. On Tuesday, you'll have the monthly expiry that will play out. So effectively, today is a very, very important trading session. And maybe some kind of optimism now ahead of Republic Day, when we'll hear Prime Minister Narendra Modi speak as well. And also, we just have a few trading sessions getting into budget. So all those cues will stack up. I think the most important cue is going to be the stability in the rupee. You know, in yesterday's trading session, after a while, at least it didn't depreciate further. And you want some stability in the rupee. If you see that, then maybe, in fact, you know, even our markets could participate. But I think this is going to be an important cue. Economics aside, the markets want some kind of stability on the rupee. Yesterday, yes, we came up from the top. The good news was at least the mid and the small caps, they showed some kind of outperformance after a while. So that was good to see, because portfolios actually have got hammered. What about the flows? The FIs, they continued their selling ways. While you had the DIs, well, they bought yesterday. So net, you had the DIs actually that outweighed the FI selling. Institutions were net buyers. Moving to the index futures data, no surprises for getting. Well, you know, you have the FIs. They added close to around 2 short positions for every 1 long position. The short positions, by the way, have come down from around 92% to around 87%. And yet we haven't seen any kind of big short covering bounce, because this market is still aggressively net short. And the FIs, they are holding on to their short positions on index futures. The good news yesterday was, after a while, we saw on stock futures, actually, they added more longs than shorts. So yesterday, close to around 4 long positions were added for every 1 short position. Gives you some kind of hope that maybe, you know, we've got a little bit extended on the downside just in the near term. The PCR a few sessions ago had moved to around 0.72. That's popped back up to around 0.87, though you'll have to say it's still closer to the lower end of the range. And a couple of strikes come up for you on the screen. 25,400, that was the level from where we saw the U-turn yesterday. 25,400 call was very active, with the premium at around 96 rupees. And on the downside, there was some writing that we saw. At around that 25,200, 25,300 put, both of them did see some kind of writing. And that comes up for you on the screen as well, which brings us to the levels. One positive yesterday was we made a higher high and a higher low. So for today's trading session, if we look at a range, yesterday's low becomes a bit of a reference point, and yesterday's high will be a bit of a resistance. So you get a fresh breakout once you see, conquer this mark. which starts around 25,450 to around 25,500. Important reference point on the downside. You don't want this 25,100, 25,150 to break, because that's where the 200 DMA is at as well. The Nifty Bank will have to perform. Yesterday, it got to around the 20 as well as the 50 DMA. It ended a little below that mark, but that's going to be the important range. The Nifty Bank needs to conquer this particular mark. So net-net, hoping for a good end to the week ahead of the weekend. There is no optimism with regard to the budget or even the Prime Minister's speech on Republic Day. So let's hope sentiment can turn a little bit. The Indian rupee stability, I think that was the biggest positive of yesterday. But Prashant joins us in the studio. So Prashant, what are you tracking? Welcome.
Welcome.
I have to say I ran the last 100 meters, not 9.9 seconds. So, morning, guys. Absolutely, as you said, I heard a little bit of what you said in the beginning, right? Zero noise around the budget.
Yeah.
Zero, not noise, zero expectations around the budget. I mean, actually, nobody is talking about the B of the budget even, right? So, and I think that perhaps becomes, hopefully, right? I mean, it's got to... It's not a sufficient condition for the markets to do well, but the point is expectations are low, and if something were to come on the positive side, I mean, it could be good. Let's just quickly tell you just a bunch of things, right? And I think Rima and Nigel have covered a fair bit. You know, 5 sessions to go. And the reason I say 5 is because Monday is a market holiday for Republic Day. And you'll hear from the Prime Minister, of course, making that speech. So we will see, I mean, directionally, if we hear something from him. And of course, then Sunday, the coming Sunday, the next one, not this one, the coming Sunday is the union budget. And markets are first going to be trading. And expectations are zero at this point. Now, they'll build up, I think, over the next 5 days. Now, remember, this week has been just incredible, right? I mean, just imagine the amount of news flow we've had to deal with. But the good thing is, as we wind down and go into the weekend, all of the news flow which caused this turbulence in global markets is settling down. And the reason I say is because political tensions, a little diffusion of that, and of course, very, very solid economic data out of the US. So equities in the US rose. S&P was up 0.5%. NASDAQ was up 0.9%. And you have the Russell. By the way, the Russell has done better than the large cap stocks for about 12 or 13 sessions flat. And the Russell 2000 is at a fresh all-time high. Meta was up 6, Tesla was up 4. And just to give you a sampling, the kind of stocks which did well. So large caps really participating. Gold, silver, and so much talk and action around the financial instruments here, right? I mean, all the ETFs down sharply. But, the underlying prices are continuing to rise. So Goldman Sachs, for example, raised their gold price forecast about $5,400 by the end of 2026. You know, it's central bank competition for limited amount of gold that is driving prices up. 2.5, silver up 4.6. Oil prices, thankfully, are down about almost 2%. Now, the reason I said there's been a diffusion of political tensions is because more details of Trump's Greenland framework have come to light. So NATO is going to beef up security in the Arctic region. And this is to counter Chinese and Russian influence, stationing of U.S. missiles. I mean, the missiles are already there. And of course, there's a talk of mining rights as well to keep the Chinese at bay. As a consequence of all this, as a consequence of what we heard from President Trump in Davos about not using military action or taking Greenland by force and kind of sort of, you know, stepping off, EU is going to vote on ratifying the trade deal with the US. They'd kept this in abeyance, saying that, well, we're not going to do it unless because we are faced with threats from the US. So I think that so this is significant. I mean, you didn't want another trade war between very large trading blocs, bad for the world and bad for markets as well. So I think all of that is cooled off. And that's the reason why I'm saying, you know, same time last week, it was all looking calm. And then we started this weekend rhetoric ramped up on Greenland, and markets all went into a bit of a tailspin globally, and that's settling down as we go into the weekend. Now, just to tie in the levels, like day before yesterday as well, the Nifty ended in the middle of the trading range, almost bang in the middle of the trading range. There have been large candles 2 days in a row now. Rupee's broken a 6-day losing streak, and I think you know, the stability of the rupee important, right? 91.70, 91.72 is when the RBI has sold dollars, and hopefully between 70 and 80, that is 91.70 and 80, you know, the RBI is going to defend that level, and the signal's gone to the market. So maybe, at least in the near term, further tests will not be there. We'll see. But you need that stability to come in. The Nifty, the 200-day moving average is 25,134. and that still, I mean, is an important level. It coincides within that candle yesterday that we saw, and the Nifty Bank 20-day moving average is 59,542, which is, of course, I mean, the critical operative level here. We could look at near-term hourly and 40-day exponential moving average, etc. on the upside for the Nifty. I don't want to put that out. Let's see. Let's get 1-2 days more of stability, and then we'll pick it up from there. GIFT Nifty gives you a sense of how we're likely to start, and then we'll pick it up from there. So it's kind of like what we had yesterday. Neither here. I think yesterday we had a bit of a bump up, at least indicative bump up. This morning it's slightly down about 10 points, but could be anything. So that's where we find ourselves at, Rima. But you know, things are
settling down. Calmer.
But you don't want to repeat of last weekend this coming weekend, because that is when all the trouble started.
Okay, let's get in Robert Subramaniam, head of global macro research, Nomura, joining us in the show. Robert, there's been so much geopolitical noise as we've begun 2026 with. I don't remember such a start to the year. But as Prashant said, this morning at least things appear to be on the calmer side. What have you all made of the start to 2026 at Nomura? And now what is the base case? Let's go by 3 months, 6 months, and then perhaps, if you want to even wager, to talk about the end of the year and how that might shape up.
Sure, it's all the things that have happened so far in January. I think it would be fair to say that a lot of those events typically would happen over a full year. We've had it in less than a month. I think it's right. I think things have calmed down around the US-Europe tensions over Greenland. I think also the Lisa Cook hearing, I think, was in favor of Fed independence. And I think also in Japan, we shouldn't forget, with the elections now formally announced and Parliament being dissolved today, I think the bond market there has calmed down as well. I mean, the Nomura view is actually a very constructive and positive one on global growth. We think growth is going to be solid this year, around 3%, maybe a bit above 3%, led by the US. But in the emerging market world, we would say led by India. So we're positive. We think geopolitics are going to be in the background, but we don't think they're going to completely disrupt markets too much. Our biggest focus is on AI, which we think is going to continue to boom. We think Fed independence will be compromised a little bit, but not substantially. We think the institutional infrastructure in the US still applies. And so, you know, we have an environment where we get solid growth, a bit further cuts in US rates, the AI story continuing. So it's all quite constructive.
Rob, hi, morning. Prashant here. Actually, if anything, just purely data-wise, I mean, forget positioning and how long people are in the US, etc. I mean, it's looking superb, right? The environment. You've got growth, which is stronger and stronger. High-frequency data, all is coming in hot. And you've got a president who wants interest rates dropped sharply, and maybe he'll get his way, who knows. I mean, this is kind of the perfect environment for stocks. Again, I mean, I'm just saying theoretically, because stocks have already done quite a bit, anticipating a fair bit of this. Your thoughts?
Prashant, I would agree with you. The way this can play out, we see our baseline is, as I said, strong growth, and particularly with the midterm elections coming up, we think there's going to be more fiscal and regulatory measures, deregulatory measures that support growth. Trump is focused very much on affordability right now. And the Fed probably is going to be politicized a little bit, allowing a few more cuts. Now, look, the other side of this that could play out, and if you look objectively at the US data, Prashant, is productivity growth in the US is picking up. It's now 2 consecutive quarters of over 4% productivity growth. We, and I think many economists, think it's a little bit too early for the AI theme to really be showing up in the productivity data. But maybe it is. The AI diffusion adoption has been much, much faster than the internet. It took 13 years for internet subscribers to get up to 800 million. For ChatGPT, it's taken 3 years. So maybe it's showing up in productivity earlier. And if that is the case, that's even more positive because the speed limit of the US economy, it can grow faster without generating the inflation. So I agree with you. It's a pretty positive outlook for asset markets. The risk, I'd say, is things are already very, very highly valued. And there is the risks around geopolitics. But, as a base case, I think it's kind of Goldilocks.
Hi, Robert. Good morning. Good to see you, Ben. Robert, I want to ask you, coming back to India then, the Indian rupee, that one is making everyone very, very uncomfortable, whether it's in the equity market or otherwise as well. So there could be a definite rationale to see the rupee slide from 88 ballpark to around 91.5, very, very quickly, I think in a matter of 2 months. What are you making of this sort of a move on the Indian rupee? And in that sort of a backdrop, what are you expecting from the central bank in 2026? We've got a couple of rate cuts. There were expectations of a couple of more. Inflation seems to be under control, but this rupee weakness could be a bit of a worry. Your take?
Yeah, so the rupee is, has been continuing to depreciate, record low against the dollar through 90. I struggle to see how I can link that up with economic fundamentals in India, which to me are very solid. And in fact, I would extend that to, many Asian currencies right now. I can point to the Korean won, which has been under a lot of pressure, the Japanese yen. But, Asia generally is fundamentally sound. And I did at the beginning highlight India as, one of our favorite economies for 2026. Now, when I look at India, one of the big changes is inflation. It is structurally lower. It's not just cyclical in our view, it's structurally lower. If you strip out precious metals like gold and silver from the core CPI, it's running at around 2.5%. That is very low, and we think this is not a fluke. We think India has had very prudent monetary and fiscal policies, and there's been a bunch of reforms, whether it's digitalizing the economy, labor market reforms, GST rationalization, opening up FDI to insurance. I could go on, but there's a lot of things that I think help explain why we have this better environment, better combination of strong growth, probably around 7%, maybe a bit higher this year, and low inflation. And, that's a very positive environment, I think, going forward for capital flows and the currency. So, our view for the dollar INR, we think by the end of the year, it will be around 90. So a bit of appreciation from here. Look, last thing I would say, historically, India's been a high inflation country, and that eats into your competitiveness and is one of the reasons why the rupee generally depreciates. If we are now, as we believe, in a new environment, a new regime of low inflation, perhaps even lower than the US, then there's no reason why the rupee has to continue to depreciate. So that's very important to appreciate. And we're a bit out of consensus here in that, I think the rupee and economic fundamentals, there's a widening gap that we think eventually will start to close.
Good. Rob, we'll leave it there. Thank you very much for joining us. It's a pleasure, and chat again soon. Thank you.
Thanks, Prashant.
Okay, we'll take a quick commercial break here. We're going to come back in just a bit. Let me just run you through what's coming up here over the next 2 hours. Now, 8:35, Jinesh Joshi of PL Capital, Interglobe Aviation's numbers in focus. 9 o'clock, conversation with Ashok Leyland Management. Remember, MNHCV sales are looking up. The last month has been good. 9:20, Harsha Upadhyay of Kotak AMC, Market Master of the Day. You have 9:30, management of Coforge coming up to break down the third quarter results. Cyient will be speaking with us at 9:40 on the third quarter earnings. Later on, we'll have the management of CAMS to decode their December quarter numbers as well towards the end of the program. Indian Bank management, again, on numbers, and of course, Outlook with Lata. So that's the lineup.
All right, time to slip into a short break. On the other side, we go for tilt. On our top 10 segment, we're looking at DLF, Coforge, Home First Finance, Zensar Tech, Bluestone Jewelry. All of them will be reacting to positive news flow. Out of the list, United Spirits. On the flip side, Interglobe Aviation, Cyient, Premier Energies will be reacting to negative news flow, while you have a neutral reaction on Bandhan Bank. Take that break, come back, we get into further detail on all of these names.
Welcome back. Asia is mostly higher this morning. You've got green across the screen. On the Korean markets, that's gained close to about over 1%, taking its week-to-date rally to 3.5%. Japanese markets will be in focus ahead of the Bank of Japan decision. They're most likely to remain pat on interest rates, not tinker with it, but the BOJ decision is awaited. Hang Seng Taiwan also up nearly about 0.5%. But let's talk about stocks. It's a very earnings-heavy day. There are 3 Nifty companies which report numbers later today, 2 of them tomorrow, and so many stocks to react to. This is our entire research team standing by with the CNBC TV 18 list of top stocks for the day. But the big one is going to be Interglobe Aviation. So Vinny, explain the numbers to us, especially in light of the cancellations that we had in the month of December.
Hi, Rima. Good morning. So, as expected, obviously, those cancellations that took place, the disruption that took place, we've seen that one-off that came in on the PAT front for the company. But despite this disruption, it's a decent quarter, and that's the highlight also coming in from most of the analysts. Now, revenue, that's a growth of around 6%. Forex loss, obviously, rupee fluctuation also is an important factor for them. So, Forex loss is what they've reported this time of around a decline of 24% on a year-on-year basis. EBITDA, that has also seen a bit of a decline of 0.8%. Now, obviously, factors like labor code, operational disruption, DGCA penalty, all these were the one-offs or the reduction in PAT was mainly because of this reason. So that is what we'll be keeping an eye out on. And in terms, when you look at it, what brokerages are also saying, whether you look at a Citi, a UBS, GS, all of them are maintaining their buy call, saying that Q3 was something that was already expected in terms to be a weak set of numbers. Near-term outlook also given by the management, that seems to be a bit muted, but medium-term outlook, that is strong. They continue to maintain their market share. So yes, despite all these disruptions, they managed a decent quarter. So maybe we could see a bit of red on the screen, and then the stock could see some green going forward in the day as well.
All right, Vinny, thanks very much for that. Well, DLF is the next one we're going to talk about. Sonal is here with the numbers. Sonal, morning.
Good morning, Prashant. Well, the big headline from DLF is that they have turned gross debt positive for the first time since listing. This is in their residential business. They have a cash of 11,660 crore rupees now. Of course, it has the escrow amount from RERA to the tune of 10,433 crore rupees. But now they are debt-free. Yes, their operational numbers did not look so good. In fact, their new sales bookings were down 97% on a YY basis, 90% on a sequential basis. This is because the company had suspended bookings in one of their super luxury project, which is Dahlias, for a redesign, but they have restarted those bookings in fourth quarter, and they are quite confident of achieving their bookings guidance of 20,000 crore rupees in FY26. They have also reported record gross collections in quarter 3 at 5,100 crore rupees. Their 9-month gross collections are higher than FY25. So balance sheet has strengthened. Yes, on the booking side, it is a disappointment, but they continue to guide for 22,000 crore rupees of bookings in FY26.
Thank you very much for that. Lots of mid-cap IT companies will react to their numbers. You've got Coforge, Zensar, Emphasis. But let me begin with Coforge. Very strong revenue growth. Revenue growth has come in at 4.4% quarter-on-quarter, ahead of estimates of 3.5%. And the company has been clocking in very strong top-line growth. If you see the performance over the last couple of quarters, it's just a continuation of the kind of growth rates that we've seen. Some quarter bump-ups are on account of that Cigniti acquisition. Order wins, too, have been very strong. In Q3, order wins are now almost touching that $600 million mark. And the order book, which is going to be executed over the next 12 months, is up 30%. Margins have come in line with estimates at 13.4%. Profits at the bottom line are impacted on account of an exceptional loss. So the overall exceptional loss is 150 crore rupees on account of the labor wage bill. There was a cybersecurity amount that the company provisioned and Encora acquisition related expenses. But on the whole, operational numbers are strong, top line growth high at 4.4% and ahead of what peers have reported.
Okay, all right, Rima, thanks very much for that. Bandhan Bank, Home First Finance are some of the financials in focus. Gaurav is here. Gaurav, morning.
Well, good morning. When you look at Bandhan Bank, inline set of number is what we can call for the bank, and the reason being that Bank Street was expecting some kind of weakness, and they have delivered some weakness in the result. Net interest income, that declined almost by 5% on a year-on-year basis. When it comes to PPOP, that declined almost by 28% because the support from other income was missing in this quarter. And at the same time, in this quarter, there was also one-off gain in the other income segment at 126 crore rupees that company gained because of the sale of ARC. Now, if we exclude that, the core PPOP, that actually actually remained a bit weaker than the street's expectation. Now, when it comes to the PPOP, there was also another factor of 120 crores worth of impact. That is a one-time impact because of the new labor laws. But at the same time, provisions, they declined almost by 16% on a year-on-year basis, which resulted into profit declining almost by 52%. Now, what remained a bit positive is that net interest margins. Now, they increased almost by 6 basis points. It was in line with the street's expectation. But what management said is that going ahead, net interest margins will improve further because the cost of funds, they are likely to come down. So they are anticipating net interest margins to increase even after seeing 25 basis point of impact in Q4 FY26, the full quarter impact in Q4 FY26. And credit cost, that declined almost by 12 basis point, where management also suggested that in FY27, the credit cost will be in the range of 1.6 to 1.7%. But there is another argument. Nomura says that even though the valuation is favorable, the triggers for the stock are missing. Apart from that, let's go to Home First Finance. Good set of number, AUM increase of 25%. Disbursement was a bit weak if we compare with the expectation. But again, when it comes to net interest income, that increased almost by 50%. There was a lack of support from other income, which resulted into PPOP growth of 44%. And the same flew in profit as well. There also we saw growth higher than 40%. Now what remained positive is that net interest margins that improved almost a 60 basis point on a sequential basis, and at the same time credit cost remained stable while ROAs improved sequentially. So all in all, good set of numbers from Home First Finance in this quarter.
Got it, Gaurav. Thanks a lot for that. Rima, coming back to you. Tell us about Cyient as well as Edsar.
Well, for Cyient, it was an okay quarter. The company now basically reports their group numbers, which includes 3 segments, okay? DET, there is a semiconductor, and there's one more segment. So if you look at it on a consolidated basis, the company's top line went up by 1.9%, EBIT margins increased to 9%, bottom line impacted on account of the new labor code. But the street focuses on the DET business, which is a driver of the company's revenues and profitability. So there, the company's top line went up by 1.9% and margins expanded by 25 basis points. And the company in the conference call said they're on track to exit FY26 on a strong note and achieve 15% EBIT margins by Q4 of next year. So all in all, it's a stable quarter. For Zensar, it's a mixed picture. There's a strong beat on the company's top margins, but revenues are subdued. Revenues have declined by 1.3%, but margins went up 200 basis points. And again, the bottom line has been impacted by an exceptional but very strong margin performance this time for Zensar.
It's a lot of tech, right, as we begin this session. Rima, thanks once again. Bluestone is we want to focus on. I think the stock saw a big move yesterday. Mangalam is here with details. Mangalam, morning.
Morning. So, it was an 11% up move that we saw ahead of numbers. The street was penciling in good numbers because of the updates that came in from Titan as well as, Kalyan on Candere and Carrot Lane. And it was the festive season. Affordable jewelry in these gold prices definitely doing well. Additionally, inventory gains is something that aided their operational performance. So 27% revenue growth is what the company has reported, but the EBITDA jumped 232%. And that's because of an inventory gain of roughly 59 crores. And as a result of which, there was a bottom line profit of 68 crores versus a loss of 27 crores same time last quarter. Same store sales growth was 12%. The company said that December exit revenue growth has also been 35%. So all those factors doing well for the company. But because the stock had seen an up move yesterday, it will be very interesting to see how it goes today.
Got it, Mangalam. Thanks a lot for that. And I think we'll have a chat with the management, Mangalam and myself, later on in the day. So watch out for that as well. But hopping across to Vinny. Premier Energies, Vinny, numbers look a little soft, right?
Yes, muted quarter is what we'd say is coming for Premier Energies. Missed the BBG estimates, analyst estimates as well. Overall, sequentially also, when you look at the margins, they've also seen a contraction. Though revenue on a year-on-year basis, 13% growth. EBITDA has seen a 15% growth. EBITDA margins marginally higher by a few basis points. So keeping an eye on that on a year-on-year basis. Profits, 53% growth there as well. But exports, they do not have much of exports. They're marginal, 0.some% exports is what is there. So that is the difference that comes in versus Premier Energies and Waaree Energies, which we were talking about yesterday, which reported a good set of numbers. But Premier Energies, a bit of a miss coming in on that front, though order book value continues to be at around 13,700 crores and 9.4 gigawatt is what their order book was at the end of this quarter. But a bit of a concern in terms of execution is what we could say, and miss in terms of numbers that have come in on an overall basis. We could see some red on the screen here today.
Well, Vinny, thank you very much for that. No dearth of individual stocks and, news flow or numbers for that matter. United Spirits is the last one on our list today. Mangalam, take it away.
Well, yesterday, last evening on Twitter, we had Adar Poonawalla put out a post saying that over the next few months, we'll be putting a strong and competitive bid for RCB, which is one of the best teams in the IPL. Well, CNBC TV 18 had reported this first in September last year, and subsequently USL also put its sports business under strategic review, which it believes will end by the end of FY26. So basically over the next couple of months, we will hear a lot more about this. Adar Poonawalla, among others, are also in the fray for this. The valuation anywhere between $1.5 billion to $2 billion. So the lower end of the range is probably priced in. The upper end is something we'll be monitoring. But what it also does is it allows a base price to be set for all the other potential deals. So for instance, for United Spirits, it is about 16% of their market cap. But for someone like a Sun TV, it's 65% of their market cap. And earlier there were reports that RPSG Ventures is looking to pair some stake or get in a strategic investor for Lucknow Super Giants as well. That they hold about 51% stake in Lucknow Super Giants. So given the current market cap, it's about 200%. But mind you, it does not take into account any sort of holding company discount. So that 200 number looks extremely big. But Sun TV looks like a bigger beneficiary of this than all the others by virtue of the size as compared to the market cap of these companies.
Well, unimaginable, right? Some of these numbers 10 years back, 15 years back, but it's absolutely out there. And it's a topic we'll sort of dig more into. That last table, really very, very revealing in terms of how large they are now as a contribution to their respective, particular respective companies' market caps. Mangalam, thanks very much. We'll just quickly recap the stocks that we highlighted. The stocks with positive news flow: DLF, Coforge, Home First, Zensar Tech, Bluestone, and United Spirits. Interglobe Aviation, Cyan, Premier Energies are stocks with some red as we see it. Mixed view on Bandhan Bank coming in. Take a break. We are joined by Jinesh Joshi of PL Capital. We'll talk about Interglobe in a little bit more detail. Welcome back. 25 minutes to go for the pre-open session to kick off. Indigo reported a decent set of third quarter numbers. Remember, lots of disruptions in early December because of the flights being cancelled because of the pilot issue. And so there's this one-off, etc. Let's listen into Indigo CEO Peter Elbers first up, and then we'll bring in an analyst to talk about the numbers and the outlook.
I think it's important to highlight that the major operational disruptions for which we have been profusely apologetic took place on December 3 to 5. 3 to 5 December, we had a total of 2,500 flights cancelled, affecting some 3.5 lakh customers on those days. And actually, pretty swiftly thereafter, we have restored our operation and brought it back to stability and normalcy. And in due course of the month of December, we came back to roughly 3.8 lakh customers a day. And despite some of the weather disruptions we had in the second half of December, it has actually started off quite stable since we declared the operation back in stability around the middle of December. We continue that trend in the month of January. We have a very stable operation now, and obviously start to prepare for the month of February to continue that very stable trend. There's the currency movement pertaining to the dollar-based future obligations. We've had that explanation before, and with the development of the Indian rupee as compared to the US dollar, we have to take another 1,000 crores in this quarter on that side. And the exceptional items related to the operational disruptions, which are accumulating to 577 crore for the quarter itself.
Okay, Jinesh Joshi is with us. He's research analyst at PL Capital. Jinesh, good morning. Good to have you with us here. Thanks for joining in. So, I mean, Indigo numbers, even otherwise, and this quarter, of course, was exceptional because of everything which has happened. But I mean, the numbers, the reported net number fluctuates wildly. Has fluctuated wildly. What did you make of the quarter and where we are in the fourth quarter already? I mean, prospects going forward.
Sure. So see, I think this quarter was marred by one-off. There was 1,100 crores of FX hit that the company had to take because of depreciating rupee. And there was a 1,500 crore one-off also in this quarter. But if you adjust for this one-offs, I think the PAT of 3,100 crores that the company reported was way higher than our estimate as well as street estimates. Now, given the fact that there were disruptions in the month of December, I think the numbers that they have reported in this quarter, I think they are quite good, so to say. But as far as the near-term guidance is concerned, I think for 4Q, that 10% ASKM guidance obviously takes into account the capacity constraints that are going to come in because of the new FDTL norms. So it remains to be seen as to how the capacity expansion shapes up, especially in 27 and 28, given new norms will come into place. So yeah, that is something which will be keenly eyed. We are at about 10% ASKM CAGR for the next couple of years.
Jinesh, if I remember correctly, you had downgraded Interglobe Aviation in the month of December to a hold?
Right.
Okay. But first, just tell us, in Q4, how is the performance likely to be? Because I remember Kumbh was last year through January and February, and there was a massive spike in travel demand, so numbers would be boosted. So Q4 numbers would be impacted by a high base effect. So how is it likely to perform in Q4 near term? And you spoke about how these FDTL norms will impact, it's a structural headwind. It will impact maybe FY27 and onwards. So what are your numbers? And at what point would you look at reinstating your buy on Interglobe Aviation, considering its dominance, expansion internationally, etc.?
Sure. So if I talk about 4Q, I think the 10% ASKM guidance that they're giving, we are more or less on track. And again, what will happen in 4Q is that you will see a mid to single digit kind of a moderation in PRASK come through, because the base of 4Q FY25 was very high, given the fact that you had Kumbh Mela at that point in time. But nonetheless, overall, I think a 10% ASKM guidance in a constrained environment is definitely good, if not very good. So taking that into consideration, I think the numbers in 4Q will be decent, at least on the EBITDA side. But as I highlighted, that the long-term challenges with respect to capacity constraints do prevail, and at this point in time, it is slightly difficult to preempt as to where that growth number could eventually settle. But we are building in a 10% ASKM CAGR for the next couple of years, which effectively results in a kind of a flattish PAT growth number for the next, say, maybe 2 to 3 years. Yeah.
Got it. All right. Hi, Jinesh. Good morning. Good to see you. And I think in terms of deliveries, if I got that number correct, I think they're expecting, one per week for the next 5 years, if I remember correctly. That said, as Rima mentioned, you have a hold on the stock. What will make you turn positive from here on? Will it be earnings? Is there a couple of tailwinds in store? Or is it a valuation argument? Go ahead.
Yeah. So I think tailwinds in earnings is one thing which I would essentially look at. I think one factor which perhaps we have not discussed is the inflation in the cost structure that is seeping in, given the fact that there is significant rupee depreciation. I'm not talking about MTM gains or losses that we adjust separately, but a depreciating rupee hits you on the P&L side as well, because most of your costs are dollar denominated. So I think that is one area where we are finding some bit of a concern coming. And I think when we turn positive is is that if we get some comfort on ASKM side, that 10% number is something which we are building in. But if we get more clarity on that side, is something where the EBITDA jump can essentially come through. And again, on the pricing side, that 4Q guidance of mid to single digit moderation in PRASK is something which I found to be slightly negative. And if we get more comfort on pricing, which is slightly difficult to preempt, I think these are the 2-3 things that we will eventually look out for. Capacity is one which they can obviously navigate by damp leases, so that may not turn out to be that big of a problem, but then ultimately that will have an impact on margins. So it's a trade-off between capacity and margins is what I feel. And I think while from here on, a 5 to 7% correction or maybe a 10% correction, just in case if that happens, that could be a very good entry point is what I feel.
Jinesh, when this entire December issue happened, many were of the view that for players, marginal players like SpiceJet, I mean, if this was a moment to shine, this was it. And they had to seize it. Your assessment briefly, anything happening there or will happen, can happen?
I don't cover. What I can tell you is that a 10% effective cut in the winter capacity means that those slots will effectively go to other airlines, which obviously means that, okay, they have some market share to capture. But given the size of Indigo, I mean, the 65% market share that they have, and effectively that one plane per week that they are effectively going to get in terms of organic induction, that puts them in a very good space as far as the capacity addition is concerned, despite the challenges that we are seeing due to FDTL norms. So difficult to comment on the peer side because I don't cover SpiceJet, but overall, yes, a 10% winter schedule cut effectively means that capacity will go to the other players in the industry.
Okay, Jinesh, thank you very much. Good speaking with you. Appreciate your time here on CNBC. Siddharth Khemka is going to be with us on the other side of this quick commercial break. GIFT Nifty, we'll just leave you with that. And I think it's still a flattish, neither here nor there kind of a open, the indicative that is. Coming back with Siddharth.
Welcome back. We have Sid Khemka, Motilal Oswal Financial Services, who joins us on the show. Hi, Sid. Good morning. Good to see you in. Let's talk about United Spirits since it's a Friday and since there's some news that came in overnight. The numbers are a little bit disappointing. The sector has actually got a bit of a D-rating. Looking at all the alcohol stocks post what happened with the cigarettes, with regard to that tax that came in, the street is fearing something or the other will happen from various states with regard to duties on alcohol. And that's why these stocks have corrected 10, 15, 20, 25% as well from the top. Now, United Spirits, the numbers are a little bit weakish, as Mangalam told us. However, now there could be some value unlocking because RCB, after winning the cup, there's a possibility it gets sold out. And it could be $1 billion to $1.5 billion, which Mangalam says is around 15% of the current market capitalization. What's your view on the stock with regard to business and this additional tailwind that's coming in?
Hi, good morning. I think if you look at the overall results, definitely the soft volume performance and the heavy advertising spends, that dented the margins in Q3. Overall, what we see is that for our estimates, we are broadly remaining in line with what we are expecting. Maharashtra, especially, and AP, that weighed on Q3 performance. Apart from that, I think United Spirits delivered healthy performance in the rest of India. I think the latest news that's definitely positive because the core performance remains slightly muted. One good numbers that came in from Radico in that space yesterday, that came much above what the industry has been reporting so far. So there is definitely some room for growth for even for United Spirits, where they have been pushing in for the uptrending and the premium products. So I think value unlocking, that is a big is a more of a sentimental trigger compared to the core business, which is kind of a big trigger. And we believe that the news flows can be driven only from the short-term perspective. For the next few quarters, we'll definitely look at the numbers improvement. So for now, we have a neutral rating on United Spirits, but looking at Radico, where we have a very strong buy, I think numbers have been much above our expectations. The gross margins has seen a sharp improvement, and both volumes growing at about 17% compared to United Spirits, where the volumes declined about 3%. I think one can clearly see the favorite from this pack for us is Radico Khaitan.
Yeah, no, absolutely. Just said, if I can quickly okay, let me do one thing. We'll play out because IIFL our results were great and the stock crashed 15%. We had Nirmal Jain with us. We'll play that soundbite out. I'll play it out as I'm told it's ready. So just a few other things before we get to it, right? Credit Access, sharp move higher yesterday in the MFI space. This is, of course, also as a result of numbers. Bajaj Consumer, phenomenal numbers. And again, the stock went up very, very sharply. And there was Canada HSBC Life, which was the other one, which was up 10% in trade. Any thoughts, coverage, or view on any of these three?
Yeah, I think the names that you take, Credit Access results have been improving. The cycle for the MFI space, that is seeing some improvement, and definitely I think we are at the cusp of at least the bottom out process for the space is started to happen, and some of the names that we are liking from that space. Even today, if you look at, we have upgraded a Bandhan Bank from a neutral. For last 5 years, we have been having a neutral rating on Bandhan Bank. Today, we have upgraded the stock to buy within the same space. Valuations look very reasonable. FY27, we expect Bandhan Bank ROAs to see a strong recovery from about 0.8%, about 1.3, 1.5%. And so with the improvement in growth as well as profitability, we believe that the bank trading at less than book definitely has a lot of room for upside. So Bandhan Bank is something that we like from that space. We have just upgraded to a buy with a target price of 175.
Okay, all right. What about PNB Housing Finance? That one yesterday came in for a sharp knock. The street is divided out there. Some believe, the observations with regard to that fraud that was reported, it could dent sentiment. Well, others say this was already known. This was a few years ago, and there's adequate provision. Yesterday, the street didn't buy it, though. Stock was down 8%. I believe the stock now trades around 8 to 9 times. So valuations are in favor. And we have, new person at the head. So what's your view on the stock after the kind of correction we've seen?
Yeah, Nigel, I think there is a transitory bump that we're seeing in PNB Housing Finance, NIM pressures as well as elevated payments, weak loan growth, and despite that, asset quality has been kind of stable. So what we expect going forward is that the transitory bumps ahead in the form of NIM pressures that we believe could see some improvement from the emerging and the affordable segments that could deliver a healthy retail loan growth of about 17% over the next 2 years. NIM stability, that is something that needs to be seen, and that will be a key factor for the next few quarters. plus the new CEO now in, and we believe that leveraging on his acumen as an experienced mortgage lender, that could be another factor that the market will definitely watch out for. Yes, valuations are attractive. I think the execution is now the key. We definitely recommend a buy rating on PNB Housing Finance. We believe that the transitory hurdles, once the company is process these transitory hurdles, things should start improving. The bank should, the company should start delivering on the promise, and then market will start rewarding the stock.
Thanks for that. Sid, stay with us. Just a bunch more names, right, which went up yesterday and volumes went down. I mean, basically price moves with volumes is what Hormus focuses on. He's here with us. Hormus, take it away.
Good morning, Prashant. And Vari and Premier, of course, they continue to remain in the spotlight. Yesterday was Vari's earnings reaction. It was the biggest single-day move in terms of price action and volumes in the last 7 months. 9% higher on the stock yesterday. There's a top gainer on the Nifty 500 as well. Now, coming into yesterday's session, the stock had declined in 4 out of the 5 previous ones. And yesterday, we had close to almost 1 crore shares being traded. The 20-day average here is only 13 lakh shares. However, despite those 1 crore shares being traded, only 11% of those, 11.5% was marked for delivery. So close to 12 lakh shares were marked for delivery. The 20-day average is 3.5 lakhs. And the stock has been beaten down, now almost 30% lower compared to its 52-week high. Eternal was the other one. At one point, the stock was up 7-8%, then ended lower by 2.5% in yesterday's session. There was very heavy trading activity seen there, and the volumes were the highest in the last 3 months. 15.5 crore shares were traded yesterday on Eternal, the 20-day average being close to 4 crore shares, and trading volumes worth over 4,500 crore in yesterday's trading session, and out of which 44% of that was marked for delivery, and close to 6.5 crore shares were marked for delivery, the 20-day average being around 2 crore shares, and the stock itself is down around 25% from its own 52-week highs. And talk about two extremes, both earnings not earnings reactions per se, but Bank of India was an earnings reaction, and Kalyan Jewellers continues to fall for the 10th day running. Bank of India was at a 52-week high. Kalyan Jewellers is at a 2-year low. And yesterday's session for Kalyan Jewellers, we had close to 2 crore shares being traded, and out of those 2 crore shares, 45 lakh shares were marked for delivery. And same is the case for Bank of India as well. Over 4 crore shares were traded yesterday. Now 4x its 20-day average, and out of those 4.5 crore shares, close to 1.5 crore shares were marked for delivery as well. So delivery-based buying seen in Bank of India, can't say the same for Kalyan Jewellers.
Thank you very much for that. We will get into a break, Hormus. And on the other side, we'll come back with the pre-opening rates. We'll also get in a few technical trading ideas. Sudeep Shah of SBI Securities, Mitesh Thakkar, as always, will join in. Welcome back. 20 minutes to go for markets to open. Yesterday was a good session. The Nifty managed to close with a gain of nearly 150 points, ending closer to above 25,250. Where do we go from here? Sudeep Shah and Mitesh Thakkar are now joining in. Gentlemen, good morning. Mitesh, let me start with you. Do you expect the rally that we had, the rebound that we had yesterday, to extend itself today? The GIFT Nifty is suggesting a flat start, but do you think it will be a stronger session?
Good morning. So I think, the index apparently to me has just declined a lot, has run away from short-term averages, so it's just stopped falling. The idea that it's very oversold, and while the PCR also, was indicating that a couple of days back it's recovered a bit, but it's also towards the lower end of the typical areas from where the bounce back happens. So I still believe that on the upside, 25,400 remains the pivot. Until that has been crossed and we get a closing above that, I think the structure will remain weak and you will keep getting bounces or pullbacks. But broadly, if we don't get past 25,400, a good chance that we'll not only retest 24,900 odd levels, 920, which is what we went below at, and maybe even break below that and head towards 24,600, 650. So that's the view. But keeping a close watch on 25,400, which was also the high, intraday high yesterday.
Yeah.
Sudeep, what would your Nifty call be?
Good morning, Rima. Rima, see, what I feel is that 25,450 for me will be a very important resistance to cross, because that were pivot points on 12th of Jan, as well as the fall started on 20th of Jan from the same level. So 25,450 for me will be a crucial resistance. And I feel it's just because of the oversold nature of the markets, we may see some kind of a mean reversion move, but nothing too bullish about it. But overall, the range will be 25,100 on the downside and 25,450 on the upside for today as well as Tuesday. That is what I feel on Nifty.
Sorry, what is that level?
Good morning, Prashant. Prashant, it would be around 25,050, 25,100 on the downside. That would act as key supports.
Okay.
And on the upside, 25,450, 25,470 will be a critical resistance to watch out for.
Got that. Mitesh, you'd look for longs or be careful still?
Still careful though. I think on individual stock basis, we have had some long positions because a lot of stocks have come to support. Some stocks are not falling in the declining market. So today I have a call on APL Apollo. I think, post the number that bounced back pretty strongly from the 34-day moving average area. I think this should see further upsides. I would look at targets in the range of about 2030 here and recommend a buy with a stop below 1949. Similarly, FMCG is doing well. If you look at, Davos, Godrej Consumer, etc. So Davos is one which I've chosen today. If it gets past 527, 528, which is the intraday pivot, buy with a stop at 519 and look for target of 545. On the sell side is SBI Life, sell below 2015, keep a stop at 2040, look for targets of 1960, and Novama is a sell as well. Keep a stop at 1403, look for targets of 1340.
Sudeep, what about you?
A couple of buy calls. The first one is Indian Bank. Yesterday it had its results. The results were very good and we've seen a breakout above all previous highs. So here we feel that there's a strong long build-up backed by good results. So 870 will act as a stop loss on the downside, and we feel the levels of 940, 950 could be the immediate targets here. The second stock that we like is BEL. Now this stock from the defense pack is the only name which has outperformed the entire defense index, as well as it is holding its key level around 405, 400 levels on the downside. Any dip towards that is acting as a buying support. So on the weekly charts, there is immense strength, and we feel that 407 will act as a strong support that can be the stop loss also. And on the upside, the targets of 430, 435 are likely in the coming week.
Okay. Mitesh and Sudeep, thank you very much, both of you, for joining us. More later in a bit from now. Well, let's shift focus and let's talk about the MNHCV, that is medium and heavy commercial vehicle segment. Ashok Leyland is reviving its Taurus and Hippo truck range, marking a re-entry into the CV segment. My colleague spoke with Sajeev Kumar, president of the MHCV segment, on the need of the hour for the industry and, of course, the company's outlook for this coming financial year. Listen in.
Last quarter has seen government really showering all kind of support for CV industry. We talk about GST rationalization, we talk about interest rate reductions, and then, as you rightly mentioned, government focus on capex infra is really very high, and we are seeing huge investments coming on infra, both in terms of roads and other infra which is getting created, and this is really helping the industry. So beyond this, I think the major challenge which industry sees right now is average age of the fleet. that, average age used to be somewhere around 8 years. Now it has gone to 11 years. This to me is worrying factor because a lot of old vehicles are there in the I would say, which exist today. And when you look at, cities like, let's say, NCR, we keep hearing about the air quality, we keep hearing about the pollutions. So I think government needs to come out with something which can really help address issues related to pollution, issues related to the overall age of the fleet, and maybe industry along with the government can create a an approach which can really incentivize these operators to kind of move towards replace their old fleet. And once this happens, I think it will help the overall industry also, it will help the logistics sector also, and hopefully address the pollution issues also. Quarter has completely changed the scenario, and I think we went through a huge growth and momentum in Q3, and we are seeing the signs where Q4 is going to be equally good. So I would say that if you recall, 22-23 went through a huge period of growth. Almost 46% growth was witnessed by the industry in 7 to 55 ton, and then we were kind of stagnant with plus minus 2 to 3% kind of growth. But this year itself, we expect the industry to grow at least 8 to 10%, which is very good as per CV industry standard. And I feel that this momentum is going to continue next year also. So I would say good days for CV industry.
Yesterday, there was a Nomura upgrade or a bullish note coming through on MHCV with names like Tata Motors, Commercial Vehicles and Ashok Leyland. And Ashok Leyland, I think, did well yesterday. It was up close to about 3.5%. In pre-open, Home First Finance looks like it's going to have a pop to begin with. Numbers are strong. Bottom line went up by 45%. And Bandhan Bank, too, could open with strength. And Zensar and Coforge are the other two mid-cap IT companies which should have some green as they begin trade. Siddharth, lots of mid-cap banking numbers have come through. Now, the expectation is that banking numbers will lead the recovery. NIMs are close to bottoming out, etc. What is your overall analysis of the banking numbers in line with estimates? What were the key trends that you've observed? And your top pick?
Rima, I think if you look at a lot of the banking numbers are clearly showing that the credit growth is definitely picking up. NIMs are bottoming out. And if you look at even on the cost side, there is a lot of control that is being put in, and plus on the funding side as well. The CASA contribution is improving specifically for large banks like HDFCs, where that was a big concern. So overall, we believe the large banks that will continue to do well. For example, we continue to like ICICI, HDFC and SBI from the large cap side. Mid caps are seeing a lot of enthusiasm. They are seeing a lot of improvement in growth. Again, there something like AU Small Finance Bank and Federal Bank. These two are our top preferred picks from the private banking side space. While on the PSU banking side space, I think Canara Bank as well as Union Bank, these two would prefer among our top picks.
Sid, a point taken. What we're going to do, Sid, stay with us, is play out some of the big corporate voices that we got from Davos yesterday, and a bunch, right? So we had Bharati's founder and chairman, Sunil Bharati Mittal, on a bunch of things, but tariffs, and he put it very sharply. He said, well, tariffs, the guidance was 300 rupees in ARPU, and that was about 8-9 years back, and he's still kind of sort of eyeing it. Of course, with inflation, that aspiration should have been much higher. But, well, he's not looking to bump that number up in terms of an aspiration, but saying, well, it should come, it must come. Listen in.
For $200, you're giving everything away. Just to win more market share is unsustainable. Something has to give. And we are seeing now from 12 operators, we are down to 2 operators plus 1, which is trying to make a comeback. I personally believe time has come for this to be a crowdsourced event where the whole country can benefit from a very strong digital infrastructure highway in which everybody is contributing 20-30 rupees a month to consume ton of data and enjoy many services that they need for everyday life. So I think I'm hopeful that sometime in 26, we may yet come to the point of touching 300. We have always said 3+1 is good for India. It's a large country. World over, you see 2 or 3 operators. But for the size of India, I think 3+1 is a good place. And we are hoping that Vodafone Idea will start to, be more active in the marketplace. They are welcome. There should be 3 operators. Keeps everybody, in the right place from the customer point of view. And from our own standpoint, we are hoping, we have written to the government that AGR was our issue as well.
Yeah.
And we hope we get attention from the government.
Have you heard from the government at all?
No, not as yet. We heard from the minister yesterday. He mentioned that everybody needs to follow the route that Vodafone Idea followed, which is via the courts.
Okay, well, that's Sunil Bharti Mittal. Now, the country's largest oil marketing and refining company, IOC, chairman, spoke with my colleague Shireen as well. The big fear with oil marketing companies has been whether the government will increase excise duty. The chairman of IOC addressed this issue. Listen in.
One overhang that continues to weigh on your stock is the possibility of an excise duty hike. Is there any indication at this point in time that that is likely, given the fact that we've seen crude oil prices coming off so sharply?
I don't know from where these things come. I have no indication of it. And to make it very clear that it is a very simplistic view that is propagated that if crude prices are so and so, the pump prices will be so and so. If it is $100, then the prices will be high, and if it's $60, the prices will be low. Please understand and please propagate this, that it is not so simple, because the more important factor is how the cracks are working in the international market. What I am getting by processing 1 ton of crude or 1 barrel of crude, how much of MS or diesel I get it, and how much is that differential going there. That differential is what is affecting the prices on the pump, not the $65 or $100.
Okay.
So it is not a very simplistic thing to say.
So you're saying unlikely or not in the offing or not at all at this point in time?
I have no indication at all as of now, that much I can say.
Well, Shireen also spoke with C.S. Sethi, chairman of State Bank of India, on the surge in foreign investment coming into Indian financial names, both banks, of course, NBFCs as well. And what's next? Listen in.
One is the foreign investors are much more confident about the Indian banking system today, and they're willing to bring substantial capital to that. And some of these banks where the FDI is coming in have the potential to scale up their operations with the capital buffers, what they can create. I think it's a very good development in my view. I don't think we are in need of capital at this juncture. And we also have very strong internal accruals, the capital augmentation which happens through the probability of profits is significant for us. So, and we are also planning, as you are aware, the divestment in SBI AMC. So that will also be capital augmentative for us.
Okay, those are the 3 big top voices as far as corporate India is concerned. All 3 nifty companies. Well, shares of IIFL Finance fell sharply yesterday. Remember, the company reported a great set of numbers, but communication from the IT department that there is a special audit which is to be conducted, I think spooked markets. This morning, the stock is up 2% at the end of the pre-open session. So Nirmal Jain, founder of the IIFL Group, came on immediately as the results came and this news broke. So just want to play out a quick soundbite. He, of course, called it entirely procedural.
Section 142A is for complex accounts. And in our case, when the gold loan business has more than 6.5 million customers, obviously that requires certain, and this thing is very procedural. And whenever after search they do a block assessment, they do it for 6 years. So there's nothing unusual about it. And in terms of the block assessment period, I think we have done the reassessment, and there's 1.2 or 1.3 crore rupees of tax has been paid. But other than that, I think anything is speculation, because the special audit, if you read 142A, it talks about accounts or inventory valuations which are complex. That's the time they do the special audit. Or that is when, if department is not able to do with their own resources, they can appoint a chartered accountant. And so, a CA firm has been appointed. They've been given mandate for 60 days time to submit the report. In the income tax search, the standard procedure is this, that there's a search department, they make the appraisal report, we just send it to central department. And based on that, they basically ask you to submit the revised return. And then when the revised return, the assessment and everything is done for a block of 6 years. So there's a revised return that we have submitted for, and we have paid them some small, it's a very nominal amount of extra tax that we have paid. And when the assessment department, when they have complex accounting or whatever, then they can appoint a special auditor. But as far as we are concerned, we are, as a company, we are 100% confident that there's no further liability we expect on this account. I don't think there's any business restriction or penalty will come from this. So what happens is that income tax department, once they got a special audit report, based on that, they can accept our revised return or they can challenge it. If they challenge it, then you can go and appeal. And so there's a procedure for that, but I don't think any penalty or any business disruption we can, is legally permissible under this.
Well, the management reiterated that it's all procedural. They went on to say that under Section 142(2)(a), the tax department appoints an independent chartered accountant, as they've done in their case, if they find the accounts too complex. But it could be a bit of an overhang. Yesterday's stock was down 15%. Pre-open suggests that there will be a mini rebound of about 2%. Mitesh is back with us for his 9:10 call. Mitesh?
So, I'll go with a buy on APL Apollo.
APL Apollo. And numbers are also looking strong for APL Apollo. But Gaurav, it's over to you now for Paytm and Aditya Birla AMC. What is the brokerage call?
Stocks will be on our radar, and this is from the brokerage's point of view. First is that Paytm, because Investec, they have now initiated a report with buy rating and a target price of 1,550 rupees, which suggests more than 20% upside even from this level. What they're saying is that company has a tech which is very capable, and at the same time they have strong merchant relations, and that is the reason why the structural support for the company is very strong. They also believe that the merchant acquisition is already done for Paytm, and this will actually help the Paytm because the digital first model helps the Paytm to get as a substantial operating leverage in the business. Lastly, based on all these factors, they are forecasting around 23% growth in the revenue, and at the same time margins, the EBITDA margins are likely to go almost to 24% versus what it was at 8% in first half of FY26 according to Investec, and that is the reason they have a buy call on this stock. Other than that, Aditya Birla AMC, now Citi, has upgraded the stock from sell to buy, and they have also given a target price of 900 rupees. Now, what Citi is saying is that for the last few months, we have seen the performance was a bit tepid, and this was because of the weakness in the performance of the equity schemes. But now the performance has been stabilizing, market share has started stabilizing for the company, and this is a key reason why they are actually upgrading the stock. What they're saying is that they're seeing some equity flows which are improving and also sustaining for the company, and they are also expecting these flows to continue. Lastly, if you look at the management commentary as well, management has indicated that there will be reduction in redemptions and there will be flows, net flows, which will increase, and that is the reason why what Citi says, in fact, the execution still remains a key, but the aggressive sales engine and sustainable performance trend are likely to push AUM further, and that is the reason why they have upgraded the stock to buy. So all in all, both these stocks will be on our radar on the back of the bullish call coming up from brokerages.
Thanks a lot for that, Gaurav. Well, I'm focusing on APL Apollo Tubes. The numbers came in yesterday and the street really liked it. What did the street like? The EBITDA per ton sustained above 5,000 rupees for the second consecutive quarter, with volumes at around 920,000 for the past quarter. And the December run rate as well is going at around 1 million tons. So the street clearly likes that on a quarterly run rate, 1 million tons. The other factors as well, net cash of around 560 crores. The net working capital days remains very sleek at around 3 days. Those are the other data points as well the street liked. And now they have confidence. Existing capacity is 5 million tons. They've laid out the roadmap for another 3 million tons odd, and they're proposing that the capacity by 2030 goes to 10 million tons. So they're clearly seeing a good runway. The management, they went ahead and they've gone and raised their EBITDA per ton guidance for the fourth quarter as well as for FY27. Now they're working with around 5,500 rupees. That's an upgrade from around 5,000 rupees at their upper band that they were guiding earlier. They also stepped up their volume growth guidance to around 20%. But all this together, brokerages like what they're seeing, whether it's UBS, Equirus or Nuvama, they've tweaked their estimates, and some of them have tweaked even the multiple that they're willing to give. A case in point being a Nuvama, they have upped their multiple to around 40 times. So put everything together, APL Apollo Tubes, one of those few stocks that are at a 52-week high, and the street is clearly differentiating the men from the boys right now. Market leader, stock opening up in the green.
Okay, well, I think we've got the first rates coming up on your screen anytime now. 25,330, down about 0.1, up about 0.2%. So it's a continuation of the move from yesterday, but I mean it was not without, of course, setbacks intraday yesterday, right? I mean up and down. Sold off at one point with only about 20-30 points left, and then we finally ended with 150-160 points on the index. 25,300, so it's now gone flat. 20-point change. The Nifty Bank is up 0.2, 59,300. The Sensex is absolutely flat, 30-odd point change. Mid-cap index is turned red, but just 10 points lower. The small-cap index will come up as well on your screens now. So that's that. I mean, it's 2:1, at least for now, in terms of market breadth. Advances to declines, so it's a decent start. So 15, 16 names are higher, but the rest of the names are lower. There's Trent and Dr. Reddy's on one end. There's Indigo, Adani Enterprises, and ONGC on the other end of the screen. And it's an absolutely flat kind of open now with a 1-point change to show for it. So that's the Nifty heat map. But I guess individual names, single stocks, lots of action. Rima.
Indeed, but you would have liked to see some follow-on buying after yesterday's up move. Week to date, the Nifty is still down 1.5%. The mid-cap index is down 2.8%. Sectorally, this morning, it's IT and metals where you are seeing buying. Both the indices are up 0.5%. Banks are managing to hold up in the grain, but just by a sliver. Some capital goods, capital market plays are up and about. On the way down, realty continues to get hit. Nifty Realty Index is down 11.5% since the start of 2026. So after last year's underperformance, realty continues to remain subdued. Talking about gainers, Dr. Reddy's was the big mover yesterday on the back of its Q3 positive surprise. Stock continues to see buying, 1.5% up. In IT names, it's TCS, Tech Mahindra, where there is interest in the large cap space. Emphasis came out with numbers, steady set of numbers, and stock is seeing some buying. And we should pull up a Coforge as well, because that will be reacting to numbers. Numbers are fine, bottom line impacted by the new labor code that has impacted the bottom line. But Coforge has been a rank outperformer, and they still have to digest the large Encora acquisition. Hindalco, HDFC Bank, Geo Financials are some of the other big movers. On the way down, Interglobe Aviation has taken a knock this morning. Operationally, numbers are resilient, but the bottom line has been hit by a one-off of 1,500 crore rupees, and stock is weak in trade, nearly 2% lower. SBI Life, HDFC Life, weak in trade. Eternal sold off 10% from the day's high yesterday. Maybe the street didn't like the leadership change and the transition, and Eternal is seeing another day of red right now, 1% down on that.
Well, that's right, Rima. Plenty of stocks doing a thing of their own in today's trading session. Just pull up a couple of these names. Hindustan Zinc, that's following the surge that we're seeing in zinc price. I think we're nearly around $100 per ounce. So that moves in tandem with that. I'll keep an eye out what the promoter entity is going to do, because at these lucrative prices, will they come in there and sell a couple of percentage? Well, we'll keep an eye out on that particular one. What else? IFL Finance, clarification coming in from Mr. Jain. You're on CNBC TV 18 in closing bell yesterday. The street's taking note of it. Yesterday, it made a low of around 515 rupees. Today, at around 550 rupees. So clearly, the street is willing to look through past this, at least as of now. We have Tanla as well. The stock, in fact, is up close to around 5%. Good volumes is what we're seeing on that particular counter. So that stock, in fact, up and about in today's trading session. 6.5%. Big move. Volumes as well, fairly decent. Surya Small Finance Bank. That stock is getting a bit of a knock. It's down. I think the NPA has moved up to around 6.7%. That compares with around 5.9%. So on the back of that, stock pulling back. Surya Small Finance Bank. Let's get that up, 5% down on that particular name. Tanla, by the way, is reacting to its results. So that explains why that stock's doing well. GSPL, revenues declined by 2.5% quarter on quarter, and EBITDA as well was down 1.5%. So that's down, I think, close to around 4% in initial trade. Net, it's a start in the red. Par for the course, one would say. You want to break yesterday's low, and from a bullish perspective, you'll want to get past today's high as well. Prashant.
No, it's absolutely. I mean, it's a tentative start, right? We'll see how it goes. But point is, you're also now going into a 3-day weekend. Monday is a holiday because of Republic Day. So when we come back on Tuesday, there will be 2 days of global markets to react to. And then, of course, I mean, you'd be right. Right, you'd be sort of standing right before the budget, which is on that Sunday. So yeah, I mean, lots of cues, I guess, to deal with. On the downside, I want to take a quick look. Premier is down 3%. Syngene is down about 2%. Bharat Coking Coal is coming up with some volumes, not very large, but it's number 4 in terms of volume-led losses, 2.5% lower, about 37.38. Lodha is coming up with about 1.75% cut. Radico went up sharply, is down about 2%. Gokuldas is down 2.5%. Gokuldas ended up about 6%, so there is some profit booking. We had EPAC Prefab yesterday joining us, stocks down about 2%. Vari went up like a rocket yesterday, 2% lower. So yeah, I mean, it's tentative. And I think all these silver ETFs, right, silver and gold ETFs, we should once again have them at the bottom of the screen. So the number one volume-led gainer is the silver Bs, 9% higher. The Starter Silver, Gold Bs, I mean, you name it. It's all that entire pack. Look at that. Just complete U-turns after yesterday. Silver, of course, underlying silver prices have seen a very sharp move once again. Hindustan Zinc, Nigel mentioned 4%. Hindustan Copper is up 2.5%. IIFL 3% higher. Bajaj Consumer went up, I think limit up yesterday after results, 3% in the green. So it goes. 20 points lower is what you have. Nigel.
Just one stock, APL Apollo Tubes. We didn't highlight that in a market like this. A stock that didn't do anything for very, very long. I recall the promoter Henry came and sold a small chunk as well. And the stock, you know, just absolutely didn't do anything for the last few years, actually. It did around 1,900 rupees and then it didn't do. Today, in fact, it's making that point. You know, separating the men from the boys. We had the smaller names, High Tech, JTL, all of them came and raised some money. But this one has held its own. It's making a fresh 52-week high, and it's reported its best earnings, you know, in the last 2 quarters. So I think quality now is going to be standing out from here on. The largest player and stamping its authority.
And Aditya Birla AMC, another stock that Gaurav was earlier highlighting, the double upgrade from Citi. Aditya Birla AMC has also started trade with a gain of about 5%. It's been an underperformer compared to the other AMCs, both stock-wise and even in terms of financials compared to ICICI Pru, AMC, HDFC. But Citi now betting double upgrade now on this stock.
Harsha Upadhyay is with us, Chief Investment Officer at Kotak Mahindra Asset Management Company. Harsha, great to have you with us here. Thanks very much for joining us. You know, it's been, this week was, and actually the end of the previous week and the beginning of the first few days of this week just looked very painful and gripped by fear. Of course, I mean, as we end this week, it's looking a lot better. But is it going to remain a little better relative? It's all relative. Or you think we are still not out of the woods and there will be these bouts of severe selling? What's your sense?
Good morning, Prashant. See, as far as market is concerned, it seems to be more of the same. The volatility has continued into 2026. We are in the middle of the earnings season. Earnings season is expected to throw up a decent recovery compared to first half, in our opinion. It will not be very, very significant uptick, but definitely there will be signs of improvement in terms of earnings trajectory, at least for the large caps and certain mid caps in our view. That should help markets to take some support at lower levels. However, when you look at international news, that's not been great. Every few days we have been hearing some negative of the other. So to that extent, given the fact that valuations are still at around long-term averages, and the fact that earnings are still at the nascent stages of recovery, we are likely to see a similar kind of market movements over the next few months as well.
Harsha, where do you stand in realty? It's been such a tough beginning to 2026. The index is down 10%. Individual stocks are down so much more. What is the call you all had on real estate? And now, given the underperformance from last year and now, including 2026 so far, would you have a relook at real estate?
Rima, we have been underweight on real estate sector for quite some time now, and that has worked out quite nicely. As you mentioned, it has been a relative underperformer to benchmark until now, at least for the last 5 to 6 quarters. Now that we have seen significant correction, probably one can look at selectively betting on certain real estate names. However, one should also remember that probably we are in the 6th year of upcycle in the real estate market in India. So to that extent, we would be taking a little bit of risk in terms of a continuation of that cycle. Historically, the cycle has continued for 8 to 10 years. So definitely we are past the halfway mark in terms of the upcycle in real estate. So I don't think at this point of time we would take a very, very large top-down view on the sector. Rather, we would look to invest selectively if the correction continues.
Hi, Harsha. Good morning and good to see you. And Harsha, you know, the last couple of weeks, people have actually got even more fearful. No, earlier, at least, there was that bravado that was playing out. How do you see things play out? You know, if someone who's looking at allocating money, what would you tell them? That bulk of the bad news is in the price? Or do you think that still things are very, very skittish, both on the domestic as well as on the global front? And we've already fired quite a few bullets, both from the center as well as from the RBI. So what would your advice be? Bulk of the bad news in the price? Or is this still turning out to be a very, very uncertain couple of months?
Nigel, if you look at markets from September 24 onwards, it's been either declining or sideways for most of the period. So to that extent, I think time-wise consolidation has happened. If you look at the valuations, the large cap valuations are almost at long-term averages. If you look at mid caps, while it is slightly higher, the expected earnings growth is also likely to be slightly better than large caps. The real risk, however, still continues to be in small caps, which we have been highlighting for more than a year now. The valuations are almost 40 to 45% premium to long-term averages when you look at the index valuations. Over the last 5 or 6 quarters, there have been at least 2 or 3 quarters where the small cap earnings have actually declined. Forget about the expectations of 20-25% growth. They have not even given positive earnings growth. It's been a decline. So to that extent, the valuation risk in small caps is still very, very high. And in this quarter as well, we are unlikely to see any significant pickup in small caps vis-a-vis large and mid caps in terms of earnings trajectory. So to that extent, I would say that while markets have consolidated well, it's better to be in large and mid caps. Depending on your risk profile, you could choose a different proportion of large and mid, but it's still better to be in large and mid rather than focusing on small caps at this point of time.
Harsha, budgets in the past, if you look at the last 10 plus years, they've marked a decisive shift. Earlier it was capital goods, defense, etc., and the kind of spending. And that decided the way capital allocation was done, which were the outperforming sectors. Then there was a marked shift towards consumption, boost to rural as well as urban consumption. In this budget, do you expect any sort of a turn which can dictate the way money needs to be allocated?
No, it doesn't seem like, Reema. If you look at nominal GDP growth expectations, they are likely to be somewhere in that double-digit band, early double digits. So given that and the fact that the government is going to keep an eye on fiscal deficit, and probably we are going to see a 10 to 15 basis points of lower fiscal deficit number for the next year, and the likely fact that possibly you will also have a glide path towards a lower debt to GDP numbers, etc. It's very difficult to assume that there will be very large capital expenditure plans from the central government. In an absolute way, yes, it will still be a very large number, but on a year-on-year basis, you are likely to see maybe early double-digit kind of growth. And most of this is going to go into some of the sectors such as defense, renewables, manufacturing, and all of that. So it's likely to be more of the same in terms of the policy push, in our opinion. And of course, consumption has got some structural benefit through lower GST numbers. And even without anything specifically in the budget, that should continue to get some boost.
Harsha, just 2 questions. One, what are you telling investors, distributors, etc., with regards to what people should do with gold and silver ETFs? Right, that is one. And the other is, ICICI Pru AMC recently, I mean, actually they started accepting lump sum into their small cap fund starting today, with effect from today. I mean, across industry, I mean, you included, right? I mean, I think you were one of the first to stop inflows, March of 24, I believe. So any rethink? I know you just said valuation discomfort and maybe large caps are better, but just your thoughts there.
Prashant, on your first question about gold and silver, we continue to remain positive on both of these asset classes. However, one should keep a prudent asset allocation in mind when you are looking at any of the asset classes, and especially the asset classes which have done so well over the last 12 months. For example, gold is probably up 70-80% over the last year. Silver is up almost 3 times in a span of about 6 or 7 months. So to that extent, anything which has moved in a vertical fashion, in a parabolic fashion, is likely to see volatility even without any fundamental reasons. So to that extent, any aggressive investment at this point of time comes with a lot of risk. However, given what's happening in terms of global trade and commerce, in terms of geopolitics, in terms of world order in general, we do believe that precious metals will continue to see a reasonable uptick. However, one needs to have a reasonably long-term outlook and also needs to make staggered investments rather than jumping in the fear of missing out. I think that's the biggest issue that one has to contend with at this point of time. As far as small caps are concerned, clearly our view remains that they are quite expensive. We are not stopping subscription of our small cap funds. However, we are clearly communicating to our investors and partners that probably it's better to be in large and mid caps in different proportions depending on the risk profile at this point of time, rather than taking focused small cap exposure. However, even when you take diversified exposure, you are likely to get 5-10% kind of exposure to small caps, which will be more of bottom-up selective opportunities that the portfolio managers would bet on. And that's sufficient enough to take an exposure to small cap at this point of time, in our view.
Harsha, we'll leave it there. Thank you very much for joining us. It's a pleasure having you here on CNBC TV 18. Well, we want to talk about our first corporate in the program. Coforge is the company I'm talking about. The reported numbers, and it's been a beat across the board. Revenues, margins, both slightly better. PAT, though, impacted by exceptional loss. We are joined by Sudhir Singh, CEO at Coforge. The last conversation, Sudhir, we had was, of course, extensively around the Encora acquisition and what you're going to do there. And I just want to, and we'll get to the numbers in just a bit, Sudhir. I think you've told investors that in terms of financing that, you are very close to finalizing that loan and there is no need for a QIP. Can you just tie that in terms of the financing of the acquisition?
That's absolutely right. When we spoke last and on the 26th of January, we said that we might consider a QIP for retiring the $500 million debt that's on the company's books. We have been working with a consortium of banks. We have secured a rate of interest which we found extremely attractive. It's somewhere around the mid-single digits. And therefore, we will not be doing a QIP and the associated equity dilution. We will be going down the loan route, and we remain committed to what we said earlier. There will be no EPS dilution as a consequence of this loan assumption as well.
Yeah, I mean, equity is more valuable, isn't it? Sudhir. Rate of interest, you said, where are we at on this?
Mid-single digits.
Okay, mid-single digits. Anything else, just to tie in the Encora bit from the last time that we spoke, any movement at all, or all proceeding smoothly?
All proceeding smoothly, all proceeding as per plan.
Okay. Let's get to, so no QIP. That's essentially the first headline that we want to put out. And they're going to do the loan, $550 million, mid-single digit is the rate of interest, but no QIP, no dilution. So the numbers, as I said, I prefaced before I came to you, are good across the board. They're beaten expectations. On the BFSI side, though, which is a significant portion of your numbers, there is a bit of a degrowth. Could you start there? What happened in the quarter?
Well, the quarter, this was a seasonally short quarter, as you know, Prashant. We've closed 6 large deals during the quarter as a firm. 2 out of those 6 large deals have come in on the back of, from the banking sector itself. And in the investor call that we closed just about 15 minutes back, we've told the investors that next year, given the large deal momentum that we are looking at in Q4 and beyond, we believe that BFS has a very good chance of possibly being the fastest growing vertical for us in FY27. So we feel very good about banking financial services. And quarter 4 onwards, that reversal should be very visible.
And overall, FY27, considering your executable order book over the next 12 months is up 30%, what should we expect in terms of organic growth? And when will the Encora acquisition close? And how much can that contribute in FY27?
Sure. So, as you're aware, we don't offer revenue guidance, but in the investor call earlier today, we said that we believe that FY26, and you know that YTD we're growing 32.8% at the end of Q3. We believe FY26 has been a very good year, and we believe very strongly that FY27 is likely to be an exceptionally good year. That's how we've characterized the likely growth numbers that we see ahead of us. As far as the second question is concerned, the growth at this point in time is coming from all three core verticals. It's also coming, in our case, from the healthcare and the public sector outside India space. With Encora coming in, there are going to be a few additional growth levers. High-tech as a vertical, LATAM as a geo, 11, 10 million plus accounts that gets added. So the intent, as we maintained over the last 1 month, when we did announce the Encora acquisition, is to not look at Encora and Coforge delivering the same level of performance as we have over the last 8.5 years, but to actually bend the growth and the margin numbers upwards from where they are right.
Yes, I remember you called it defining moment, which will accelerate Coforge's growth into a higher orbit. I think those were the words that you had used when you had made that acquisition. Tell us a little bit more about these new verticals, which are also doing very well for you. Healthcare, high-tech, and this time your rest of the world business, which I believe, as you're saying, is the government leg of the business, has done very well for you. So how much can that drive the overall top line in FY27?
Healthcare and high-tech together are already 10.5% of our aggregate revenue. That business has doubled over the last 4 quarters. The exact number, if I remember correctly, is 95% growth across healthcare and high-tech. And this is all pre-Encora. With Encora coming in, we expect the growth to be on steroids going forward. The UK public sector and the Australia public sector, again, continues to do extremely well for us. In the investor call that we just concluded, we said that outside the 6 large deals in Q3 that we've already announced, there's likely to be a very big contract in the UK public sector in Q4, the quarter that we are currently in, that we expect to sign. So we feel very good about high-tech. We feel very good about healthcare. We feel extremely good about the public sector outside India. And of course, the core verticals, including banking, are firing very, very strongly.
Yeah, and that guidance which you gave as the last time we spoke with regards to, just to go back to Encora, about 200 basis point margin expansion, that's very much on track. I mean, that is the aim still, right?
Absolutely, yes, Prashant.
What about margins, Sudhir? Because I remember in one of your analyst calls, you said that FY27 onwards, you'll stop giving a margin guidance. You had guided for 14% by this year end. You're on track to achieve it. But thereafter, you may not give a guidance per se, but 14% will be the floor on margins. Can you tell us what the company is likely to do thinking on margins?
We believe FY27 is going to be an improvement on the margin front over FY26. We don't give a revenue guidance. We will not give a revenue guidance in the future. We never used to give a margin guidance. We gave a 1-year margin guidance for FY26 alone. We've said that there will be no margin guidance in FY27, but we have committed to the fact that at a minimum, the margin on the EBIT reported front will be maintained where it is. And it will be our absolute intent to make sure that it doesn't just remain flat. It looks up incrementally and hopefully materially.
Hi, Sudhir. Good morning and good to speak to you after a while. Sabre, that's one of your key clients. Some are doubting that there is financial turbulence out there, which in turn could impact your business. What do you have to say about that?
Sabre was signed about a year back. In the first week of the current month, the leadership, including me of Coforge, had a 3-hour meeting with the CEO, CIO, CAO, the entire leadership of Sabre. The program is going swimmingly well. We are ahead of the delivery milestones that we set for ourselves. We've always told our investors to recognize that Sabre is likely to be only 4 to 5% of our revenue. Please do bake in the fact that this is a firm, Coforge is a firm that's growing almost 33%. So while we continue to partner with Sabre, and that partnership is going well, we remain very cognizant of all risk mitigation measures that need to be taken at our end. They are all in place. Delivery is on track. And we feel very good about where that relationship is and the risk mitigation measures that we have in place.
You know, I asked you this last time as well, so they're going to ask Shweta as well when both of you came on about, because I mean this, there is, I think the first tranche of shares eligible, I mean the Advent can sell in I think by June, right? About 50% of shares. I mean, and Shweta, of course, very clearly said they're in it for the long run and they're not here to sell or anything. No, any conversations around that? Any assurances, etc.? I mean, you'd understand. Markets always, of course, have an eye out on that if there's large supply around the corner.
Prashant, we've had no conversation around this, and I suspect Advent is best placed to comment on it. From a regulatory perspective, they are allowed to sell 6 months post-closing, and closing at the current point in time appears to be likely to happen around April of this year. And they've also committed contractually to hold on to the remaining 50% at least till the end of June next year. Those are the data points that we have at this point in time, and I'll defer to Advent to comment on their plans.
Yeah. I mean, the conversation with Shweta at Advent was not very old, and at that point she had said that see long-term creation, value creation with this investment, and that there are no plans in that sense. So I assume nothing has changed, but just wanted to ask you that. Sudhir, thank you very much for joining us. It's a pleasure having you with us on CNBC TV 18. Thank you for being here. Okay, well, that's strong guidance from the Coforge management. Exceptionally strong FY27, just what the markets would like to hear. And of course, they've done a very large acquisition with Encora. 1677, 1678 is where we read. We take a break. We are joined by the management of Cyient. So technology very much in focus on the other side coming up.
Welcome back. Markets still flat, but the focus is on midcap IT companies. Cyient is the next one on our radar. It reported a mixed set of Q3 numbers. The company has achieved 3 consecutive quarters of improving sequential revenue growth. And the management in the conference call yesterday also spoke about achieving a 15% EBIT margin by Q4 of next year, Q4 FY27. That is for the main DET business. Sukamal Banerjee, Executive Director and CEO at Cyient, is now joining in. Thank you very much for joining in. Mr. Banerjee, you've said that FY26 will be a year of stabilization. FY27 will be the year of consistent growth. What kind of revenue growth should we expect for the overall business, all the 3 entities combined? And then if you could provide a little more detail about the digital engineering business, DET.
Firstly, good morning and thank you for having me. As you know, we do not give guidance. So from a perspective that you mentioned, which is with regards to how we see the future play out, definitely from our plan perspective, we would like to drive high single digit, or I would say high single digit, and probably on the borderline of double digit growth year over year is what our plans are. But at the end of the day, it is what our ambition and plans are, and that is what we are working towards. Our focus is quarter over quarter. As you know, we are a turnaround story, and we have been working hard on that turnaround. And some of the results are showing up in Q2 and Q3, as you have seen. and we have some ways to go, and we continue to be cognizant of that.
Okay, got that. So FY27, the aspiration or the ambition is to hit high single-digit revenue growth, borderline double-digit, but this is not a formal guidance that the company is sharing.
That is correct.
For a sign. Got that. And particularly Q4, considering that there will be furloughs, what should we expect Q4 versus Q3?
So again, we do not give quarterly guidance as well, but we remain positive in terms of continuing our growth trajectory. And I'm talking about the DET business. From a semiconductor side, as you have seen, the semiconductor business has grown double-digit quarter-over-quarter over the last 2 quarters, and they continue with that momentum with a very increased order intake that they have announced. So I think overall, from a consolidation of Cyient DET and Cyient Semiconductor, which we report together, we should be on the growth trajectory.
All right. Hi, Mr. Banerjee, and good morning and good to see you in. What about bridging the gap towards that 15% guidance? I think it was towards the end of next fiscal. Tell us, how do you do it? And does that hold?
Yes, it does hold. So 2-3 things. Firstly, obviously, if you look at our numbers for the last couple of quarters, we have seen marginal increases, which is reflective of a couple of things. We took a very conscious decision that we are not going to slow down our investments, as shifting our service portfolio and our market portfolio is a very important aspect to our midterm to long-term growth objectives. So if you have to achieve the numbers that I'm talking about from an ambition standpoint for FY27, it is important for us to make sure that we make those investments now. So we have continued to make those investments. We also took some restructuring costs in both Q2 and Q3, and those are reflective in the numbers that you see. As we go forward, while investments will not ramp up, there will be incremental ramp up on investments. The restructuring will go away, and that creates a tailwind for us in terms of margins, which you hopefully should start seeing from Q4 onwards. And we have to continue working through FY27. It will be a combination of our continued focus on cost takeout, on largely non-people cost, and also a combination of making sure that the growth in revenue that we are talking about leads to lower absorption of our overheads.
Mr. Banerjee, morning, Prashant here. Could you give us the performance, the loss from the semiconductor business in the third quarter and April to December? And when will this stop being a drag?
Sure. Firstly, I think we need to look at semiconductor business slightly differently. As you know, our focus on semiconductor is a product focus. It is not a services focus. And like in the early journey of any product company, there will be investments, and that is what we are doing. From a perspective of guidance, we shared about this in the investor call also. Our focus is to become EBIT neutral in FY27, and that's something we are definitely working towards ensuring. So as the business continues to ramp up and our investments play out in terms of revenue stream showing up, we are confident that's going to happen.
What are revenues now and late 27, or, I mean, in terms of breaking even?
So in FY27, yes, we'll be, so we are not talking about the entire year. Sometime in FY27, we will become EBIT neutral is our guidance.
And what will revenues be from this business in 27, approximately, in the ballpark, just to get a sense?
I'm sorry, I didn't get your question. Can you come again?
What will revenues be from this business in FY27?
Okay, so I think you have seen the revenue trajectory that they have demonstrated, which is double-digit quarter-over-quarter growth. And obviously, as the base builds up, that may be difficult to sustain, but we are confident about the growth trajectory they are on. We have many things in works from a perspective of their growth trajectory, and we'll definitely continue to see that number play out.
Okay, let's...
Just, one more question on the semiconductor business. What was the loss so far in the semiconductor business at the EBIT level in Q3 or 9 months FY26?
I don't have that handy. We can get back to you. But I think, as I mentioned, our entire focus on the semiconductor business is what is our investment line and what is our revenue growth that we are driving. That is how we are managing that business, and we'll continue to manage that business for the time being.
Okay, all right. Since we're talking about this business, tell us about the deal signed with Kinetic Technologies. You're going to be paying close to around 900 crores, effectively doubles your target market. tell us the funding of this, and will it be EPS accretive in year 1, year 2?
Yes, it is EPS accretive in year 2, and that's what we announced when we announced the deal. From a funding perspective, it will be a combination of cash and debt.
Okay, you want to give us the mix out there, and how much will it add to the top line in FY27 itself?
So from a mix perspective, it is something which it is to be determined as we get closer to our closure, which is sometime expected in April. That is when we're going to take the final decision. It will have a healthy debt component, and there will be cash as well. The exact split will decide at that point in time. And there was a question around the revenue. It is going to double the business that we have today in terms of overall run rate.
So when you give us that FY27 guidance of high single digit, maybe closer to double digit, how it will be aided by the some contribution coming in from this acquisition, Kinetic Tech. So can you give us a sense of what organic growth for the company will look like?
No, our numbers that I'm talking about is for the DET segment. Semiconductor, we report separately. For the DET segment, there have been no acquisitions. And the numbers that I'm talking about and sharing what in terms of our ambition is our organic growth. So as and when an acquisition happens, obviously we'll talk about it at that point in time.
No, got that. Fair point. Any more acquisitions that you're looking at for the other businesses?
Sure. I mean, we are continuously evaluating the market like anybody else in our business. As things change, as I said, we are a turnaround and a transformation story. It is important for us to make sure that we are changing our portfolio towards more higher growth areas. And we have consistently talked about in our investor calls as well as to the investors that it is important for us to make sure that we acquire higher growth sectors, which is largely around digital and data, which has a significant overlap with the business that Cyient does in terms of future transformation, as well as there are certain segments or industries in the market which are very big, where our presence is minimal, like automotive, like software, where we would like to definitely look for strategic transactions as and when they become available.
No, makes sense. Thank you very much for joining us. Good luck, and hope to catch up again soon. Well, CAMS is the next company we want to talk about. They reported a decent set of third quarter numbers, strong growth in non-mutual fund revenue. EBITDA margins expanded by 135 basis points during the quarter gone by. Anuj Kumar, Managing Director at CAMS, is with us. We're talking about three things: outlook, of course, for 27, impact of mutual fund regulation changes, and growth opportunities in the non-MF business, which, of course, I mean, CAMS has regularly told us is growing much faster, will be a big area of growth. I want to start with point number 2. Thanks very much for joining us here, as always. Prashant, this side. Has there been a conversation with mutual funds in terms of renegotiating contracts? Because, I mean, you know, as we understand it, the discussion is, the effort from the regulator side is to, ask them to lower what they charge. So their cost structure perhaps under some pressure. So has that shown up in terms of your talks with mutual funds, sir?
Good morning, and thanks for having me over on the show. So you're right. The objective of the regulator is to make the product cheaper for the marketplace and investors. All the recent TR discussions, I think, will have, I wouldn't call it a marginal impact. It is not substantive, not marginal, but a small impact on the larger mutual funds. As we've always said, we are at the high end of value delivery for the mutual funds in terms of running the entire liability side operations. So we believe we deliver sterling value to them. Let this play out over the next 4 or 5 months. If we have conversations, we will see how they go. But right now, there is nothing that's happening right now on that front.
Right. Is that because of the nature of these contracts and when they come up for renegotiations, Mr. Kumar, or it's just that it's not happened? I mean, they're not clear yet, so they've not asked you or renegotiated their rates and what you charge them?
Yeah, so there are many puts and takes there. I would just cleave the market into 2 parts. One large part of maybe the top 10 mutual funds will see some impact on account of the exit load going away. The rest of them will see balancing out of the impact of the exit load versus what they what is positively accretive to them from the GST front. So if you take the top 10, they are perhaps going to see some impact. They're also evaluating, so are we. So this hasn't commenced yet in terms of a formal dialogue. The other thing, of course, you're aware is that our unit price comes down every year. So there are scale benefits baked in. The unit price falls almost every year, which I think is anyways in favor of our customers. There are very few marketplaces which operate like this. So when you put the impact of these two things together, we're just waiting and seeing whether they want to have a conversation on this or whether they've figured out ways to absorb this.
So you're saying 10 large, and you'd be dealing with all of them, mutual funds, will see some impact.
About 7 of them, yeah.
You deal with 7 out of the 10 mutual funds where there will be an impact because of the exit load going away. So they're watching in terms of how to navigate this.
That's correct.
And when will this renegotiation come up, sir? At sometime during this year, 26?
Yes, I mean, if they choose to come back to us, it'll perhaps be in a 3 to 4 month time frame.
Okay, so maybe in Q1 of 27 is when we should expect it?
Yeah, I would not set any definite expectation on it because the entire exit load is about 5 bips. They run pretty large P&Ls. But if it has to happen, it'll probably happen in the first quarter of FY27.
Okay. All right. Hi, Mr. Kumar. I think we've got some clarity on that front. So let's focus on the numbers then. Revenues year to date, I think, up are only around 5%, with margins being maintained in that vicinity of mid-40s. For the year, what kind of growth are you looking at this year as well as the next? And in terms of your share, you were telling us that the non-MF business will grow at a faster clip. So the contribution will gradually move up. Give us the guidance on that front as well.
No, sure. So if you see this entire year, I would just say that it is in the backdrop of a large price reset we had taken about a year back, about 9 months back. So year-on-year growth numbers for the quarter and for the year will be in single digits. That's point number one. Despite that, you would have seen that operating EBITDA from the first quarter of this year has climbed up from about 43 to 46%. A large part of that is just productivity delivered out of our technology initiatives, largely playing out. You would have seen the CAMS AI brand go live. I think a lot is happening in the base tech stack for us to get benefits out of that. The non-MF business for the quarter grew about 25%. A broad statement of the markets has been that this will grow ahead of the overall enterprise revenue growth. So we've set a 20% baseline. This quarter was better. When you look at FY27, we would not be comparing revenue growth with the larger base. It will be with the smaller base after the price reset. So we are expecting FY27, and again, this is not a formal guidance. We don't issue those. But we're expecting that revenue growth at the enterprise level should be about 12 to 13%. Non-MF revenue growth next year, FY27, should be upwards of 20%. And EBITDA, operating EBITDA growth should be upwards of 15%. These are broad indicative numbers. We don't issue guidances, but just the way we think the year will play out, all of that should be possible.
Right. So revenue growth of 12 to 13%, Mr. Kumar, that's what you're saying in 27?
In 27, yes, absolutely.
Okay. And since you're sharing those numbers and you said these negotiations will take place, is there any sense of how to think about the impact? I mean, worst case, base case, and bull case.
See, I'll give you a very broad indicative number at no percentages, only absolute numbers. We expect a revenue increase, absolute rupees, to be between 150 to 200 crores a year. If any of this happens, the impact could be about 20 to 25 crores annually. So it'll be a small fraction or a manageable fraction of the overall revenue increase that we get in a year. I think we are mentally prepared for any of these dialogues to commence. Like I've always said, that the amount of value, expanding value that we deliver to the market, we don't expect any dialogues with friction. They will be fairly amenable to listen to our side, to our expanding scope and the value we contribute. So it is not a in-the-face kind of dialogue that we're expecting.
Okay. So you're saying that worst case impact with respect to mutual fund negotiations led by this attempts to lower fees by the regulator annually could be about between 20 to 25 crores. I just want to get that right.
That's correct, in that range.
Okay. That's very helpful. The other bit, which is a more structural thing, of course, is this move towards passives, ETFs, and we've seen, of course, this happen in the Western world in a big way. And here, of course, I guess many believe that it'll happen, and of course, their cost structures are much lower. So, any thoughts on that? I mean, that is, as I said, a slightly longer driven theme. Will that have a sobering impact on your profitability as well?
It's a slow reset. It's a very slow reset. Whatever you've seen in the world of ETFs in the last maybe 12 months has been led by gold and silver. Hasn't so much been the impact of equity ETFs. I also believe, and as an investor, not as part of the ecosystem, as an investor, I see that in falling markets, actively guided mutual funds have given much better cushion to investors. So what we see is that about between active equity and passive funds, there is perhaps a 1% swizzle every year. That 1% swizzle has been there at this rate for about the last 5 years. If it stays that way, you could see about 0.5% of active equity give way to index funds and ETFs. And I'm saying net of the metals, this is purely equity. We're prepared for that because overall, as you've seen, the AUM growth in the market has been 20%. Last year, despite whatever has happened in the market, the asset growth for CAMS has been 19%. Within that, if a 1% swizzle happens, I don't think it is a material impact to our financials.
Got it. Okay, all right, sir. Thanks a lot for joining in and giving us that clarity. We look forward to chatting up with you rather soon and wish you all the best for the remainder of this quarter.
Thank you very much.
Well, it's time to slip into a short break. On the other side, we'll connect with the management of HDB Financial Services as there was a bit of a rejig at the top. Stay tuned. Well, the advanced decline ratio has turned in favor of the number of stocks declining. So that's telling you the markets are still very, very skittish. The good news is 20, 30 points down is par for the course. This market just needs to stop falling. That said, let's get to our next management. HDB Financial Services, that's in focus because Mr. Arjit Basu resigned as the non-executive independent director and chairman with immediate effect. He cites conflicts of interest as the reason to step down from the board. To discuss this, give some kind of a surety and clarity with regard to why the step was taken, we have Mr. Jaikumar Shah, the CFO of HDB Financial Services, who joins in. Hi, Mr. Shah. Good morning. Good to see you in. And, sometimes investors get a little bit rattled when someone at the top, moves on. You've given the reasons are out in the letter that you'll have put out. But, give us some clarity. Why did this take place? And the investors will be looking for some reassurance. So go ahead.
Sure. So firstly, let me, take a few seconds to just thank Mr. Basu. I think he's been our chairman for 5 years. He joined same time as me almost 5 years ago. Has given us absolutely invaluable advice, stellar guidance, and also took us through the IPO that we did earlier, middle of last year. I think as he mentioned, his term was coming to an end in a couple of months. He's looked at what potential options come his way. Mr. Basu in his letter has mentioned that he has a certain opportunity coming through as, in a bank where his name has been put forth. As you would think, we work with all the large banks in the country. And, given the kind of related party transactions that come up, scrutiny that comes up, Mr. Basu, again, coming from the HDFC group, felt from a governance standpoint, it's best that, he takes a step back and does not have any questions raised. So that's the conflict that he potentially referred to. I think from a company point of view, we've absolutely had a great, relationship with Mr. Basu. Mr. Basu also has acknowledged in his letter that, the governance standards that the company has held has been very high. So that's how I would put it, not to read more than that.
Jaikumar, hi, this is Rima here. So when will the company appoint a new non-executive independent director and chairperson of the board? Have you identified anyone since anyway his term was coming to an end?
So we are in the process. As I mentioned, we're part of the HDFC Bank group. I think the group goes through a very detailed process. We will work with our parent to make sure, we have a chairman in place soon.
Okay. Any timeline?
No specific.
And have you
timeline.
identified candidates?
If you look at our board, we have 6 independent directors. So it's a very well, how do I say, a very illustrious board that we have of, eminent dignitaries. So I'm sure, with that board, we'll be able to function very smoothly in times to come.
Okay.
At the same time, the bank will, appoint a chairman.
Just some clarity. It'll be the replacement will be from within, or it has to be, from outside.
We have both options open. I think we'll work with the bank to do the needful. As I mentioned, with the parent, with us, and strategy is very clearly laid out. Okay. From a smooth functioning of the company, there wouldn't be any, challenges as such.
Okay, all right. Since we have you with us, Mr. Shah, just wind this down with how things look going ahead. I think you'll be looking to outgrow the industry. So just give us some clarity on that. And there has been some various segments of stress, right? Do you think the stress is receding right now? Your reading of the situation. Please go ahead. Growth as well as stress in the system.
So from a growth point of view, as we've called out in our public calls also today, we look at nominal GDP and a growth above and over and above that. And we're fairly confident at this stage over the coming years that we will work towards that growth targets. Right. In terms of stress, there has been some stress in the past few quarters. Stress is receding, and it's visible through the numbers as well that we should be able to march forward well going forward.
Right. Mr. Shah, hi, morning. We have we had Ashok Leyland with us this morning, right? We played out portions of an interview, and he said, well, for commercial vehicles, he said it's likely to be a great year. Now, your exposure to commercial vehicles is not small. I mean, it's, I think, significant, right? 40% is asset financing. CVs make a large part of it. Do you resonate with that view? And any thoughts specifically on that segment?
So Prashant, the way I would look at it is we're very optimistic, but at the same time cautiously optimistic. Today things change by the day. It's important that we push hard and at the same time be resilient to the same. So that's the focus for us. I think Q4 has always been good for us as a company and the industry. And as we march into FY27, I think the focus will be to continue on that pace with the right asset quality as well.
Right. Okay. But relatively the pace is picking up for CVs, right? You'd give us that much?
Correct. That's correct.
Got that. We'll leave it there.
And quality is also improving.
Asset quality is also improving. Yeah. That's the feedback we get from elsewhere as well. But thanks for confirming it. Appreciate it. Good luck. And thank you for joining us for this short call and explaining what's, of course, why Mr. Basu stepped away. Another opportunity, basically. 711 is where HDB is at. Market's absolutely flat. But basically, you've got sharp turns, right? Look at just Gokuldas exports went up 6%, almost back to about 600 yesterday. A complete reversal, 5% lower, right? And it's just that kind of a market where we are seeing and a lot more. So, I mean, the other big reversal, of course, is all these silver gold ETFs, right? Sharp 15% cuts yesterday, all back 10%, at least 10%, if not more. The other one is IIFL, is up 4%. We had the management with us, and they're saying, well, that special audit by the IT department is procedural. Stock was down 15. It's still down basically from before the from when the company reported results. It's down 10% still. But today it's coming back. Bajaj Consumer, big move yesterday. Another 3% on the back of numbers. APL Apollo is up about 3%. So some of what we identified right in the morning, continuing with gains. Ujjivan Small Finance Bank is another one which is up about 8% or so. But I mean, if you just look at the top 12 odd quotes, 15 odd quotes with volumes, it's all silver, gold. And you got a stray stock thrown in between in that sense. Market breadth is negative. Some 200 stocks, it declines outnumber advances by some 200 odd stocks. So it's not hugely negative or anything, but there is, that's where we're at. Eternal is the number one volume-led loss, 3% down on Eternal. So it sold off hugely from the day's high, and that cut continues. Actually, Swiggy is down about 2.5% as well. Well, it's a quick commercial break here, and we're going to come back with the management of Indian Bank on the third quarter numbers and outlook for 27. Lata will take that conversation forward.
Welcome back. Earnings season. So we continue with corporate radar. Indian Bank is on our radar. It reported a good 14% growth in loans and almost 13% growth in deposits, 12.6% to be precise. The bank's net interest margins improved quarter on quarter by 5 basis points. They now stand at 3.28. However, as in all other banks, net interest income and profit growth have been muted, both at around 7.5%. Joining me to discuss the results is Mr. Binod Kumar, Managing Director and CEO at Indian Bank. Mr. Kumar, good morning. Thank you very much indeed for your time. Would you say margins have bottomed, and going forward we can only see it inch up, probably 5 basis at a time?
Thank you, Lata, for having me here. See, margin, I will not say it has bottomed out, because the impact of 25 basis rate cut, which has happened in the December, impact of 2 months will come in this quarter. And also, if you see, after December, bulk rate has hardened by 20 to 30 basis points. So I expect there may be some moderation by 2 to 3 basis points. And if there is no rate cut, next quarter onwards, we can see the inching of the NIM.
Okay. Well, your yield on advances have gone down a bit, and your yield on overall funds also has dipped. But now we are seeing interest rates rise in the market. AA paper and SDLs are fetching a decent amount. You don't think you can make up that loss of, loss in loans, EBLR loans, by a higher yield on investments?
But then that will have again impact on the treasury portfolio. Overall, if you see, if interest rate going up, then maybe mark to market, yes.
Okay. So that's not helping. Where do you see growth coming? Will you be able to maintain 14% loan growth?
Yes, I will be able to maintain around 13 to 14% growth. If you see, my majority of the growth is coming through RAM sector. RAM sector, I have grown in excess of 16%. Even retail, I have seen good traction of 18%. MSME also very good traction. We are seeing 16%. Agriculture also 16%, 15%. So going forward, I expect I will be able to maintain growth of 13 to 14%.
Yeah, all your sectors have grown 15 and 16, except corporate, which is 8. So that's why your average is working out to less than 16 to 14%. Is corporate showing any signs of wanting loans?
Yes, definitely. If you see, my corporate loan growth used to be in the range of 2 to 3%. Last quarter, it was around 5%, but this quarter, it is more than 8%. There are few sectors with sectoral based demand are coming. Like in green finance, a lot of demand is coming, whether it is EV, or solar power manufacturing, solar battery manufacturing, solar cell manufacturing, a lot of demand is coming. We are also seeing good demand in data warehouse. That is also coming into a big way. Plus logistics sector also, we are seeing good demand in the shape of fleet advance and also warehouses construction. So there we are seeing good demands.
Okay. But I agree with you. In fact, situated as you are in the south, I guess data centers and logistics should all be very high. All the auto ancillary guys only seem to want to invest in deep south. So you must have a very good logistics portfolio. But Mr. Binod Kumar, I already noticed that your yield on advances or your cost of funds is actually higher than your cost of deposits, because you must have raised CDs. Do you think the percentage of CDs will go up now in this quarter?
No, if you see my, not only CD plus bulk, if I take, that has remained at the same level as September. And my endeavor will not to go for the bulk. My endeavor will be to maintain CD and bulk at the same level. Of course, I mean, if there is a very good demand, of course, we can raise. But my endeavor will be to maintain at that level only.
Okay. But it's just looking tough for all the banks. There is a big difference between the advances growth and the deposit growth. In your case, the difference is only 1 percentage point, but for many others, the gap is higher. Okay, I want to come now to what I think is the most difficult part of your presentation. Your SMA2. Why did it go up so much in one quarter? Your SMA2 in the second, as of September, was 2,461 crore, rises to 5,000 crore. What happened?
Yeah. So let me first tell you about the overall SMA book. My overall SMA book has more than halved. It was in December 24, 11.88%. This quarter it is 5.05. So more than half it has. And there are two PSU accounts which is oscillating between SMA 0, 1 and 2. Last quarter it was in SMA 0. This quarter it has come in SMA 2. But I don't see any stress in these accounts, and we are quite hopeful that these accounts will not slip to the NPA.
Okay, I just want to explain to our viewers, when we speak about SMA 2 or SMA 1 are those loans which are overdue, but overdue for 30 days. SMA 2 are those loans which are overdue, people have not paid interest, but they have not paid interest for 60 days. And that is the number that has gone up from around 2,000 crore to around 4,500 crore in the case of Indian Bank. But as Mr. Vinod Kumar points out, it's also important to note that compared to year-ago levels, it is half. It was sitting at 7,800 crore. It is, by those standards, down to 5,000 crore. You don't expect a rise in NPAs, do you, sir?
No. Our slippage ratio will be very much under control. This quarter also, if you see, it has come down sequentially from 0.79 to 0.69%. And we are not seeing any stress in any of the sector. Some smaller loans are there, but we have taken that in stride and we account for that. I don't see any, upsurge in the slippage.
Okay. What about, no, because it was SMA 2, 5,000 crore, I'm asking, you expect most of them will pay up by the 90 days?
It has gone up only because of two accounts, and that outstanding of two accounts is 3,000 crore. If you take 3,000 crore, it will be the same level, rather improvement.
Okay. So that's the danger part. What about recoveries? You are doing a standard about 2,000 crores in terms of recoveries a quarter. Will that continue?
Yeah, recovery. See, I have given guidance of between 5,500 to 6,500. So far, I have already achieved 5,300. And quite hopeful that the number what we have achieved in the last quarter will continue with that.
Yeah, but credit cost has inched up. Okay, no, sorry, that's last year's. I'm sorry. Let me come to capital. You've used up a little bit of your capital. You were standing close to 17. Now your capital adequacy is at 16. Will you want to raise money now?
No, in fact, see, capital has in fact come down because of the, we have 2,000 crore 81 bond retired and we have not raised that. So we are comfortably sitting at 16.58, and in March profit will be flowed back. So it will again reach, I think, around 18%. So I don't need any capital, additional capital. And one more data I will just share. My return on equity is in excess of 19%. And my credit growth is around 13 to 14%. So going forward also, I think capital will not be required.
Oh, you think capital won't be required. Finally, how much was the impact of the new labor codes for you? Will there be more of it in the coming quarters? And for the banking, PSU bank sectors in general, is it an impact at all? Normally, do you all have contractual staff?
No, we don't have any contractual staff. Only 15 staff we have, and impact of that is around 55.86 lakhs. Very minimal impact we have. Because our public sector banks, normally we have regular employees and very few contractual employees, maybe in a few tens or 20s or 30s.
Okay, so this quarter you didn't have any impact of the labor code at all?
No, not at all. And going forward also, I don't see much of the impact.
Okay. Did you hear anything about integration, consolidation from the DFS? It was very much the news about 6 months back. Any update on that?
I have heard through media only, not anything.
DFS didn't speak about it? Okay.
No, nothing has been discussed with us. Thank you.
Okay, sir. We will leave it at that. Thank you very much, Mr. Vinod Kumar, and all the very best for the last quarter as well. Okay, so that's the word coming from Indian Bank. It's a good set of numbers. I mean, margins have improved, but it's a very cautious guidance saying that a bit of the margins may be given back because, the rate cut came in December and therefore the loans became cheaper only for a few days. Now, in the entire impact will be felt in this quarter. So we should expect some pressure on margins in this quarter as well before they start rising. That's the expectation. Well, the other set of numbers, since we are talking about Indian Bank, we should talk about Bandhan Bank. not a very pleasant set of numbers, but the only point is that it was as estimated. But the expert of the field is Gaurav, and he's here to detail to us the Bandhan results. Go ahead, Gaurav.
Well, as if you look at Bandhan Bank, the results were expected to be weak, and bank has actually reported a bit of a weak set of numbers. Net interest income that declined almost by 5% on a year-on-year basis, while there was a support of 120 crores because of the sale of ARC, and that is the reason why we saw other income going up, and PPOP also declining by 28%, but there was a support. Other than that, if you look at the PPOP, there was once again 120 crores of impact because of the new labor code. So we could say that the gain from ARCs was offset because of the new labor code. But as a result, if you look at provisions, they have declined, and profit declined almost by 51% on a year-on-year basis. Now, what actually is positive for the bank is that first is net interest margins. If you look at net interest margins, they have improved almost by 6 basis points on a sequential basis. This was in line with the street's expectation, but what is positive is that even going ahead, management said that the net interest margins will improve in the next 2 to 3 quarters, and the reason being that the cost of deposit is something that they are actually controlling in a very good way, and that is the reason net interest margins are likely to increase. Second is the credit cost. Now, credit cost has declined almost by 12 basis points, although it is a bit elevated, but management said that credit cost will decline further. They have given a guidance of around 1.6 to 1.7% credit cost next year. So that is something which has been taken in a positive way by the street. As we speak, the stock is up more than 4%.
Okay. All right. Taken positively. Thank you very much, Gaurav, for that update as well. As a whole, actually, public sector banks are doing well. Today, among the gainers is really Bank of Maharashtra, Union Bank, Canara Bank. Public sector banks have rendered a brilliant account of themselves, and they've always had a lower discounting in terms of ROA. So now the market is sitting up to acknowledge that public sector bank quality, especially asset quality, and the steep fall in credit costs in all of them is here to stay. And then, of course, we had the big news that power discoms have turned profitable. That was the single biggest source of NPAs. That also is gone. So public sector banks have clearly got a leg up from this general improvement in asset quality in the economy and in their own books. Market is also punishing where you have got management change news. So Eternal is still a little bit under the weather. Interglobe, people still worried, although most of the brokerages have called a buy after that difficult quarter. So market still dithering, not in a very fine place at this point in time, though we have seen other markets in the green. Indian markets still struggling to find buyers. On that note, wrap up on Bazaar. Chartbusters coming up.
Indigo's profits take a one-off hit on December disruptions, even as the core business shows signs of resilience. Shares of the airline skid in early trade, down 2%.
Bandhan Bank delivers a stable performance in the December quarter, reporting a slight uptick in the net interest margins. The stock is up close to 5% as brokerages Motilal Oswal and CLSA issue bullish calls.
Robust earnings provide a leg up for APL Apollo. Margins expand, EBITDA per ton grows over 20%. The company is looking to double its capacity by FY30.
Splendid moves from Hope First Finance following a good show in the quarter gone by. A strong all-round performance was aided by a 60 basis point uptick in margins. Return ratios also improve.
Tanla platform skyrockets on the back of strong third-quarter results. Margins expand while profits grow 11%, aided by strong top-line growth across segments.
Hello and welcome to Chartbusters. We're coming to you live from the cnbc TV 18 Motilal Oswal studio. I'm Nigel. With me is Mangalam and a slight tinge of green on the top of the screen. So thanking God for small mercies, Mangalam. Another show we start with some green. It's a Friday. I'm sure you're going to be smashing it out of the park because it's the long weekend as well. But let's hope we end on a stable wicket.
Let's hope we end on a stable wicket. Long weekend, Nigel, but you know, it's also the weekend for Lollapalooza, which we'll be watching a lot of those music grooves and all of that and stuff. And tonight, if you like house music, Nigel, there's DJ Tiesto who plays. You've probably heard of DJ Tiesto. I'm not sure, but as we speak, you know, the Nifty is just flitting.
You're getting me passes for either of those two?
You come along with me. You're my plus one. I'll just tell Sonal that.
Lola, okay.
Oh, okay. All right. On that note, what we'll do is...
I'm saying, but he's already promised to take me. Okay, I'll read
it. A perfect time, actually, to get speaking to the management of Radico Khaitan. Abhishek Khaitan, who joins in now after, what was a stellar quarter for the company. Yesterday, the stock ended about 6% higher as well. And good volume growth, much ahead of peers. Thanks a lot for joining in, Mr. Khaitan. As we say it in your business, cheers, right? A stellar set, much ahead of peers. So, for starters, can you detail what is it that you did differently for volume growth? I mean, what's a sustainable run rate here?
So, Mangalam, first of all, wishing you and all the viewers a very, very happy New Year. We always believe October to December is the festival period of India. And luckily for Radico, it has been truly a good quarter. In fact, it is the strongest quarter ever. So we had a volume growth of 16.7%, and we did the highest ever volume of 9.75 million cases. And also we had the highest ever EBITDA of 265 crores, which is a jump of 45% in EBITDA. Corresponding to the same quarter last year. Our net profit also grew by 61% to 154 crores. So in fact, what we saw, and most importantly, is our P&A category grew by 25%, which we are happiest about. So the hard work, what we have been doing in the last 4, 5, 6, 7 years has started playing, and the premium brands have started now gaining pace for us. And the growth, what we are getting from all across India. So every state is contributing to the growth. And for us, like our P&A brands like Magic Moment Vodka, which is the largest selling vodka of the country and the 6th largest in the world, has grown by 18% in the current quarter. After Dark whiskey has grown by 40%, and Royal Ranthambore has grown by 50% in the quarter. So overall, we have seen growth everywhere.
All right. Hi, Abhishek. Good to see you. Well, let's focus on your volumes. Now, the 9-month volumes are more than 40%. I think that's nearly double of what you were guiding for earlier when we were talking about more than 20%. What would you update, your guidance currently? Do you think you can do even better?
As far as the growth goes, I think in the fourth quarter, we should end the year at a volume growth of about close to about 20 to 25% in terms of volume. And going forward, our focus is more on the P&A category, where we expect our P&A category to grow by 15% for the next 2 to 3 years. So I think that is where our focus is. And as far as the luxury portfolio goes, I think it is doing extremely well and will be close to our 500 target.
Okay, what about your luxury portfolio then? That 500 crores, you're on track this year itself?
See, that we will because if you see in the last 5 years, we have done a lot. We have launched 6 luxury brands, starting from Royal Ranthambore to Sangam to Rampur Barrel Brush, the Spirit of Kashmir, Vodka, Kohinoor Rum, and our latest Virasat Indian Single Malt. So I think the luxury portfolio has a long way to grow. And I think it should grow by about 30%, 30 to 35%.
All right, so luxury growing over 30 to 35%. What about margins then? Because, raw materials are favorable right now for you. You are premiumizing. You will also have to perhaps, increase your spends at some point in time. Your margins have increased. Will you settle at, this 200 basis points increase this year? And what's the outlook for next year?
Mangalam, our margin, if you see, last year we ended at 13.8 and we had guided about 150 basis point. But in the current quarter, our margin is 17.2 and for the 9 months, it is 16.2. As far as I see the fourth quarter going, we expect the margin to be same as this quarter, if not better. And going forward, we expect about 125 basis point increase in further margin if the raw material stays where it is.
Abhishek, cheers all the way. You're sounding very, very optimistic. Now you've repaid close to 200 crores of debt. When you make good amount of money, obviously your debt levels become more comfortable. Will it stabilize at current levels or are you due to be debt-free soon?
See, the company is throwing a lot of cash. So I think debt is least of our concern because our internal working capital would be about more than 1,000 crores. So I think debt is least of our worries. So FY27, I think we'll be debt-free.
All right, you will be debt-free by FY27, least of your concerns. But something that's concerning the environment right now is the regulations, right? Ahead of the budget, are there any risks that you foresee, especially given the recent crackdown that took place on tobacco?
I think everything in moderation is good. And I think I don't see our industry facing that pressure because we are one of the highest contributors to any of the state government. And we've always seen wherever there's been prohibition, there's been always a backlash. So I think our industry is quite responsible. And as far as it has to be, I think we don't see it as a worry.
Oh, interesting. But then what's the next macro trend as per you?
See, I think the white spirits, which I've been always saying that, globally, it is 28%. In India, it is only 4%. We are seeing a lot of traction in the white spirit space where Radico is a leader in vodka, in our gin, Jaisalmer. Indian craft gin has a market share of more than 50%. So I think going forward, I think white spirits is going to gather a lot of momentum.
All right, white spirits going to gather a lot of momentum, Mr. Khaitan. Unfortunately, I'm not the ideal consumer for your product. In fact, you've also in the past said that you're not looking to launch any of the zero alcohol beverages. But whites, Nigel, what are your thoughts on whites? He says globally whites are 28%, in India it's just 4 to 5%. Whites are gin, white rum and vodka. What's your poison of choice?
Gin. I would go with gin actually.
Tequila?
Nice. Tequila as well. Very good. Yeah, and low calories, Mangalam.
Yeah,
so
low calories
if you ever choose to come onto this side of it, then you can maybe in fact, go
and if you choose to come on this side of it, there's just, so yeah, there is one of that. or just plain soda. Plain soda.
Just come on this side.
Well, we'll decide that. We'll take a short break, but on the other side, we discuss jewelry after alcohol. Bluestone Jewelers founder CEO Gaurav Singh Kushwaha joins in after the break. Well, ahead of the long weekend, virtually undecided for the market, flitting between red and green, but one stock which is off the highs, significantly off the highs, down about 9% from highs, is Bluestone Jewelry, down 3%. Remember, the numbers were good. Ahead of numbers yesterday, the stock had already run about 11%, and maybe the stock sold off for three particular reasons post their numbers. One, as compared to the reported growth in peers like Candere and Carrot Lane, the growth of 27.5% was slightly lower. Second part is that there was a large element of inventory gain, which has led the EBITDA to be higher. And the final part is that the stock had already seen an 11% up move ahead of numbers yesterday. That explains this sort of move in an otherwise good performance coming in for Bluestone Jewelry. Gaurav Singh Kushwaha, who's the founder and CEO, joins in now. Thanks a lot, Gaurav, for joining in. Congratulations. The revenue growth was good, EBITDA even better. But what I want to understand is, what's the current unhedged inventory that you're sitting on, and what are the likely gains in fourth quarter because of that? Because between the third quarter and now, there's been a serious jump in both gold and silver prices.
Thanks, Mangalam, for having me. So essentially, what we have always maintained that our inventory, our hedge ratio, are always going to be in the ratio of our equity to debt to kind of protect the balance sheet. In line with that, we maintain hedge at almost 50%. However, another thing to note is that every company, every jewelry company, whether you're hedged or whether you're unhedged, you always have inventory gains. We are the only ones who actually disclose it separately. But even when you're hedged, which means that you're short in futures market, at every rollover, you actually end up making money. In fact, in last 1 year, any company that has 100% hedged position on their inventory would have made almost 5 to 6% on that, which is generally bundled in gross margins. We are the only ones who separate it out. Now, given the sharp rise in gold price, we have unrealized inventory gains still sitting on our books, and which are going to be unlocked in next few quarters.
Which is what we want to understand the quantum of, sir.
Quantum, actually, it's a pretty, so quantum I can't disclose. We don't disclose that. 50-50 is the hedge ratio that we do.
Okay. All right. Hi, Gaurav. On a personal note, I was wanting to gift both the ladies in my home, wife as well as daughter, something, and I went and gave a little token of gold, but it should have been silver. They would have been much happier. That said, as a percentage of your sales, how much is silver, if you could tell us out there? And there would be big inventory gains there too, right?
We don't deal with silver. We only have gold, diamond, platinum. We don't deal with silver.
So thank you for the clarity then, because that was one of the queries that did come in. Will you be...
So the way we should look at the business is beyond inventory gains, and I understand inventory gains is no one's hand. It's our, at the same time, protecting the balance sheet is very important, and that's why the hedging policy that we have. I think more important is the EBITDA that we have delivered, which we disclose, pre-Ind AS EBITDA without inventory gains that we disclosed.
Got it. So what is a sustainable number then there? Because you said when you came for the IPO that a large part of your investments are front-loaded, older stores make 24% EBITDA, and as newer stores get older, you will get the benefit of operating leverage. So on a sustainable basis, what is the EBITDA likely to be?
Precisely. So last full year, that EBITDA, which was pre-Ind AS EBITDA, which adjusts for ESOPs, rental and inventory gains, that EBITDA was 1% last year. In first half of this year, we delivered close to 2 to 3%, and this quarter we delivered 12%. Fully should be significantly ahead of last year.
Okay, so 12 to 15% is a sustainable number.
12% festive, but in Q4 it will drop. But eventually we see our business as, because we operate in high margin categories, so we see our EBITDA to be in kind of mid-teens or from between 13 to 15%.
Okay, all right.
At maturity.
Okay, all right, Gaurav, will you be impacted by Titan's foray into the affordable jewelry segment?
Titan had always been there through Mia, through Carrot Lane and so on. So and Titan's or Tanishq's own portfolio also contains a lot of those products. So it's not that it's something new, that has always been there. So that competition has always been there, and our growth has generally been, I mean, we have been eating significant market share.
Since you spoke about
dynamics.
Carrot Lane, market share as well. So tell us that those competitors appear to be growing at a faster pace than you, right? So according to you, what is your current market share, and have you lost or won?
I wouldn't say so. So the industry is slightly complicated. So you actually have to look at, so most of the other peers, they actually have both primary and secondary sale. which means the sale to franchise is also disclosed as company sale. So for example, if you look at CaratLane's last year results also, their reported sale was 32%, but the end customer, their reported sales growth for Q2 was 32%, but the end customer sale growth was only 25%, which was 7 percentage points lesser than that. So I think to that extent, it's very difficult to just compare the headline numbers. And I think it would be wise to actually look for the consumer sales, the growth in actual consumer sales.
We don't have access to the consumer sales data. If you could, Gaurav, then tell us, on a reported basis, you've done about 27.5% sales in the third quarter. Reported basis, CaratLane has done 42%. Candere has done, obviously, on a very low base, 147%. Have you, in the third quarter, gained or lost market share?
See, Candere is very difficult to assess because Candere also is within Kalyan stores, right? So if some piece is sold, and that happens to be a Kalyan piece, like how Mia and Tanish used to operate, where Mia would sell within Tanish stores, right? So it's very difficult to kind of get hold of what is Candere's retail sales force. Another dynamics which plays in such volatile gold markets is that the demand for commodity products, which is coins, chains, low margin bangles, etc., increases disproportionately. So it all depends on who is playing in what segments. We generally play in higher margin segments. We don't have very strong play historically in lower margin categories. I think there are lots of dynamics, and hence looking at just one quarter when the gold was very volatile, just comparing those growth numbers to assess which company is going faster or slower, I think would be the wrong thing to do.
All right.
So if you look at any of the quarters before that, quarter two, quarter one, and so on,
right,
growth has always been strong.
So on that note, let's wrap this conversation with some
level also. Yeah. And December also. So we exited December at around 35%. So as things moderated, as more sanity prevails in gold prices, I think it would be much easier, or it would be a much better environment to predict which company is growing faster. Right.
Okay, irrespective of where gold prices are, that's not under your control. And obviously what the competitors do isn't under your control as well. Let's wrap this conversation with three very simple numbers, all right? Going forward, over the next couple of years, what is the kind of sustainable revenue growth that you foresee, backed by same-store sales growth? That's one. The second part, you've already told us that you are eventually aspiring for mid-teen sort of margins, but ad spends as a percentage of sales. You have leverage there as well. It was 9% earlier, now it's down to about 7%. Where does that number settle? That's two. And the third part, the number of stores that you're going to open. So the number of stores that you open, under your control. Ad spends, under your control. Revenue backed by same-store sales growth, under your control. If you could give us all these three numbers.
Sure. So on growth projections, we maintain, so we've generally been growing at between 35 to 40%. So we maintain the same growth projections in that range, between 35 to 40%, supported by the same store sales growth of between 15 to 20%. So we continue to kind of maintain those numbers. In terms of A&P, we always maintain that there's significant leverage sitting there as we grow more and more stores, and the stores mature. A&P as a percentage of overall sales was going to come down, and it has come down. We will maintain it at around 6%. I think this quarter was around that number. Going forward, we'll maintain it at that number. And the third, what was the third part? Third question?
Number of stores that you open. Currently, it's 275.
The store rollout. So 70 to 80 stores a year.
All right, take that point. Thank you so much. 70 to 80 stores every year. A&P is around 6%. Yes, go ahead.
As a very young brand, we are still significantly under-penetrated.
Yeah.
We started opening stores around 5-6 years back. So it's just a lot of scope of opening more stores.
All right, we take that point, Gaurav. Thank you so much for joining in, giving us an outlook, a peek into what the business is likely to be. We'll obviously touch base with you, sometime during the middle of the quarter to find out how the fourth quarter has been so far. The start has been good. You've said that you've seen mid-teen sort of SSSG and 35% exit run rate in December, which has continued into January as well. There was a big move on the stock yesterday. Currently seeing some profit booking. Take a short break, come back, more news and updates for you.
Welcome back. Well, the markets have dipped mildly into the red. That's not the problem. The broader markets actually have seen some selling, but you'll still take it. You don't want this market to fall. The rupee as well is fairly stable in today's trading session. So by the end of today, if you have the Nifty model as flattish and the rupee stable, the bulls will take it after the kind of selling that we have seen. But we have completely run out of time on Chartbusters. You stay with us because the time of trading hour is waiting by.
Good morning. It's a Friday morning on CNBC TV 18. You're watching us here on Trading Hour. We come to you live from the CNBC TV 18 Motilal Oswal studio. I'm Mangalam Malu, with me Hormuz Fatakia. The market's splitting between red and green, indecisive, and rightly so, because it's a long weekend and thereafter we have the January series expiry, after which is going to be an eventful February series because we have the budget, we have the RBI policy meet, and the remainder of the third quarter results as well. So all these factors playing on the market's mind right now after this fairly volatile week that we've seen, where we've tested lows of sub 25,000 and also highs of closer to 25,450. The market is biding time around 25,300. What's interesting, however, is the broader market still in a wee bit of pain right now. We have nearly 1,700 stocks which are declining for about 1,100 stocks which are advancing. Not as bad as what we've seen in the earlier part of the week, but there is some pain from the highs of today's trading session. Both those indices are beginning to move lower and at the lower end of today's trading range so far. A couple of stocks which are doing well. We have HUL, which has been resilient all through this tumultuous period. So up around 2.5% for this week, up 5% this month. Asian Paints, that one continues to do well as well. Oil prices are contained around that $60–65 per barrel mark with better prospects for demand, and having seen a big correction in the stock price already, Asian Paints is higher. And then we are seeing some traction in names like Bajaj Auto and the others. Basically, defensives are doing relatively better. But for all the other top movers in the market, Hormaz has moved across to the wall. Hormaz.
Well, you know, after the kind of week that you have had, you would take some bit of quiet that you are seeing on the Nifty today. Of course, not without its fair share of choppiness. But again, earnings reactions taking center stage today as well. Home First Finance is one name. Well, still holding on to gains of around 5.5% to 6%. It's the third straight day of gains for the stock. It's among the top gainers on the Nifty 500 today. It is the biggest single day gain in 3 months that the stock has seen, with over 13 lakh shares that have been traded. The 20-day average is just around 56,000 shares, and after the move that the stock has had, it is now nearing its 50-day moving average on the upside, which is at 1120. So that's the next level to watch on the upside. But it's been a good performer since its listing is almost doubled from its IPO price of 518. In a season of winter, Voltas is doing well in today's session. 4% higher. Today is the second straight day of gains. It snapped a 6-day losing streak when it ended higher yesterday. It had close to 9 lakh shares that have been traded on Voltas already, the 20-day average being just 1.3 lakh shares. Despite this move, though, the stock remains below its key moving averages, and it's down. It had the last January was a very tumultuous one for Voltas, was down 30% at the same time last year. But this one has been relatively quiet, as from the recovery that it has seen from the lows, it's still down 12 odd percent from its 52-week high levels of 1532. And lastly, Ashok Leyland, which continues to move higher with positive brokerage commentary coming in almost every other day, 4.5% higher today as well. The third straight day of gains. It's up 8% so far this week. The stock has gained in 6 out of the last 8 weeks so far, and over almost close to 1.5 crore shares have been traded on Ashok Leyland today. The 20-day average being just less than 50 lakh shares, so around about 3x its 20-day average already. The stock has sustained above its key moving averages since the month of August. Ever since it broke above its 50-day moving average, it has managed to sustain above those levels. And in fact, for the month of January itself, it's up almost 11 to 12%, turning out to be the best January that the stock has had since 2021, Manglam.
All right, we take that point. Those are big movers. Ashok Leyland, in fact, was higher yesterday as well. And today, we pointed out that there were a lot of long positions being added in the F&O side on Ashok Leyland yesterday itself. But Bandhan Bank, that is among the big gainers in today's trading session as well. What is it that the street likes so much about these numbers? We're going across to Gaurav, currently up 5%. Big move there. Gaurav.
Well, yes, if you look at Bandhan Bank, it wasn't a spectacular show, but once again, it wasn't expected to be a spectacular show either from Bandhan Bank. Because when we look at numbers, net interest income that declined by 5% on a year-on-year basis, almost in line with the street's expectation. There was a support of 126 crores from the sale of ARC in the other income segment. But again, there was another impact of 120 crores because of the new labor codes, and that kind of offset each other. And that is the reason when we look at operating profit, which is PPOP, that declined almost by 28% on a year-on-year basis. Now, provisions, they were likely to decline, and they have actually declined almost by 16% on a year-on-year basis. And as a result, if you look at profit number, that has come down almost by 50%. Now it stands at 200 crores. Although if you compare it on a sequential basis, it has almost doubled. Now, what stood out well for Bandhan Bank is first is their net interest margins. If you look at net interest margins, they have expanded almost by 6 basis points on a sequential basis. Now, this was in line with the street's expectation, but now management said that in the quarters coming ahead as well, the net interest margins will expand, and the reason being that they are actually containing that cost of fund element for the bank, and that is the reason why they are positive about net interest margins. Second is credit cost. If you look at credit cost, it has declined almost by 20 basis points in this quarter itself, 12 basis points to be precise, and at the same time it stands at around 3.3% level. Now, what management is suggesting is that in FY27, net credit cost is going to be around 1.6 to 1.7% for the entire book. So that is a huge fall that they are anticipating, and the reason being that they are seeing some kind of improvement in the MFI segment, and at the same time they are also increasing their secured book, because if you look at their loan book composition in this year, in this quarter specifically, they have increased their secured book and they are not focusing more on the EEB portion of their book. That is the reason why Street is taking these comments in a positive way. In fact, we also saw brokerage like Motilal Oswal, they upgraded the rating to buy, and as a result, we are seeing some upsurge in the stock price.
Doing well for itself is Bandhan Bank, but Gaurav, stay on because there are a couple of other stocks that you've been tracking since the morning, one of which is Paytm, and that is of course on the back of a positive brokerage note. And Aditya Birla Sun Life AMC at one point was up almost 5% after that double upgrade that came in from Citi. Tell us more on both of them.
Well, two stocks are on our radar, and this is on the back of the brokerage lens. First is that Paytm, because Investec, they have initiated with buy rating and a target price of 1,550 rupees. What they're saying is that Paytm has a deep tech capabilities and at the same time strong merchant relations. Now, this gives Paytm pricing power and impose high switching cost for customer. Second is that they also believe that the acquisition of merchants has already been done for Paytm, which is actually giving them some kind of operating leverage. And given all these factors, they are expecting CAGR growth for revenue to be in the range of 23% for the next 2 years for Paytm, and at the same time EBITDA margin is expected to be somewhere in the range of 24% versus what we have seen at 8% for the first half of FY26. So that's a huge jump that Investec is anticipating, and that is the reason why they are bullish on Paytm. Second is Aditya Birla AMC. Citi upgraded the stock from sell to buy and gave a target price of 900 rupees. What Citi is citing is that the performance has been tepid for the last few quarters, and the reason being that there was a weakness specifically in the equity schemes. But now what they're seeing is that the market share is stabilizing specifically in the equity flows and SIP segment, and they are also seeing some sustainable movement going ahead in terms of the performance of the equity scheme. Other than that, they are also highlighting that they expect the gross flows to pick up quickly. Remember, management is also a bit bullish on the company because management indicated that there will be some reduction in the redemption ratio, and that is the reason why Citi is bullish on the company. They say that there is going to be a stance of wait and watch, but aggressive sales engine of Aditya Birla is something which is helping the company, and that is the reason why they have upgraded the stock. As a result, both the stocks are up in trade, and in fact, Paytm is up more than 4% in a trade today.
All right, take that point. Thank you so much for that. Paytm currently off highs right now as we speak. But, you know, what is at the high point right now is Bharti Airtel. We had positive commentary coming in from Sunil Bharti Mittal from Davos yesterday. And HUL continues to do well. Remember, the company reports its numbers, quarterly numbers, on February 12th. But let's slip into a short break. We'll get chatting with the management of V-Mart Retail. Anand Agarwal, who's the CFO, joins in to decode their earnings. The stock's doing well on the back of what was a decent performance.
Fly Emirates, fly better.
Welcome back. The index continues to meander between gains and losses in a very narrow range. BEL has just announced some order wins worth 610 crore from its last disclosure. We keep a track of that stock as well. And before going into the break, we were talking about Bharti Airtel being at the highest point of the day. And since we are on that subject, listen in to the founder and chairman of Bharti Enterprises, Sunil Bharti Mittal, who said that there is more appetite for M&A in global telecom. And he said this to Shireen Bhan at the World Economic Forum Summit in Davos. Listen in.
For $200, you're giving everything away. Just to win more market share is unsustainable. Something has to give. And we are seeing now from 12 operators, we are down to 2 operators plus 1, which is trying to make a comeback. I personally believe time has come for this to be a crowdsourced event where the whole country can benefit from a very strong digital infrastructure highway in which everybody is contributing 20, 30 rupees a month to consume ton of data and enjoy many services that they need for everyday life. So I think I'm hopeful that sometime in 26, we may yet come to the point of touching 300. We have always said 3 plus 1 is good for India. It's a large country. World over, you see 2 or 3 operators. But for the size of India, I think 3 plus 1 is a good place. And we are hoping that Vodafone Idea will start to, be more active in the marketplace. They are welcome. There should be 3 operators. Keeps everybody, in the right place from the customer point of view. And from our own standpoint, we are hoping, we have written to the government that AGR was our issue as well.
Yeah.
And we hope we get attention from the government.
Have you heard from the government at all?
Not as yet. We heard from the minister yesterday. He mentioned that everybody needs to follow the route that Vodafone Idea followed, which is via the courts.
All right, so that's the commentary coming in from Sunil Bharti Mittal all the way from Davos. But let's come back to India. Anand Agarwal, CFO of V-Mart Retail, joins in after what was a decent performance in a quarter which was, seasonally affected by the festive season shift in the calendar. So you don't look at the third quarter in isolation, look at Q2 and Q3, and there's a 15% growth that the company's reported across both these quarters. For the third quarter, it's a 10% revenue growth, near 22% EBITDA growth as well. Thanks a lot, Anand, for joining in. Congratulations. Decent performance coming in. The street likes it as well. The question is, what's your full year target now and an FY27 goal? Why do I ask it? Because you said that you expected 20% growth in the festive season. You put Q2 and Q3 together, it's 15%, right? So basis this, now what does your full year target stand revised to? And also, for the next year, if you could give us an early insight.
Well, thank you, Mangalam. Always nice to speak to you. So, yes, in perspective, we had spoken around 20% growth that we were targeting for quarter 3. For whatever right, wrong reasons, external, internal. I think the growth did not come through as planned, but still, I think the growth aspirations remain still very strong. We're still looking at closing the year at a fairly robust number, growing between 15 to 18% over last year. A tad bit lower than what we had earlier estimated, but still very, very strong on the overall guidance for the long term. We are still seeing a lot of good customer sentiment as well as market, traction coming in. All the new stores that we are opening, we are getting very, very good traction on that. So we are very, very gung-ho on the overall trajectory. Percentage here or there may not really matter so much, but more important is that we are seeing good profitable growth, and we're not per se buying growth, to get a headroom sales number in.
No, we get that point entirely, and that's the more mature thing to do as well, especially coming from someone like you who's been around for so long and understood this cycle too. Just wanted to confirm once again, you said you will end this year between 15 to 18% of revenue growth, right? First 9 months, you've done just about 14%. So that puts a lot of onus on the fourth quarter to do that. And by being profitable, what does your exit margin stand at? Because the first 9 months, you're at 14.5%, which is a near 200 basis points improvement.
So as of now, very difficult to predict the exact margin percentage. But having said that, we have set in motion improvement that is very visible for the first 3 quarters. So we are hoping that we should be able to continue this momentum even in quarter 4. Technically, quarter four is not the best quarter of the year as far as profitability goes. Quarter four as well as quarter two are always the lean periods where a major part of the quarter actually does not give in a lot of profitability. January and February are not very, very big months. March is relatively a big month. But yes, irrespective of that, I think we should continue to see some amount of margin improvement. May not be as high as what we have already delivered in this quarter, but definitely some improvement over last year.
And you're confident of 15 to 18% despite the fourth quarter being lean and you having done about 14% in the first 9 months, right?
Yeah, I think 16% is the number that we have tracked for the first 9 months. But yes, we should be looking at, around 15 to 17% for the full year.
And what about the, margin mix between VMart and Unlimited? It's a beautiful performance that Unlimited has reported this time around, where the EBITDA for that business has grown over 40% and the margins are at par with your VMart business, if not better. Has it been maxed out, or is it likely to show some more outperformance as compared to VMart?
No, I'm still very, very optimistic on Unlimited. So while on a post-Ind AS reported number basis, the Unlimited margins optically look good or as good as VMart, but the real number is pre-Ind AS numbers, where the higher rental cost in Unlimited still does not deliver a much higher profitability even till date. But having said that, I think I've been repeating this for a long time that we are very, very optimistic on Unlimited. That is a very virgin territory for us. We have a lot of headroom to grow there. The profitability for all the new stores that we are opening there is fairly good. In fact, much better than even VMart stores. So as we increase our network there, the law of averages will catch up. The newer stores will overshadow the older stores. So we will have much higher profitability as we move forward. So we have put in a lot of faith and aspiration behind Unlimited, and we will continue to grow and make this even bigger.
Well, Anand, since we are on the subject of store addition, you tell us what are your plans for FY27? How many stores are you planning to add? More importantly, how many will you end FY26 with, part one? How many do you plan on adding in FY27? And if you could share the mix as well between VMart and Unlimited.
So, Thomas, I think at an overall level, for a long-term trajectory, we should look at around 13 to 15% area growth every year. Now, a base of 500 odd stores last year, so that translates to roughly around 75 stores for FY26. And on that base, roughly around 85 stores for the next fiscal, which is FY27, as you asked. The ratio between Unlimited and VMart will somewhere between be 80-20. So 80% will come in VMart territories and 20% will come in Unlimited territory. Irrespective, I think as management, we still are very, very more optimistic on expanding more in South India under Unlimited. So we will try to expand more in Unlimited. But as of now, as a guidance, what I can say is 80% in VMart and 20% in Unlimited.
All right. So 15% addition is a lot more palatable than, the number of stores, because if you take the average store at around 8,000 and then, you make those projections, then you understand that annually the number of stores by themselves will obviously increase versus the previous year. And that explains why this year you've done 65 already, as against the previous few years where the numbers were around 55, 60, thereabouts. Just a final question before I let you go. I wanted to understand, on a larger macro theme, where what is the play here? Is with VMart obviously having so many stores targeting tier 2, tier 3, tier 4 and beyond as well, there are a slew of many other retail players as well, not just the listed but even the unlisted plays. You have many who are raising serious amounts of money from PE and other investors too. And then the larger players are also looking to access this very same market. Is there a risk of saturation out here? Because, the runway has been made by you. You've showed the proof of concept. Now people would want a little more, and not necessarily from the same store, right? So just wanted to understand whether it's an access thing, it's a repeat thing, or it's a store addition thing. How should one look at this space?
There are two parts to this answer. So one is obviously when you have more number of people coming into the same space, which you have sort of created and built, it validates the entire hypothesis that this is something real which is happening on the ground, and this is definitely sustainable. Because while you are right, there are some of them who are unlisted, but there are also a lot of them who are listed, and thereby the performance is already visible and available for everybody to see. The second part is the runway to growth. As we speak, even today, not more than 30% of the apparel retail business in India is still in the organized segment. So, if you include V-Mart and everybody who's listed and everybody who's unlisted, all put together, we do not contribute more than 30% to the overall size of the market. And 10 years back, this used to be less than 10%. So in the last 10 years, that 10% has grown to only 30%. So there is still 70% headroom where the shift from the unorganized to organized still needs to happen. And over and above that, the market also has to grow or is growing. As the GDP is growing, the economy is growing, the consumption levels are growing. So there is a significant headroom for all of us to grow. Now, who will deliver better will also depend on who understands the customer, the regional relevance, is more disciplined, is a long-term player, and all of that. So that is, anybody's guess. But from a market perspective, I think it's a very attractive market. There is a lot of validation by, other players who are coming into this market, who are proving this concept right. And there is still a lot of headroom for all of us to grow.
As Charles Darwin very famously said, the fittest will survive. We'll see how time tells as competition rises in this space. But Anand,
retail, I think, the ones who do the boring stuff regularly over and over and over again and keep doing it with absolute discipline are the ones who survive.
Boring is always good, isn't it? Sometimes, or more often than not, at least. Anand, pleasure having you today. Thank you so much for sparing time and joining us. I wish you good luck for the rest of the year as well. Take a short break, and market technicals on the other side. Jay Thakkar from ICICI Securities joins in.
Well, the market's fairly range bound ahead of the monthly expiry on Tuesday, which is basically the next trading session itself. Between that, there are 3 days of a holiday. The Nifty down about 15 points, the Nifty Bank about 80 points, not so much, and it's the Nifty midcap index, which is down by 0.2% as well. The advanced decline tells you that there are way more number of stocks declining than the number of stocks which are advancing. But here too, it's nothing worrisome, especially given the weakness that we've seen in the earlier part of the week already. The market is looking at some of these FMCG names as safety spots. So Asian Paints is an outperformer, HUL2 has moved higher. But because the Nifty is still undecided, it is a very options writers market. Those who are writing the 25,300 call are pocketing a premium of 104 rupees. They don't expect the Nifty to go beyond 25,400 on the way up. Now, if you look at the 24,300 put, those who are selling the 24,300 put, they are again pocketing a premium a little over 100 rupees as well. And these are options that expire the very next trading session. So they don't expect the Nifty to go below 25,200. But smart traders typically write a straddle on one strike, which is a call and a put together. So if you look at the 25,300 call and the 25,300 put, you pocket a premium of almost 204 rupees, and you expect the Nifty to stay in this 25,100 to 25,500 sort of range for the next couple of trading sessions. Mind you, these options will erode, the prices of these options will erode very swiftly as we move towards the end of trade, because the time to expiry, or the theta as we call it, will erode very quickly because of the 3-day vacation that there is, and then coming the expiry. So as of now, the time to expiry is 4 days, but trading days of those are just a day and a half. 200 rupees in 25,300 call and put as a premium, and you're playing for the range of 25,100 to 25,500.
Very interesting. A straddle on the 25,300 call and the 25,300 put. Mangalam, thank you for summarizing that. They needed something like this because of the kind of market that we are in right now. It's just a 70-point range as we've been trading all through the morning session so far. Jay Thakkar from ICICI Securities joins in for a quick chart check. Jay, good morning. Thank you for joining in. You heard Mangalam on the straddle there. Are you recommending a similar strategy to your clients as well ahead of expiry? Your call on the index now and your stock calls as well for the morning.
Sure. Very good morning to you, Hormuz. And definitely, we have recommended that, in fact, through our algo strategies also. I would just like to add on a few points with, to what Mangalam said, is that 200 to 202 points kind of ATM straddle right now. And I think that it can generally dip to around 170, 160 as well, ahead of the expiry, because generally that happens on Monday, I would say. But then since, that's a truncated weekend, we have a holiday. So a day before the expiry, generally you have these ATM straddles in the range of 150 to 160. And noticeably, what we have also we have noticed is that since yesterday, since second half, we've seen the IVs in fact falling quite sharply. It was at around 12.5 on the Nifty, and that has now come down below 10 to almost at 9.2. So there has been almost 250 bips a cut in the IVs, and that has helped the option writers, and that clearly indicated or pointed some pause in the fall. With that, I would say that 25,500 Hormuz remains a very, very critical level. When I look from the point of view of monthly expiry as well as from the February series, if I see the cumulative OI on the call side for Fed, it's at 25,500, beyond which definitely there is a good chance of a short covering, because there is a lot of shorts out there in the index by the FIs. It reached almost 2.2 lakh contracts. So if at all it moves beyond 25,500, you will be seeing that short covering. Failing to do so, I would say that once the expiry is over, and if it doesn't close about 25,500 almost, then there is still a chance that market dips further towards 25,000 or below levels as well. So one level to watch out for a covering is 25,500. But sectorally, if we see, metals have done really good. So I have a pick from metals. JSW Steel is one stock which we like, and I think that from here on we can see at least 7 to 8% kind of a move on the upside. Overall, we have seen ferrous metals doing quite good in today's trading session. So JSW Steel would be my top pick from the metals as of now. As a disclaimer, I would say that we have recommended this to our clients as well. Targeting around 1250 on the upside, stop loss could be at around 1130. And the second buy recommendation would be on Colgate, Colpal, because apart from metals, I think that there is some place as of now wherein there could be short covering. It would be FMCG names, and within which we have seen Colpal having highest shorts as of now. One can target around 2,300 in the short term, and one can place a stop loss below the levels of 2100. So IT, midcap IT, PSU banks, metals, and a few selective FMCG. These are the only few names or sectors, I would say, which are looking slightly relatively better, I would say, as compared to the other market sectors, among which I would say Nifty Realty is the hardest hit.
All right, take that point, Jay. Thank you so much for that. Colgate is one of your buy recommendations. We've spoken about how some of these FMCG names are doing fairly well, and a good insight bought by him. He said that end of day expiry straddles, typically, which are at the money straddles, trade between 150 to 160 rupees. And right now, at the money straddles are trading at around 200 rupees, as we just pointed out. And this is after, just 1 day ahead of expiry. Because the 3-day holiday, maybe the street is ignoring that. The other part is also, the 25,500 call is currently at around 35 rupees. So those who want to hedge themselves, as Jay said, that, if the Nifty does go beyond that 25,500 mark, there could be a lot of short covering. So what you do is simply just buy that 25,500 call for about 35 rupees. So you're currently pocketing a premium of 200 rupees, buying that call for 35 rupees. So net inflow is about 165 rupees, and you hedge yourself against any serious up move that happens in the market, if at all. What we'll do is take a short break. On the other side, we'll discuss market fundamentals after a longish discussion on the technicals and F&O with Shahzad Medon, who's the MD and CEO of TCG Asset Management.
Back with us here on Trading Hour. 25,250 is where the Nifty currently is. A slight smidge of decline that we've seen from the levels that we were before going into the break. So important levels to watch now on the index. Shahzad Madan of TCG Asset Management is now joining in. Shahzad, good morning. Thank you for joining in. You know, we've had conversations about your stock recommendations over the last couple of interactions that we've had, and what have you made of this earnings season so far? There have been mixed results that have come in. The good results have been duly rewarded, but the bad results, the ones that have even had the slightest disappointments, have been punished as well, and punished very severely. What have you made of this earnings season so far?
Good morning, Horvath. Thank you for having me on your show. Good as always to be here. So far, it's early days, but the results we've seen have been, I think, pretty good. What I guess one is looking for after maybe 4-ish quarters of tepid results is that we believe that this quarter is likely to look a lot better for generally for most stocks in the market, and maybe more so for mid and small cap stocks. So we're at least looking forward to the second half of the year. I mean, we're going to see the quarterlies just now, and so far, so good. With a lot more promise, things looking a lot more interesting, and we look forward with a fair deal of optimism, especially on stocks in our portfolio, which have held up rather well in the fairly brutal market correction.
Right, fairly brutal market correction, you call it, yeah, right, Shahzad. But in this correction, what has now become value for you after the big decline that we've seen in a lot of these mid and small cap names? Are you backing them, or you believe that it's still better to stay with some of these underperforming large cap names?
Okay, good morning, Mangalam. Mangalam, if you look at the portfolio which we have out there in the market, which is the transformative growth portfolio, that's typically a portfolio which is looking for those stocks, typically in the smaller cap space, which can deliver outsized return over a period of time. So that's generally in this portfolio our focus area. So we're very focused on that. Small caps is generally there's no homogeneous. There's nothing like it. It's very dispersed, very, very diverse. And I think opportunities in a lot of stocks have become a lot more interesting. Very difficult to say only X pocket or Y pocket. It's a lot more stock specific, which is out there. But, this is a great time in that sense to be stock picking, great time to be building business, which is what we are doing at this point in time.
Indeed. So that is something that has been emerging. Shahzad, we did speak about a couple of your picks. DB Corp was one such name, and you've mentioned about this multiple times as to why do you find value in a stock like that. But this time around, of course, there was the high base factor that weighed down the numbers. But do you still believe that this was a one-off only because of the base effect, and numbers will start turning around as soon as as the cycle turns, say in the fourth quarter or maybe even in FY27?
On this particular stock, when you look at it, you're probably better off looking at the last 6 months, because a lot of their incomes comes from advertising revenue. And when you actually look at the advertising revenue, which we have out there, because of Navaratri, which had come in the previous quarter, when you spread it out and you look at the last 6 months, the numbers will give you quite a different circulation revenue is pretty steady. That's generally been the case. The ad revenue, which keeps moving around all over the place, is a function to a significant extent on account of the, let's call it the cyclicality, right? In terms of the festive season at different points in time, elections and so on and so forth. When you look at the last 6 months in general, it's actually pretty much in order. And we would believe that thesis at this point in time pretty much playing out the way we've anticipated. A lot of the pessimism is in the price, so we see more optimism.
Right, and I look at say something like an IDFC First Bank. You have Equitas, SFB. A lot of these banks that are present, or financials that are present in your portfolio, and then I look at the numbers that have come in, or the reaction to the numbers that have come in from Bandhan Bank. Do you get tempted to look at more in the same space right now after the correction, and or do you add to Equitas and IDFC that you already own?
Mangalam, the way we looked at this, we were if you see our portfolio, even we hardly change with this is a buy and hold portfolio.
Exactly.
We've been holding the stock for some time, right? With the basic thesis that the worst is likely to be behind us, right? And why we had to hold for some time, because we are very clear that very often we come in early, we are ready to wait a little patiently. So we've been holding this for the last few months. It's now reflecting in the earnings of a lot of the companies which have declared. Equitas hasn't yet declared, but a lot of companies have declared in this space, and it's fairly clear that I think the worst appears to be behind us, and hence it's reflecting in the stock prices. But it's still early days. There is still early part of the cycle, and there's still some way to go.
But is this worst is over thesis also applicable to a lot of the mid-cap IT names as well? Shahzad, you have Intellect Design in your portfolio. We had a beeline of mid-cap IT stocks reporting results last evening, be it Coforge, Mphasis, Zensar. You had a look at the numbers. Do you believe that mid-cap IT still has that potential to go on and outperform its much larger peers?
Intellect is a product company, right? It's a financial services product company. This company it's really in that sense less to do with IT services, right? So Intellect is something which we believe has been doing extremely well. It's been a company which has been in existence for a long time. It is growing, increasing penetration. Their products are well accepted in the financial services space. And as you have more of call it the trail revenue, as you have more installations, that gives more solidity to the earnings, which has been happening, and you see the margins move up. So this is something which is fairly, the stock keeps moving all over the place, but the earnings, we believe, will continue to grow fairly steadily. It's one of the few product companies we have, and less to do in that sense with IT services. So that thesis continues. Nothing changed out there.
Pleasure having you today, Shahzad. Thank you so much for sparing time and joining us. Looking forward to having you the next time around as well. By the way, we started off the segment 50 points lower. Now we are 80 points lower, and now we are down to the 25,200 mark as we speak on the index. So the fall is just starting to extend. The broader markets were the ones that started to fall much before the index. When we started off the show as well, the mid-cap and the small-cap index was at the lows of the day. So a 550-point fall from the highs for the mid-cap index, and the small-cap index too, down 200 points from the highs.
Reliance, the intraday chart of Reliance comes up for you. That's the one that is pressurizing the Nifty right now. If you look at the Nifty chart, the intraday chart, and the Reliance chart next to each other, you would realize that it's totally congruent. The Nifty for most part of the day was, between the red and the green lines. That's exactly what Reliance did as well. And then suddenly one sharp swoop down on Reliance, and the Nifty is also taken the exact same shape of decline. That's the biggest contributor. And the others are from the banking pack. So we have, some of these Axis banks, Kotak banks, and HDFC banks of the world. All of them are lower. But currently, the big decline is led by Reliance, along with a couple of other index heavyweights. Though we're at the lower end of the range, let's see whether this gets protected or not. With that, we'll slip into a short break. As we do that, countdown for the budget 2026 is underway. The most influential voices decode, analyze the impact and policy decisions from the finance minister. We bring you a power-packed lineup throughout January, the day of the budget, the week after the budget as well, as we pour through all the details that come by. Helios Capital, Samir Arora for all things market, followed by JP Morgan's Sajid Chinoy to discuss the macro signals. We also get you insightful analysis from industry veterans. You name them. They're all CNBC TV 18, your budget headquarters. Dinesh Kanabar, Ashok Wadhwa join in for the tax retinue.
You want to talk business? Meet me in the Onboard Lounge.
fighting to hold the 25,200 mark is the index, but the sharp fall seen in Paytm as well. You pull up the intraday chart, 6% lower now. At one point, the stock was up 3% after that positive note that came in from Investec. But since then, the stock has come off the highs, and now there has been a very sharp fall that you have seen in just the last few minutes of the trading session. What is also not doing well, though, is the fact that the top airline of the country, Indigo, after it reported its results, also featuring now among the top losers on the Nifty. Stock now down almost 3% and trying to recover from the lows of the day. Of course, the results were sort of on anticipated lines, considering the issues that the plagued the company.
All right, we'll try to figure out what exactly is happening with Interglobe Aviation as well as Hormuz goes ahead and fixes the audio. Meanwhile, the India VIX has seen a sharp spike even as the Nifty has fallen below the 25,200 mark. So just monitor that. Jay was just telling us moments ago that the IVs or the implied volatility of these options have come down, and now with the VIX rising, it looks like maybe the IVs have increased with the ferocity with which the markets fall in. It would make sense actually to pull back once again, the 25,300 put, because when we were doing the FNO hit, it was about 100 rupees odd, but now it's gotten almost in the money, so it would have spiked to about 150. So 25,300 put, if that comes up for you, you would see that those who've written that maybe have to look at options whether they want to cover their positions or not. So the 25,300 put, depending on the price that there is right now, would reflect the mood of the market and whether we see some sustenance here at the current low levels. But you were talking about Indigo.
Talking about Indigo, but just before we get back to Indigo and revisiting Paytm, the something that came to light just a few minutes ago is the fact that this Payment Infrastructure Development Fund, which is a major part of Paytm's operating performance, that scheme was extended until December of 2025, but there has been no update after that. So whether the scheme has been extended, whether the scheme will not be extended, that's a concern that the market is currently facing, and that's the reason possibly as to why the stock has seen such a major fall. So almost 10% now of the highs of the day is Paytm. But you're talking of Indigo and among the top losers on the index. And the numbers were kind of on expected lines, right? Because of the issues that the airline faced during the quarter, the disruptions. The core business, though, remains fairly okay. But there were labor provisions as well. There were disruptions on that front. And as a result of which, the profitability was impacted, capacity was higher, but the near-term outlook is weak, although the medium to long-term prospects remain fairly okay. And they are guiding for yields to moderate in early to mid-single digits because of
It will be very interesting to see whether Indigo maintains its market share right now or not. Also because, there are more routes which have opened up to competitors, etc. as well. So it seems like after what took place in December, maybe there is a cap or there is a ceiling on the market share that Indigo can have, as others are being allowed some of the routes as well. We take a short break, come back, getting more on the markets and a lot of stock-specific action here on Trading Hour.
This is worth sharing. Faster Wi-Fi on the new Emirates A350.
Welcome back. The Nifty just holding around the 25,200 mark after the swift decline that we saw in the last 15 minutes. The mid-caps have it worse. The Nifty Bank as well, struggling to stay above that 50 and 20-day moving average range between 59,300 and 59,500 thereabouts. We'll wrap up on this edition of Trading Hour on that note. The team of Halftime Report comes up shortly after this break. Hormaz and me, thank you for watching.
Stock trade near the day's low ahead of the long weekend after the global relief rally on Thursday. Metals and consumer durables are prominent gainers while realty and utilities drag.
Indigo owner Interglobe Aviation's Q3 profit is hit by labor code charges and flight disruptions, but the operational metrics remain resilient. The airline expects international operations to drive growth in Q4. Analysts give its earnings a thumbs up.
Tariff repair is essential in telecom, says Bharti Group's Samir Bharti Mittal, even as he says no let-up in capex and revealed ambitious targets for the Africa business. He adds that the telco is engaging with government on the AGRUs.
SBI Chairman C.S. Sethi sees a structural shift in bank balance sheets from deposits to borrowings. He also rules out any change in deposit rates, even as he expects another interest rate cut by RBI in 2026.
Hello, good afternoon. You've tuned into Halftime Report coming live from the CNBC TV 18 Motilal Oswal studios. I'm Vinny Motiwala. With me are my colleagues Sonal Bhutra as well as Ekta Batra. Good afternoon, ladies. And a bit of a day again that we're seeing red. Yesterday was the only day, I think, during the week that we've seen some bit of a green on the screen. But as of now, the Nifty, like we said in the headlines as well, trading at the day's lowest point. 25,200 is just what it's managing to hold on to in the trading session as of now. And even advance decline ratio, nothing exciting there as well. More in the favor of declines versus advances is what we're seeing for the broader end of the market. Nifty IT, some bit of a bright spot coming in there, managing to hold on to gains of almost 1/10 to 2/10%. So keep an eye on that, as well as metal backs, which is also among the top sectoral gainer today, Nifty Metals. So that's holding on to good gains in the trading session as well. Good afternoon.
Hey girls, good afternoon. We've come up sharply from the highs of the day. We started the show or started the trading day with a level of 25,344. Now, as we speak, we are below the 25,200 mark. So there has been some selling from the top as we speak. Mid-caps, as Winnie pointing out, they are disappointing the street currently. We do have a lot of stocks which are at the day's low, be it the likes of HDFC Bank, Axis Bank, the other big names like Tata Consumer. We have a lot of consumption names which are also at the day's low. So these are some of the names which are leading to the fall that we're seeing in the Nifty from the highs of the day. IT continues to be on our radar. Metals is the other space which keeps buzzing. So we'll discuss that and a lot more on the show. But for now, it's a Friday, but not so happy Friday for now, for the bulls at least.
Well, yes, absolutely. And if you really look at it on a week-to-date basis, it's been a tough week for the markets. Especially for the broader markets, that's where predominantly the pain has been, more visible. So we have the Nifty 50, which is down around 1.87% on a week-to-date basis. But the mid-cap index is down around 3.3% on a week-to-date basis. And not to mention that the BSE small-cap index is the worst performing amongst these three, down around over 4.5%. So that's basically how the indices stack up week to date. Tough week. So let's see whether we wrap it up, maybe maintaining that 25,200 odd mark, which we're probably holding right now just by the skin of its teeth. But on the show today, let's tell you what we have lined up in the next 60 odd minutes on Halftime Report. We will be connecting with the management of Mphasis for their Q3 earnings, which will largely in line with street estimates. On to our movers and shakers segment, we'll get you all of the stocks that are reacting to earnings, the likes of Aditya Birla AMC, Tanla Platforms, Interglobe Aviation, which is down 3%, and APL Apollo Tubes. And on to our What's Trending segment, we're going to be putting the spotlight on solar companies, their Q3 performance and valuations in the current market scenario.
Okay, Mphasis, they reported their number as well at this time. Q3 numbers overall, when you're looking at it, in line with what the street was expecting, what we were expecting at CNBC TV 18 as well. CC revenue growth came in at 1.5%. EBIT also came in at 15.2%. And to talk to us about the numbers, we do have the management of the company who is joining us right now. We have Nitin Rakesh, CEO and MD at Mphasis, as well as Arvind Vishwanathan, who is a CFO at the company, to speak to us about the Q3 as well as overall going forward as well. Nitin as well as Arvind, good afternoon. Thank you so much for joining us on the show. Nitin, let me start with you. You've given a decent number this time, in line with what the street was expecting. Now, you've guided that Q4 FY26 will be the strongest quarter of the year. So in terms of growth, what are we expecting in terms of CC growth there? Last time in Q4 FY25, you had managed a 2.9% growth. What are we keeping an eye out on, and what is the growth? Deal wins, what is it that we're expecting there?
Sure. Thank you for having us. And I think the way to think about it is we gave a guidance of directionally greater than 2x industry growth. Mathematically, that translates into the strongest quarter as being Q4, just like we had it last year. So I think from a mathematical standpoint, it's a pretty straightforward derivation. The reason why we are confident about that is driven primarily by the fact that we've had a very strong TCV win year so far. Right, first half of the year we sold 1.2 billion. We had another 428 million this quarter. Trailing 12 months about 2 billion. So we are consuming a lot of that order book, and that giving us the confidence that we should be able to see acceleration in growth in Q4, and potentially sets us up very nicely for FY27 as well.
Okay. Well, Nitin, hi, welcome to the show. And, let's just talk about the last line that you mentioned, that it sets you up very well for FY27. You did say FY26 is going to see that momentum vis-a-vis FY25. But what are you guiding for in FY27 when it comes to this kind of momentum?
I think we'll wait till April to give you a formal guidance on 27, and given that we still have to get through Q4. And we are also quite excited about the state of our pipeline. So as we get closer to end of the year, in April when we talk to you, we'll give you a better idea of 27. But again, look at the breakdown of growth that we've had this year. I think we've seen a pretty decent, set of 3 quarters. We've also managed to overcome some headwinds coming out of some sectors. We today have a setup where all the headwinds are behind us, and that's the reason even in a seasonally soft quarter, we actually delivered a decent growth. And so I think with that setup, we are obviously quite excited to see, how we close the year and how we enter 27 with the kind of order book. Pipeline obviously is very strong. So I think we'll give you better guidance then, but the setup is fairly positive for us.
Arvind, coming on this, because deal wins have been very strong for the company in 9 months itself, let's talk about sector-wise breakup, because TMT this time declined 2.3% on a sequential basis. This is after growing for 7 straight quarters, while BFSI did well. Can you give us a trend of what we are expecting going forward? Are there some trends which you are seeing already which could continue going into FY27?
I think Nitin talked about it, right? I think our historic strength has been in BFSI. Right, we've seen insurance grow more than 30% YOY, BFS probably growing closer to 20. So they're obviously the biggest sources of growth for us. TMT has also been growing well. I think quarter fluctuations happen. Typically, TMT, it's a weak quarter for on the back of furloughs. But I think these 3 verticals, we definitely, quite bullish as we look forward.
Okay, all right.
And if you look at from a logistics, retail, logistics and transport, we've had a soft year driven by, some specific circumstances, but we've started to see order win pick up there. And I think, we should be better off in the coming year.
Okay, sure. Nitin, I just want to understand overall in terms of trends or from the client side, how is discretionary side of that spending? Are you seeing any difference there? And, do we expect an up move in FY27? Could we see that coming back to previous patterns or previously how we've seen for these IT companies?
The breakdown of discretionary spend is a little bit more nuanced for 2 reasons. One, while a lot of the large sectors we play in banking, insurance, they've had a pretty decent set of financial results over the last couple of years, especially big banks. They're not opening the spending tap but indiscriminately, I think. But at the same time, they're also not, reducing any spends on tech. If anything, they're going up. What's going on, though, is there's a pretty significant reprioritization of spends because they're trying to not only free up money from an efficiency standpoint, but they're also trying to figure out how they're going to invest in build up and operating of the new AI stack. So I think the alignment of our company's offerings, our client relationships, our ability to create our deal archetypes that align to the squeeze the run, feed the change mindset is actually what's driving a lot of the spend. There will be a lot more money spent on new stack. Some of it will be at the cost of the old stack. So if you're playing in the old stack, you'll have some trouble. But if you have the ability to align yourself with where the money is going, discretionary spend is plenty available.
Okay. Well, just Nitin, give us more of a sense in terms of what the US environment is looking like when it comes to BFSI. I think you all have mentioned that it's very robust when it comes to M&A, IPOs, etc. What is the pipeline looking like and what can you guide for maybe in this year?
Yeah, I think, as I mentioned, they're coming off of a couple of years of really strong earnings. As such, there isn't any pressure on earnings or profitability. Of course, they're also trying to play a little bit of whack-a-mole with daily news flow when it comes out of the administration's desire to regulate some of the things or put caps on credit cards, for example. Barring that, I think the environment is pretty stable for banks. The confidence that we have seen with some of the leading banks in now taking a bet, saying, yes, we've done all the validation we needed to. We're going to spend a lot more money over the next 3 to 5 years in agentifying our customer experiences and really using AI to reimagine the business. is starting to appear very high. So combination of, get us efficiency, let's find ways to improve customer experience, and let's undertake programs that we probably wouldn't have undertaken 2 years ago because we can now do them for much lower cost, much higher value, and with a higher degree of certainty. That's what's driving a lot of the pipeline.
Got it. Arvind, last question before we let you go. Your margin guidance between 14.75% to 15.75%. Do you think you could end at the upper end, considering that 69% of your pipeline is tied to the Neo IP platform? Are you seeing improved pricing there? And if that is the case, you could achieve the higher end of this guided band?
So we've given a band for a reason, to have the flexibility to operate at either end. I don't want to get into a more specific guidance on Q4 on margin. I think if you look at it, we've been operating at the midpoint of this band. And I think, there is no structural change to, say it'll suddenly go to the higher end or lower end. But, that is some flexibility we have retained with ourselves. But, we are where we are.
Okay. All right, Nitin as well as Arvind, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's Emphasis talking about the deal win, which continues. They expect that kind of momentum to continue into FY27. So a bullish outlook coming in there. We'll take a short break, but the countdown for the budget 2026 is underway. The most influential voices decode and analyze the impact and policy decisions from the finance minister. We bring you a power-packed lineup throughout January and on the day of the budget. Helios Capital Samir Arora for all things market, followed by JP Morgan Sajid Chinoy to discuss the macro signals. We'll also get you insightful analysis from industry veterans, and Dinesh Kanabara and Ashok Vadva for the tax rhetoric.
Welcome back. You're still tuned into Halftime Report. The broader end of the markets is under pressure, but we do have a lot of stocks which are buzzing on the back of earnings and news flow as well. It's time for our Movers and Shakers segment where we track a whole host of stocks buzzing in trade. Let's get in Ria first up. There's a note which has come by on Aditya Birla AMC. Ria, tell us more about this.
Well, yes, Citi has come out with a note on Aditya Birla AMC, and they have come out with a double upgrade to a buy rating, and the target price has also been raised to 900, which is an upside of roughly 13% on the stock. Nomura, CLSA and Nuvama all have a buy call on HDFC AMC as well. Now, let's also take a look at what is driving growth in the AMC space as a whole. First up, mutual fund SIP flows are at record highs of roughly 31,000 crores. Mutual fund AUM has also hit 81 lakh crores, and apart from this, favorable changes in investor behavior from deposits to mutual funds are also aiding the industry. We've also seen good results in Q3 of FY26 so far for the AMC industry, and higher scale with favorable equity mix and strong SIP book, as well as stable to slightly improving yields, are also benefiting the industry. Apart from this, global investors are also taking notice in this space. There have been some recent deals in the AMC industry. The Geo BlackRock AMC have formed a 50-50 JV and raised about 17,800 crores via initial NFOs. HDFC AMC and IFC have also tied up to launch an AIF fund that allows HDFC AMC to scale alternatives. The most recent deal on this front has been when State Street invested in Grow AMC. Now, State Street is the fourth largest investment manager in the world with a $5.5 trillion AUM, and they have invested roughly 580 crores in Grow AMC for a 23% stake in the company. Also, just taking a look at the valuation picture as a whole for the AMC space, ICICI Prudential AMC is the most expensive one with roughly 37 times PE for FY27, and ABSL AMC is the least expensive one, valued at 20 times PE.
Okay. Thank you so much for that, Ria. But let's move on and now talk about Tanla Platforms. That's buzzing away in trade after its Q3 numbers. Rima is here to take us through the details there.
Thanks so much for that. So Tanla Platforms is reacting to a good set of numbers, but after many quarters, the company's revenue growth is back in double digits. So revenues have crossed, 1,100 crore, up nearly 4% sequentially, up 12.1% on a quarter-on-quarter basis. Margins are the highest that we've seen in the last 5 quarters, expanding by 50 basis points to 17%, and that's driving an increase in the company's bottom line as well. But apart from the recovery in the company's performance after several muted quarters, the stock has also been an underperformer. In the last 1 year, down 18%, last 2 years, down 55%. The all-time high was above 2,000 rupees. So the stock has also gone through a fair amount of correction. So it's rebounding, from lower levels.
Okay, all right. That's on Tanla Platforms. That stock up around 10-odd%, but not flying away too high for Interglobe Aviation, Vinny.
Absolutely not flying away too high. Obviously, this time there were a lot of disruptions that came in for the company in their numbers as well. When you look at it, for Q3 FY26, one-offs were there, that disruption due to flight in the month of December. So all of that was there. But despite that, they managed to see at least a resilient performance and growth in terms of revenues of the company, 6% growth there. Forex, they said saw a loss. Forex lost this time of around 24% on a year-on-year basis decline that we're seeing, 1,113 crores. Apart from that, key highlights that came in from their con call also, that the Q4 FY26 capacity, that is at 10%. They expect that to be at 10%, which is higher than Q4 FY25. Near-term outlook, obviously, analysts are also highlighting is a bit of a concern. So that is why we're seeing a bit of a fall there. But yes, a medium-term outlook continues to be positive. The company has guided and said that the yields will moderate to mid to high single digit, given the higher base that was there. And one of this time is something specifically that is the reason that we're seeing an impact on the PAT as well.
Okay, all right. That is about Interglobe Aviation. But let's talk about APL Apollo. That stock is buzzing in trade as well, up around 2.5%. Nigel, tell us more.
Well, APL Apollo says it's time to show who's the boss, because we saw in the bull market, a lot of the smaller companies did well. But APL Apollo has come out with a good set of numbers. In terms of the volume growth, it was more than 10%. The EBITDA per ton at more than 5,000 rupees for the second straight quarter, the street like that. Besides that, you can see their value-added products has gone up a little bit. And also their net cash company, more than 500 crores of cash in their books, with the working capital at a measly 3 days odd. Now, they've gone ahead and said we've delivered good numbers and we can see a clear path from here on, because currently their capacity is close to around 5 million tons. They've laid out a plan to add close to around 3 million tons, and they're saying that by 2030, they'll add another 5 million tons. So 5 plus 5, which tells you that they're going to be around 10 million tons going by the plan that they've laid out. The management says the past quarter was good, but the path ahead is going to be even better because they've raised their EBITDA per ton guidance to around 5,500 rupees. They're also saying that they're going to grow by close to around 20% from here on. So optimistic about the future from here. Brokerages, they like the stock, whether you're looking at Aquarius, Nuvama or UBS. All of them have a bullish call on the stock. I recall a time when the markets were going up, people were citing that it was too expensive a stock. Today, it's at a 52-week high. The multiple, in fact, has been increased by various brokerages like Nuvama from around 36 to around 40 times. Net, a good set of numbers and a good path ahead. The street wants to pay more for the market leader. Back to you.
Okay, all right. APL Apollo, that one in focus. Just watch out for the pressure that we're seeing in the Adani stocks at this point in time. But the other stock which is under pressure is also Syngene. That one is reacting to what has been a subdued quarter for the company this time. So the revenue was down around 3% on a year-on-year basis. We had the EBITDA which declined as well. So margins came in at 22.8% this quarter versus 22% in the previous quarter. Profit also came in at around 15-odd crores. Now, 9 months as well, the revenue was just about higher by around 3% this time. Now, the company has clearly indicated that the reason for the pressured earnings is because the Q3 performance reflects the ongoing impact related to a single product from one of the company's large molecule biological clients. And outside of this, the underlying business has shown steady progress. One of the key highlights was Bristol Myers Squibb, in fact, extending their collaboration with Syngene. So that was a positive, but nonetheless, there was this one client impact which they saw this quarter. Guidance. The street always watches out for the guidance for Syngene, where they've said that earlier the company had guided to mid to single digit growth, which is now expected to be flat to negative as per analysts. So that's the reason why you're seeing Syngene down 3.5%. But let's go across to Vivek now. He joins in with all of the stocks that are moving around in trade today. Vivek, we had a comprehensive list, so tell us what you're looking at.
Well, took away quite a few of the stocks that I had on my radar, but despite that, whole host of stocks, especially in the broader end of the markets on the back of Q3 results that actually are moving quite significantly. Material developments are being seen, especially the kind of volatility that we're seeing, once again seeing markets sharply coming off the day's highs, which is why advance decline ratio has deteriorated. Individual stocks, Hindustan Zinc, that particular stock once again has surged. Yesterday was a very volatile trading session, but today stock higher by over 5%. Bandhan Bank, okay set of results, but on the back of reasonably moderate positive commentary coming from the management and also valuation support, that particular stock higher by 6%. Allevius Life Sciences, this particular name, after the new promoter has come in, has delivered a good set of numbers, higher by over 3% today. On the other hand, quite a few laggards, as you can imagine. Premier Energy is a significant underperformance versus its largest peer, Wari, and also the fact that it's an operational miss versus consensus estimates has led to a 4% fall. Eternal, this particular stock continues to see selling pressure, especially post what was essentially a very strong Q3. Stock low by over 4% today. Midcap IT, most of the names that delivered reasonably good set of numbers, all of them seeing profit booking at higher levels. So Coforge, Persistence, Emphasis amongst the top drags today. Syngene, like you just highlighted, and Paytm, very, very high volumes today. That particular stock amongst the top FNO laggards in the session today, down over 8%.
Okay, all right. Thank you so much, Vivek, for joining in. So that is a comprehensive list of all the stocks which are buzzing in trade today. With that, we'll slip into a short break. Up next, Vinny will focus on a whole host of solar equipment companies, the Q3 numbers. This will be in our What's Trending segment. Stay tuned for that analysis.
Fly Emirates, fly better.
Welcome back. Well, for the markets, we're seeing some amount of pressure come through. So now the Nifty is just about trying to hold on to 25,200. We have the Sensex, which is dipped below 82,000 on an intraday basis as well. But just watch out for a couple of stocks which are pressured. So Paytm is at the low point of the day. Significant volumes being traded on that one. One source ahead of its numbers is also seeing pressure. So that stock is down around 6.5%. And the other one which stands out is Poonawalla Fincorp, which is down around 5% at this point in time. So a couple of these stocks which are seeing a significant amount of price and volume action in today's trading session. But let's head to our What's Trending segment and halftime report. We're tracking solar equipment companies. 4 players have reported earnings just in the past few days: Premier Energies, Vikram Solar, Wari Energies, and MV Photovoltaic. How do the numbers stack up, and the management commentary more importantly? Vinny is here to tell us more about it, to break it down for us. Well, Vinny, it's not been that inspiring.
Not been that inspiring, and especially in the last couple of quarters, they've seen a reduction coming in the domestic demand. While everyone is moving towards renewable side, there seems to be a bit of a slowdown there. Now, just let's look at the numbers, or let's compare them with each other. When you look at it for Q3 this time, and specifically Premier Energies, Wari Energies, Vikram Solar, as well as MV Photovoltaic, these are the ones that reported the numbers. Look at the numbers on the screen for y'all. Q3 and Q2, we are seeing that Q2 was seeing a better growth rate versus Q3. There is overall and slowdown that you're seeing coming in terms of the growth rate for all or most of these companies, exception of Wari Energies, where you're seeing a bit of an increase. But that is a different scenario that comes in for Wari Energies. Now, first, let's look at the order book for most of these companies as well. When you're looking at the order book, yes, a slight bit of an increment that we're seeing on a quarter-on-quarter basis comparison, as well as overall, they're managing to hold on to the order book or capacities that they have as of now for all of them. Now, when you specifically look at Vikram Solar, we are seeing that there is a reduction in terms of the order book from Q3 and Q2. When you compare that, there's a significant reduction that comes in there. Now, what is important and why are we seeing domestic and export play an important role? Why was Wari Energies managing to do better versus others in terms of the growth or revenue growth, or they're still managing to hold on to that? One, the export share is a bit more. So US realizations this time were better over there, and that is why that increase in terms of revenue growth over there. Domestic front, there is still a bit of a slowdown that one has seen across the board for these companies so far. Premier Energies, 100% is domestic front. Vikram is 84% is domestic front, and just 16% over there. Wari's has around 28% export orientation, and that is why a bit better realization is something that supported their overall performance. Now, commentary, how is that shaping up for all these companies? Premier Energies, now this time we've seen a change in depreciation, which was one of the reasons also that everyone was wondering, why is there a change in depreciation policy for the company this time again? So the company in their con call just a short while ago highlighted that depreciation now they're following is the industry standard, which is 5 years, when how the depreciation normally works. Previously, what they'd seen or what they were doing for some of the solar modules and cell manufacturing modules was that they saw an increase in terms of the pace in depreciation that they accounted for in the last 2-3 quarters. And now what is there is only the last year where they had new equipments that came in. Those since last year which have come online, the depreciation only for there. The commentary otherwise is bullish. They're saying the transformer side of the segment will reach 1,000 crores in the next 2-3 years. They're talking about good demand going forward as well. They've strong capex plan as well. Similarly, even Vikram Solar said that, there is an oversupply of solar modules, but they're not too concerned. That's not a business risk for them. Companies are talking about better utilization. Newer tech are still better off for them as well. Wari Energies also has actually said that they'll achieve much more than what they've guided for in terms of the EBITDA for FY26. Only an overhang that comes for them is in terms of duties and their investigation that is going on in the US for them. MB also spoke about FY26 run rate to be better than FY25. A lot of positive triggers for the company when you talk about it. Policy, a lot of policy changes there by the government pushing for this as well. So that is one big one that comes in terms of a driver for the company. ALMMs, all those, that is approved list of module manufacturers. That's a big one over there and supporting the growth going forward. Negative is the pricing pressure that comes in. The spread for domestic pricing is much more. So that is a pressure. Conglomerates are now entering bigger conglomerates. So that could be a bit of competition there, and domestic overcapacity is a concern. And that's why in terms of valuations, when you are overall looking at it, look at Premier Energies versus Vikram Solar in terms of valuation. Why is there a difference? Even though their capacity is at similar levels of around 3 gigawatt, the valuation for Vikram Solar is much lower. So that is something that is interesting. But solar domestic side is a bit of a worry, and that's something that we'll track going forward.
Okay, or most of them recent listings, and they all drove up the fact that there'll be a huge surge in solar demand and capacity, and that's exactly what Vinay was pointing out. There's a lot of competition that is happening there as well. So this is our what's trending segment, where we've spoken about the solar equipment manufacturers. Let's get in Saumil Mehta of Mirae Asset Share Khan for a technical check on the markets. We'll also ask him about some of these companies. But Saumil, what are your thoughts on these names? Premier Energies, Vari as well?
Vari, it's in the downtrend at this point of time. Below the short-term averages, below 200 daily moving average. Upward slanting trend line has broken on the downside. So overall, the trend is down on the monthly charts, weekly charts. So the medium-term, short-term, both down. Negative at this point of time, so stay away. I won't suggest to go short, but yes, definitely avoid these stocks for now.
Oh, avoid these stocks for now. So that's the word coming in. What about the market as a whole? It's trending a little lower. We're just about managing to maintain 25,200 and 82,000 respectively. What's your call in terms of the second half, and how we should probably position ourselves ahead of the long weekend?
Overall, if you see monthly and weekly charts, it's all low top, low bottom. So the structure is now negative in the short term, in the medium term. Now, if we talk about the medium term outlook, the previous weekly swing lows and monthly swing lows have broken on the downside, which makes it a little weaker. And my targets on the downside would be 24,800 in the very short term. But it looks like now the structure becomes a little more weaker because the banks have started cracking here. Axis Bank, Kotak Bank. So I'm expecting this downtrend to continue. And my next target in the medium-term outlook would be 24,600. So sell on rise should be the strategy. Till the budget, probably we see a sideways correction between 25,400, 25,500 and 25,000, that 500 points range. But overall, the trend remains negative in the short-term, medium-term both.
Okay. All right, we're going to let you go on that note. Thanks very much for joining in and speaking with us and giving us all of those strategies, Saumil, and wish you a good weekend. Well, for the broader markets, we're seeing a little more of an underperformance come through. So currently down around 0.7% for the mid-cap index. Time for a short break, but up next, Mangalam is going to focus on something which is very interesting, the business of the IPL, as Adar Poonawalla has declared his intention to acquire the Royal Challengers Bengaluru team. Stay tuned for that.
Welcome back. You're still tuned into Halftime Report. Serum Institute CEO Adar Poonawalla declared his intention to acquire the Royal Challengers Bengaluru franchise. Mangalam joins us to decode the business of IPL. Mangalam, tell us more.
Well, we've spoken about this before as well, but now the cat has been set among the pigeons after Adar Poonawalla yesterday posted on X that over the next few months, he will be putting in a strong and competitive bid for RCB, one of the best teams in the IPL. Obviously, they won the championship last year, so by that measure, it is one of the best teams and has a loyal fan base too. But remember, we here at CNBC TV 18 first reported this on September 30th. Thereafter, United Spirits too put RCB under strategic review in October 2025, slated to be completed by end FY26. While reported valuations could be anywhere between $1.5 billion to about $2 billion, the question is, are there other listed players here? Yes, we have United Spirits that owns RCB. So as a percentage of that market cap, $1.5 billion to $2 billion would be anywhere between 16 to 20%. But what this does is also sets the base for all the other listed players. So we have SRH, which is owned by Sun TV in entirety. And if you look at that $1.5 billion sort of valuation itself, it's 65% of its market cap. Minus the investments, then nearly the entire TV or the media business is available for free. And finally, we have LSG as well, which is Lucknow Super Giants, owned partly by RPSG Ventures, 51% stake, and that's 200% of their current market cap. Obviously, this is the holding company, so we haven't taken into account the holding company discount or the EV as well for RPSG Ventures, but this is the listed space. As we move to the business of the IPL, let's understand from a franchise owner's perspective. Franchise fee, which is 20% of the revenue for old franchise, and fixed fee for the new ones. Then there is player fee. These are the operating expenses, the key cost heads. Whereas share of revenue coming in from the BCCI in terms of title sponsorship, media rights, team sponsors and sales, along with gate money and ground advertising, merchandising, all of them are the key income heads or the money that accrues to all those teams. The central revenue pool that accrues to the BCCI, 50% of that is retained by the BCCI and the other 50% is distributed among the teams. The annual income for the BCCI through IPL is roughly 5,000 crore rupees through media rights, 500 crore rupees through title rights, and about 1,350 crores coming in from franchise fees. How do these actual numbers look from publicly available data from a team owner standpoint? I looked at the annual report of CSK, which is Chennai Super Kings, and RCB, which is in the United Spirits annual report itself. They did revenues of around 500 to 600 crores last fiscal, with margins between 37 to 40%, and both franchises ended up making profits between 140 to 180 odd crore as well. Now let's look at some of the triggers and threats. If you look at the triggers, the revised media rights auction, which starts from 2028, would be the big trigger, because media rights have usually been bid much higher than the previous cycle, and similar is the case with the central sponsorship cycle as well. So if that increases, then the pool of revenue for all these players, all the franchise owners, increases. An annually increasing viewership number, the higher number of teams / games, and likely longer duration or likely longer window would also do well for them, along with popularity of women's IPL, investments in overseas leagues like Mumbai Indians, for one, has a team in many leagues around the world as well. But then there are a lot of threats too. One, lower than expected ad spends, especially after the regulatory curbs on real money gaming apps, etc. A lot of that money has gotten out of the advertising system, and upside is limited for new media rights auction, because currently as well, at these prices, we've heard of players finding it difficult to recoup the money that they have been investing per game. So could the new media rights not be as high as the previous few revisions is one of the big risks. And finally, any change in regulation by the BCCI could also be one of the risks. So now that you know about the business, sit back, relax and enjoy the games.
Well, absolutely. We are expecting the IPL this year to be between March 26 to May 31st. But remember, there are state elections, so maybe that schedule would change. Mangalam, thank you very much for joining in and giving us the statistics and the business of the IPL, something that we'll keep tracking over the next couple of months, considering that Adar Poonawalla has now expressed his interest in it as well. We'll take a short break, but we'll get you a lot more on the markets, a lot more stocks and news on the other side. Stay tuned.
Welcome back to Halftime Report on CNBC TV 18. Nifty still around the 25,200 levels, but a whole host of mid-cap stocks are reacting to their Q3 numbers. Let's go across to Upasna to give us more details on this one. Afternoon, Upasna.
Good afternoon. First up, let me start with Cyient. The company's reported 3 consecutive quarters of quarter-on-quarter growth. If we look at the revenue, CC revenue growth, it stood at 1.9% versus 0.5% sequentially. EBIT margin stood at 9% versus 8.2%, and PAT was down 32%. Next up is Premier Energies. The company missed the Bloomberg estimates. Orders see a margin decline sequentially, and also the margins have contracted on quarter-on-quarter basis. But net profit, it has seen an uptick of 53% on YoY basis. Revenue has also seen an uptick of 13%. Next up is Ixigo. The net profit has seen an uptick of 56%. Revenue has seen an uptick of 31%. Now, looking at the key internals, the GTV has seen an uptick of 21% in Q3, and gross take rate for trains, it stood at 6.3%, flights 8.8%, and followed by buses at 12% nearly. Zensar Tech also reported their Q3 numbers. It's a strong beat on margins, but the revenue remains subdued. Now, coming to the company's CC revenue growth, it was down nearly about 1.3% sequentially, and EBITDA stood at 17.5% versus 15.5% sequentially. And lastly, coming to Bluestone, the stock was 11% up yesterday ahead of its earnings. The inventory gains led to a big EBITDA jump that is nearly of about 2.3 times. And revenue has also seen an uptick of 27% on year-on-year basis. The management joined us today morning, in which they've highlighted that the company's hedge ratio for the company, it stands at 50%, and the margin could settle around mid-teens for the coming year. So overall, these are the host of earnings that are in focus today.
Thank you so much, Upasna, for joining us. Those are some mid-cap movers on the back of earnings. With that, we'll slip into another break. When we come back, we'll get you more on the markets and some buzzing stocks as well. Stay tuned.
Welcome back. Well, for the markets, it's weak, but just watch out for the BSE Realty Index because that's really taken a drubbing this week. It's down 10.5% this week itself. If you look at it, specific stocks such as Brigade, Godrej Properties, all of these stocks at fresh 52-week lows. We do have even stocks such as Lodha, which are at fresh 52-week lows as well. So there's really something going on in the realty space, which is, just about resulting in incremental pressure. From the Nifty space, let's just focus on some earnings now. We do have Dr. Reddy's, which is seeing follow-on buying. So Dr. Reddy's is up for the second day in a row after a good set of numbers. So it's building on gains at around 1,250 odd rupees currently. And talking about the pharmaceutical space, we do have Cipla, which is reporting its numbers. So Cipla will be reporting its numbers later on in the afternoon. The conference call is, scheduled at around 3 p.m. today. So that'll be something to watch out for. And IndusInd Bank will also be reporting its numbers today. So that will be another stock to watch out for from the banking space. So that's the setup currently in terms of specific stocks. But for the markets, 25,225. So we've managed to climb back above 25,200. But the mid caps are still reeling under pressure. So down around 0.7% currently for the mid cap index with an advanced decline ratio, which is currently favoring the declining stocks. On that note, it's a wrap on everyone from our halftime report. Thanks very much for watching. This is Lunch. We'll take all the action ahead.
First point of the day, ahead of the long weekend after the global relief rally on Thursday, metals and consumer durables are prominent gainers while realty and utility stocks continue to remain the big drags.
Indigo owner Interglobe Aviation's Q3 profit is hit by labor code charges and flight disruptions, but the operational metrics remain resilient. The airline expects international operations to drive growth in the fourth quarter. Analyst gives its earnings a thumbs up.
Tariff repair is essential in the telecom industry, says Bharti Group Sunil Bharti Mittal, even as he sees no let-up in capex and reveals ambitious targets for the Africa business. He adds that the telco is engaging with the government on AGR dues.
SBI Chairman C.S. Setty sees a structural shift in bank balance sheets from deposits to borrowings. He also rules out any change in deposit rates, even as he expects another interest rate cut by RBI in 2026.
Good afternoon. You're with us here on Business Lunch. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. I am Hormuz Fatakia. With me, as always, Arundhati Ramanan. Arundhati, good afternoon.
Good afternoon, Hormaz. Not such a good afternoon for the markets, though. It's near the low point of the day. And we've got the long weekend to look forward to. We've got the budget also coming up. So lots of things to look forward to for the market next week, right?
And the caution is evident on the screen as well. We started off on a fairly subdued note when we kept on meandering in a very narrow range well until 11:30. But since then, the fall that came on the Nifty that moment was courtesy of Reliance Industries. And if you pull up the contributors chart, you will get an idea of why it's the principal contributor to the Nifty downside on the index. And there you can see the fall in Reliance corresponding to the fall in the Nifty. And since then, it's been that consolidation that you have seen around that 25,200 mark on the index. The intraday low for the Nifty is 25,183. That's the first level. And then you come down to the 200-day moving average, which is at 25,143. That's the level you need to watch on the downside now for the index. Of course, we head into a long weekend, so plenty of developments to look forward to, as Arundhati was highlighting as well. The Nifty Bank, just one final glance at that as well. That was the one index that is continuing to struggle at that 59,500 mark, and today is no different.
Absolutely. And if we look at some of those sectors, right, we've got that metal pack, which is back in the green and leading the gains. We've got Zinc, which took a knock yesterday, but is one of the top gainers today as silver prices hit record highs again. Hindustan Copper and Nalco also soaring in trade, all of them between 3 and 6% in the green. The IT index is also managing to eke out some gains. We've got Tech Mahindra, HCL Tech, Infosys, all of them in the green. However, on the downside, we have that realty index, which continues to lead those losses. We've got Lodha, Godrej Properties and Brigade, all of them seeing cuts of over 3%. In some stock-specific action, we have PNB Housing that's continuing to see a fall. It's down more than 5%. We've got Dr. Reddy's and Bandhan Bank, which are doing very well on the back of their third quarter numbers. But, you know, as I pointed out, a lot of stocks are buzzing around on the back of their Q3 numbers. Ria is here to tell us more. Ria?
Well, yes, Tanla Platforms is the first one. Good set of numbers here. Revenue has gone up by roughly 12% on a year-on-year basis. Even the EBITDA margins have improved to roughly 17% versus just about 16% in quarter 3 of last year. And the net profit for the company has also improved to roughly 131 crores versus just 119 crores in quarter 3 of last year. The next stock is APL Apollo Tubes. The street has liked the numbers for this one as well. Volumes have improved to roughly 917 kilotons in this quarter. Even the EBITDA per ton has also improved to 5,146 rupees versus just 4,173 rupees compared on a year-on-year basis. Apart from this, the management has also raised their guidance for the company. The EBITDA per ton guidance now for quarter 4 of FY26 and for FY27 has been raised to 5,500 rupees, and the company has also stepped up its volume growth guidance to 20%. And apart from this, brokerages have also maintained their positive stance on the company, which is why the street is reacting positively to this one. On the flip side, Idea Forge has reported quite a weak set of numbers. The weakness has been continuing for the last several quarters for this one. The stock is also down roughly 4% on the back of this. They've seen good growth in the revenue, but the EBITDA and net loss have widened this time around. EBITDA loss has almost doubled to 24 crores versus a loss of 13 crores in quarter 3 of FY25. The company has also seen a gross margin compression of over 2,200 basis points on a year-on-year basis to just 23.7%, and this has been due to significantly higher material costs seen for the company this time around.
Ria, thank you for that update there. But just before we move on to Indigo, pull up Hindustan Zinc, and that's because of the rally that you have seen in silver prices. The market cap of the company is now near 3 lakh crore. And that has made it the most valued metal stock in the country, more valuable than JSW Steel and more valuable than Tata Steel as well. So almost 6% higher is Hindustan Zinc. Of course, mind you, very little free float in the market, most of it with the promoters, the government and funds as well. So keep an eye out on Hindustan Zinc, still 100 odd rupees away from its record high levels, which was around 800 rupees plus. But speaking of Indigo, the stock is still down. Their third quarter numbers were decent despite the one-offs. Vinny is here with the fine print. Vinny.
Hi, good afternoon. Yes, so despite the disruption that we saw coming in the month of December for the flights, they managed to report a revenue growth of 6% this time. Profits obviously are hit by a lot of one-off that come in, but core business that's remained resilient. And overall, reported profit came in at 550 crores this time, which was impacted by 1,547 crores of exceptional loss. That was mainly due to labor code changes, disruptions. All of this is something that impacted the performance. Now, forex loss this time was at around 1,113 crores, which is versus a 1,456 crore reduction on a year-on-year basis. And exceptional item also, like I mentioned, 546 crores was the exceptional loss this time. Now, apart from that, what analysts are highlighting that Q4 FY26 capacity 10% higher than Q4 FY25. That's the word that's coming from the management. Near-term outlook, analysts are saying that will remain weak, but medium-term and to long-term, they're positive on the prospects of the company, and they expect the company to see strong growth. Also, do not forget the company has guided for yields to moderate in early to mid-single digit on a higher base in Q4 FY25. So outlook is a bit challenging in Q4 FY26. Management has guided for a 10% YOY ask growth as well in the next quarter. So that is the overall performance update that we have, or the guidance a bit muted in the near term, and that's a bit of a concern, but otherwise still resilient despite all those challenges that we saw in December.
Sure, Vineet, thank you so much for those details. And that stock is down over 4% in trade. Let's also listen in to what Indigo CEO Peter Elbers had to say on those numbers.
I think it's important to highlight that the major operational disruptions for which we have been profusely apologetic took place on December 3 to 5. 3 to 5 December, we had a total of 2,500 flights cancelled, affecting some 3.5 lakh customers on those days. And actually, pretty swiftly thereafter, we have restored our operation and brought it back to stability and normalcy. And in due course of the month of December, we came back to roughly 3.8 lakh customers a day. And despite some of the weather disruptions we had in the second half of December, it has actually started off quite stable since we declared the operation back in stability around the middle of December. We continue that trend in the month of January. We have a very stable operation now, and obviously start to prepare for the month of February to continue that very stable trend. There's the currency movement pertaining to the dollar-based future obligations. We've had that explanation before, and with the development of the Indian rupee as compared to the US dollar, we have to take another 1,000 crores in this quarter on that side. And the exceptional items related to the operational disruptions, which are accumulating to 577 crore for the quarter itself.
Among the top losers on the Nifty is Indigo, 4% lower, but also pull up Yes Bank is seeing a bit of a fall from the highs of the day. And that's after this Reuters report that you see on your screens, where SEBI has accused PwC, EY executives and Carlyle and Advent officials for allegedly sharing sensitive information and violating insider trading rules with regards to the Yes Bank deal. That's what the Reuters report is stating, citing sources. CNBC TV 18, of course, is yet to independently verify this, but the stock seeing a bit of a knock now from the highs of the day. But the big voice from Davos, Sunil Bharti Mittal from Adani Enterprises, it says that there is more appetite for M&A in global telecom. He spoke to Shireen Bhan on the sides of the World Economic Forum, and he also mentioned that Airtel is engaging with the union government on the reassessment of its AGR dues. Listen in.
For $200, you're giving everything away. Just to win more market share is unsustainable. Something has to give. And we are seeing now from 12 operators, we are down to 2 operators plus 1, which is trying to make a comeback. I personally believe time has come for this to be a crowdsourced event where the whole country can benefit from a very strong digital infrastructure highway in which everybody is contributing 20, 30 rupees a month to consume ton of data and enjoy many services that they need for everyday life. So I think I'm hopeful that sometime in 26, we may yet come to the point of touching 300. We have always said 3+1 is good for India. It's a large country. World over, you see 2 or 3 operators. But for the size of India, I think 3+1 is a good place. And we are hoping that Vodafone Idea will start to, be more active in the marketplace. They are welcome. There should be 3 operators. Keeps everybody, in the right place from the customer point of view. And from our own standpoint, we are hoping, we have written to the government that AGR was our issue as well.
Yeah.
And we hope we get attention from the government.
Have you heard from the government at all?
No, not as yet. We heard from the minister yesterday. He mentioned that everybody needs to follow the route that Vodafone Idea followed, which is via the courts.
On that note, it is time for us to slip into a short break. But before we go, here's a quick sneak peek into the stocks that we will address on Your Stocks today. Don't forget to catch fundamental and technical experts give their views on these at 2 p.m. today, only on CNBC TV 18.
Fly Emirates, fly better.
presidents of the European Union Council and the EU Commission will visit India from tomorrow till the 28th of January. And we also heard Ursula von der Leyen call it the mother of all trade deals. Parikshit Luthra is here with what's on the agenda. Parikshit?
Well, conclusion of FTA talks, signing of the Security and Defence Partnership Agreement will be highlights of the EU-India meeting. Now, this is going to be a state visit and will get all the trippings and ceremonies as well. The EU leaders will be arriving in India with a 90-member strong delegation. The President of the European Union, Antonio Costa and Ursula von der Leyen, you'll see them traveling in a buggy along Rajpath on Republic Day. There will be an enclosure for EU officials as well. For the first time, a EU military contingent will take part in the Republic Day parade. And this will be the first time that they will be participating in any kind of event outside the European Union. You will see two unmarked vehicles of the European Union, the EU military flag, the insignia on the officials who are part of the parade as well. More than anything, we will see the conclusion of FTA talks on the 27th of January. Sources are also telling us that there have been global tectonic shifts in geopolitics, and this is bringing India-EU together. And there is complete consensus among EU leaders, all EU states, for a very strong strategic partnership with India. What we're going to see also are certain very important documents. There will be a joint statement, which will be a summary of the visit and the intent to take the relationship forward. There will be a joint comprehensive strategic agenda. This will be a guiding document on how we want to take the relationship from 2026 to 2030. We will sign a security and defense partnership agreement, and this will bring a sharper focus to the defense industrial cooperation between the two countries. And what will be important for this also is the two countries, EU and India, will announce the start of talks on the Security of Information Agreement. Now, this will be important for closer industrial cooperation between defense majors on both sides. So it will be a visit which will be high on ceremonies, high on symbolism, but very high on deliverables as well.
Parikshit, thank you for that update there. All eyes on that major potential deal signing between India and the European Union. Take a short break, but just as we do that, the countdown for Budget 2026 is underway, with the most influential voices decoding and analyzing the impact and policy decisions from the Finance Minister. We bring to you a power-packed lineup all through this month and on the day of the budget. Helios Capital's Samir Arora for all things markets, followed by JP Morgan's Sajid Chinoy to discuss the macro signals. We also get you insightful analysis from industry veterans, and of course, Dinesh Kanabar and Ashok Wadhwa for the tax rhetoric. 60 points knocked off in a matter of minutes, and in trying to recover from the lows of the day, we have slumped even further to the lows of the day now. Almost a 300-point cut on the index now from the highs of the day. We are below or just around that 200-day moving average, 25,143 being that level to watch now for the Nifty. A very, very important psychological support, of course, and an important support as well. The psychological support, of course, being the 25,000 mark. That is, of course, the most important level, the line in sand, as you would like to call it, for the index. Reliance Industries, one of the stocks that is been pulling the index lower all through the session. That's 2.5% off the highs of the day. And what's at the lows of the day is Eternal, 5.5% lower now after the 10% that was shaved off from the highs of the day yesterday. And the stock now at 260, a 52-week low, and it's almost 110 rupees shaved off from its 52-week high, which was around 368. So from there, it's been almost a 30-35% knock that Eternal has taken from those levels. So that is the top loser now on the index. Pull up Indigo as well. You see whether that has extended its losses, because that at one point when we started off the show, it was down around 4%. Recovering slightly from the lows of the day is Indigo, but the Nifty below or around its 200-day moving average. That becomes the big talking point as we go into the business end of what is the final trading session of the week, and we head into the long weekend. Meanwhile, President Donald Trump formally launched his so-called Board of Peace, a body for resolving international conflicts. There is a $1 billion price tag for permanent membership on the board. It was originally conceived to oversee the reconstruction and governance of Gaza following the Israel-Palestine war. Now, representatives of 19 nations have signed the charter. Argentinian President Milei, Hungary's leader Viktor Orban were in attendance. An invitation has also been extended to India and Russia as well. Kremlin said it was reviewing the invite. New Delhi is yet to respond.
Trump also said that the deal on Greenland was still being negotiated. He said the time limit is infinity, meaning there is no timeline for the deal. Listen in.
We can do anything we want. We could do military. We could do anything we want. And it's being negotiated, and let's see what happens. I think it'll be good. We're all going to work together, and actually NATO is going to be involved with us. We're going to be doing in conjunction, parts of it in conjunction with NATO, which is really the way it should be. U.S. won't have any expense because we're not going to have expenses other than building the Golden Dome. We're going to build the Golden Dome, and we'll have participation in that also. The cost of the Golden Dome, we'll have participation in that also.
Now, amidst the rising tensions between the US and Iran, President Donald Trump issued a fresh warning to Iran, saying that a massive fleet is heading towards the country, but hoped that he would not have to use it.
We have a lot of ships going that direction, just in case. We have a big flotilla going in that direction, and we'll see what happens. Oh, the Air Force. We have a big force going toward Iran. I'd rather not see anything happen, but we're watching them very closely. 837, mostly young men, were going to be on Thursday. And I said, if you hang those people, you're going to be hit harder than you've ever been hit. It'll make what we did to your Iran nuclear look like peanuts. At an hour before this horrible thing was going to take place, they canceled it. And they actually said they canceled it. They didn't postpone it, and they canceled it. So that was a good sign. Well, we have an armada. We have a massive fleet heading in that direction, and maybe we won't have to use it.
At the World Economic Forum in Davos, new tensions between Washington and Europe over Greenland drew attention, but Ukraine's president worked to refocus leaders on a longer war. Volodymyr Zelensky launched an attack on European leaders over their support for Ukraine. The Ukrainian president declared Kiev was living in Groundhog Day, adding that Europe loves to discuss the future but avoids taking action against Russia. Zelensky also met with President Donald Trump, who says efforts toward a peace deal continue, though no breakthrough is in sight.
With that, we take your leave on this edition of Business Lunch, but business in the markets is far from over. It's counting down to the final 120 minutes of this week. Arundhati and I take your leave. Midcap Radar on the other side.
Good afternoon. Welcome to Midcap Radar live from the CNBC TV 18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always is Vivek Iyer. At the day's low, we have broken past the 25,100 mark as well. Across the board, there's major selling which has come by. Midcaps, they are underperforming, and Bank Nifty 2 is down 0.9% as we speak. Hey Vivek.
Good afternoon, Sonal. And earnings coming in thick and fast. Nifty heavyweight Cipla 2 has just come out with its results as we speak. Appears to be a significant miss, especially as far as EBITDA is concerned. But we will keep an eye out on whether there are any one-off items in that particular results. But I'm sure we'll have Ekta joining us soon to explain these results in detail. A lot lined up on the show, so let's start off with the top headlines. Stocks trade near the day's low ahead of the long weekend after the global relief rally on Thursday. Metals and consumer durables are prominent gainers, while realty and utilities drag.
SAN posts a mixed December quarter where dollar revenue sees a marginal uptick while profit falls over 30%. Management tells CNBC TV 18 that the company aspires to achieve high single-digit to early double-digit growth for FY26.
Premier Energy trades under pressure as the company's earnings fall short of street estimates. Margin sees a sequential dip.
Tanla trades with gains of over 9% as the company's profit and revenue sees a 10% uptick while margin expands year on year.
And shares of Syngene trade lower as the company's profit falls over 88% while margin contracts to nearly 23%. The management says ongoing impact of a single product from a large molecule biologics client hurt Q3, but underlying business has shown steady progress.
Okay, all right, those are the top headlines, but Cipla definitely is the stock on our radar. It has fallen from the highs of the day at the day's low. From the initial look, it looks like it is a miss versus all the estimates. EBITDA has come in at 1,255 crore rupees, which compares with a poll of 1,695 crore rupees. Margins too at around 17.5% compared with 22.5%. Yes, it was expected to be a weak quarter this time around, but it is weaker than what the street was working with because there was sales erosion because of their cancer drug Revlimid. Their poorer product mix in the US is something which was going to impact the sales this time around, but the numbers are much lower than what the street was working with as well. So those are Cipla's initial numbers for now. We'll of course watch out for the breakup in terms of US sales, the management commentary as well, and get in Ekta in just a bit to analyze these numbers. For now, the stock is lower, down 2% as we speak. So we'll keep tracking these numbers for you. And of course, later in the day at around 3 p.m., we'll have the management commentary which would come by as well. To detail the numbers which have just come by. It's almost 1,000 basis points decline on a YOY basis for Cipla. The expectation was of a 500 basis points decline as far as margins are concerned. That's about Cipla actually. We'll get an Ekta in just a bit, but let's go across to Sudarshan. This is our special segment, Midcap Movers. He's going to take us through the midcaps that are moving around in trade. Sudarshan.
So market is weak and one segment or one set of companies that is very weak in the trade is Adani Group companies. All the stocks are trading with huge cuts, and that comes after a report of US Securities and Exchange Commission has sought the approval of a US court to send the summon to both Gautam Adani and Sagar Adani. You can take Adani Green, Adani Energy and Adani Power. Even in the Nifty, both Adani Enterprises and Adani Ports are sharply lower. But even in the weak session, some of the stocks are trading higher with healthy volumes. You can check Dhampur Bio, Everest, Canto, Anthony West, Muka Proteins, Jindal Poly has just slipped in the last few minutes. But apart from that, all the names are sharply higher. Dhampur Bio is up as much as 20%. But there are certain mid-cap names which are sharply lower. On top of the list is Paytm, because there is a chatter of PIDF, that is Payment Infra Development Fund, which RBI had extended till December 2025. It's not going to be extended further. That might have an impact on operating profit of Paytm. That's the reason stock is sharply lower. It's down almost 7%. And late revenues after earnings has slipped for the second straight day. Tattva Chintan, HG Infra and EPAC Prefab, all these stocks are sharply lower with healthy volumes as well.
Well, thank you so much, Sudarshan, for joining in and giving us all of the details, especially as far as the broader end of the markets are concerned.
Okay, one sec. I'm so sorry, but there is a one-time impact of 275 crore rupees on Cipla, which is because of these new labor laws. So that also explains the impact that we are seeing on Cipla's EBITDA margins this time around, and profits as well, which are much lower than the poll because it is an exceptional item that has come by. They say it is because of the new labor laws that their profits are hit by 275 crore rupees. So let's go across to Ekta. Actually, she's here to decode the numbers. So Ekta, profits lower due to these new labor laws for sure, but what do you make of the other numbers, especially on the EBITDA front?
Well, yes, definitely. You know, Cipla has come out with what is a disappointing number, at least on the revenue. So the street was expecting at least around 7,500 in terms of sales, but they've come in at an absolute no growth this quarter. So yes, the labor law impact has come in terms of the EBITDA as well as the profit. But what took place with the revenue that they've reported an absolutely flat performance? That's possibly because of the US business, because they did have the Revlimid generic cliff, which a lot of the companies have faced. We saw that with Dr. Reddy's, where they just had a little bit of a reminiscence of, the particular drug in their numbers this quarter. And for companies such as Cipla, you probably saw a greater impact which came through. Now, in terms of the other markets, there are other markets such as India, Africa, which we really need to see the growth come through for them, considering that, companies such as Dr. Reddy's did see other geographies really compensate in terms of revenue. So whether or not Cipla can do that or not will be something that the street would watch out for. So the internals such as the US growth, India growth will be watched out for closely. Now the labor impact is basically what has impacted the profitability, which is coming at around 674 odd crores this quarter. And there is an impact of around over 270 odd crores on account of the labor laws. But what I think the street is also disappointed by is basically the zero growth that they've come in with in terms of revenue this time round. So more details are awaited, but as of now, it is disappointing to see that, the revenue has been absolutely flat this time. There's been that labor law impact which has taken place, but even then the margins have come in at around 17.7%. The street was anticipating around 22%. Remember, same time last year, a lot of these companies were benefiting from drugs such as Revlimid generic, and that is something which is not going to be in their portfolio. Separately, we do have, or rather going to see a lot more competition in that particular drug. Separately, they do have the supply issues which are emerging for lanreotide now, which we've spoken about quite extensively. So that would be the other layer of negativity, which I think the street is going to watch out for. They do have supply concerns because they do have 22% market share in that particular cancer drug. It's one of the best selling drugs in the US, and now you're seeing supply concerns come through. So we're not only talking about this quarter, but we're also talking about maybe what the foreseeable next couple of quarters would look like for Cipla when it comes to the US business. They do have Advair generic, which is also probably going to see more competition. They're still waiting for approval on that particular drug. And remember that there is a management change which is going to be taking place at Cipla, with Umang Vora stepping down and Achin Gupta taking over. So these are a lot of these variables which the street is also working with at this point in time. So yes, disappointing. There is that impact which is taking place in the EBITDA as well as the profitability. But I think the street is also looking ahead and is a little bit more cautious and uncertain about what the future might look like. They are holding a press conference at 3 p.m. I think it'll be important to address a couple of these questions with the management then.
Well, thank you so much, Ekta, for joining us, giving us all of the reasons as far as what caused the miss for Cipla, and also some worries emerging as far as the outlook is concerned. Well, it's a good time to welcome Dharmesh Shah of ICICI for a quick technical check on the market. Dharmesh, you can see it's a very busy session, especially with results pouring in. We'll keep it short. What's your view as far as the markets are concerned? A 230-point down knock as far as the Nifty is concerned.
Yeah, so good afternoon, Vivek. Absolutely, I think so. The market is not respecting to 200-day moving average. It seems to be trading below this moving average of around 25,150. Below, I think so. Market should look for a target of around 24,700 to 24,750, which is again 80% retracement of this entire move, which happened from 24,400 to 26,300. And also, if you look at the market breadth, I think so that's still not supporting the market. All the rallies seems to be getting sold off. So we believe market should see a strong support in this range of 24,700 to 24,800 range, where we believe, I think so, by next week we should see a gradual recovery happening in the market. So yeah, it's more likely a panic or a capitulation happening in the market, but it looks like, I think so, we are near this bit of a bottom formation in this range of 24,700 to 24,800.
Take that point. It's a sharp fall from the highs of the day. Dharmesh, thank you with your thoughts on what the levels would look like. We are off 300 points from the highs of the day on the Nifty, very close to breaking that 25,000 mark again. So that continues to remain an important level to watch out for. Slip into a break. When we come back, we'll get chatting with the management of IndiGrid Trust on the other side.
Fly Emirates, fly better.
Welcome back to Midcap Radar. Well, we have an interesting management that's joining us on the show. IndiGrid Trust, that's the management. Remember, the company raised close to 1,500 crore rupees via QIP. Harsh, good afternoon. The MD of IndiGrid joins us now. Harsh, good afternoon. First up, we'll have to apologize. We'll keep this conversation quite short. Lot of news flow and a whole host of results that are hitting the exchanges. If you could tell us about the reason for the fundraise, how will you be deploying the funds? We understand a lot of institutional long-only international funds have participated.
Thanks for having us. We just completed 1,500 crores of capital raise. The key immediate end use of the capital is going to be towards repayment of debt. But as we are allowed to raise debt up to 70% leverage, this will bring down our debt to 56%, which means that we can grow up to 45,000 crores from our current 32,000 crores in AUM. And the next 13,000 crores of growth can be underwritten by acquiring more assets with debt.
Okay, Harsh, what are your finance costs currently? Will you see any refinancing soon? What is the scope of savings? And how are you funding the acquisition of Gadak Transmission? Will this fundraise be enough?
Our finance cost is somewhere in the range of 7.5 to 7.6% annually currently. Marginal cost of capital has gone down because we are rated AAA, and in general, over the last few years, the cost as well as the spreads have come down. So that's something we are happy about. In terms of funding immediate acquisition of Gadak, that will be funded by debt because this fundraise is going to reduce our debt. Now we can acquire more projects by funding by debt. So Gadak will be funded by debt, which is anyways relatively a smaller acquisition, just about few hundred crores. So it's not a very large one. So that will be purely funded by debt.
Okay. Harsh, one last question. DPU guidance for FY27, are you increasing it for FY26 from 16 rupees? And also, transmission bidding pipeline, has there been a reduction as far as the on-ground bidding is concerned?
So I think to start the first question, we look at transmission, solar, and battery storage, all three. Okay. And we have seen in general, bidding pipeline remains very strong. There can be a quarter or two of blip, but I think we look at the business in a 1 to 3 year time frame. And in general, the transmission as well as battery storage bids have gone up. So we are pretty positive about adding assets in future. In terms of forecast, I think we give usually forecast for next year in Q4. So I think next quarter's result will capture that. But over the last 8 years, we have consistently grown every year our DPU. So hopefully we'll continue to do so next year as well.
All right, Harsh, thank you so much for joining in with your thoughts on the fundraise and the outlook on the business going forward. For the markets, the fall continues. In fact, if we look at the mid and the small cap index, both of them are at the day's low. We have all the sectoral indices which are in the red as we speak. Nifty is very close to that 25,050 mark. So watch out for the moves in the broader markets. There are some stocks which are bucking the trend. So let's talk about them as well. Tanla Platforms, of course, on the back of those numbers that we spoke about earlier. Antony Waste Handling, in a weak market like this, the stock is up around 14% as we speak. Bajaj Consumer is the other one, which is higher by 7%. We do have Bandhan Bank on the back of numbers, which is up around 4%. On the flip side, we do have big losses coming by as well. Something like an Ixigola, Travenews Tech, that stock is down 16% on the back of numbers. Edgy Infra on the back of some surveys, that stock is down 12%. Adani Group stocks, the likes of Adani Green, Adani Energy, both of them are down anywhere between 10 to 11%. EPAC Prefab reported numbers day before yesterday and has been down since then. So there are big moves in select stocks. And if we talk about the big loser as far as the Nifty, the sectoral indices are concerned, it continues to be the realty index. Despite DLF talking about gross debt zero figure, there has been a decline because there was a decline of 97% in terms of their bookings this time around. That index is now down 27% or 28% from its 52-week high. So a lot of selling taking place in that particular space as well. So we'll do one thing, we'll slip into a short break for now, but when we get back, we'll focus on market stock-specific action on the other side. Stay tuned for that.
Welcome back to Midcap Radar. Well, one particular stock from the broader end of markets, in fact, the top F&O laggard today is Paytm or 197 Communications. An interesting development that's transpired overnight. Remember, last evening, PhonePe went ahead and filed its DRHP as far as its upcoming IPO is concerned. Now, market participants have taken a read-through from this particular DRHP. Now, the DRHP states that PIDF incentives, which received from RBI, has been stopped as of December 31st, 2025. So as per the DRHP, RBI's PIDF scheme, which was launched in Jan 2021, remained in effect only till December 31st, 2025. And after that, there has not been any further communication from the RBI regarding the extension of this particular scheme. Now, why is this important? In fact, today, Investec, which had earlier initiated coverage on the stock with a buy rating, has actually written on this particular development. They say that there is chatter around RBI not renewing the PIDF post-December 2025. Remember, PIDF is an incentive scheme for deploying payment infrastructure in India, which includes the likes of sound boxes that Paytm sets across with its merchants. Generally, the RBI renews it at the end of every 2 years. The last renewal was done in December 2023. Now, Paytm generates close to 200 crore annualized of operating revenue via these incentives. Now, remember, this 200 crore incentive flows directly into the EBITDA, and for Paytm, a similar number is close to 320 crore. Now, Investec says that the cancellation of these schemes will definitely result in a revenue loss for the industry as a whole. And however, they say that there are offsetting triggers. So they say that Paytm instance can take close to 10 rupees per month hike in monthly rentals on the soundbox it charges from merchants. And with that 10 rupees per month hike, they can actually go ahead and offset most of this revenue loss. Despite that, it is a setback. It's a read across from a peer's DRHP, something that the street has not taken very kindly.
Okay, yes, the stock is off sharply from the highs of the day. Markets at the day's low. Rupee is yet again at another record low at 91.76. Now it's hit that 77 mark as well. So we are watching. It's a sharp fall actually on the rupee as well in last couple of minutes itself. So we'll get in Lata as well with what the dealer check is suggesting as well. But for now, equity markets at the day's low, rupee at a record low, and that's the kind of situation Indian markets are dealing with as we speak. Across the board, there is selling pressure which has come by. Look at that. It's a one-way move there, 91.77. That's a fresh low on the rupee. We've been having conversations with a lot of dealers, with a lot of rupee market experts as well, and the indication is that they expect there could be further pressure on rupee from these levels. The continuous FII selling, that is something which is putting a lot of pressure on the rupee levels as well. So watch out for that. For now, it continues to be at the day's low. Nifty is below the 25,100 mark as we speak. It briefly slipped below the 25,050 mark as well. But yes, nevertheless, it's a sharp fall for the Nifty as well from the highs of the day. Even mid-caps are not far behind.
Couple of stocks, Sonal, just ahead of its results. Axis Bank, that particular stock too, near the day's lowest point. Also, Cipla, that particular stock has seen further selling pressure emerge. Remember, the US sales estimate was close to $220 million. The number has actually come in just around 167. There are a lot of one-offs that Ekta did highlight, but despite that, the US sales number, which the street tracks very closely, has come in quite low. And at the back of that, Cipla now down almost 4.5% in the session. This is after a period of prolonged underperformance that the stock has seen going into the results. But with that, it's all the time we have on this edition of Midcap Radar. Your stocks when we return.
Good afternoon. You've tuned into Your Stocks, coming live from the CNBC TV 18 Motilal Oswal studios. I'm Vinny Motiwala. Thank you so much for tuning in. As always, market specifically in the last 1 hour, if you look at it, has seen a sharper fall coming in. Right now, the market is trading almost near the day's lowest point. Nifty at 25,050, around that mark. Now Nifty is down 240 points in the trading session. So keep an eye out on that. Day's lowest point is what we're seeing for the Nifty. We have Shriram Finance that's reported its numbers as well. So we've seen the numbers coming in. The stock is as of now down 2.8%. Net profits for the company versus the poll seems like slight bit better there. At least 2,500 crores approximately net profit versus what we were expecting at 2,440 crores. NII of the company is coming at 6,574. Poll was at 6,498. Net profits, when you're comparing it versus the previous years, it's down 29%, I believe, is what we saw. But yes, that's Shriram Finance, which has reported its numbers right now. Street doesn't seem to be too happy with it. We'll wait out for more internals on the numbers, the NPAs, etc. as well. But as of now, the stock is trading at the day's lowest point. Okay, NII is up 17.6%. I beg your pardon. So that's YOY increase there. Gross non-performing asset ratio is at 4.54% versus 4.57% quarter-on-quarter basis. Net NP is also some bit of an improvement there, but stock down now 2%. Keep an eye out on that one. Markets as a whole, we're seeing a bit of a weak performance coming in. We had IT that was managing to hold on to green. That has also come down. Let's pull out the Nifty metals. That is the top sectoral gainer today. Whether that has also seen a decline coming in is something that we will watch out for. But Nifty IT, that was surely the one that came off from the green, and now it's trading in the red. Metals too is moved out and is also in the red as well. So now, as of now, all sectors are trading in the red. We're seeing a bit more of a pressure that's come in. Advance decline ratio clearly in the favor of declines versus advances through the day as well. There's a crisscross made at one point of time, and then declines clearly overtook advances in terms of the fall that we saw coming in. But yes, that's the market right now for you all. Let's bring on board our independent market expert, Shaina Mukaddam, as well as Vaishali Parekh, Vice President Technical Research at Prabhudas Leeladhar, who are here to answer all your stock-related queries. Shaina, as well as Vaishali, good afternoon. Thank you so much for joining us on the show, as always. Vaishali, a quick check in terms of the markets. The Nifty is now below 25,100. We've seen a sharper fall in the last 1 hour. What should we keep an eye out on?
Hi, very good afternoon, Vineet, Shaina, and all viewers. Market has become a bit choppy, and right now we are witnessing 24,900. That is the final support level. If we see those levels, which was a previous low, if those levels break, then we are calling in for further profit booking, and that could trigger the targets of 24,500 to 24,200. So right now it is definitely a weak bias, wait and watch, and we are seeing especially the front line, especially also the mid cap, all of them are in a selling pressure. So view is corrective. And even if you see Bank Nifty, 59,500, which was the resistance, it failed to sustain. So I think if I'm talking about Nifty dragging so low, Bank Nifty too can go towards 57,000 and perhaps lower.
Okay, surely we'll keep an eye out on those levels over there for Nifty, Bank Nifty as well. We have Adani Green also that has just reported their numbers. And do not forget today, Adani stocks were a bit in focus. This was from Bloomberg, what we had picked up, that US SEC wants to ensure that Adanis are formally made aware of the legal action. And US SEC is asking for alternative measures to serve Gautam Adani legal summons as well. So that's the update we had a while ago, and that was from Bloomberg. But Adani stocks and now Adani Green reported its numbers, revenues up around 30% on a year-on-year basis. We'll wait out for more internals. Shriram Finance, Adani Green, both of them just reporting their numbers. Let's get started with the stock-related queries. We have R. Ganesh, who's writing to us from Chennai. He's holding 190 shares of Vishal Mega Mart, and this is at a price of 78 rupees that he's bought it at. Now the stock is trading at 124, making a profit on this one. Wants to know if he should continue to hold, sell, or maybe switch to some other name. Shaina, good afternoon. What's your view on this?
Yes, so good afternoon to you. Good afternoon to Vinny and all your viewers. See, I would believe that this investor has bought it at the IPO, right? So he's made money. And at current price, the valuations are quite expensive. If you look at it in terms of EV by EBITDA, it's about 28 times FY27. So in my view, the stock is likely to remain range bound for some time. The numbers are next week. So what I would say is that book half your profits, half the quantity as your profits, and review it a couple of months down the line. And you could look to re-add it, but I would say it will consolidate at current levels based on valuations.
Surely we'll keep an eye out on that over there. But rupee also has hit a record low. 91.93 against the dollar is what it hit. Now it's at 91.92 rupee. Record low levels there, and we'll be talking about that in the last few weeks as well. So yes, rupee, something important that we will be tracking right now. Also 91.9350 is what the rupee is at today. As of now, record low levels for the rupee. Vaishali, just coming to you, what are your thoughts on Vishal Mega Mart? Vaishali, I think you're in mute. Vaishali?
Am I audible?
Yes, now you're audible.
Okay, so I think when we talk about Vishal Mega Mart, it calls for a hold because we have seen a good corrective move, and right now it is showing signs of reversal. So the current market price being 1,424, I think this can give a bounce up to at least 150, 160. So continue holding. It's getting in a trend, and I think it's coming out of its oversold zone. So first target would be 135. Above that, we would look at a target of 140, 145.
Okay, surely we'll keep an eye out on those levels over there. Let's move on then to the next query where Mahesh, who's writing to us from Chennai, holding 112 shares of Whirlpool, price is 1,200 rupees per share, wants to know the long-term outlook for the stock. Shaina, your view?
So he's made a lot of loss, but I would say at current levels, I would prefer that he continues to hold. And if there is any further deep correction, he should in fact add actually, in my view. See, Whirlpool, the parent, US, has actually been selling stake over the last 2 years. They have sold stake, brought it down right from 75% to almost 39% as of now. Now, we don't know exactly who has bought it or adding, but I think there is some news that Advent International, the PE fund, is actually acquiring stake. Now, if this is what is to go, and they would acquire more stake and consolidate the business, they have got other also investments in similar areas. So that would be a good long-term bet when they can turn around the business. Numbers, in fact, valuations, if you look at it on overall valuations, doesn't look too expensive. If you compare the market cap to the turnover, it's just about 1.3 times. So if you're going to be a patient investor, not look at it quarter by quarter, then I think for the long-term investor, you could make money, 3-year holding period.
Okay. And Vaishali, your view for Whirlpool, what should the viewer do right now with Whirlpool?
I would say there is no sign of reversal also, and we are seeing new lows taking place. So I would say shift. No point holding this stock for now.
Okay, no point holding the stock for now. Shift from the stock is the word from Vaishali. Let's move on to Karnataka Bank. That's the next stock we have a query on. Raja is writing to us from Madurai. He's holding 200 shares of Karnataka Bank. 180 rupees is the buy price. Right now also around the buy price. Wants to know if he should hold these shares for the long term. Shaina?
See, in the first half, the stock has gone through some period of consolidation. You have seen a correction. You have seen a change in management. Various issues took place. But now that Raghavendra Bhattji has actually taken over, I think in November, appointed by RBI, also approved, that for the year, let us see what he can bring about in terms of changes. Because first half we saw flat, terms in terms of loan. There was no loan growth, no deposit growth. While you had net NPAs improving, balance sheet quality improved a bit, but otherwise there was no major change. Now, and valuations are pretty attractive. It's just price to book is about 0.58 times as of now. So I would say hold it for now, review what changes can take place over the next 6 months, and then you can take a call. It's a small cap private sector bank.
Okay. And Vaishali, your view on the technical front, should the viewer continue to hold it for the long term?
So right now, Vinny, it is holding on to all the support levels. Even if it's for a long term, I would say keep a stop loss of 170 because that would be the final support with a long term perspective too. If this stock falls below 170, it could trigger further selling pressure. For now, I would definitely say hold because right now it's at a make or break level close to the support levels. If we see this stock bouncing back, then I think it is the near term target is 210. About 210, it justifies a further conviction for further up move. So till now, I would say for now, keep the stock and keep a stop loss of 170.
Okay, surely we will be keeping an eye on that stop loss of 170 is what Vaishali is indicating as well. Next query for today, we have Rahim who's writing to us from Kerala holding 1.25 lakh shares of Easy Trip Planners. Price is 10.08 rupees, making a loss on this one. Stock is currently at 6.40. Wants to know should he continue to hold or just book the losses and get out of the stock. Shaina?
I would say book half the quantity as a loss. I would classify this as a high-risk stock, mainly because of the actions of the promoters. Really, one doesn't know what they're doing, actually. It used to be one of the only profit-making travel platform company and quite exciting. But what they have done subsequent to the IPO is really, it's very difficult to understand. They have raised funds recently, and that they are investing in some other industries like real estate, hotels, etc. Now, but valuations now, so it's very difficult to say what is going to come about it over the next 6 months to 1 year. So I would say he's making substantial loss. Book half the loss, get out of half the quantity. Review the numbers, when they come out. Valuations are also not cheap if you look at current numbers. It's about, if you look at it, compare the sales to the EV, it's 11 times. So that comfort is also not there. So I would say book half loss immediately and then review the rest.
Okay, book half loss and then review the rest. Let's move on. Vaishali, what's your view for Easy Trip Planners? What should the viewer do? Continue to hold or book
this stock has never shown any upward move. It's on a one-way downward trajectory. So there is no steam. I mean, actually, only if the stock moves above 8 rupees, we would say that it calls for a sign of reversal. But for now, I don't see any strength. Currently, only consolation is that, yes, it's in deep oversold. But I would say exit, shift to a good, fundamentally very strong stock.
Exit and shift to a strong, fundamentally strong stock is what you are highlighting as well. Next query, Shankar is writing to us from Bangalore. He's holding Tata Motors CV and Tata Motors Capital. Wants to know, he's asking if he can buy, I beg your pardon, it's an investment query. So, Shaina, your view on both these Tata Motors CV as well as Tata Capital?
Yeah, so in my view, these are two fundamentally strong stocks. So you can keep adding to your portfolio. Tata Capital, if you compare it with the other NBFCs, it is I would say attractively priced, not expensive. So one can add a good promoter group. Also, same holds for Tata Motors CV. There, I believe after 3 years of CV cycle being down, the cycle has upturned. We've seen very good numbers coming up from CV numbers of Tata Motors last December. We saw 25% increase. So I think these are good factors. The management is committed to reduce the debt also on the books. So I could say you can keep buying these stocks, keep buying it on any dips that you get, and we are getting plenty of dips now. The market, behaving the way it is.
Okay. On that note, we'll actually wind down this edition of Your Stocks. Given that the rupee is at a low, we will, and the market is seeing such a fall. So, Shaina as well as Vaishali, thank you so much for joining in. Rupee at near those record low levels, and that FII selling pressure is continuing, and a lot more reasons there. But we'll keep an eye out on that. Up next, we have Closing Bell to take you through all of that.
to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Hang Seng, that's opened up with gains of almost 1% in the trading session today.
The good thing is, as we wind down and go into the weekend, all of the news flow which caused this turbulence in global markets is settling down.
We have a very stable operation now and obviously start to prepare for the month of February.
Government focus on capex infra is really very high, and we are seeing huge investments coming.
25,300, so it's now gone flat. 20-point change. The Nifty Bank is up 0.2, 59,300.
It will not be very significant uptick, but definitely there will be signs of improvement in terms of earnings trajectory, at least for the large caps and certain mid caps in our view.
Fairly volatile week that we've seen, where we've tested lows of sub 25,000 and also highs of closer to 25,450.
Net interest income that declined by 5% on a year-on-year basis, almost in line with the street's expectation.
The president of the European Union, Antonio Costa and Ursula von der Leyen, you'll see them traveling in a buggy along Rajpath on Republic Day.
Across the board, there's major selling which has come by mid-caps. They are underperforming, and Bank Nifty 2 is down 0.9% as we speak.
Well, we're starting closing bell, 10-15 minutes early. Welcome to the program. We're coming to you from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me, my colleague Nigel. Nigel, hi.
Well, hi, Prashant. I think all through the week, we have been lowering the support on the Nifty. And at least I think as of close, if we can support that, the 25,000 odd mark, I think the bulls at least will feel good, because the fall that we have seen, which started at around noon, it's got a little bit deeper, and there's only one stop loss now, 330. Just take a look at the way we're falling.
You're right, and it would be funny if it was not so tragic what's going on.
But at least I think actually we went down to 25,020 odd, and we've seen at least some kind of stability that's coming in there. Otherwise, it was a very sharp fall that we saw 130 to around 2 p.m. and individual stocks have fallen off the cliff. So hopefully the breadth of the market doesn't go even worse from here, because the number of stocks declining are way more than the number of stocks advancing.
Look at that. I mean, a point change from the day's highest point. So let's just do one thing, right? Can we put the rupee up, please? The rupee and the Nifty together on one screen. And I think what is happening to the currency, I think perhaps also sold in a way predominantly. I mean, it's of course incredible, because what's happening to the currency essentially goes against what's happening globally. I mean, it's a study in sharp contracts. So that's a Nifty. So as it's almost exactly, you can map it, right, in terms of time. The rupee started going up at about 115 or so, and around the same time is when this collapse on the index has happened. I think we were down about 70 points or so till that point, and another 130 odd points, 140 odd points coming as the rupee started moving higher sharply. Now, if we can, I don't know if we can show the dollar index, but the dollar rupee versus the global dollar is, again, that is a complete contrast. The big global narrative is one of dollar weakness, not dollar strength. Last night, for example, the dollar index, the broader dollar was down. There you go. It's up nothing, right? I mean, 0.13. It was down 0.5% last night. I mean, if you just look at the dollar index, say, if you're able to pull up a chart right on the screen for the last, say, 10 days, 15 days, you will see what I'm talking about. The dollar index has been weakening. It's not been stronger. So this is local headwinds more than anything else, which is at play here. Very India specific in that sense. So and it's a very sharp dichotomy, contrast, whatever you want to call it, at this point in time. And I think the new records, of course, being breached right there, 95 now, 91.95 against the USD. I mean, day before yesterday, it looked like maybe the RBI stepped in at about 91.70, 91.72, 73, and 91.80 seemed like a bit of a resistance zone for the dollar. Well, all that's been taken through. And what a week this has been. What a 10 days it has been in terms of what we've seen. There you go. I mean, that's the picture as things stand right now. 240 odd points. And there's a general sense of panic, whatever you want to call it, as far as broader markets on the stock markets are concerned. But I think we want to address the rupee in some detail in terms of what's going on, what's the mood sentiment, and what's the chatter, if there is any. Lata is here with us in the studios. Lata, what are you picking up?
Well, actually, it was off to a very steady start. The rupee closed yesterday at 91.63. Early morning trades were at 91.50. So actually, the dollar was cheaper by about 15 pies in early trades. And it seemed like that up until noon. One is normally worried about fixing, which happens around 1 o'clock when the month ago NDF trades mature, the swaps mature. But, even after 1, it was a sea of calm in the currency markets with, basically yesterday's levels holding. There seems to be a selling post in the afternoon trades. Now, it is difficult to say whether the rupee triggered this stock fall or the stock fall triggered the rupee fall. We often used to say in days of yore that when London opens, there can be a seminal shift. So it's possible that with London markets opening, foreign funds came with a bout of selling. Already the Adani news, which was carried in Financial Times, had created a negative buzz on those stocks that the SEC may the SEC may ask permission to send notices, summons. That was creating a negative feeling, but it didn't impact in the early part of the trade. There were even some dealers telling us that actually they are normally people who who are custodians and who buy dollars for FPIs, but they did not have FPI demand for dollars. And in fact, it was the public sector banks which were buying dollars around that 130 period. So was it a government payment going out? These things are always explained only at the end of the day after the market closes. But like in the stock market, for the rupee at the moment, there are no levels at all. The stop loss is 330 when trading ends.
Oh, absolutely. Jayesh Mehta is with us. Lata, stay with us. And he's Vice Chairman and CEO at DSP Finance. Jayesh bhai, good afternoon. Good to have you with us here. If you can comment on what is happening now and, what I began by saying, I mean, globally, the dollar is actually weak, not strong. And yet you have rupee almost at 92 now.
No, absolutely. So what you were saying earlier, right? Is it the rupee which is getting the equity sell-off or the equity sell-off which is getting the rupee? And it's actually the equity sell-off, right? And good, I got this opportunity, and I really, really want to make a point, right? We have all been seeing that there's a net negative every day of 2,500 crores, average, 80% of the time, right? And we have all the stories given by every expert. No, India valuation is high, there is no AI story, blah, blah, blah. But these are all people are explaining the net thing, right? The real thing is when you look at the net number and when you look at the gross number, it's like 15,000 crore purchase, 17,500 crore sale. 10,000 crores purchase, 12,500 crores sale, 20,000. So there's something else happening, which I don't think any of us know. Even I don't know. What is it? Like, is it HFTs? What is it, this outflow coming? If it is negative story on India, the market price every good and negative news in 5 days, right? It does not drag for 5 months, 6 months, right? There's something more happening, which only if you see the data, only if exchanges know the data, only regulators would know it. Maybe unless you spice that out, there's no point even for RBI to defend dollars.
Right. Jayesh bhai, are you saying that, so you're making 2 points. One, that it's the dollar rupee is influenced by the relentless foreign sell number, which is every day, right? Yep. And you're saying that you're highlighting how that daily sell number is happening. The gross numbers are very large, and there you're saying it maybe HFTs. I mean, we don't know. I mean, the Jains, the Citadels. I mean, is that what you're suggesting? It's possible?
Yes. Because you see, the narrative which we are talking about, right, is like, we don't have AI, India, valuation is high because of local retail money, all the story which we have heard for the net negative number, right? But that's for the net negative number. I can understand that if it is 500 purchase and 3,000 sale, right? But not 16,000 purchase and 18,000 sale, right? Which is a regularly task. So look at the gross number, find out what is happening, then you tackle it out, right? If it is a macro sell-off, then you can't do anything about it. If there is something more, then you should take
You're saying this is in a way, you feel this is kind of targeted.
This is something different. So I don't know what it is, but it is very, very different. It is just not.
But the point, Jayesh bhai, still is it is still a number. The problem is exporters are not selling dollars. RBI is, of course, intervening when they feel to smoothen out things, right? But what are they also supposed to do beyond a point?
I'll give you one example. Like, in earlier times when $10 oil used to move, the impact used to be $10 billion over a year, right? This is like 2,500. It's almost like $1.2 billion a week, right? So we are talking about $4 billion a month, right? That's the kind of outflow. It's not sustainable. If it continues, we don't know what it is unless we know what is the issue. And if it was a macro part of it, if it is equity valuation and all that, people would have done it long time back. It cannot keep on dragging. No?
No, but Jayeshbhai, the point is there is still that number coming, right? If
yes, absolutely.
Yeah,
absolutely.
that is the whole point. And if people on the other side felt strong enough, I mean, there would be buyers as well in that sense, wouldn't there? On the equity side,
gross buyers. So on the gross number, there are 15,000, 10,000 crores buyers every day. I'm just talking exchange numbers, right? Every day. So I think there is something more. I don't know the answer to it, Prashant. It's equity market, but regulators need to really see the numbers. What kind of people buying? What kind of people selling? What is it? Rather than just saying, "Though we don't have a AI story, that's why people are not investing in India." Oh, India valuation is high, that's why people are not investing in India, right? Yeah, that's the few standard stories which we have heard, like why FPIs are not investing in India. But I don't think, because if that was the situation, they would have done it long time back. Now, every good news bad news also get priced in 15 days, right?
Yeah.
Or 10 days.
Yeah. No, I get that. Now, in your experience, at a time like this, what does you'd get opportunistically people who would come in as well and pile on. So, what happens from here, in your opinion, Jayeshbhai? I'm not asking you to predict levels, etc.
I was talking to one of the regulators only, right? And you see, they feel that, okay, at some point of time, at this point of time, value buyers should find value. But then please understand, people sitting abroad, right? They are actually thinking, why is it against, DXY is depreciating, but every other currency is appreciating, and why is it dollar rupee is actually panicking, right? There's something more which we don't know sitting 50,000 feet away, right?
Yeah.
So they are all trying to figure that out, right? So it's not that they are looking, oh, that's now value, let's get into it, right? They are not really looking into that. They are actually getting more feared, right? And everybody have to answer to their investment committee board and stuff like that. And they are also trying to figure it out what to answer internally on the existing position.
Right. Mr. Mehta, but what do you think the central bank can do? Because clearly it's getting excessive, 88 to 92 in this sort of a time span. What are the options they have?
First thing is to find out what is the real thing happening, right? I don't think, I've talked to so many people, and I don't think most of us have any idea. Even I don't have the idea. What is this number daily outflow happening? It cannot happen one way, right? So one has to really look into this data. Maybe both the regulators need to look into this data. What is it? Come out with a concrete thing, and then first you tackle that. Now, if you are going to continue this 2,500, 3,000 crores outflow every day, whatever amount of reserves you use to protect is not going to help.
No, got that. All this, there is this, the day before yesterday also when we saw that sharp move, right? People blamed it on the fixing, the daily fixing, etc. But that's well known, right? The forex market knows it.
Yeah, but these are all narratives, right? And then what happens when you see the FPI numbers selling, and then your exporters will also not hedge. So anyway, there is a net sell. As long as they don't see the positive number. But the real crux is why is it happening? It cannot happen on a daily basis, right? That is the only point I'm making, Prashant, right? Unless you know that, right? Whatever you may do, you may temporarily, protect it, RBI may come and sell more, but then what happens next day? Again, 3,000 crore outflow, what do you do about it?
Judge, somebody I was talking to, right, they were making this point that one thing which is lesser talked about is we all talk about, of course, the spot market. The forwards market is another kind of, the forward premiums, right, are very high. So for a foreign investor borrowing and coming to market here, their cost is some 6.5%. The RBI has done, yeah.
These are all causes and reasons people find, right? Because if you really look at both equity guys, they never come hedged, right? Most of them. Even for the fixed income guys, they actually go long Indian bonds to go long INR. So whenever there is a bullishness on INR, right? That's when you will see, a lot of FPI buying bonds, right? So, from that perspective, it's not a really arbitrage game and all that. That's like cause effect of the thing, right? And we can't not deep enough to absorb that net outflow on a daily basis, right? And therefore, even for a reason, RBI also at some point of time, they need to really assess like how much they're going to spend. Unless you know the reason. Once you know the reason, then you come.
Then you can,
thing to do.
Yeah, but since you said you just spoke with the regulator, I mean, are they now looking at this? Are they trying to figure out what's happening?
No, I can give my suggestion, right? It is only up to them what they would do, right?
Yeah.
So it's like it is completely up to them what they would be doing.
Yeah. I'll tell you what, Jajbhai, and you've sort of told us something which you think, I mean, there's something else which is off, and we will look at this as well here.
I would love that.
At CNBC TV 18, we'll figure out and try and put some explanations. I mean, yeah, you're absolutely right. I mean, the net number is what it is, but the gross numbers on the equity side, both on the buy side and the sell side, seem to be very, very large in that sense. Thank you very much, Jajbhai, for joining us. So that's an interesting perspective, and someone, of course, who's been in the markets for 30 years and more. 91.91. I mean, it's not. There was a bit of a drop off which happened to about 91.88, 89, and we've kind of sort of moved right back to those kind of levels. So there is incredible, no dollars, and incredible sort of demand which is coming in. Well, what we'll do is we'll continue our coverage on markets on the other side. I think it's 2:30, a little past 2:30, 190 lower on the Nifty at this point in time. 25,100, just under 25,100 is where we are at. We'll come back. Mitesh is going. Nagaraj Sethi and Technicals is going to be with us, and we'll get you some levels, etc. if there are any now in play, and more conversation coming up.
Welcome back. Some signs of stability, at least from the broader markets as well as from the Nifty pack. Shriram Finance, the stock took a sharp knock. We did see that stock now has pulled back, from the day's low. So Shriram Finance should come up for you. Ultratech comes out with a set of numbers tomorrow as well. That's shown some kind of stability. It's a sharp spike. I think there was a bit of a basket sell that came in at around 1:32 p.m. because a lot of these stocks they saw very, very sharp downtick and then spike up. Even Apollo Hospitals, stock was down, I recall. Now it's up close to around 0.5%. Let's find out what's the trade on the index, though. Nagraj Sethi, Senior Technical Research Analyst at HDFC Securities, joins us on the show. Hi, Nagraj. That's sort of a day, right? You need to take the bad days as well. The bulls seem to be scampering for cover. The bears are on top. What are the levels you're looking at with regard to the Nifty? And, what's the current trade?
Hi, good afternoon, Nigel. Rightly said, market has been a sharp downtrend, no doubt about that. The recent pullback rally seems to have ended somewhere around 25,400. The lower top, lower bottoms on the daily chart is indicating the bears are dominating in the market. There is a possibility of Nifty reaching down to 24,900 levels, even lower also in the coming sessions. The overall broader market pictures, though bounced back slightly in the last 10-15 minutes, the trend remains weak and we are likely to see more weakness in the short term. I have two stocks on the mixed side. Though there are markets are showing weakness, there are some sectors which are showing some rotation and signs of upside momentum in this falling market. And the first one, let's discuss about the short trade. BHEL, Bharat Heavy Electricals Limited, is the one has been continuously declining over the last couple of weeks. Recently moved below the important support of 200-day EMA, somewhere around 255. Currently trading around 243, 244. One may look to sell at this point of time, and immediate downside target would be around 232, and one can place a stop loss at 250. And second one is from PSU banking front. The chartically PSU banking sector has been in a strong uptrend. It has outperformed the benchmark Nifty during its violent times and currently showing consolidation movement. In that, Union Bank is the one. After the stellar result, it has shifted into consolidation and currently made an attempt of breaking above the range movement around 177.78, currently showing some slight weakness. The overall chart pattern is still positive for the stock price, and at the lower levels, it's offering strong supports on the dips. So right now, trading around 173, one can look to buy at this point of time. Immediate target would be around 185. One can place a stop loss at 167.
Nagraj, you were mentioning about the Nifty. The structure is weak. It's punctured. We agree on that. But what are the levels you're looking at? If you have to slide down, what's the first reference point on the downside?
Yeah, if it slide down to below 24,900, which is a recent swing low, there is a possibility it could slide down to the next low of around 24,650 to 24,700 level, which is going to be the next important support on the lower side.
All right, Nagraj, thanks a lot for that. By the way, one of the stocks that we're talking about, Shriram Finance, the reason that the stock has bounced, actually the numbers are not too bad. You have a loan growth of close to 14.6%. So that explains why the stock has moved up. There's a bit of a margin expansion as well. And the steady asset quality improvement does continue. So 3 big points, loan growth pretty good at around mid-teens. You have NIMs that have improved, and also the asset quality has continued, its improvement. So that's why, in fact, that stock has recovered after seeing a bit of a downtick. But Cipla, that's the other number that came in the last hour or so. It's under pressure after reporting its third quarter numbers, which miss estimates. Ekta is going to be getting onto that call, but for the time, she's going to give us a brief insight into those numbers. Ekta, disappointing?
Well, yes, definitely disappointing for Cipla because the street was anticipating around a 7% growth. They've come in with an absolutely flat performance this time in terms of the top line. Margins have come in at around 17%. The street was anticipating at least over 20% in terms of margins also. The profit has been impacted because of the labor law changes, which is to the tune of 275 crores. And the cost of goods sold this time has been one of the highest for Cipla, which has risen 16% on a year-on-year basis. Now, coming to the geographies, which are really the key drivers in terms of the numbers, the US business disappointed. It came in at $167 million. The street was anticipating around $200 million at least for the business this time, despite the Revlimid generic cliff. So that would be important to know in terms of what the pipeline and what the average quarterly numbers would look like for Cipla going forward. India did well. It was up around 10% on a year-on-year basis. So that was a key positive. positive for Cipla. But overall, disappointing, you would have to say, led by the US business as well as these one-offs in the P&L.
Okay, all right. Thanks a lot, Ekta, for that. Well, let's welcome Gurmeet Chadha, Managing Partner and CIO at Complete Circle. Gurmeet, tough times, right? Markets are doing a jig of their own. Everyone's sounding optimistic on India's prospects, but it's not reflecting in stock prices. Since Ekta told us about Cipla, what are you making of the numbers? What do you like from the pharma pack?
Indeed, Nigel. I think also there is probably some fear zone in which, especially in a lot of names in mid and small cap, a lot of stocks are also falling on low volumes. Typically signals the extreme fear zone as far as the sentiment indicators go. And I think somewhere, the earnings have not been, at least it's early days, but I think due to the labor impact, there is an impact. At least if you can broadly put a number of, let's say, 400 crores to 1,000 crores, 800 comes is what the impact is coming in. And then, this continuous supply of FIs, more like a HWP. I was hearing it's almost like a certain number on a daily basis. So it's all combined. I'm actually a little surprised even on the bond side. The bond yields also been under pressure, despite inflation being structurally low, this being largely in control. That's another thing we have to. So I think for the markets to stabilize, you need to first see currency and bond markets show some stability and maybe some relief coming on the bullion side for things to stabilize. On Cipla, I think it's a miss. Clearly, and I think in this market, any miss is being brutally punished by the market.
Right. Gurmeet, hi. Afternoon. Just coming to you, I just want to highlight Paytm as well because, this news was flashing at the bottom of the screen. So Paytm has put out a statement that they will use, they have other means to mitigate the impact from the lack of, support in terms of a specific, specific amount, which not just Paytm, but companies across the board receive. This is basically support from the RBI, but I think that expired on the 31st of December last year. Vivek is here just to put this into context, and then we'll just put out what Paytm is saying as well. Vivek, take it away.
Well, that's right. So it's been a very volatile trading session. So the entire news flow was actually driven by the filing of a DRHP by one of the peers of Paytm, which is PhonePe. And this particular DRHP filing was done overnight. So, taking out some of the key points from the DRHP that has actually impacted the entire payment aggregator universe. Number one, what the DRHP says is that the payment infra, that is the PIDF incentives that are received towards the deployment of payment devices from the RBI, this particular scheme that was launched in January 2021 remained in effect till December 31st, 2025. So lack of clarity is there, whether post December 31st of last year, there has been an extension of this particular scheme. In fact, another line in the DRHP states that the RBI incentive was valid until December 31st, 2025. Now, analysts have actually said that this particular incentive scheme is renewed every 2 years by the RBI, and the last renewal renewal was done at the end of December 2023. Now, why is this important for these payment aggregators? Analysts estimate that Paytm managed to generate close to 200 crore of operating revenue via these incentives that directly flow into the EBITDA. Now, like you mentioned, Paytm just a while ago has actually given a clarification to the exchanges after the very volatile moves that the stock has seen. They're saying that if the current scheme is not extended or replaced, the company will make all efforts to significantly offset the impact via higher revenues and more targeted sales efforts. The company has gone ahead and said that the amount of PIDF incentive was close to 128 crore for 6 months that ended September 2025. No announcement as yet by RBI or any authorities on extension or replacement of PIDF. So the entire scenario of events is in the current format, and it'll be interesting to see from RBI whether there is an extension or not.
Yeah, no, absolutely. So, I mean, we've got a fair bit of pressure still, right? 8% lower as we speak. Gurmeet, I'll ask you about Paytm in just a bit, but I mean, just give us a sense of what's happening. It's sheer panic, right?
Yeah, this is what we were discussing, and I was overhearing the conversation of theirs by as well. I think what is also a little concerning is, Prashant, sharp moves in split second, whether it is those HFTs doing it or and we've seen that, look at yesterday's session, for example, how many times Nifty would have moved up 50 points in 6 seconds. I think so. He was right. We need to probably figure out the cause. And the withdrawal has been very systematic. And I was telling Nigel that I am a little more concerned even on the bond side, despite repo being 525, inflation being structurally low, FIS being in shape, the bond yield is still around 670. The spread is almost like 150. It's like, if the government borrows 20 years, like let's say 680, 690, I am also borrowing home loan for 20 years at 710, 720. The transmission really won't happen. So the bond yields need to go up, and surprisingly, they are not going off. So I think the proper cause could be known, but there are multiple factors behind this. And I think right now in the market, I think there's a bit of a fear, especially in the small mid-cap space. A lot of shares are falling on very low volumes. Typically, this signals bottom formation. But you can't say that. Sometimes the pain can last another 5% more. But as a portfolio investor, this is not the first time this has happened, and there are opportunities opening up. But I would probably wait for, as I said, the bond and currency to stabilize first before really trying to thumb the table and say that go on.
Yeah, and you need both sides. I mean, this side is looking at that side is looking right back. So things need to calm down. I mean, for example, right, Jayesh bhai saying, well, look at the equity flows. That's where the problem is. You need to fix that, find the cause. Only then, I mean, there will be some kind of sanity here. But we'll see. Nigel is standing by. How's the F&O positioning changing? What's happening? Nigel, take it away.
Well, the sentiment driver clearly, Prashant, is that rupee, right? The rupee weakness is something that we've been talking about all through the week, and there's no signs of stability. That needs to stabilize. Then, in fact, you could hope for a bit of a bounce, because otherwise the technical indicators are pointing to that. Search for some good news and we'll get that much awaited point. The PCR, the PCR has come down to around 0.68 or thereabouts. But just, first pull up a few charts. Pull up the Nifty with the 200 EMA. Now, in today's closing, you'll want the Nifty to end somewhere close to this 200 EMA, which is ballpark 25,140. Very, very important mark out there. The problem is the Nifty Bank, after a while, last 2-3 trading sessions actually started underperforming, because it's not able to get past the 20 and the 50 DMA mark. That's very important. As I said, the PCR is closer to the lower end of the range. By the end of today, it could possibly be at around 0.65 odd, which is the trigger from where you normally see a bounce. But these bounces have become very, very short-lived, and the sell-off actually is more intensified on the downside. The reason the PCR has come down is because the call writers are back at play, with the premium falling close to around 70% on the 25,300 call, 25,200 call as well. The premium is down by close to around 65%. So clearly the writers are having a blast. And on the downside, the 25,050 put, there's a mix of activity, because there was some buying in yesterday's trading session. The premium was 33 rupees. Today, that premium has gone to around 88 rupees. So there is a sense that there is some writing out there, because those writers will be hoping that the recent low of 24,900, that does hold out. Individual stocks in focus, there is obviously rollovers that are taking place, because this is the last day. On Tuesday, we'll have the monthly expiry that will play out. Tata Technologies, that's coming for a bit of a short covering bounce. Vedanta continues to see fresh buying, because that one is getting added on every kind of dip, owing to its exposure to silver via Hindustan Zinc. And Hindalco, that's the one that's come in for some unwinding. But on a closing basis, I think we need to get somewhere close to that 200 AMA. But Prashant, I think we got the Loris Labs numbers, and those look pretty good.
Yeah, no, I mean, it's a 100 crore beat, right, on Loris. Nigel, thanks for that. On net profits, look at the stock go up about 1.8, 1.9%. Revenues are about 1780 odd crores. And I think on revenues as well, the flash will come back on. I think there is a beat on both the top line and the profits as well. 27% margins compared to a poll of 22.7. So this is actually absolutely blowout numbers from Loris for the third quarter that we have. Rupee, of course, is all the talk. Geeta Gopinath is professor of economics at Harvard and former first deputy managing director at IMF. And this is her view on the currency.
To understand what's happening to the rupee, I think we have to keep in mind a couple of things. One is that because there was a loss of intervention by the RBI in 2024, the rupee did not depreciate as much as it would have. It kind of went sideways. So a bit of what we saw in 2025 was just undoing that pressure that was keeping the prevent the currency from depreciating in 2024. So it's a bit of catch up, right? And then there's the other piece, which is the fact that, if you look at Indian equity markets, they've always been viewed as being stretched in terms of valuations. They were more stretched in 2024 than they were in 2025. But you saw a rotation of money out of India back into China, back into other markets, including Japan. And so that portfolio outflow combined with this tension around trade and tariffs with the US, has added to the pressures on the rupee.
Okay, all right. Well, on that note, though, I think we can slip into a short break. We'll thank Gurmeet. Thanks, Gurmeet, for joining in. I think one of the stocks you'll have in your portfolio is Laurus Laboratories. If I remember correctly, you'll had it at some point of time. That looks like a pretty good set of numbers. If you want to comment quickly on Laurus?
Finally, winning some smile. So beat on margins, beat on revenue. I think the export data was pointing to it. But mind you, CDO numbers are lumpy. So the stock very underperformed when we had a full sale. So pretty happy it's one of our top 3 holdings.
Got it. Okay, all right. Top 3 holdings. Good on all, Gurmeet. Difficult market, but Laurus Laboratories, at least that's bringing some cheer over here. Margin beat is massive. I remember multiple quarters where we keep pushing Mr. Chava. Why is the margin not coming up? He said it's going to come, and now it seems to be consistent. So good going out there. 350 to around 400 rupees stock, just 12 to 18 months back, has seen a big run. Well, I'll tell you what, slip into a short break. On the other side, we have Stallion Assets' Amit Jaswani, who's waiting for us. We're going to be getting to him in a very, very special conversation. Stay tuned.
Okay, welcome back. Amit Jaswani is with us, founder and CIO at Stallion Asset. Amit is outspoken. He's out there in the trenches, and he's always looking for opportunities. Absolute returns is his style. Amit, but this is a market which has been, and good to see you. Good to have you back on the program. Thanks for joining us. So just first up, wanted to get a sense from you. What's your thinking now? I think it was day before yesterday you put out a tweet, right, with some indicators saying that, well, typically this is the time when markets start to turn and it gets a little better. So, yeah, I mean, just run us through your thinking right now.
Hi, Prashant. Good afternoon. Thank you so much for having me on your show. Prashant, I've just said that what are the oversold conditions right now? That markets are now exactly where it bottomed on the oversold levels in 2018, 2013, unless we have reached levels of 2008, where banks in the US have gone bankrupt. oversold indicators do point out that we are coming to the end of the selling phase. See, we've been in a sell-all phase. Good numbers, bad numbers. The shorts have made money selling anything. Actually, if you see the last 15 months where the index doesn't show it, the median returns of Nifty all stocks is around minus 31% for the last 15-16 months from 1st October till now. It's around 31% negative. So if you look at 2018, that number was around 38%. The number of oversold stocks which are below the 30 RSI, they are now at, typically this is the phase, it's a zone where bottoming happened. But this doesn't mean all stocks will bottom. It means that some will go in consolidative phase. There will be new leaders of the bull market. Every bull market, typically some leaders change. The typical things in a leader of a bull market is these are high growth companies. These are market leaders. And they are basically gaining market share and creating new markets for themselves. And those 15, it's not going to be like a broad rally. I don't think that is happening with a 8.5% nominal GDP growth. The only thing we should not expect is a broad market rally right now. What we should expect is select stocks, narrow markets. Even in the US, the markets are narrow. Only 7 stocks are rallying. Now also in India, there'll be narrow stocks that'll be rallying, and but we are closer. I don't know where the bottom will, or who God knows, unless there's a nuclear war, of course. But we are nearing. First, everyone buys the dip, then they cry the dip, and now, including me, everyone is dying in this dip. So, and we are in that phase.
No, Amit, we will survive. Huh? It's a good day to hear that word. But Amit, Mr. Trump, he is focused on making America great again. I believe you as well have a response to that. What about India?
We need a MEGA. We need to make India great again. And that should happen on the budget day. See, the government and stock market people are right now fully aligned. The government tax cuts, if you see what happened in automobile, when tax cuts of 10% in GST happened, volumes are up 25-30%. If you look at general insurance, like health insurance players this quarter, all of these players will report 30-40% kind of growth. The health insurance guys I'm speaking about here, because that is where the GST cuts happen. And suddenly there's a 30% spurt in growth. So taxation, and that we will see in the consumer durable basket as well. It didn't happen because summer was very poor. But I think the next, this summer season, if the summer is okay, tax cuts have had a very large impact on volumes. So small tax cuts can change the entire trajectory for growth. So that is one story to look at. But we need, this time, I need the budget. Typically, we don't care about the budget so much at Stallion. Like, we do care, but it's not so important. It's like a non-event mostly. But this time, we are on this Sunday. The next Sunday, we would be closely watching what the FM says, because we need something to make India great again.
But they have only so much firepower, right? They've done the tax cuts. They've done most of it. I don't know how much they have in the kitty, but I like that. Let's make India great again. The bulls are saying, where is that? Portfolios are getting absolutely hammered. But you said, you believe that we are more or less towards the oversold zone. And hopefully nothing like the war or anything does break out, any kind of war. What do you like? I mean, it's going to be a very, very selective market. The easy money has been made between 2020 and 2023. So if there is a particular theme, a particular sector that you like, what is it?
So actually nothing in life in markets changes. Broadly, markets for last 150 years has been same only. Market chases growth. You want secular growth. Right now, you don't want to play the quarter over quarter games, because those games will not work. In a bear market, speed or quarter to quarter doesn't work at all. Right now, you only need consistent growth for next 3 years. You need to have visibility. See, no one knows what will happen after 3 years, but at least you need to have visibility that this is the place. You don't want to do non-secular things. You want to have secular growth. Next 3 years, 25% should be the growth. And right now you're getting good companies, good market leaders. It has to be a market leaders. Market leaders survive every fall. And then you need to get it the right valuation. Right now you're getting a lot of names. At PEG of 1, your goal should be, if the growth is 25-30%, then 1 year forward it should trade at 30p. If the growth is 50%, then you can buy it at 50p 1 year forward also. So growth will decide what P we should give, and ROCs, of course, and mostly consumer-facing kind of companies, because it's been 15 months of bear market for consumer. We've always done consumer-facing companies, to be honest, but and we don't do. Unfortunately, we don't have PSUs in our basket. We should have had it because PSU banks are now growing faster than the private sector players. And that is, who would have thought that will happen 2 years ago, 3 years ago, where PSU banks will grow faster. We don't have cyclicals also. But in secular kind of companies, I'll tell you the bottom is very near. You're getting PEGs, companies, good growth companies at less than 1 PEG. And typically my understanding, and not my understanding based on data, this is where the bottom happens. So valuation, we are right. Oversold, we are right. We just need a mega make India great again event to happen.
Yeah, no, absolutely. Amit, I'll come back to the market because broadly, right, you also, you've been around long enough, right? I mean, you want to buy when, yeah, I mean, there's one thing to say, well, buy beaten down names, but you also don't want to be, I know you don't want to be, the way your style is, to be completely against the trend, right? Because then, I mean, everything goes down in that sense. Am I broadly right?
So you're broadly right. Actually, we've never gone mostly against the trend. Right now, also the companies that, see, we need earnings trend. Right now, no stocks are doing well. Even good companies with good numbers are going down 15%.
Yeah.
I tell you, one food delivery company came with numbers. Most brokers were expecting 10% upper circuit.
Yeah.
And it opening up 6% was a surprise, but it going down 7-8% was a bigger surprise. And it's down now 13% more. See, these are things that you can't figure out. Like yesterday, if you look at volumes of, let's say, the second largest stock exchange in India, the option trading volume, that is growing at 60, 70%. These are unreal kind of numbers. So the day yesterday, BSE option trading volume was, oh, me, my family have vested interest in whatever I speak. My clients, me, everyone has positions in, and we keep trading stocks very aggressively. But I'm just giving an example. Like yesterday, BSE's volumes, if you look at data, the companies that we are holding, I'm surprised why my portfolio is not working. Actually, we should actually be up 30%, but it's not.
No, no, that's not. I like it.
I'm down 5%. Yeah, 4%.
Put it in there. No, but so you are now. So there is. You talked about BSC. I know that you had MCX is a. It fits that dominant leader criteria that you mentioned, right? So just give us, and you've already given the full disclaimer. So just top 5-6 positions for you now.
No, so the concept remains the same. Wherever there is strong market leadership, wherever there is strong growth happening in whichever sector, we will find, and with monopolies, with not monopolies, but market leaders, from wires and cables to...
So polycab, right?
I will now not say sectors because you judge the companies very fast. But in automobiles, we have plays. Automobile is doing so well. So those are places.
Okay, so let me put it this way: these companies that are on your radar, right? You know, what a lot of people do is they look at where they were trading some time back and they look at the price damage, right? But sometimes if the environment has changed, I mean that I don't know if that is purely the right way to look at it. So is this the time? Are you fully deployed in everything you like already, or you're doing like you're sipping in?
So we have around 10% cash, but cash is not a position; it's an outcome for us. And if we get good stocks in this earnings season, we will add up. We don't have any problem. See, we want to be fully invested all the time. Like our goals are never to be like we've never been bearish on the markets. We're always bullish, and we keep navigating that. Who are the guys who fit into our criteria of growth, valuation, risk reward ratios, and what is the expected returns? And based on that, we position size and predictability of that growth. And but we want high growth. We will not buy 10% growth, 5% growth. And even if we get it wrong also, we cut our losers. We have no problem, like zero emotions attached in cutting our losers.
The other big problem is the rupee. We're just chatting about it. The weakness out there is definitely hurting. What is the feedback you have been getting? And also the other problem, Amit, is the way people are rushing to bullion. A lot of people didn't talk about it 2 years ago, and suddenly there's a lot of talk, how much of gold you have, how much silver you got. That isn't too good news for the equity markets because the recency bias will play out there again.
Actually, Nigel, in near bottoms, you'll find only bad news. Rupee is going higher, gold is going higher, silver is going... I don't know the bottom. God knows. Only gods or very smart people can predict bottoms. I don't know, but data is showing that unless something big happens, we are near there. Now it can take 1 week, 15 days. Who knows? But data is saying that that numbers are not actually that bad. I'm not speaking about the big boys like Reliance, etc. That was poor. But if you look at the broad market numbers, I think this quarter has actually surprised my best case earning estimates as well.
Amit, now let me ask you for feedback from what you're hearing in the market. not about what you're doing. So what is the mood like?
See, right now everyone wants to fold. Okay, everyone is trying to get an out. Everyone, see, the client. You mean the customers or my friends? My friends.
Everyone. Customers are clients. Clients are customers. I mean, everyone.
See, customers are normal. I don't see very large impact in our customer base, to be honest. We don't face any, because our customers are typically smart. They've seen cycles with us. And most of them have made decent amounts of money. Only the cohorts which don't make money, they are a little jittery. But that is only the last 6-8 months cohorts, I would say, would be jittery. But everyone else is adding the dip. Whereas the friends of mine, most of them, see, the broker guys are... they don't know what to do. Typically, right now, they are in freeze mode, but it's not working. Nothing what they are saying is working right. Whereas my friends, there may be smarter brokers out there. But the normal guys are typically fully invested, fully deployed. See, people, for most of the people who I speak to, for them it's जीना यहाँ, मरना यहाँ, इसके अलावा जाना कहाँ.
इसके सिवा जाना कहाँ. So, it's not time to fold, Amit.
See, people, like, the stop losses are of course triggered for most of them, and it was triggered, like, I don't know, like 1 year ago, and the ones who respected stop losses, they're doing okay. But even like us, if you take the last 15 months, we are flattish. Broadly will be down, I don't know, 2%.
Yeah.
But in 15 months, even median stocks are down 30%.
Yeah.
1 crore plus.
Yeah, got that. Just one thing. Do you think, do you get a sense that, the only buyer in this market has been retail investors, right? Through mutual fund. There's on the other side of the equation, there is everything. Promoters were selling, FIs, of course, are still selling, blocks, IPOs. It's a natural consequence when the market sours a little bit, that supply also starts to come off a little bit, right? I mean, are you starting to see it?
Money will go towards those 15-20 stocks. You're 100% right. And returns are not there. So in last 2 years, returns are weak. 1.5 year returns are weak. So money will move, but the broad market money will remain the same. And wherever there is earnings growth, wherever there is visibility, people will have to, once this sell-all phase stops, in the great good companies will have a V-shape kind of recovery. Not V-shape exactly, but it'll move up very quickly. Right now, it is just the last, looks like the last phase. And our last phase can stretch. But once this phase ends, you'll have a sharp move up.
Neck sticking out kind of situation, if I were to ask you, gun to the head, whatever you want to call it. Last phase will last how long? 2%, 3%, another? Are we already there? What's your sense?
Right now, I'll say that if you get it, even if you come, let's say today, someone comes in today, and in right stocks, I'm not speaking broad market.
Yeah.
In right stocks, I think right now, in a decent enough portfolio, downside is 10%. Your upside can be 200-300% in the next 5 years, 7 years. I don't know. What upside, I don't know, but it can be a large upside because earnings are good. And market broadly, if you're in right earning stocks at decent enough valuations, you'll make it large. And people who've been in markets long enough, they have got super rich. You just have to stay invested. Of course,
got that. Yeah, no, got that. Amit, and
you have to manage risk also. Manage your risk and stay invested.
Amit, I think the song is not Jeena Yaha Manna, it's Jeetega, Jeetega. Let's pep it up. Come on, it's a Friday. And let's make India great again. Thanks a lot, Amit, for joining in, taking your word on board. And hopefully, as you said, the probability of us being closer to the oversold level is rather high. So hopefully that works out. But it's a good time to go across to Nimesh, who is joining us to tell us what he's picking up on D-Street Chatter. Nimesh, what are they doing now? Are they, crying? What is it? They're okay, a little better today, looking for the weekend?
No, thumping.
No, thumping.
No, they are
That's
thumping.
not possible. Tell us.
Actually, again, so there is a lot of fear today and there is a lot of chatter doing the rounds that there is a large basket buying. I really don't know whether that's really the case. But I know for sure that there is an MOC sell basket at LNA FI desk. So today's number could be quite crucial. I guess there is a bit of Friday factor result which is playing out. So a lot of leverage positions on a weekly basis which gets squared off has got squared off today. And the fact is that, every day off late you're seeing a lot of accidents in large cap names. Today is a classical case for Paytm. The stock is up 3% and now it's down 8-10%. So clearly, those kind of accidents are further nerving the investors' sentiment. So that's clearly playing out in many of these FNO names and in the broader market stocks. Having said that, a bit of buying into metal limbs again, so that's a one space which clearly stands out, and there is a bit of interest. And from a flow perspective, the buying continues in the PSU Bank stock. So I'll add a couple of names in my charter list, but purely from a flow perspective, is the metals and PSUs, especially the PSU banks, is where the interest seems to be. As I've been saying, for a meaningful upside now, the Nifty has to cross the earlier resistance of 25,450. That's the level to watch out for on the upside now. Only if that gets taken out, maybe you'll see a directional move on the upside. Till then, it can be a very range bound and very painful. So that's the overall feedback. But barring that big fear or a rumor of a basket selling, I don't know whether there is really large selling from FIs today.
No, it's basket selling or buying? Because first you said buying, basket selling.
No. So there is a rumor of a large basket selling, Prashant, but that I don't have a number or a detail.
Okay.
But at least there is an MOC sell for sure. So last 30 minutes, you are going to see that impact, which might play out in some individual names, because there is a MOC basket selling for sure at LDFI desk.
Okay, well, 25.36, and I think we'll end almost 250 points lower, and 3 days of just reflection, right? And very, very tough times. But you have a few names, stocks, Nimesh, on your list.
All based on buying or selling, Prashant. So the couple of names which stands out for me today is the two auto names, Hero MotoCorp as well as Eicher Motors. Though small, but there is delivery-based buying, is what I understand from larger FIs in both those auto names today. Remember, even yesterday there was a feedback that there is aggressive buying in Ashok Leyland, and that continues, and that's showing up in the outperformance as well. So clearly looks like there is a bit of tilt towards the auto names from larger institutional desk. The second name is Polycab. Last week there was a sense that maybe the clean-out trade is done with a domestic mutual fund. It looks like some fresh selling has resumed, and hence you're seeing a bit of pressure on that name as well in today's market. So it's down 3%, but largely on the back of sell flows. And the last is a couple of PSU banks where there's buying interest. So SBI and Union Bank, both stands out. I'll watch out for the delivery stats, but my sense is there's going to be delivery-based buying in both these names in today's market from large institutions.
Got it. Okay. All right, Nimesh. Thanks a lot for that. By the way, we have Sona BLW Precision's numbers that are at the bottom of your screen. The net profit is more or less flattish. The stock is down close to 2%, but most stocks actually are lower in this last 60 to around 90 minutes. I've not seen the revenue number, actually. Obviously, you have the promoter issue that's playing out there. There's a good revenue growth. 38% revenue growth on that sort of a base is pretty okay on a year-on-year basis. I don't know whether margins actually have seen some kind of dilution. We'll get a quick analysis on that going. Nagraj Sethi, Senior Technical Research Analyst at HDFC Securities, joins us on the show. Nagraj, give us two ideas at least.
Yeah, hi, Nigel. Yes, nothing has changed for the market last half an hour. Market is still showing some bounces and selling emerging at the higher levels. I'm continuing with the same two stocks what I discussed a while ago. On the long side, there are certain sectors which are rotating and showing some outperformance in the benchmark, and that is the one. Union Bank is the one that what we can see is at the higher levels consolidation movement, kind of a bullish flag type pattern. Today made an attempt of upside breakout around 174, 175 levels, consolidated from the higher levels. I think at the lower levels, buying could emerge for the stock price, and I'm continuing with the same upside target of around 182. One can look to buy at this point of time. Second one is sell side from capital goods segment, that is BHEL. BHEL has been in a continuous decline. It has moved below the 200-day EMA and showing low tops and bottoms on the chart. The overall chart pattern is looking weak, and more weakness is likely. Currently declined after my discussion, and my downside target remains there around 232 levels, and one can place a stop loss around 250.
All right, Nagraj, I want to ask you about a couple of these Adani Group stocks, because the group itself is getting pounded on some reports. Technically, how is it looking? Adani Enterprises is now down close to around 10%. And Adani Ports as well is down close to around 7%. We have seen in the past when there's some negative news flow, sometimes, the ones with better assets, Ports, Ambuja Cements, ACC, they normally see a bit of a bounce. What's your reading, particularly in Adani Ports and Adani Enterprises? Because they are part of the Nifty.
Yeah, both the stocks are not looking good the way that it has declined in today's session. And it was actually these stocks were underperforming recently, and the decline is indicating a decisive downside breakout. And technically, whenever we see such kind of a breakout, we see that bears are heavy weighing high on these counters. I think some more weakness is likely, or at least consolidation before showing any bounce from the lower levels.
Yeah. So this is looking pretty weak all across. Thanks very much, Nagraj, for that. I think we've got about 14 minutes to go for close. I just want to quickly pull up the rupee, dollar rupee once again and see what's happening there. If things are a bit steadier, or we are once again knocking at those levels? Well, there's hardly anything, right? It's relentless. 91.91. It gets shored up a little bit, pushed back a little bit, and then it comes right back at the highs of the day. It's not quite at the highs of the day, but the cross is almost there. It's a 28 paisa move. So just been like a one-way week in as far as the currency is concerned. Market breadth also perhaps 3:1, 800 up and about 2,400 stocks which are lower right now. So it's a pretty washout kind of a screen out there. So we're at 25,050 on the index, but broader market damage much more. Take a break. We're back. There is a Cipla call which is on. We'll try and cut across to that. Mayuresh will be with us as well. Stay tuned.
There's a Cipla call that's on and Ekta's on it. Let's cut across to the call.
Ekta, we can't hear you.
Should we move to the next question? Maybe come back
to move to the next question. Next up, we have Satviki Sanjay from Bloomberg.
Ekta asks that question. 9 minutes to go for market closing, by the way. Mayuresh Joshi is with us with a quick sense of what's happening. Mayuresh, what are you picking up? It's a pretty depressing way to wrap up the week and go into a 3-day weekend.
Oh, absolutely, Prashant. I think there was some element of hope yesterday. But again, I think the comments that are coming on the geopolitical front is not helping the markets at all. And therefore, I think the volatility in the markets might just sustain unless we have some element of stability when it comes to the global news.
Yeah, but but it's not as if there's been any fresh negative, right? But the market continues to collapse, Mayuresh. That's the other point. And you can make that same point with regards to what's happening or not happening in the dollar. The dollar is not stronger. It's very much the rupee. And by the way, actually, dollar is falling against most other currencies, not just against the rupee. So I'm not sure how much of this is, can be blamed on the global shores, and whether this is a bit of a local issue in that sense, Mayuresh.
No, again, I think a lot of emerging economies are feeling the brunt in terms of how the currencies are behaving at this juncture. But I think we are reacting to three factors in general. I think one in terms of the geopolitics, two in terms of the US trade deal. When is that going to come through? I think that is a bigger issue. And some news related to the Adani group that is now again sprung up, which has again created some element of surprise for the markets. So I think a combination of these news, specifically the first one, is creating that impact. But that can get compensated. The EU trade deal, which is expected to happen, if that comes through, I think that is going to be a huge positive. And that might just offset some of the pain that we'll probably see in terms of the lingering trade deal with the US not probably happening.
All right. Mayuresh, the good news is for the next 3 days, there's not going to be any FI selling. But I'll tell you what, this market is providing select opportunities. Good results actually are being appreciated. You look at Bajaj Consumer, well, that stock has done very, very well. I know there's not been growth for long, but that's done well. And just to pull up a few stocks before we go into a break, Shobha, pull up the intraday chart, big spike up on that stock. Go Digit, another stock that's seen a sharp uptake in the last few minutes. I think that as well should come up for you on the screen. So select stocks, well, they are doing a thing of their own, particularly in the last few minutes. I think RA Drugs, no, that's a smaller cap out there. We can keep that out of the way. But otherwise, few stocks are doing well. Ramco is another stock that spiked up. Ramco Industries, not Ramco Cements, that is well up close to around 4.5%. Slip in a short break, come back. We'll continue tracking stocks and we'll ask Mayuresh about his opinion as well. Welcome back. Well, markets continue to struggle. The good news is there's just 4 minutes to go before we wind down. Mayuresh, we've got two big earnings reactions from the pharma pack. Dr. Reddy is on the positive end, while Cipla is the one that's actually seeing some selling, and we're getting the flashes up for you on the screen. But from the pharma pack, what do you like?
Nigel, I think Dr. Reddy's numbers were encouraging, to say the least. I think the margins that they posted were decent at 23.5%. Their annualized ROC stands at 20.5%. Net cash is close to 3,000 odd crores. The biosimilars that they're expected to launch, specifically for the US market, they've already done a filing thereof, which can be a huge product going forward as well. The number of FTFs that they've got is decent as well. That's probably the advanced key pipeline products that they've probably got. So Reddy's probably just stood out as we speak. Cipla, I think, disappointing in terms of how the margin performance largely has been. But two things that I would like to observe on the con call, which is starting in a few minutes. They've paid 1,100 odd crores to Novartis as license fees, and they have provided 276 crores for labor, which might be a one-off. And therefore, if you exclude these two one-offs, which account for almost 1,400 odd crore, that can have a positive impact. But generally, the margin deterioration which took place, why is that is something to be watched out for. So I think no specific preferences, but out of the two, I think Dr. Reddy definitely stood out.
You know, at the end of, as we wrap up, Amit Jeswani was with us and he was saying that even on a day, I was asking him whether, he was saying this is the last phase, right, in terms of pain, and we'll see. So even on a day like today, high growth companies, etc., is not bad levels in that sense. Anything on your radar as absolute picks from here, if I can ask you?
So Nestle India, probably Prashant, is one of the picks that stand out, and we've added that to our swing portfolios. Our sense is that numbers in Q2 were strong. We are expecting a good trend to probably continue for Nestle India across its product categories. Input costs have largely remained benign, and therefore both gross and EBITDA margins should have significant signs of stability as we head into Q3 and even Q4. So I think Nestle India probably remains one of our bets that we've recently added in the swing portfolios.
Okay. All right. Got that, Mayuresh. Thanks a lot for joining in, Mayuresh. We've got just a minute to go before we wind down, so let's do exactly that. Another difficult day of trade. The problem today, yet again, was the Indian rupee. Once that went for a bit of a slippy slide, the markets as well did do a bit of a nosedive. The Adani Group, that got smacked today. All the Adani Group stocks were down in trade. Adani Enterprises, Adani Ports, both of them down between 7 to around 10%. Adani Power as well did see some selling. And Adani Green, well, it had bright red actually today. So all those stocks did see some selling. Eternal continues its losing ways. The numbers look good. Uncertainty at the top. A bit of a transition phase out there. Remember, the stock, the last earnings was around 370 rupees, from 370 to around 260. We're talking about a frontline Nifty stock. That's the magnitude of correction that we have seen. Interglobe Aviation as well, the largest airline here in India by market share. Unfortunately, that one as well is down close to around 4%, and now it's corrected more than 20% from the top. Geo Financial was down 3.5%. Cipla as well was down 3.5%. What did well? Dr. Reddy's, that was the stock to hide in, was up 2%. Tech Mahindra as well was up close to around 1%. From the broader markets, plenty of stocks were doing a jig of their own. Well, to just name a few of the stocks on the downside. First, you had the Adani Group stocks, obviously. Paytm was down close to 10%. Syngene trimming their guidance down 8.5%. Premium Energies, numbers didn't look good. The street was worried out there. And PNB Housing Finance, the stock was down 8% today. Some brokerages pointed out that valuations were attractive, but the market's not looking at that. Stock down another 6% today. And the real estate names, Lodha, Godrej Properties, got a pounding in trade. What did well? Bandhan Bank, a big underperformer, came to perform. We have Laurus Labs as well. They suddenly started delivering with regard to their numbers. And another pocket to hide in has been metals. Select though, you have Nalco, the aluminium trade, APL Apollo Tubes. The big boy wants to show who's the boss now after all this time. Good numbers, good guidance as well, and Hindalco as well going home with some gains. Otherwise, it's been a painful trading session and it's been a painful week. But the bulls will say we live to fight another day, and hopefully next week is actually better.
And we start talking about the budget, right? With 4 days next week to go for the budget that is on a Sunday. That's the close. Very, very sobering numbers up there on your screen. About a 1% cut across the board. 2% in the mid-cap index. The small-cap index, it goes down sharply as well. I was just looking at some of these changes the Nifty is down. I mean, I think the correction on the Nifty started on the 5th of January. That was the high. The high was about 26,373. And this has been basically one way. 26, almost 26,400 to about 25,100 now in what 12, 13 odd trading sessions or so. It's a wrap on this edition of Closing Bell. Thanks very much for staying with us. Editors Roundtable picks up on the action in just a bit.
Indian markets end the week deep in the red with a sharp sell-off across the board. The Sensex, Nifty Bank all down 2.5% for the week, while the broader markets take a heavier hit. The midcap index slides nearly 4.5%, making it the biggest weekly fall in nearly 4 months. Investor wealth takes a severe knock as companies lose more than 15 lakh crore rupees in market capitalization. Overall, risk-off sentiment dominates the Lal Street as markets close the week on a very weak note. Hello and welcome to Editors Roundtable. I am Reema Tendulkar. With me are Prashant and Nigel. And in a bit, we'll also be joined by Rajesh Kothari, Alpha Accurate Advisors. He's here with us on the Zoom.
I think Nigel is not on the show.
Nigel's not on the show today. Hi, guys. This was the week where... Forget the levels, right? Levels fell like it was a cascading kind of a waterfall, but the sentiment got hit and so many mid-caps were down 15-20% so far this week. And this was the week where we heard the words throw in the towel, capitulation a lot more than before.
Actually, if you sorry?
A lot more from me, I guess.
Yeah.
No, I'm just saying that, just think about it, right? Till last Friday, in a way, when did the correction start? The high on the Nifty was about 26,400 on the 5th of January. And it started towards the end of last week. This weekend, the last weekend, all this Greenland rhetoric reached all-time highs. Global markets, went into a bit of a tailspin, the Japan bond deal thing. But that was all Monday, Tuesday. Global markets all settled, right? Especially in the last 24 hours, maybe last 48 hours, they all settled. But no settling here in India. And I think one primary reason is, and I said this yesterday or day before as well, it's like a feedback loop in terms of rupee and the equity thing, right? Rupee, we spoke with Jayesh Mehta, who's a veteran in forex markets, who said he's blaming the daily
equity
number.
Market.
He's analyzing, the gross buy number, gross sell number on the equity side, not what's happening. So his point is that, and obviously it is not global. I just checked the dollar index. Dollar index YTD changes 0.01%.
Yeah.
We are down 2.5% against the dollar. So it's not global, but it's not even local, is what people like Jayesh Mehta, the point that they're making, they're basically just saying it is every day the selling, the lack of dollars, right? Offshore, the exporters are not selling. RBI, of course, is being naturally opportunistic. And his basic point is there's a little sense of confusion in terms of what is leading to this kind of relentless selling. And unless that is identified and, you kind of do something, otherwise, there's no point throwing in a way good money after bad. I'm talking about RBI intervention and providing dollars, etc. So, a bit of a lost kind of a week.
So the forex market is blaming equity market and the equity market is blaming the forex market. Because of rupee, markets are falling and the forex guys are saying that because markets are falling, FIs are selling, the rupee is under pressure. So I guess nobody knows. But the fact is, just to add to what Prashant said, globally everything is quiet and good. It's only painful in India markets. In fact, if you look at India
when you say globally, not just developed markets, look at emerging
Asian
markets.
Look at Asian markets.
Asian emerging markets. Look at those currency crosses against the dollar.
Right.
Flat to higher.
India currently is nowhere on the radar for foreign investors. You look at Korea market, look at Taiwan's market. All other markets have done well. Why today? Forget the 1 year chart and all. Even since the beginning of the year,
this
all
week
other
Kospi is
markets,
up 3.5%.
Exactly. All other markets except for India has done phenomenally well. And that's the reason why the feedback from the dealing room is that FIs are not keen to look at India market because there is absolutely no momentum.
In fact, let's just get in Rajesh Kothari and try and make sense. Rajesh, you want to make sense of what's happening in the Indian markets, particularly this week, and the way the mid-cap index was down 4.5%. The advanced decline ratio day after day was 1:5, 1:7, 1:3. Make sense of what's happening and India's underperformance equity-wise and even on the currency side.
Clearly, what is bothering the investors in general is the uncertainty. And uncertain times always creates more volatility. And that volatility results into more fear. And that fear results into more selling. So it is a chain reaction, one leads to another. And that's what is basically happening. And because of this Trump-related uncertainty, the trade date is going to take some time. Everybody now knows that it may not happen in 1, 2, 3, 4, 5 days. Probably it's going to take weeks, if not months. So there is going to be some, I would say, uncertainty, and that's what is creating. People are postponing probably their buying decision, But frankly, I think we all would agree on one point that on that greed and fear pendulum, if you want to make a little bit more alpha, a little bit more extra returns in the longer term, when others are fearful, it always pays off to be a little bit greedy, right? So I think this is one such opportunity time. You may not able to identify the reason why the particular day's sell-off is like this. But when you look at after 2 years, after 3 years, from today's state after 2 years, have you made reasonable returns? Probably better than the average returns. Answer is yes, because अभी तो सेल लगा हुआ है, तो एक पे एक फ्री है, कहीं 30% डिस्काउंट है, कहीं 40% डिस्काउंट है. So Christmas season is on, sale season is on. So take benefit of it.
Okay, so what are you buying? Rajesh, anything that you've bought of late just to take this opportunity of discounts of 20, 30, 40%?
No, I think, Nimish, this discount is across sectors, across good companies. And if you look at particularly mid and small cap bucket, I was, we actually in the verge of publishing one paper that how the today's mid and small cap have transformed in last 10 years, And few things are eye-openers, if I tell you that Nifty midcap index, the median net profit size is 1,000 crores. And still it is called midcap. If you look at the Nifty 250 median net profit size is 400 crores, but it is still called small cap. So the size of the profits have gone up tremendously. The leverage has become zero. If you look at the average debt equity of mid and small cap today, has become zero. So I think they have transformed. They are growing faster. And again, the one thing which we always say that 0 to 1,000 companies, these are the right companies to focus on. This is where the big alpha is very likely to be created over medium to long term. And the valuations have also corrected, thankfully. So I think this is a right spot. Automobile is one sector which we continue to like. We have been talking about this with you guys from almost like 1.5, 2 years. Most of these stocks have delivered extremely good returns despite this kind of market. Consumer is one segment which we are now interestingly looking for that segment. We believe that there is going to be revival in consumer discretionary. Hospitals have also corrected. I think valuations have now become more reasonable. So there is another one more space which you can focus on. So there are always pockets of opportunities across various sectors.
Rajesh, manufacturing, I think broadly has been a strong theme for you over the years that we've spoken and recently as well. For example, we've spoken about names like Hitachi, etc. in the past with you. These have seen, Hitachi it's seen a sharp correction after that Chinese equipment news flow and other things. I want to identify 1, 2, 3 top bets in that space. Manufacturing, it includes auto, everything. Just with full disclosure, if you want to talk to us about that.
So basically, in manufacturing theme, there are always multiple themes within manufacturing. Auto ancillary is one such space which we like the most. There are tremendous opportunities in auto ancillaries. The content per vehicle story is continuing to gain more momentum. There's a premiumization, more safety features, more sensors in a vehicle. All this leads to high content per vehicle. And, please put a disclosure because now we are talking about stocks. These are not recommendations and we might have holdings in these companies. So we continue to own companies like Gabriel, companies like Uno Minda, companies like Sriram Pistons, companies like TVS Motor in OE, and they continue to deliver, super growth. Apart from automobile, if you look at even capital goods space, one of the company which you mentioned, we are holding from last 2.5, 3 years. And by the way, while people talk about China thing, but I'm sure you would be knowing that the company which you talked about is the biggest one in China. They are the largest presence in China, one of the largest presence in China. The entire biggest Chinese project has been done by, the Hitachi Energy Global. So I think most of these fears are more of a noise rather than, fundamentally 100% fact-based checks. So I think the opportunity is huge. The order books are now almost 4 times revenue. And we continue to see more and more of that because AI is gaining further momentum in the world. More AI means more data center. It means you require more grid stability. It means you require more companies who can do the HVDC kind of a transformers. And only 1 or 2, 3 companies in the world can do that. So I think there is a long runway for growth for next 3, 4, 5 years. So that continues to remain one of our favorite. And likewise, we have opportunities within capital goods, few very important good segment within defense. We like 1 or 2 companies. Within the aerospace, we like 1 or 2 companies. So there are so many opportunities across the pockets of sectors.
Defense and aerospace, which ones, Rajesh?
I would not like to disclose the name, it's part of the fact sheet, but there are one or two interesting companies which are focused on nuclear side as well as renewable energy side, as well as they are focused on the defense side. And these are the component companies having de-risked their business model. So they are not dependent only on one segment, they are dependent on multiple segments. And, we have been holding that company for, some time.
Sure. Rajesh, the big theme in the last 6 months has been the PE compression across the sectors, whether it's real estate, whether it's the solar companies, or for that matter, any company which is like even for that matter, Dixon, they all have seen a prior PE compression now in the last 6 months. Anything that excites you now after the recent correction? Because in the real estate pack, stocks are on 50%. Stock like Dixon is on 50% from the top. Even for that matter, the Premier and Varis of the world have corrected 30-40%. Anything in that space which was commanding a very high premium and now it's collapsed and is still attractive now to you?
Very good point, Nimesh. I think what we all need to understand is that while the PE has corrected or not, because at times the stock price corrects, but EPS also corrects, then PE don't correct. So we are actually now looking for companies where EPS have actually gone up and price to earning multiple has corrected. If that is the combination, then the re-rating in the next bull market, whenever the market turns, is going to be significant. And there, the companies are only few. Not that every company, there is a PE compression. Generally, broad market PE correction has happened, but there are many companies where earnings contraction has also happened. But there is a fear that, for example, renewable, which, few names which you are talking about, there is a fear about sustainability of those earnings. So we are skipping that entire segment. We are skipping the entire so-called, that renewable segment of solar cells and solar panels. We don't want to be into that segment, we would like to skip that segment. On the EMS space is an interesting space, and there are few companies which are continue to deliver very high growth. I think those companies will do better. There are few companies which are right now going through some, what I would say, they are dependent on the, what happens to the Chinese joint venture or the Chinese customer. And therefore, we are seeing some correction over there. Hopefully, even that will get addressed, no doubt about it. But till that time that doesn't get addressed, stock may remain under pressure.
Rajesh, you own some EMS companies in your portfolio, right? Syrma, Avalon, Dixon.
Yes. So Syrma, Avalon, again, please put disclosure. They are continuing doing extremely well, and we don't see any significant, risk to their earnings. Both these companies have been doing phenomenally well, and let's see how they go the next 3-4 quarters. But they are on the right wicket.
Okay. So Syrma and Avalon are a part of your portfolio.
Yeah.
So you said the opportunity lies in companies where there has been an EPS increase, but valuations have corrected or derated. Now, in your coverage universe, or how many ever stocks, 500 stocks, 200 stocks that you all cover at Alpha Accurate Advisors, how many such stocks are there which fit this criteria of earnings increases, but the PE has derated?
I think the first sector which comes to our mind when I look at my Excel sheet is automobile. Because post GST cut, there has been EPS upward revision. And October was good, November was good, December also was extremely strong. So naturally, the auto overall, there is an upgradation of the number. And the stock prices are down. It means the PEs have corrected. Number one.
Rajesh, just to get a devil's advocate on autos, how do you read the recent hike in the commodity prices? Because that might have an impact on the margins in the very near term, right? Is that a right thesis to look at? That the volatility in commodities is going to have an impact on the margins for a lot of these auto companies?
See, what happens typically, the prices of commodity generally get passed through over the next 3 to 6 months, high or low. Industry is extremely competitive, See, if suppose metal price goes down, that doesn't mean the auto company will also give more discounts because they will pass on that benefit to gain the market share. And if the metal price goes up, every auto company will pass through because there is an industry problem. That is not company specific problem.
Sure.
More importantly, auto ancillary therefore are better off than auto OE because auto OE is a brand fight. Whereas auto ancillary companies who are into airbags, they don't have brand fight and they continue to pass on the entire raw material hike. So it is a less of a concern if you ask my personal view. So automobile is one sector where earnings have been seen upgrade, but the stock price have corrected. In fact, recent correction is very sharp and therefore the PE has actually compressed. If you look at the few, NBFC as well, because there also we are going to see now upgrade of the earnings because pricing difference, the NIM compression is not so high. compared to what everybody thought earlier. So NBFC, be it a commercial vehicle financing, housing finance is also now going to recover. Housing credit growth has started showing improvement. So there also you are going to see some upward momentum in terms of the EPS, and the valuation, if corrected, that provides good opportunity. And same thing is for hospital, because remember, hospitals have done huge capex. So from 1Q, 2Q onwards, we need to be 6 months ahead of time. You are going to see good growth in the hospitals, and the valuations have corrected again in hospitals. So these are the 3-4 segments where I think the PEG have done more attractive.
Sure.
2 points on hospitals. I just remember this data point, and it just stuck with me. I think we spoke with the Macquarie Pharma and Healthcare analyst. He said that the stocks under their coverage, about 7 top hospitals, 40,000 beds. They said that there are plans afoot across all these hospitals to add another 10,000 beds.
Yeah.
So the entire industry, according to him, is going into. I mean, that's typically how hospitals. I mean, every few years they will.
It'll be capex.
Capex, and then it'll settles and etc. So we are at that cusp of the addition. And autos, Nimesh, you were talking about. If you remember, Ramdeo Agarwal was with us at the market forum, and he said autos. Auto is the dark horse star of 2020. And by the way, his call is very simple. Huh? Yeah. His call is credit growth is direct injection into the economy. Credit growth had fallen to 8%. It's back to 14%. RBI is all out to push credit growth. And where is that money going? Probably his assessment is autos and housing. That's where it will go. The only question is, credit growth needs deposit growth also, and deposit growth has been very sluggish. But I think yesterday, SBI chairman I think it was very interesting. He said, like it happens in the West, I think you're going to get to a position where banks will borrow and lend. So they will not entirely depend on deposits. So we'll have to see. But his big call was that credit growth is the big driver from here in that sense.
Rajesh, you briefly spoke about NBFCs. This week was classical in terms of few large accidents in the NBFC space. IIFL Finance, PNB Housing, on a slightly weak note, and the guidance. Also, Paytm was a big accident of today's market. Anything after the fall which has turned attractive to you? You've started looking at that. Any of these names now, whether housing finance companies or NBFCs?
Currently, we do not own any of these 3 names which you have mentioned. The companies what we are holding in portfolio, they are doing extremely well. And if you look at even RBI data, even for the overall sector, housing credit growth has started improving, which was kind of a subdued. Correct? And if you look at even the microfinance companies who have announced their number, their collection efficiency is also improving. It means overall the borrower health is now showing some trend of improvement, which is a good thing, correct? Because if the borrower health is good, everybody would like to lend to good borrowers. So by default, you will see better credit growth. And of course, the institute has to be good. Asset quality has to be good. That goes without saying. So I think you will see improvement across, the housing finance sector in particular, where the risk is also very low. Commercial vehicle financing also will see improvement in trend. Look at the largest CV player numbers, which were announced in month of November and December. It's extremely strong numbers. So that also reflects that CV financing company will also do well over next 3, 6, 9, 12 months, correct? So these 2 pockets in particular looks very interesting within overall, the NBFC space.
I think in the new age, what Nimesh was asking, you have physics wala car trade info edge, right? Rajesh, as part of the...
No, we have more of, Policy Bazaar, of course. Please put a disclaimer. PP FinTech is one of our large holding. And again, if you look at this company, they are growing by 40% because 90% market share, and the digital insurance industry is growing by 40% compared to the average industry growth of only 11%. So, that we continue to like that name. And the other name, what you mentioned, we own that as well. And we believe that, the platform companies, it's better to take a portfolio approach rather than, one company make it big in a portfolio. We don't do that. We do it as a portfolio approach because we know that the biggest risk in this kind of business models, likewise, they disrupted somebody. Somebody can also disrupt them. Right? So you need to take into consideration those points. But the growth is right now very solid for 3-4 companies which we own for the digital platform companies.
Rajesh, running out of time. So just one final question to end this session. Are we closer to the tail end of the correction? And how much more downside if you have to pin it down in terms of headline indices?
Well, I think if you look at the Nifty, we are trading at, 7% discount compared to 10 years average valuation. And therefore, I think Downside in Nifty is very minimal. If you ask my personal view, maybe 4-5% is a normal correction. Mid and small cap, they might remain a little bit more volatile, but difficult to time the, what is the trough and what is the, peak and trough. But very strong margin of safety if anybody buys at today's levels. As I'm saying, sale laga hua hai, 30-40-50% discount pe laga hua hai. I think equity is the only commodity, जब भी जनरली ऐसा होता है कि प्राइस नीचे होता है तो डिमांड बढ़ती है, सेल लग जाता है, लेकिन इक्विटी इज ओनली कमोडिटी इन द वर्ल्ड, अगर भाव घटता है तो डिमांड भी कम हो जाती है. So, take it to your advantage. That's the only thing what you can do.
I think 3 days of restful
reflection, right? That's what you called it.
And Monday, Tuesday, we will come back. And by the way, it tells us about how little interest there is around the budget, that we've not even broached the subject of the budget with Rajesh, right?
I was going to ask him.
I think we're going to get to it on Tuesday.
Provided there are no big Trump headlines shaking the global markets. But thank you very much, Rajesh, for joining in. Have a restful weekend. It's been great chatting with you.
Thank you.
And well, with that, it's gotten down in this edition of Editors Roundtable. Thank you very much for watching. Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening. The Indian rupee sinks to a record low once again, weakens by more than 30 paisa against the dollar to move within striking distance of the 92 mark. Sensex and Nifty post the biggest weekly fall in 4 months. On Friday, Nifty managed to cling just above 25,000. A 90-member delegation from European Union arrives in India tomorrow to conclude a free trade agreement. EU scraps export benefits for 87% of the shipments. Indian government claims exclusions are in accordance with EU rules and will not have a big impact on exports. Officials from the United States, Ukraine and Russia are set to hold a trilateral summit in Abu Dhabi. This is the first meeting between the three nations since Russia invaded Ukraine 4 years ago. Bank of America CEO Brian is upbeat on India and the US economy, expects high growth in the US to lift the rest of the world, predicts a couple of Fed rate cuts this year. That's an exclusive. US President Donald Trump sues JP Morgan and its CEO Jamie Dimon, accuses them of debanking by closing several accounts after the Capitol Hill riots in January 2021 and seeks at least $5 billion in damages. JP Morgan says the lawsuit has no merit. US President Trump withdraws the invitation to Canada's Prime Minister Mark Carney to join the so-called Board of Peace. This comes after Carney's speech at Davos warning of a rupture in the rules-based world order led by the US. TikTok established a joint venture for its US business, resolving a long-standing dispute with Washington. Oracle, Silver Lake and MGX will each own 15% in the new entity. ByteDance will own less than 20%. Oracle will oversee data and algorithm training for American users. All right, let's start with the day's top story. The Indian rupee has sunk to another record low. The Indian currency weakened by more than 30 paise against the US dollar to move within the striking distance of the 92 mark. Lata Venkatesh has more. Lata, what has triggered this fall?
Well, actually, it was off to a very steady start. The rupee closed yesterday at 91.63. Early morning trades were at 91.50. So actually, the dollar was cheaper by about 15 pies in early trades. And it seemed like that up until noon. One is normally worried about fixing, which happens around 1 o'clock when the month ago NDF trades mature, the swaps mature. But, even after 1, it was a sea of calm in the currency markets with, basically yesterday's levels holding. There seems to be a selling post in the afternoon trades. Now, it is difficult to say whether the rupee triggered the stock fall or the stock fall triggered the rupee fall. We often used to say in days of yore that when London opens, there can be a seminal shift. So it's possible that with London markets opening, foreign funds came with a bout of selling. Already the Adani news, which was carried in Financial Times, had created a negative buzz on those stocks that the SEC may the SEC may ask permission to send notices, summons. That was creating a negative feeling, but it didn't impact in the early part of the trade. There were even some dealers telling us that actually they are normally people who are custodians and who buy dollars for FPIs, but they did not have FPI demand for dollars. And in fact, it was the public sector banks which were buying dollars around that 130 period. So was it a government payment going out? These things are always explained only at the end of the day after the market closes. But like in the stock market, for the rupee at the moment, there are no levels at all. The stop loss is 330 when trading ends.
Right, thank you, Lata, for that update. From the currency market to equities now. Market closed in the red with Nifty ending below the 25,050 mark. Nearly 40 Nifty stocks closed in the red. Broader markets also underperformed. Nifty Realty was the worst performing index today. Sensex and Nifty closed lower for the week, while broader markets posted its highest weekly fall in 4 months. PSU listed companies erased market cap of more than 15 lakh crore rupees this week. Sensex, Nifty and Nifty Bank fell 2.5% each. The midcap index slid over 4.5%. Right, the other big story we are tracking this evening, 87% of India's exports are set to attract higher import tariffs in the EU market. According to the official journal of the European Union, new rules on the tariff preferences will be effective from January 1st this year and will be in effect for a period of 2 years.
Indian exports were part of a generalized scheme of preferences. The GSP scheme allows developing countries like India to export to EU at rates lower than those paid by even most favoured nations. The Commerce Ministry has said that the move is a continuation of an existing system and will not cause any fresh impact. The ministry has also said that EU has progressively suspended GSP tariff preferences since 2016. However, the Global Trade Research Initiative expects sectors like textiles, chemicals, plastics to be hit with higher tariffs. Remember, a 90-member delegation from European Union led by European Commission President Ursula von der Leyen and EU Council President Antonio Costa will arrive in India tomorrow to conclude talks on a free trade agreement. Sources tell CNBC TV 18 that India and the EU are likely to sign agreements on sectors like defence and security. Parikshit Luthra is standing by with more details on this. Parikshit, what can we expect?
Well, the European Union is seeking a substantial reduction in tariffs with India as part of the FTA. The main day of this visit will be Tuesday. That's when most of the action will take place during the India-EU summit, which is being hosted by Prime Minister Narendra Modi. This is the first time that both Antonio Costa, who is the president of the EU Council, and EU Commission President Ursula von der Leyen are travelling together, and they will be participating in the Republic Day. So this is a first in itself. The EU military contingent will also be a part of the Republic Day parade. On Tuesday, we will see that announcement on the conclusion of FTA talks. Another important detail will be the Security and Defence Partnership Agreement, which will involve and allow a closer defence manufacturing cooperation between the two countries. Also, a closer cooperation when it comes to maritime threats, aerial threats, threats on the ground, and any kind of future threats to either Europe or India. There will also be agreement on security of information sharing agreement, which will help in sharing of classified information between Indian and European entities. So the Indian defence manufacturing industry and the European defence manufacturing industry will be able to do more business as a result. You'll have a strategic partnership document that will be agreed upon and concluded. It will have more than 100 undertakings across defence, clean energy, climate change, pharmaceuticals, agriculture, and a whole host of areas. We've been told that India's sensitivities on agriculture and dairy have been respected, but there is no compromise on CBAM. So clearly, this India-EU visit, which is going to start from Sunday evening and go on till the 28th of January, will be high on optics, high on ceremonies, and very high on deliverables, because it's coming at a time when there are huge tectonic shifts for the European Union, and they want a stronger partnership with countries like India.
Right after Davos, the next weekend, I will travel to India. There's still work to do, but we are on the cusp of a historic trade agreement. Indeed, some call it the mother of all deals. One that would create a market of 2 billion people, accounting for almost a quarter of global GDP. And crucially, that would provide a first-mover advantage for Europe with one of the world's fastest-growing and most dynamic continents.
And the curtains come down today on the World Economic Forum's annual conference in Davos. While a spirit of dialogue was the key theme at the Alpine Town this year, all eyes were on Donald Trump, the United States president. The weeks leading up to the event had doubled down on Greenland and put Europe on tariff notice. But while Trump delivered a whiplash to Europe, during his address at Davos, he backtracked from using military force to annex Greenland, much to the relief of the markets and European leaders. Trump later told CNBC in an interview that they had a concept of a deal on Greenland, but did not clarify further. America's G7 allies, Canada and France, also took pot shots at Trump's imperial ambitions without directly naming the president. While French President Macron urged Europe to stand up to bullies, Canadian Prime Minister Carney was far more pragmatic and called the current world order rupture and not a transition. Greenland aside, Trump's so-called peace of board was the other big-ticket announcement. Middle East allies like Israel, Saudi Arabia took part along with 19 world leaders, including Pakistan's Prime Minister Shehbaz Sharif. So far, Turkey and Hungary are the only NATO nations to sign up. India has yet to take a decision. But as Trump dominated the headlines in Davos, Global CEOs and thought leaders chose CNBC TV18, from Bank of America CEO Brian Moynihan to Stephen Schwarzman of Blackstone and Sunil Bharti Mittal to CEOs of top IT companies. CNBC TV18 was the platform of choice for industry with over 100+ interviews in 5 days. CNBC TV18 was your Davos headquarters as business tycoons took stock of the emerging trends. We once again thank our viewers for reposing your faith in CNBC TV18 year after year. On that note, let's listen in to Bank of America CEO who remains hot in India and the United States. He told Shireen Bhan that he expects high growth in the US to lift the rest of the world.
If you look at our team across the world, we're 3.6% for world growth. We think that India grows at 6.5% for 26. We think that the U.S. grows at 2.8%, which is a bit ahead of consensus. We think Europe's plus or minus 1%. But the U.S. growing faster on the size of the economy creates a lot of activity around the world because the U.S. doesn't make everything it consumes and things like that. So our economists are pretty comfortable, and they've raised that basically from, say, midsummer of 25 at about 1.5 after tariffs and what's going to happen and all that to come back up to 2.8 now. And so they've been raising it literally each time they touched it. We think the Fed cuts rates a couple times later this year. We think inflation, will work its way down probably towards the end of 27 to the target, more closer to target levels. Unemployment stays reasonable. So if the U.S. is set up pretty well, that helps the rest of the world, but also other countries like India are set up well, and the deregulatory impact in the U.S., interest rates being lower next year versus this year, even if nothing happens, or lower. Yeah, it's all very positive. And I've said, we're bullish on the U.S., but we're also bullish on a lot of other places.
But the other big question is who's going to replace Jerome Powell, and what will that mean as far as the central bank's independence is concerned? The markets have been fluctuating on the back of that, story. Do you think it's going to make a difference who is going to be in Powell's position?
Well, I think there's been a list of candidates that President Trump talked about yesterday. Yep. He talked about when they get in there, they got to make their decisions, and sometimes you have buyer's remorse when somebody gets in there. So he told the whole story yesterday from the stage on Borges Questions, which was, we know it's an independent Fed, and the world knows that the U.S. Fed, and that's a major piece. And so we're trying to be careful who we pick. But once they're in there, they have to do what they think is right based on the position they're in and the dual mandate. And so I think the understanding this is much better. But he's got a good list of candidates. He'll pick one.
Russian, Ukrainian and U.S. officials will hold a trilateral summit in Abu Dhabi today. The Kremlin confirmed the meeting after Russian President Putin met U.S. envoy Steve Witkoff and Donald Trump's son-in-law Jared Kushner. Meanwhile, Ukraine's President Zelensky, who said that the talks would last 2 days, hit out at European leaders during his speech at the World Economic Forum's annual conference. He accused the EU of waiting for direction from Donald Trump rather than taking action. Speaking to reporters, Zelensky said that the Russians should be open to compromise when it comes to territory during the meeting in the UAE. However, the Kremlin has maintained that a long-term peace deal cannot be reached until territorial issues were resolved. This is the first meeting between the three nations since Russia invaded Ukraine 4 years ago.
Just last year, here in Davos, I ended my speech with the words, "Europe needs to know how to defend itself." A year has passed, and nothing has changed. We are still in a situation where I must say the same words, but why? The answer is not just about the threats that exist or may appear. Each year brings something new for Europe and for the world.
There were times when Putin didn't want to make a deal, times when Zelensky didn't want to make a deal, and it was like opposite times. Now I think they both want to make a deal, but we'll find out. There are no changes. I think that President Putin would like to make a deal. I think that President Zelensky would like to make a deal.
The U.S. president has hit out at Iran once again, and this time he has said that a U.S. Navy ship is heading towards the Gulf region. Addressing reporters on Air Force One, President Trump said that the U.S. is closely watching Iran if it acts against protesters in Tehran. This comes just a day after the U.S. president backtracked on his claims of military action in Greenland at the annual World Economic Forum conference in Davos. He also reiterated his position of imposing 25% tariffs on those doing business with Iran.
We have a lot of ships going that direction, just in case. We have a big flotilla going in that direction. And we'll see what happens. Oh, it's a big force. We have a big force going toward Iran. I'd rather not see anything happen, but we're watching them very closely. 837, mostly young men, were going to be hung on Thursday. And I said, if you hang those people, you're going to be hit harder than you've ever been hit. Well, we have an armada. We have a massive fleet heading in that direction, and maybe we won't have to use it.
All right. On that note, it's time for a short break. Our Davos coverage continues on the other side.
Hello and welcome to the CNBC TV 18 special. I'm Shireen Bhan. We're coming to you live from our CNBC TV 18 studios here in Davos as we continue to bring you stories that the world is taking note of. Well, the Make in India plan is something that the government has been showcasing here in Davos. And within the Make in India plan, the semiconductor mission is also part of the storytelling. Joining us now to talk us through their plans for Make in India, and specifically in the semiconductor space, is an Indian company that has set up shop in Maharashtra. Joining us now is Rajendra Chodankar, the founder and chairman of RRP Electronics. They have, of course, set up an OSAT facility. Mr. Chodankar, many thanks for joining us here on CNBC TV 18. You are part of the government semiconductor mission. Let's start by talking about how you got started.
Yeah, hi, good evening. Good evening. Thank you for giving us this opportunity to speak at this very pivotal event, the Davos 2026. I think the government plays a very pivotal role in trying to encourage us to set up this facility. And the first thing that they did was they approved us our project with a very attractive subsidy, which gave us the confidence to get into investment mode of getting into the machineries and the setup, because that's a very expensive issue. But thanks to the government, they supported us right from day one. After 14 months of hard work, I think we then went into the groove of setting up this facility, and I think it turned out very well. We could commission this facility in September 2024.
Well, you commissioned the facility in September 2024. You've also got the legendary Sachin Tendulkar on board as an investor. How did that happen?
Yeah, I think that's the best thing that has happened to us, I think, in this journey of our semiconductors. And I think Sachin Tendulkar ji was associated with us in our RRP group, and it just happened that one day when we were discussing, I mentioned that we are venturing into the semiconductor, and he on the foundation day, he was quite aware of this technology, because he was the first one who actually said that the washing machine also has a chip, and which means that it is as time comes by, he also mentioned that it's no more going to be a luxury but a necessity. But truly, on a very sincere note, he's been a blessing to us, blessing to RRP, blessing to the state, and blessing to the nation. He keeps on motivating us. He never discourages us. Whenever we are in some challenging times, he comes up and he motivates us. And I think that aura takes us to a different level. And today we are here thanks to him for all his support and encouragement, and also being the strategic investor for this project.
Well, let's talk about the future now and plans as far as the fab concerned, because you have acquired land, about 100 acres, an investment of about 12,000 crores proposed for the fab facility. Walk us through the details of that.
Yeah, I think to do anything, you obviously need a land, and the government was kind enough to offer a 100-acre land at additional Taloja Panvel. And this land obviously comes also with a 50% subsidy allocation. What we plan to do and what's planned in the project that we submitted was to build multiple OSAT lines and also set up a prototype fab for building compound semiconductor chips. When I mean multiple OSAT lines, because there are a lot of disciplines in the semiconductors. So right now we are focusing on legacy packaging for automobile application, but then we have the electronics, we have the memory chips, we have the SIM cards. So all put together, we are planning to have in at least 5 to 7 lines, and we are hoping that we should have a prototype chip by the end of the next quarter, which is basically deployed for thermal imaging applications. And we're doing that because the thermal imaging has been our core competency in the RRP group.
So as early as next quarter, you're saying the prototype should be out?
Yes, by the end of next quarter, we'll have a first prototype chip. This prototype chip obviously will be deployed for thermal imaging applications. And the best part, I think, once we had some of the semicon team visiting us, and they were quite happy with what we're doing, because what Indian government needs actually is not only to build a chip but take it into the forward integration. So what we are doing is, once we have this prototype chip, we are going to deploy it into our thermal imaging system, and when we're doing that, we will build a complete camera system and offer it to the government or the customer for their analysis. So this is what our plans are, and once we are successful in this, we will then go into the pilot mode and then into the production mode. So we expect by the end of 2027 we'll have a functional line that will produce chips for thermal imaging applications.
Hello and welcome to our continuing coverage here from the World Economic Forum Davos 2026. Over 100 interviews down, and we're now winding things here in Davos. And what a great way to close the Davos conversations with Brian Moynihan of Bank of America. Brian, we couldn't have asked for a better close to our Davos coverage. Thanks very much for joining us here.
Oh, you're very kind, but it's great to be here again.
So let me start by asking you what you've made of the Davos mood. This has perhaps been one of the most significant World Economic Forum meetings in the last many years because of what happened between Trump and the EU, the many meetings and the global reset that's underway. What do you take away from Davos?
Well, I think when you have the President of the United States here, which President Trump has now come 3 times, and then being an urgency for the administration, the president, to get things done. He had a convenient place, so he had, he could work with the people on the Greenland question. He could work with Zelensky on the Russia-Ukraine, and then a whole bunch of other things I'm sure that I don't know about. But the tone of it was a lot more around sort of those types of discussions and meetings. And then there was the usual, all the other stuff about AI, and other stuff about how to make capitalism continue to do good things for the world. But that added another element to it.
Well, I'll talk about AI in triplicate in just a second, but let's talk about growth. And do you walk away feeling that 26 is going to be better than the previous year?
Well, so if you look at our team across the world, we're 3.6% for world growth. We think that India grows in the 6.5% for 26. We think that the U.S. grows at 2.8%, which is a bit ahead of consensus. We think Europe's plus or minus 1%. But the U.S. growing faster on the size of the economy creates a lot of activity around the world because the U.S. doesn't make everything it consumes and things like that. So our economists are pretty comfortable, and they've raised that basically from, say, midsummer of 25 at about 1.5 after tariffs and what's going to happen and all that to come back up to 2.8 now. And so they've been raising it literally each time they touched it. We think the Fed cuts rates a couple times later this year. We think inflation, will work its way down probably towards the end of 27 to the target, more closer to target levels. Unemployment stays reasonable. So if the U.S. is set up pretty well, that helps the rest of the world. But also other countries like India are set up well, and the deregulatory impact in the U.S. interest rates being lower next year versus this year, even if nothing happens, or lower. It's all very positive. And I've said we're bullish on the U.S., but we're also bullish on a lot of other places.
Yeah, and you have upgraded your forecast for the U.S. economy to 2.8%, as you just pointed out. But what's the consumer data telling you, Brian, at this point in time? Because the expectation is that the tariffs, while they haven't yet impacted sentiment, that it will start to hurt. What is the data telling you today?
If we were sitting here last May, you would have said the same thing. They haven't yet impacted, but they will. And the answer is they're well understood now. And I think that was one of the things. So what you see in our consumer data is for the fourth quarter, the Bank of America consumers put 5% more money into the U.S. economy than they did in the fourth quarter of 24. So 24 to 25, 5% growth. That's $1.5 trillion. So it's not a small sample.
No,
so it's a lot of money. Credit, debit cards growing, all kinds of other payments that they make. If you look so far in January, it's running a little faster now. But you got to be careful. It's only a couple weeks in, and how the weekends fall and stuff impacted. But it's clearly not slowing down. So I think that bodes well, because when U.S. consumer spending and a consumer-led economy, it works. Then if you look at our small business customers, you can look in and see that their sales are rising a little bit. You can see their payrolls are going up for their employees because you can see how they pay them. And their credit is strong, and their interest rate carry went down because as rates came down, the biggest beneficiary is a floating rate credit line at borrower, and that's generally small and medium-sized business on lines of credit. So we feel good about that. Same mid-sized credit's good. In the prime space that we're in the consumer side and the commercial space. So they're all feeling pretty good. But, they had to figure a lot out last year. Once we got out of here, a lot of people were very bullish about the world. And then, Liberation Day and trying to understand all the policies. Right now you're seeing a pretty clear thing. If you can agree to invest in America and help America be great, which will then help your country be great, that's a tariff that goes from, say, 10 to 15. If you don't, it's going to be a higher tariff for its national security, other interests. But, the pattern's worked out, businesses adjusted to it, and I think they feel that they can make business work around it.
And they are spending money, and driven largely by, of course, the large AI infrastructure build-out. How much of a tailwind is that, and do you believe that that's sustainable and is likely to continue?
Well, I think it's going to happen for a couple reasons. They're basically the people are building on their own account, or people building for these major companies have strong cash flow and a lot of money to spend. The market's open; they can get the money, the capital markets. So I think it's going to happen. Whether it happens exactly the pace people think, there's issues with power, there's issues with getting permitted, there's issues with chip availability. All that stuff is talked about, but the reality is if you look at the monthly deployed money in the data centers, it's been going up every month, and there's just a lot more left. If all this work, all these declarations by people are near factual over the next several years, it is definitely a tailwind. But also the big beautiful tax bill in the United States is a tailwind. tax refunds will be higher for a broad part of the American population because the SALT limitations, which is a technical deductibility of state and local taxes, because of no taxes on tips, because of Social Security tax changes. So that'll be a benefit. And corporates, the corporates didn't get a rate change. So that's not the stimulation. The stimulus that came for corporates, commercial payers, is the lock-in of the bonus depreciation, other things that are good because they expanded the coverage, but I also made it certain. So now I know the tax rate is not going to change on me.
Well, you know, you talked about the stimulus and what that's been able to do as far as the economy is concerned. But the other thing that everyone's talking about is AI-related valuations. What do you make of those?
Well, I've got a research team that's the best in the world, and they have opinions about it every day, and the market values those opinions every day. I think you have to back in, leave aside valuations because we get our market experts to talk about it. The question is what's driving this, and what's driving this is a demand by companies like ours to use it. We're paying license fees to get access to it. There's a consumer-led demand for people paying subscription fees. And then the big thing that's driving a lot of it is the next generation of how commerce is conducted, with agents versus search and all that, and that's a battle that's going on with some titans to figure out how that works. And then the fourth way, there's actually a fourth way, which is all the providers of software are spending money on models for them to embed in their software they provide us. So the major enterprise softwares all have to have AI capabilities for our teammates to work better. So, that's all going on, and so we'll spend several $100 million in AI stuff this year. We've had AI embedded. Our Erica's been running since 2018, 20 million customers using it. We've moved it over to the commercial side. We moved it over to the employee self-help side. We use the same model, and now we have access to other models, 365 with co-pilots rolled out to 150,000 teammates. They're all taking advantage of it. So you're seeing all this activity take place. That's what's driving the valuations. And the market will fix it if they think it's too high or not. But what's under is a fundamental amount of activity.
And that's absolutely right. You talked about what you're doing on the tech side and the hundreds of millions of dollars that you're spending on tech. But agentic commerce and agentic AI, how much of that are you already starting to see benefit the bank?
That's still early days. But our AI agent is Erica, and 20 million people use it. 170 million times last quarter. So it's not theoretical, it's being used. And we said we think we calculate whether we're precisely right because it built up over 5 years. 11,000 FTE equivalents are being utilized by that. And so, it's very interesting stuff and very interesting possible returns. We spend $14 billion on technology, about $4.5 billion on initiatives, and we spend a good chunk of that this year towards AI implementation, but there has to be return to all of it. It's just not let's send this out there and see if it's fun, because you can write a song on Copilot. I could do a poem or a haiku or whatever. That's not going to help people do their job. So the question is, how do you go apply it to the thousands of processes in our company, where there's a process map and what steps and how do you drive it and having the data arrayed. So it's really nuts and bolts to make it work.
So are you starting to derive a return on investment?
Every project we won't do a project for fun.
Also fun. But, let me talk about rates. And you said that you expect rates to come off. But the other big question is who's going to replace Jerome Powell? And what will that mean as far as the central bank's independence is concerned? The markets have been fluctuating on the back of that, story. Do you think it's going to make a difference who is going to be in Powell's position?
Well, I think there's been a list of candidates that President Trump talked about yesterday. He talked about when they get in there, they got to make their decisions, and sometimes you have buyer's remorse when somebody gets in there. So he told the whole story yesterday from the stage on Borges Questions, which was, we know it's an independent Fed, and the world knows that the U.S. Fed, and that's a major piece. And so we're trying to be careful who we pick. But once they're in there, they have to do what they think is right based on the position they're in and the dual mandate. And so I think the understanding of this is much better. But he's got a good list of candidates. He'll pick one, and
we will know shortly. Is what he had to say here.
Yeah.
M&A, it was a big part of what we saw through 2025. Do you expect that momentum to continue in 26?
Yes. I don't. As long as the business conditions are predictable enough and everything. But look, there's a lot more deals being talked about here, out there, and everywhere. The last year for the industry and for our company was the second best year the industry's had in fees. We were up 7%. The next higher year was the COVID recovery year. And so as we look at it, we think it's a very good year. The pipelines are full. Even from December to the end of the quarter, we moved up about 10% from what we had because deals started closing faster. So the regulatory reform that's gone on in the United States is still to come because it just takes time to get the rules. But the ability to get a deal done is clearly there.
What about the IPO market, a revival in 2026 for the U.S.?
There's some IPOs getting done, and there'll be a combination of market conditions are strong, but also a combination of a lot of the private equity firms need to get stuff out in the market, and a lot of the firms that have built up some private financing, people also want to see liquidity there. So I think it's set up pretty well. We feel very good about it.
How good do you feel about India?
Oh, we like, India, they do a great job. We just put a new country leader in to help Vikram, to help Kaku, and they do a great job. And our clients there are great. And remember, we also have our processing teams and our technology teams there. And so we have 20-some thousand teammates, and they do a great job for us. We have it at 6.5%. The policies that have been implemented over the last decade plus of making it more and more sure to do business. I think they got to keep opening the markets. They keep with the Secretary of Commerce talking on a panel we were on together. Non-tariff barriers. They have to watch that. I think that the advice is to make sure you're easy to do business from outside companies. But it's great, and we continue to support its growth.
The India-US trade deal, if it goes through, and the hope is that we will finally close it perhaps in the first half of this year. That's the speculation. We can't preempt it. What could that potentially then mean as far as further cooperation between the two countries and trade and deals between the two countries?
I think it's just certainty, precision, understanding how stuff can flow. So I think there's been a lot of pressure to open up markets. So as I heard Howard talk on our panel yesterday, and I've heard him other times, and was on another thing with him today, as he talks about the motivation, it's opening markets and letting our market be open on a fair basis. So it's invest in America and help us do it. So I think India can play well into that.
So plans to expand in India, especially as far as your GCC business is concerned?
The global corporate banking, corporate commercial banking, the investment banking markets and treasury services. We invested $100 million over the last few years to develop the payments platform so they can operate in the right environment there, and that's up and operational, and it was a lot of work. And we continue to have great views of India's future and our future in India.
So as you look at 2026, outside of geopolitics and the geoeconomic fragmentation and confrontation that we are seeing, what will be the mega trends that you're going to watch for that could potentially shape the way flows move?
I think getting a trade, as pertains to India or any other country, honestly, the certainty on the way goods can flow and process can flow. I think the U.S., it's all about a story of building things, data centers, production plants, getting that all organized, and it's permitted, built, and then minerals, getting access. If you think about the constraint in the electrification of all these economies, you need a lot of copper. There's enough copper, and can we get more copper mines? It'll still take years for them to come on, but you got to commit to it so that people can know it's there. And so I think the mega trends are access to the supply chain certainty, the trade outline becoming clearer and clearer, and then you got to worry about all the risks, the cyber risks, the policy mistake risks. There's a lot of risk out there.
10% credit card risk.
We always are working on things to help. We believe in affordability, and we've worked on a lot of things, and we'll see if we can come up with something. We have zero balance transfers. We have low interest credit cards, so we're working on stuff.
So some of the risks that you just spoke of, Brian, but what gives you the most optimism? What gives you the most hope?
Look, I think what gives me optimism is the capitalist system is operating well, and we got to make sure it works well for everybody. That's what Davos stands for. And I think we all are mindful of that. We got to drive that. But what you see is with interest rates coming down, deregulation, and people employed in the United States, that's a good backdrop to the U.S. That backdrop helps the rest of the world. and with a certainty around the range of outcomes in trading. It doesn't have to be everyone's done, but people can look. I think I think we're optimistic about that, but really optimistic about the ability to just continue to serve clients and customers well. And AI gives us another way we can actually help them solve what they need to do. What would you like the power to do is our brand at Bank of America, and we asked the question, we got to do it. We now have another set of technology we deployed at scale that's interesting, and we don't even know where it goes.
You know, I'll end by asking you, Brian, what are you hearing from your peers? What are you hearing from other CEOs? Because what I'm picking up on is, look, nobody wants to now, or everyone's accustomed to the idea that it is an uncertain world. Somebody used the word radical uncertainty on one of my shows earlier this morning. But the other view is that there is a feeling that you just have to get on with what is under your control and under your influence. And so no regret moves. Is that the mood within the boardroom? Yeah, well, I think, look, we do stress tests every day on parts of our markets and all that stuff. We do stress tests every quarter on the company, and we have scenarios. In the end of the day, you got to be prepared for all those scenarios because they could drop on you tomorrow. And so the way we learned a lot in our industry and other industries about resiliency. Financial crisis for us, some of the bouncing around COVID for our industry, but other industries, the supply chain and how things work, the ability to deploy teammates at home and all the stuff we learned from that, the rapid recession. So we learned from all this, but when you think about how it's being balanced as a company, not over-dependent, making sure the growth is going to stick to your ribs and be solid and the right risk, and then go out and win in the market and no excuses, which is one of our principles. But with that right risk, when everybody said commercial real estate in the U.S. is going to be a problem, it was a $60 billion portfolio, it was a $15 billion office portfolio, we have $1 trillion of loans outstanding. It was not going to be a big problem, but it was the problem of the moment. So you have to have everything set up so you can just power through it. And even as we approach countries around the world, we operate in them with a methodology that we understand the risk we take in, and we take a lot of it, and we really support our clients, but we don't need to be in every business, retail banking, India or something, because frankly, we're not sure we can do that well. We can do it well in the U.S. Well, Brian, it's always a pleasure. Many thanks for joining us here and closing out our coverage here in Davos. It's great to have you, but we look forward to seeing you in India. Plans to visit India soon? I don't have a current plan, but our friends over there, we're celebrating another major milestone for the company in terms of being there for many, many years. So we'll go over and help. Well, we look forward to celebrating that milestone while you're in India. Thanks very much for your time here in Davos. And with that, it is time for us to wrap up our special coverage here from Davos. Over 100 hours of programming, closing it out with Bank of America's Brian Moynihan. From all of us here on the team for now, goodbye and many thanks for watching. Welcome back. The conversations continue here at Davos 2026. We're trying to get you a picture of what the world could look like in the year ahead, what could be the factors, the forces that shape investment decisions. Joining us now to help make sense of that is Filippo Gori of JP Morgan. Filippo, many thanks for joining us here. It's too cold. My brain is frozen now. Thanks for joining us on CNBC TV 18. Well, you've done 11 countries before you got to Davos. What's the mood at this point in time?
Sherin, first of all, thank you very much for having me. It's a pleasure to be here. Yes, so I've been traveling across Europe, the continental Europe and the Middle East over the past 2.5 weeks with a group of colleagues to gather momentum at the beginning of the year, to show our clients that we are there and our employees too, and to kind of re-stress our European credentials. We have been in this part of the world for a long time, and we wanted to stress that. So the mood was actually quite positive, both in Europe and in the Middle East. Different reasons, different cycles. Europe is kind of moved on from the tariffs, and most clients are just ready to continue to get on with their lives, invest and do what they have to do for their companies. In the Middle East, you are facing more of strategic rethinking of the role of the Middle East in the broader political and geopolitical environment across the world. And there are enormous investments taking place in that region, and therefore there is a degree of enthusiasm, a degree of sense of pride for what the Middle East is achieving that is definitely palpable. And there is global interest for the Middle East as well as for India, obviously, that you can perceive. Then you arrive here in Davos, and clearly everything will happen in the next few days.
Next 48 hours,
Yes.
once President Trump arrives.
Yes, so there is definitely a high degree of expectation for what can come from this week over here.
But let's talk a little bit about India and Asia in specific as well, and how that sort of is placed at this point in time from a fund flows perspective.
So India, as you will have seen, has done exceptionally well over the last 15 years or so, for as long as I've been, when I lived in Asia Pacific, and for as long as I've been involved. It has transformed itself. And if you look at some of the flows or some of the important changes that have taken place, have really reshaped the country, even in a global, from a global investor standpoint. If you think about last year, Asia Pacific had IPO flows that were up around almost 75%, or up to $90 billion, if I remember correctly. India represented 25% of those flows. And there was definitely a degree of excitement around the equity market in India. And India right now is having enormous tailwinds, whether it is domestic consumption, India generated by the India for India manufacturing, whether there is a high degree of export, India for the rest of the world, the whole infrastructure reforms, and India remains the office country of the world, the services economy of the world. As JP Morgan, we have over 60,000 employees in the country, and we are really proud of what they contribute firm-wide, and the quality of the talent is and remains outstanding.
But Filippo, in the short term, do you see, on account of the significant depreciation in the rupee, etc., further sort of pull back from FIIs as they look at India? Because that's been the story through 2025.
I think the story is, you will not believe me, but the depreciation of the rupee has always been a little bit of a story. I remember other interviews 10 years ago when I was being asked about that. So that story has always been a little bit there, but notwithstanding that, the interest, the flows, they remain there. Ultimately, if you are a global investor and you are looking at Asia Pacific, if you exclude Japan and Australia, if you're looking at developing economies, you look at China and India. They are the two largest markets. And therefore, there is always going to be interest.
It's been a pleasure speaking with you. We look forward to seeing you in India. Thanks very much for joining us here in Davos to give us a quick read of what your conversations with your clients as well as other investors are telling you about what we should expect in 2026. That's the view there from JP Morgan. We are going to take a break and come back with more conversations. Stay tuned to CNBC TV 18. We're back in a moment with plenty more.
Hello and welcome. You're watching News Center with me, Parikshit Luthra. Lockheed Martin is considering setting up a final assembly line for the C-130J Super Hercules military transport aircraft in India. This would be its first such facility outside the United States. India is looking to procure 80 new military transport aircraft, and Lockheed Martin is pitching the C-130J as a strong contender. The C-130J is a 4-engine medium transport military aircraft designed for tactical missions and capable of operating in harsh conditions. Lockheed Martin has delivered more than 560 C-130J aircraft worldwide, with 28 operators across 23 countries. The Indian Air Force currently operates 12 C-130Js. To understand how the aircraft could bolster the IAF's airlift capabilities, we're joined by Rob Toth, Vice President, Strategy and Business Development, Air Mobility and Maritime Missions at Lockheed Martin Aeronautics. Mr. Toth, thank you so much for being with us. India operates a C-130 Hercules aircraft. The requirement is 80 more. Could you give us a sense of the kind of improvements to the aircraft you're offering to the Indian government?
Sure. I'd like to start off with discussing the 12 airplanes that are already operated by the Indian Air Force. The 12 C-130J-30s that are operated by the Indian Air Force really brought a tremendous capability to India, not only for operations for their special operations, but for humanitarian operations in the country. As those airplanes have been operated here in India, we have continued to evolve the C-130J, and we will continue to evolve it as we bring on new capabilities, hopefully winning the competition here for the medium transport airplane.
Right. Could you give us a sense of the kind of investments you've already made in the Indian ecosystem, and how important does your Indian partnership and Indian infrastructure play in the global ecosystem of Lockheed Martin?
Yes. So Lockheed Martin's been proud to be here in India for the past 30 years when we established an office here in India. About 15 years ago, we established 2 joint ventures in Hyderabad with our partners at Tata. And those 2 joint ventures have really been the catalyst for developing the aerospace and defense ecosystem within India. From those 2 joint ventures, we've done a significant amount of investment in India in growing the global supply chain. Right now, we have over 500 different Indian suppliers that are providing support to those 2 joint ventures in Hyderabad. In addition to that, we have about 90 different Indian suppliers that are importing parts into the global supply chain for Lockheed Martin. And that includes 140 MSMEs, so medium or micro, small, medium enterprises for the Indian ecosystem. So it's really been that long-term commitment that we've had here in India, and we continue to grow that and look at opportunities to expand the capability within India.
Right. I would also like to ask you that when you speak about the C-130J, how does this score over other aircraft of its kind, other military transport aircraft such as the KC-390 or A400M in terms of capability, cost and industrial benefits?
Yeah, so as far as industrial benefits, I talked to a little bit of those. And the industrial benefits really to India, you can look at what we've done with the C-130 here in India with the C-130 empennage, or the horizontal and vertical tail section of the airplane. When we made our investment into our joint venture in Hyderabad with Tata, we started producing the C-130J empennage here in India, and that structure is 96% indigenous content here in India. And then it is exported back to the United States and assembled into all C-130s coming off of our production line in Marietta, Georgia. The last 250 C-130s built have had an empennage from India built. It is the sole provider of that section of the airplane coming out of India globally. So we will continue to look at opportunities where we can compete different structures on the airplane or different capabilities to have them produced here in India, and we'll continue to do that forward. When you look at what the C-130J brings to India as far as capability in comparison to others, we carry more paratroopers, more personnel from a regular transport opportunity. We carry more pallet positions. So when you're thinking about transporting goods and services around India in time of need, say COVID, when there was a need to transport medical supplies to very remote regions, you had an airplane that could carry more capacity than any other airlift in its class. and you could get them into very small remote airfields because it has the shortest takeoff, shortest landing distance of any airplanes in its class because of the turboprop engines that it has instantaneous power to access the most remote airfields. It is built robustly to get in and out of those remote airfields. So whether it's supporting humanitarian operations, say in Sri Lanka, following a typhoon, whether it's in Nepal following an earthquake, or for national needs for security in the remote islands in the south where airfields are very short and critical length, or at the highest altitudes in the Himalayas like DBO, where the C-130 can go in and out and operate at those very high altitudes. When you see other airplanes, say even in the commercial sector, where they are restricted going into areas like Leh, depending on the temperature. You know, on a very hot, humid day, they don't have the performance to get in and out of some of those airfields. The C-130 can get in and out of those airfields. So from a performance perspective, from a cargo carrying capacity, from a fuel efficiency perspective, the C-130 offers many advantages over its competitors.
Right, and you're someone who, of course, understands it very well. You've been a C-130 pilot yourself in the US Air Force. Could you give us a sense of how this aircraft is set to evolve over the future, over a 10-year horizon?
Yes, so we are continually evolving the airplane. As you know, the C-130 has been in production for over 70 years. And the airplane that was built 70 years ago to the airplane that is built today, there has been an evolutionary change in technology in the airplane. We continue to evolve it. And we are looking today at bringing in new technologies to the airplane, bringing in autonomous capability to the airplane, bringing in open architecture to the airplane. Why these are important are the ability to do complex missions with less crew members. So you have a cost savings there. The ability to have open architecture on the airplane allows the Indian Air Force to work with Indian industry to develop indigenous capabilities and integrate them into the airplane and really move towards that self-reliant capability that the Indian Air Force and the Indian government seeks. We're looking at adding extra fuel range to the airplane. So we have already developed the technology, we've developed the kit, we're going through certification, and by the time this competition carries through, there will actually be increased range capability on the C-130. We are looking at avionics upgrades to the airplane. There are many new technologies that are coming on that we can utilize, and we would really like to do many of those upgrades to the airplane through a co-development with the Indian Air Force and also Indian industry. Right. So all of these exciting opportunities to continue to expand the envelope of what the C-130 can do, we would like to do it in partnership with the Indian Air Force and Indian industry.
Right. As someone who's worked a lot with the Indian government on different platform systems, clearly the focus for India is greater local production, local supply chains, maybe co-development and co-production for the future. Yes. What is the kind of size of an order that would encourage you to the greatest possible extent?
Yes, so right now the RFI that was released several years ago was for a program of either 40, 60, or 80 airplanes. And so we are focused on responding to an eventual RFP that we believe will be out soon for any one of those opportunities. We think that the ability to produce C-130s for India is attractive at each of those points.
Right. Tell us about your collaboration with the Tata Group. How is that set to grow in future in the next 5 to 10 years?
Yes. So as I said, we really look back at the relationship that we've had with Tata really as the catalyst for what we've done in the aerospace and defense industry, and it continues to grow. And the empennages that we're building, that we're sending back to the United States, that is in complete partnership through our joint venture with Tata. And we are continuing to look at other opportunities as we have suppliers that maybe choose to leave the marketplace. We are looking at how do we bring that over here to India and replace those suppliers with Indian suppliers to be able to add additional content to the airplane and further grow the ecosystem here in India. In addition to that, as we look forward, we recently broke ground on an MRO facility in Bangalore with the Tata Group. And that MRO facility, we project that it's going to initially have somewhere in the neighborhood of 700 jobs there in India. As we progress forward, we see that MRO, maintenance, repair, and overhaul facility really grow into a capacity that could potentially serve the entire Indo-Pacific region. India and Bangalore and where the MRO is very strategic for all of the partners that are flying C-130s throughout the Middle East, Northern Africa, and the Indo-Pacific. And you're talking hundreds of airplanes. And so when you think about the ability to grow that as a regional hub for maintenance and overhaul, and the work that we're doing with Tata, I'd say it's unlimited as far as the opportunities going forward.
Could you give us a ballpark figure as to what's the sourcing level for Lockheed Martin for India at the moment, and how much could it go up in the next 10 years?
Yeah, so, you know, particularly for this airplane, for the C-130J, like I said earlier, we have about 500 different suppliers that are really producing parts that come into the global supply chain for the C-130 and for our joint venture with Sikorsky and Tata here in Hyderabad. As far as beyond that, you know, we are having direct suppliers, over 90 suppliers that are really producing parts for the Lockheed Martin ecosystem globally. And so being able to continue leveraging those, continue to grow those, we think the MTA opportunity is something that will springboard, you know, us to higher levels with Tata and also with the Indian suppliers across the board.
Right. Yes. Considering global tensions, what is the current order book of the C-130J like at the moment? And are you getting a lot of inquiries from countries because of the kind of wars and tensions and conflicts that we're seeing?
Yeah, so I would say that we're getting a lot of orders. I would say that it has little to do with tensions. It has to do with the capability of the airplane, the quality of the airplane, the reliability, the trust that many of our current operators have in the airplane. Just recently, we signed an order with Mexico. And Mexico has been operating C-130s for over 50 years. And they chose to stay with the C-130 and upgrade to the C-130J, their first brand new aircraft procurement that they've made, because they understand that there are efficiencies with replacing legacy C-130s with new C-130s, because you get to maintain that expertise of your aircrew, your maintainers, your logisticians, your support personnel. So the larger ecosystem that's already been put in place is there to support the new aircraft. And being able to have that trust of our current customers and potential future customers, they're looking around and understanding that the C-130 isn't needed only for conflict. It's needed for all kinds of national needs. Humanitarian operations, I mean, you just look at what has happened here in India, operations in Sudan, rescuing Indian citizens, operations in Kargil, Afghanistan, rescuing Indian citizens, delivering specialized mining equipment to trapped personnel that had a structure collapse on them in the mountains in a very remote area. Being able to support troops on all of the fronts, whether it's the northern front in the Himalayas all the way down to the southern islands where you have critically short airfields, but you need critical support into those airfields. COVID operations where you are being able to take supplies to the very last mile. I think the value of the C-130 is that it can be used for all of these different missions. It's certified day one to perform 20 different missions, to not only include moving personnel and equipment, but firefighting, combat search and rescue, et cetera. So I think the value of the airplane is really what differentiates itself.
Right. I'd ask you one final question. India and US have a very strong defense partnership, and the defense industrial partnership has also been growing because of a series of agreements we've signed with the United States over the last 10 to 15 years. Having said that, what can the Indian government do in order to make the defense ecosystem more attractive for companies like yours, for Lockheed Martin?
Yeah, so I think that you know, part of this that shows that it's moving forward and that there's that continued commitment is the 10-year trade or 10-year defense deal that was signed this past year. That has continued to catapult and move forward defense cooperation between the United States and India. And I think as we've been watching this past year, the defense cooperation between the United States and India has largely moved uninterrupted, and defense deals that are going on, moving towards future acquisitions, current acquisitions, continue to progress. So I think that, India is sending a very strong signal that they are looking for partnerships. They're looking to expand those partnerships, and they are still out there looking for U.S. products to bring into the defense market here in India. And so it's a very attractive place for American industry to be. And we, continue to look forward to the many opportunities that we see coming down the road.
Right. Robert Todd, thank you so much for joining us, giving us your view on Lockheed Martin and how it sees India at this juncture, and how you're pitching the C-130J Hercules aircraft to the Indian Air Force, the Indian government, for its next big order of 80 aircraft. Let's see what happens in future. It's time for a short break here on CNBC TV 18, but don't go anywhere. Up next, we discussed what startup founders expect from the funding environment in 2026 with Innovin Capital's managing partner, Ashish Sharma. Stay tuned. Welcome back to News Center. While AI is the talk of the town and expected to have a significant near-term impact, a report by Innovin Capital on the India Startup Outlook tells us a more nuanced story. Based on insights from over 100 startup founders, only 31% of those surveyed founders believe that artificial intelligence will significantly impact their business model over the next 2 to 3 years. The survey also highlights AI as the most overhyped sector, while manufacturing emerges as the more underhyped. Moving beyond AI, fundraising sentiment has improved sharply. 85% of founders are optimistic about the fundraising environment in 2026, with SaaS and manufacturing founders being the most bullish. Joining us now to take this forward is Ashish Sharma, Managing Partner at Innovin Capital. Thank you so much, Ashish, for joining us on the program. 2026, what makes you most excited? You've come out with a Startup Outlook report, but if I were to ask you about Innovin Capital itself, what would be some of the sectors or the kind of companies you would be most excited about?
Clearly, when you look at, Parikshit, the emerging sectors, it has to be, AI, advanced manufacturing, So that's where defense, aerospace. So there's a lot of focus in these areas. I mean, these sectors are still very early in terms of the amount of capital they can absorb. So at least in the next year or two, the top three sectors from a funding standpoint will still remain, fintech and consumer, but the center of gravity is moving towards deep tech.
Right. When you speak about what founders and startups are looking for in 2026, how does the funding window actually look like? Will there be more funding opportunities and higher funding opportunities in 2026 than there were in 2025 despite global uncertainties?
I'll give you a little bit of a context. So if you recall, right after the post-COVID boom, I mean, we saw primary funding of north of $13 billion. And, over the last 2 or 3 years, we have been in a holding pattern. Last year, the primary equity funding into startups was close to $11 billion, which was slightly down versus 2024. So on one hand, the funding has been stagnant over the last 3 years. The round sizes are smaller. I mean, just if you look at 2025, there were only 12 rounds greater than $100 million. The year before, it was 25 rounds. But the silver lining has been ability of companies to get to public markets. I mean, last year, we saw 15 to 16 very prominent IPOs, whether it was, Grow, Lenskart. In fact, 3 of our portfolio companies, Aether Energy, Capillary, and Bluestone also were able to hit public markets. So it's a mixed bag. IPO side is very positive, and I think there is a good understanding that founders have what is the right kind of financial architecture required to go public. Otherwise, if you look at early stage or growth stage, their funding remains in a holding pattern over the last 3 years.
Right. You've said that AI remains an overhyped sector, while manufacturing is the most underhyped as per your outlook and survey. Why is that?
I think, again, versus me saying, I mean, this is what the founders are saying. And clearly what happens is AI is garnering a lot of attention and a lot of eyeballs and investor interest. So as you can imagine, I mean, the founder set here was fairly diverse. So I think most founders feel that maybe AI is getting too much love. But, on a serious note, I mean, in India, AI still really is a small part of the overall funding mix. I mean, if you look at the Valley, today almost $7 in $10 are going to native AI companies. I mean, advanced manufacturing is something that we as a nation require. But it's only, I would say, in the last 9 to 12 months that investors have started looking at that sector more seriously. So clearly, I mean, in the past, manufacturing and hardware in the VC world was hardware is hard. But I think there is a realization that particularly as a country, I mean, you need to control your own destiny. And when it comes to critical technologies and, advanced manufacturing, which is what China excels in, I think India needs to kind of, improve its game. So we are seeing a lot more interest, but still it's early days.
Right. When it comes to the growth outlook and what the government could do, as the budget is also around the corner, what the government could do in terms of policy making or ease of doing business, which could give an impetus to startups and also maybe higher funding, what would that be?
I think 2 things. I mean, with respect, I mean, the government is very clear when you look at all the initiatives, Startup India, the government is very clear where would they like capital to go. And particularly as it comes to, sectors that require to take, long gestation period require R&D. I think that's where they're putting a lot of their energy. So as you might be aware, I mean, there is a 10,000 crore RDI fund that the government is launching where they will basically channel that money to eligible fund managers and finance companies to put into, advanced manufacturing and AI, health tech, things that India really needs to build. And there is not enough private capital out there to support this. So I think that's a positive. I think on the areas where founders feel things can be better is around, regulatory certainty. I mean, in the past, I mean, we have had some high-profile cases where maybe the industry became too big and there were a lot of gray areas, and then suddenly the government came down and the whole industry or the whole sector actually went through a lot of disruption. I think founders would like a lot more certainty around the rules of the game. before the industry becomes too big and it could lead to a lot of collateral damage for the sectors. I mean, those would be the two things that come to my mind.
Okay, thank you so much, Ashish, for joining us with some of the key snapshots of your Startup Outlook report for 2026. Let's see what the budget delivers for startups and their founders this year. That's all the time we had here on the program. Thank you for watching. Goodbye.
welcome to this special CNBC TV 18 Davos Dialogue, Davos Debate. I'm Shireen Bhan, and we're coming to you from the Andhra Pradesh Pavilion at the Belvedere Hotel. This has, of course, been home to Andhra Pradesh as it showcases its story to the world here in Davos. Leading the conversation has been Nara Lokesh, the Minister for IT, and of course, he holds many other portfolios. But if I go down that road, we'll take up a lot of time of the panel. So without further ado, let's talk about what the state is attempting to do. It has, of course, solidified its purpose as far as ease of doing business is concerned, but it now wants to transition to speed of doing business. What does that mean, and what measures are we going to see the state government take to ensure it delivers on that promise? I also have with me an eminent set of panelists who will talk to me about their aspirations and their investment plans for the state as well as for India. So without further ado, in our last conversation, Mr. Lokesh, you talked about the fact that there's a WhatsApp group that you might even set up to get investors to talk to you directly in terms of speeding things up. So have they been on the WhatsApp group already?
I think two of the panelists have my number and they're in touch with me directly.
So it's government on WhatsApp and governance by WhatsApp?
Well, it's about rewriting the speed at which India can actually deliver and showing the way to the world. I think India is one of those rare countries where we are able to deliver on speed, which other parts of the world are unable to do. And I believe this is just the beginning. The beauty of our great nation is that if one state starts it, rest will follow it. And I think that's going to put a lot more challenge on us in Andhra Pradesh and to start breaking records every time we take up a new project.
But explain to me the difference, because when one talks about the ease of doing business, one would imagine that the speed of doing business is implicit in that. How will things change now as you move and pivot to the ease of doing business?
So it's actually a very good point, right? Ease of doing business is about getting your permissions, making the entire process a lot more easy. I've started challenging my team on the service level agreements that we have on it. So for example, one of the partner who's here had an environmental clearance to be issued, but the SLA says it's 3 weeks. We got it done in 4 hours. So I believe that this is what we have to challenge every regulation that's out there, look at every SLA, and truly deliver on the speed of doing business.
Okay, so how do you go from 3 weeks to 4 hours?
One WhatsApp message from me. So I got to hear we work on strict timelines with all the investors in Andhra Pradesh. We monitor the projects on a weekly basis. So if a project is getting delayed, we try and understand what's the issue, and any feedback is taken positively. Even criticism is welcome, so we take it positively and we work on it. And that's how we were able to get this done in 4 hours.
But, jokes aside, how do you institutionalize the speed of doing business at scale? Because not everybody can be on WhatsApp with you, or not every decision can be taken on WhatsApp by you. So how do you institutionalize speed at scale?
I think it requires a fundamental cultural shift across, in politics, in the bureaucracy. So we are doing that. So we, from our chief minister up to, your VRO, we are all talking about on speed of doing business. So not the SMEs, all of them cannot reach out to me or be in touch with me. But we want to create an environment, a culture to deliver on that. That's one part. Second is the regulatory framework. So we have now formed a group which is being advised by self-made billionaires who are giving me input on which regulation, how do we go about it, how do we streamline it, and how can we truncate the time it takes for each of this, permissions and so on and so forth. And what are the permissions that we don't even need? Why does, for example, an IT company really need a pollution control board clearance, for crying out loud? So we're going to now look at each and every regulatory framework that's there in the state, and we're going to challenge the entire team, the bureaucracy, to come back and tell us why should it even be there.
So deregulation, essentially.
Yes.
A big move on that.
Big move on that.
Sanjay, let me come to you, because your investment into the state of Andhra Pradesh made headlines with that big $15 billion announcement. How long did it take for you to make that decision, A, to go to Andhra Pradesh, and B, to get things done in Andhra Pradesh?
Yeah, I think before I answer that, let me just start by saying I'm really delighted to be here on this panel, and good to see you again, Shireen. I think first I would start and say that we have been deeply committed to India as Google. I think we started more than 20 years back. And the memory that I carry of that is that 20 years back, internet penetration for women were so low.
Yeah.
And Google did a project called Internet Sati with Tata Trust. Today, the penetration of internet for women in India is almost parity. So I feel proud that we've been committed in a deep manner. And that comes to this $15 billion investment. We have committed even more deeply to this. And I think fundamentally it's 1 gigawatt plus capacity, subsea cables, the biggest project they're doing outside America for the first time. And I must say, I met the Honorable Chief Minister and respected Minister in mid-24. It was a conversation where he laid out, the Honorable Chief Minister laid out the vision, and by mid-25 it was done. It is one of the fastest projects we have done as Google in this region. And I really feel proud it's coming from India and coming from Andhra Pradesh. And I'll build on what Lokesh, you were saying on, I think, 3 themes which I think stand out for me. One is the idea of the way the Honorable Chief Minister defined what we're trying to do is good for Andhra Pradesh, good for India, good for Google, which means it's a partnership. It's not a contract manufacturing. It's a big shift in the mindset, how we approach it. Second, I think, is very data-led decision-making, which is transparency. You know exactly what's happening. And third thing in my mind, which is what you just said, speed. This speed of moving things is the fastest I've seen. So I really acknowledge that and thank you and delighted to not only do this, but even do more as we move in the future.
Well, you know, speaking of doing more, you preempted my question, Sanjay, because as India sort of takes the next steps as far as its AI journey is concerned, data center capacity in India much lower than the US or even China. What do you believe it will take for the AI infrastructure build out to be a reality in India? And companies like yours, I mean, how much more appetite do you have for India?
I think the reality is we have more than 1 billion Indians. The power of AI today is that the language barrier is gone. So far, the use of technology was limited by, if you knew English language well, you could use technology. But hardly 200 million people understand and speak English. So I see India moving from 200 million people deeply using technology to almost 1.4 billion people using technology. Because there is no barrier of language, there is no barrier of literacy. You can speak, text, video, whatever format that you want to engage in. So it's going to be a dramatic increase. And what excites me, therefore, is that what we have built here will need to keep evaluating how fast to build more. And I feel from my point of view, India is really best suited to take the next leap as AI comes in because we are really good in applying the models and technology for both the benefit of society and customers.
Okay, I'll come back and double down on that in just a second. But Jatin, let me come to you now. You know, it's not just ease of doing business and speed of doing business, but it's also the cost of doing business. And that is something that the state has been focusing on, specifically for the IT sector. You know, land at 1 rupee, that also created headlines. But, you know, and I want you to explain to us why that is important and why companies like yours are looking at the state.
Sure. So, a few things, you know, apart from the speed and ease, I think certainty and trust also matter. And certainty and trust comes from your ability to access the entire infrastructure of the state transparently, as Sanjay was mentioning. And you have comfort that when you have a fair cause, you will see a fair response. And I think that's a big comfort that you throw a ball and then it will bounce back. It's not going to get lost. It's not going to get sort of muddled in some other controversy, etc. We believe that we are at a cusp of rebirth of IT services industry. I think AI in our lifetime, I as a professional and many others like me, I think this is the second industrial revolution that the IT services industry is seeing in one generation, right? I started when Y2K started, and I now have AI, which is, in my view, another 25 years of journey for IT services, plus operations, plus intellectual work, everything that India can produce and deliver to the world. So we will no longer be the services hub. I think we will be the intellectual hub for the world. And to do that, you will have to now look at where you want to be next 25 years. And when we started thinking about it, I mean, Vizag came on the top of every consideration we had. We had our own checklist of things, of excess of talent. I mean, we have incredible excess of Vizag talent in rest of the southern belt of India. And if so, why not Vizag to start with? and that's where we invested. So I think, and we got very, very warm and comprehensive response from Honorable Minister, Honorable Chief Minister, and therefore we went ahead. So we feel very energized now, and Vizag is one step as we are taking. I would say one thing: we have a 6 months plan on how we are going to grow in the state. So which tells you something how ambitious we are.
Well, you know, I just want to bring up the point that you made about the fact that the next 25 years will see a transformation of the Indian IT services sector. And this has been a sector that's been a huge generator as far as, you know, export earnings are concerned. It's also been a big employer in India. As we transition to more AI-led, what is the expectation that the private sector has from industry, especially when we talk about talent? I mean, that is the single biggest competitive advantage that people talk of when they talk of India. How do we ensure that we are talent ready for this AI world? And what is the industry, private sector collaboration on that front that's needed?
I think the core of talent and intellectual capital is India's demographic dividend, right? I mean, that's the core. Now, what you do as an industry like us is you work with education ministry, you work with colleges. We work with another roughly 120 colleges where we influence the syllabus in last 2 years of this. We have initiative like Synapse, which has nothing to do with Cognizant. We just want to impart right technology knowledge, which is market-facing today, not yesterday's market-facing. And we have done 1 million coverage in that in last 3 years. And we have now taken an ambitious goal to get to 2 million of such training. So, so it is a great opportunity. I think I always say that there is a valley of skepticism before there is a climb of hope. And in AI, we are a little bit in that space before we see the climb of hope. We certainly see it from our vantage point, how thousands of things today India doesn't do, India would be able to do from services standpoint with help of AI. And Sanjay alluded some of that too. So we are very excited, and I think our population and our young engineers are getting ready for it.
Well, you know, Suketa, that's a good point for me to get to you, because in Jatin's words, this valley of skepticism before we get to hope, that's also the perception when we talk about manufacturing and large-scale transitioning to manufacturing, because people believe that that's already a space that China has occupied. There's a whole bunch of other countries that have taken what has moved out of China, and India is, of course, one of them. How do we build on that story? What do states like Andhra Pradesh need to do to continue to draw in investments from the rejigging of supply chains that's going on, from the you know, resilience point of view as far as supply chains as well?
That's a great question, and I'll start with resilience is table stakes. It is not an option anymore. And speed is the last strategic advantage left for firms. So in a few months, there'll be a book from HBR that I'm working through, and we call it Intelligent Speed at Scale. And there is a simple formula, and India is a math-driven country, so I'll give you the formula. It is the speed of insight multiplied by the speed of decision multiplied by the speed of action. Now, the reason it is multiplied is because if one of them is 0, the value is 0. And companies have been working through that. And what we found is countries and companies that follow this have a disproportionate market value. Now, as you think about industrial manufacturing, the big question is operational sovereignty. If I do something, and you know, right before we came out here, had a nice conversation that said, do I own my data or does it live somewhere else? It can be a big challenge. The second piece is technology is core part of manufacturing. And if my processes cannot be designed in one place and used all over the world, I run into issues. And I'll give you an example. A client of ours has a facility in China, 400 million of revenue created. They have 210 people, 10 people on the line, 200 running AI. The same factory at a different Northern Hemisphere location has 1,000 people, 10 people are writing reports, and the other 990 are on the line. What we want to be, if India is going to drive this, is on the 210 side, not on the 1,000 side.
Yeah.
And that is the structural difference, both on the speed side as well as taking advantage.
Well, that's an important point that you make. And how do we prepare to make that transition and be ready for that is the question. Let's address the energy question as well. And the state of Andhra Pradesh is also trying to address that question through renewable means. But, you know, as we aspire for this 8% growth, as we aspire to become a $10 trillion economy, we will, of course, get to a $4 trillion economy shortly. how we need to think differently in terms of our energy mix as well, and what the imperatives are for states like Andhra Pradesh.
Yeah, thank you, Shireen. Let me first comment a little bit about my own or our company's experience in Andhra Pradesh. We had not a very good time a few years ago. But I think when the current Chief Minister came in along with Lokesh, things just changed totally for us. The kind of responsiveness, the kind of welcome that they sort of gave us was so remarkably different from what we had been experiencing until that point in time, that it sort of totally changed our minds about the state, even though going into it we were quite skeptical because of our prior experience. And there were 2-3 things that happened, which I think goes to the way in which the current dispensation operates. One is that they came to us and they said, why don't you make Andhra Pradesh your home state? Right now we are based in Delhi. You don't have a lot of renewable energy capacity in Delhi or Haryana, obviously, right? So that can't be our home state. And that thought really appealed to me. It really resonated strongly with me. And I thought, Andhra has a lot of good natural resource. What it did not have was enlightened leadership, which it now has. And why should we therefore not think about exactly what they were telling us? And it took us a little bit of time to come sort of to accept that premise. But I think the more I thought about it, the more it made sense. And that's why we decided to put in all our chips into Andhra in a way, right? And I give full marks to both Lokesh and to the Honorable Chief Minister for that. The second thing is accessibility was phenomenal. Lokesh gave me his number. I'm in touch with him. And he, when you talk about speed, he responds very fast. So if you message him, he responds back to you definitely before the end of the day.
Are you using an agent, by the way, or are you actually responding to messages yourself?
So that's a good point. I'll sort of try to give a very difficult, complex message the next time, which may require some personal intervention. And then I'll get back to you and let you know what happens. But that is the second thing. The accessibility was really very good. And that's unusual in India. It's not very common. The third thing was not just the speed of responding to WhatsApp messages, but the speed of decision making. I think that was something that was also quite remarkable. And it's a very flat hierarchy. You talk to Lokesh, you talk to the Honorable Chief Minister, and you're pretty much, the decision gets made. And of course, it has to then be implemented, and all the proper documentation has to be done, and everything has to be checked out. But obviously, when the political side is pushing so hard, then the bureaucracy also tends to, not always, but tends to fall in line as much as possible. So I think our experience, therefore, has been very positive. And that's why, we were looking to set up our ingot wafer line and for solar manufacturing. And we talked to many states, and many states are actually very unhappy with us for having gone to Andhra Pradesh, which I find is it's good for us when we go to Andhra Pradesh, but it's bad for us when we go to almost any other state now, because actually there's such competition now between the different states. It's actually quite interesting. So I think that's been our experience. The land has been allocated. We're now going to lay the foundation stone and get moving forward. And we're looking at what else we can do in the state. So I think that's really. Not answering your question.
No, but I think you actually raised a very important point, because I think that's a relevant point, especially for people who are looking at investing in India as fresh investments, or even people who are looking at incremental investments. Policy continuity, tax certainty, policy predictability, political continuity as well. Decisions that you may have taken may get overturned by another government, by another dispensation, as was the case with Sumant. In this case, it actually worked to his advantage. But, how do you allay those apprehensions? How do you allay some of those concerns that investors may have?
I mean, that is a challenge for the entire political system. I mean, if you look at it globally, to be fair, I think the Indian political system definitely looks a lot better. Saying that, I believe that there's greater maturity now coming in, and it requires greater discussion. But behind, all the investments, we're talking about, X amount of dollars or Y amount of land that's required. But the most fundamental point is the number of jobs we're going to create. And that is the narrative that this time around, as a state, we're very focused upon. it's important to explain to people that what's the impact that each of these investments will have and the kind of jobs it's going to create. So you create a very strong momentum so that things cannot be overturned. Yes, things have been reversed in the past, but I believe it's been an isolated incident for Andhra Pradesh in one administration. But look at it. Look at Hyderabad. What the foundations that Mr. Naidu laid in '94 have been continued. And look at the city today. Look at the state today. It has the highest per capita income in India. Because the narrative was set. So it's equally important for the politicians to not just look at this from an investment perspective, but also build a narrative so strong that whoever comes, I believe that there'll never be a change in Andhra Pradesh. India will be governing Andhra Pradesh for the foreseeable future, saying that it's important to ensure that a strong narrative is there and we are able to convince people at every point as we go forward.
And that's an important point that you make. So I just want to build a little bit on this narrative that you want to build on the back of the jobs that these investments will create. What's part of that package? Jobs, of course, will be one pillar, but what's part of the package that you're going to be communicating, not just domestically, but internationally as well?
No, see, as a state, we have a clear direction, right? We have the Swarnandhra mission, which is where we see Andhra Pradesh in 2047. So we have clear targets, we have clear sectors. We just spoke about manufacturing and the importance of, speed in manufacturing. I also believe that the way we have looked at it is a cluster-based approach. I've had opportunity to share that with you. And that's where we are working with Renew, and they've been supporting our initiative on a rapid prototyping center, which we want to bring in from Sydney and bring it into their ecosystem. So we are working on a very cluster-based approach where there's a tight integration between verticals and horizontals. Horizontal is education, certification, and so on and so forth. Verticals are all the different components and the players who are there, who make up the entire ecosystem, which I truly believe is missing in India as we speak. And that's why we are struggling with manufacturing. We are not at the pace at which we should be as a nation. And I believe the experiment that we are doing in Andhra Pradesh could be a model that can be replicated in India.
From all of us here, from Davos, from the Davos Dialogue and the Davos Debate, many thanks for watching. Stay tuned to CNBC TV 18. We'll be right back with you. The news continues. Hello and welcome to CNBC TV 18's continuing coverage here from the World Economic Forum's annual summit in Davos. We've been bringing you headliners and newsmakers. It is our privilege to have with us on the program today in our Davos studio a man who has seen the way that the markets have shaped for the last 40 years. He is, of course, also a big believer in the India story. Joining us now, live and exclusive in Davos, Stephen Schwartzman of Blackstone. Stephen, what a great pleasure to have you join us on the program. It's wonderful to have you speak with us here. What's the big takeaway from Davos so far?
Well, Davos is just starting. You started last night, so you're catching me around noon in Davos. And most people aren't questioning the global economy and how it's doing. They're more interested in geopolitical stuff that's going on, whether it's Iran or Venezuela or Greenland or other types of things that keep happening with real rapidity. So no one has any answers to any of those things.
And more questions.
Right, more questions than answers. And like many things, time gives you the answers. But surprisingly, most of those issues haven't had a huge impact on markets at this point.
Mm-hmm. You talked about time, and I want to understand from you 40 years of doing this at Blackstone and building out Blackstone, 21 years in India. Many people compare what we are seeing today in the world. In fact, Boge Brende, the president of the World Economic Forum, believes that this goes back almost to 1945, the geoeconomics and the geopolitical fragmentation that we're seeing. Why do you think the markets are not reacting to the volatility in the headlines?
I think the markets aren't reacting because, one, there's some economic things that are going on that appear to be overwhelming, actually, some of those geopolitical issues. And the geopolitical issues themselves aren't resolved. So it's not quite 1945. But on the economic side, the advent of artificial intelligence and its future impact and changes has created, it's not really a euphoria. It's a solid economic growth in the United States, which is a world's biggest economy by far. We grew in the last quarter 4.3%. Now, by Indian standards, that's not much. But on the other hand, we've got a GDP per capita probably around $70,000, yes. And India has $3,000. Mm-hmm. So it's easier for India to have a bigger percentage growth. But for us to be growing 4% plus, that's almost never happened in decades. And it's the impact of massive expenditures by what's called the hyperscalers. They're just big companies that are all in the data and social media and other types of activities, spending at unprecedented rates. And probably 3/4 of the growth in the United States is from the building of data centers. And now there's going to be a big boom in electricity because the U.S. is really short electricity. And for the data centers to keep being built, you need the electricity, and that's creating even more in the way of economic growth. Now, that doesn't totally explain why European markets are up, but in the U.S., something magical is happening with technology and what people think is going to happen in the future.
Well, in your words, if you believe that something magical is in fact happening on the back of technology in the US, what would you be long on in light of this?
Well, in point of fact, we have a point of view.
Yeah.
And Blackstone is the largest builder of data centers in the world. And we're also the largest owner of data centers. And we're a huge investor in the modernization and growth of the electric grid. So for example, unlike India, we've had no growth in electricity in 20 years. And we're going to start running short. And we're going to go into a world where most people think you'll have 5 to 6% growth. Now, by Indian standards, that's not that much. But if for 20 years you haven't grown at all, that increase is a very substantial increase. And the whole electric grid is going to need massive expansion, 50% type expansion at a minimum. Some people think much higher. And so as investors, being in these two areas with increased concentration has turned out to be a simply wonderful outcome.
Well, yeah, I would imagine so, and we continue to see billions of dollars being poured into the build-out on the AI infrastructure side. But, you know, you said once recently that you believe that we're in a super cycle of fundraising. Do you believe that will continue to be the case in 2026?
Well, in terms of fundraising, it was a little tougher in the private equity area over the last few years when interest rates went up quite high in the West because of inflation after the pandemic. And that sort of trapped people who had bought deals near the top. Then interest rates went up, and all of a sudden, you couldn't sell things, and it was not a good time. But interest rates are coming down. You know, in the United States, they've already come down in Europe, and that's going to start the cycle again. But other parts of what we do at Blackstone, credit, for example, private credit, we now have $500 billion just in private credit. And our firm is increasingly close to $1.3 trillion. That's with a T.
Yes, we get that. That's with a T, 1.3 trillion, yes.
You know, I remember when we started with no assets. And so this is actually pretty remarkable because, you know, we have some of these large businesses, you know, growing at 20% a year. Now, those are Indian numbers, and you know, those are very nicely profitable businesses for us, and so we're moving into the cycle now because finance is somewhat cyclical, where the kinds of businesses we're in, whether they're real estate, we're the largest commercial owner in India of real estate. That kind of business is coming back. Private equity fundamentals are changing positively, and the private credit is already doing really well. So it's a very good time for us. And you know, I think just separately that our India business is our #1 business in the world in terms of rates of return for the investments that we make. Now, somebody's always got to be #1, but it's nice that I'm on an India show.
Yes, absolutely, and India is #1. That's good to hear and good to know.
Right, so we're doing a new fund. I can't say how big it's going to be because our lawyers will beat me up, but it's having very strong reception because our investment results in India are so good. So in a way, we're a bit like ambassadors for India in the developed world.
Well, India's lucky to have an ambassador like you, Stephen Schwartzman, but what's the ambition then for India and the new themes that you believe you would like to back? You talked about real estate, and that's, of course, been the big one for Blackstone in India. India's also building out data centers as it moves down the AI highway. What will be some of the new themes that you would possibly bet on in India?
Well, we're going to continue buying companies, and we switch in different areas. We've become very big in hospitals, for example, and we have probably around 40 companies that we owned in India. And I think we're the largest foreign direct investor in India. And so we'll continue adding companies at an accelerated rate because we'll have the monies to do that. In real estate, there's always exciting things to do as data centers are developing. There have been a series of announcements, as you know, of what people hope to do. We're one of those hope to do people also. We've already been building some. Whenever you operate with a country that's on the right track, there are always new opportunities that you didn't see. We did something in the money management business there. That's done really well. Something in the housing business, that continues to do well. So, India has a very stable political structure now, and it's doing the right types of things. So we're finding an increasing number of things to do.
Not just you hope to do, but you intend to do.
Well, we've been doing them now quite well. You don't get to be as consequential as we are in India without doing a lot of things.
Well, we look forward to you doing more things in India and hope India continues to be #1 when it comes to returns for Blackstone. But it's been an absolute pleasure. Thank you so much for joining us here on CNBC TV 18, and we look forward to seeing you back in India as well.
Well, I love going to India, and we also have an amazing team of people in India, all Indians.
Yes.
Actually.
Well, we look forward to seeing you with your team in India. Stephen Schwartzman, thanks very much for joining us here in Davos. Well, you heard it from Stephen Schwartzman. India continues to be a theme that Blackstone will bet on, invest in. Lots of new sectors emerging there. Of course, they hope to do data centers in India, but a lot more conversation coming up for you here in Davos. Right after this short break, we're back with you in a minute. Hello and welcome to our special coverage here from Davos 2026. I'm Shireen Bhan. We've been bringing you global newsmakers, headliners, business leaders to talk us through what 2026 looks like, what will be the trends that will shape the global economy, what will shape India's growth as well. Joining us now is someone who has a pulse check on global growth as well as a very keen eye on India. Michael Maybach, the global CEO of MasterCard, here with us in our Davos studios. Michael, always a pleasure. Thanks so much for joining us here in Davos.
Good morning, Shireen. Thank you for having me on a very chilly morning.
On a very
Davos.
chilly morning indeed. But what about the investment climate and the investment temperature? Michael, is it as chilly or is it heating up?
Hey, the investment climate is a lot less chilly. So we see a lot of investments across the digital economy from leveraging AI for better experiences, powering the digital economy. We see a lot of investment around cybersecurity in the space. So I think AI lowering the barriers to bring better experiences to people is just taking hold, and we're at the beginning of a whole new dawn around the digital economy. So exciting, very exciting.
I'll talk about the excitement on the digital economy in just a second, but let's talk about the real economy. And let me start by asking you about the trends that you're seeing in the US specifically. The tariffs have had an impact. Of course, not as severe as was expected, but what is the retail consumer telling you? What is the data telling you at this point in time?
When you take a look back at 2025, we're in a unique position as MasterCard. There's a lot of data, so we have a good pulse on the overall economy and particularly on the consumer. So you think with tariffs and people adjusting and companies adjusting, the overall economy adjusting, you should have felt more of an impact. But it was a pretty strong year, 3.2% on the GDP side overall for the globe, and the US fared very well in that. And you ask the question, why is that? So why is it adjusting? So first of all, we have seen a lot of the learnings from COVID. Supply chains are a lot more resilient, and there was a lot more focus on localizing supply chains, and that has helped in this instance. The private sector is very good adjusting when they know what's happening. So in the initial, first half of the year, that wasn't so clear, but it was pretty clear that what the private sector had to do in the second half of the year, and the consumer adjusted as well. So if you're uncertain as the consumer, but you happen to be, in the digital economy, you have a lot of tools that allow you to find out what's the best deal for me. If I don't quite know where prices are going, but I'm going to shop around. I can see what is my loyalty program offering me, where do I get the best deal. I might have my preferences out there, I get better advertising. All these things come together, the consumer adjusted. Consumers were also shopping early in the holiday season this year. They said, okay, I need more time to find out what I'm going to spend money. So they were very prudent, very savvy, and very intentional. And we don't see that changing in 2026. So the outlook is very positive, or considerably positive, let's put it that way. So we feel it's going to be a year of continued expansion. You also saw that generally there was trade alignment happening. You saw, when I think about where global trade flows go between Asia and the US, there was a little less in the second half of the year, particularly with China, so that just kind of balanced out in a way, but it all has settled. And some of the more secular trends is continuous investment in AI and in technology that is propping up the overall economy. And you do see this continues strong household balance sheet. So all that together is a pretty positive outlook for this year.
So the outlook continues to be positive. But you talked about cross-border volumes, and that is a high-margin business for you on account of this economic confrontation and geopolitical risk and uncertainty. How much of a concern do you have on that side of the business?
So when we look at cross-border spending that's going on, you see cross-border spending in terms of travel. 2025 was a strong year on travel, and we don't see that changing. Just look at how full it is here in Davos. So people continue to travel despite headlines, and that's a fact. When you think about non-travel related cross-border spend, after COVID, non-travel related e-commerce really picked up, and those preferences have never changed. So this is a very strong business for us and for other players in the ecosystem. So people look around the world and see, in the digital economy, the world is my oyster, I want to buy this, and it just happens to be available elsewhere, and consumers do that today. So we don't see that changing.
You don't see that changing either. Let's talk a little bit about what's happening in terms of payment trends, stable coins, and that's something that MasterCard has also moved to and integrated into your system. What should we expect? What will be the trends that will shape 2026?
Yeah. If you look at the headlines from a trend perspective, so stable coins, digital assets is certainly one of them. The whole space of agentic commerce is another one. And then more fundamentally, cutting across both of them is generally the need to secure the digital economy. So those are three big trends that are at play. Just spend a little bit of time on each of them. Stablecoins, very interesting from our perspective. So here's a technology that facilitates quick and easy payments, programmable payments between businesses and between people. So as a payment powerhouse, the operating system of the digital economy, as I like to describe ourselves, of course we have to offer that. It's built in our network. Our network is ready to settle in stable coins everywhere around the world. And we see demand rising. Think about it in the context, for example, of cross-border payments. So those are today oftentimes payments that have to be pre-funded. With stablecoins, it's instant settlement. You don't have to do that any longer. From a capital perspective, it's a lot more efficient. For consumers or businesses, it's most likely going to be a little bit cheaper because the money arrives faster. So a lot of advantages there in that use case and many other use cases out there. We're excited about digital assets from that perspective. Agentic. So the world of agentic AI in the world of payments manifests itself, for example, from a user experience. If you decide you're going to go on your favorite chatbot and you ask your chatbot, I have to do this trip and I'm needing the following things, and it gives you a list of 10 items that you need for this, let's call it, camping trip. In today's world, you might go on your favorite search engine and then hit different websites to buy what has been recommended to you. In the world of agentic commerce, you could just check out on your chatbot. And how do you do that in the world of payments? The chatbot needs to be registered. Is it a real chatbot? Is it verified? What happens if something goes wrong? So all the things you take for granted when you pay with MasterCard today. So we have built that into the agentic commerce experience. And that is bound to take off because consumers like this kind of experience.
How large is it today for you, agentic
It's
commerce?
early days. It is early days. So it will be, I think, in the space of consumer payments, it will pick up first because consumers, particularly younger consumers, like to try these experiences out. It will be a good experience. But just think about the world of intercompany trade flows, procurement, for example, when in a company something has to be bought from one of your vendors, and agents do this autonomously going forward. And the payment is enabled, so some sort of resource needs to be bought for the company. All of this starts to become highly automated, powered by an agentic commerce experience where the payment ecosystem and the corporate ecosystem just click into each other. Exciting times. Again, early days. I think consumers are a little ahead. But this will follow, and I think we're going to see it grow very significantly.
So what kind of investments are we talking about? You have, of course, been investing in AI, also, cybersecurity. About $11 billion over the last few years has been spent on that. But
I think this was the number when we last spoke. It's much more now.
I would imagine so. So
exactly.
what can we expect in terms of future investments now?
Yeah, so for us, we invest in emerging technology. We have to because we provide those choices to our customers, and if agentic commerce is the latest thing, or stable coins, we have to have it. So we are investing. But across the board, the investment in cybersecurity is really needed, and that's a topic that's not talked about enough. So with this ever-growing digital economy and our more digital lives by the day, keeping that digital economy safe is important. It's important. Particularly when you look at that AI is not only serving good purposes, but also it's serving the fraudsters and the scammers and the hackers. So we have to arm up. It's a bit of an arms race out there, and the industry overall is doing a good job, and we're taking a leading position here in investing and ensure that the 160 billion transactions run through our network every year are actually safe.
Well, speaking of potential risks and challenges, President Trump has made an announcement as far as an interest cap is concerned on credit cards, and I know that you don't set the rates, banks do, but the unintended consequences of a move like this, which is intended to actually make things a lot more affordable for the consumer, but what are the unintended consequences of it?
Yeah, it's an important conversation around affordability for citizens in the United States and other countries around the world. So there was a call by the president for an interest rate cap. The industry, particularly the banks, have engaged on that and highlighted the importance of the affordability conversation, but it's also highlighted one has to think through what are the consequences on the availability of credit. Now, we don't set rates, as you said, but we believe in the power of the private sector finding the right balance to ensure that credit is available where it is really needed. Imagine you need a bridge from your paycheck to the washing machine that is broken down. How do you do that? So if you don't have credit available at short notice, then that might be problematic. So those are all things to thought through. I think this is early days in that conversation. But it's an active conversation, and we'll see where it goes.
I want to talk about India. And Michael, you are a regular visitor to India. And of course, MasterCard has significant operations in India. And I know that you see India as an innovation hub for MasterCard, not just for India, but to innovate for the world. What's the latest on India?
Yeah, so there's always the latest for India. Earlier we were talking about payment trends. And if you think about how these payment trends play out in India, so yes, by many standards, the largest digital economy in the world. We talked about this many times before with the India tech stack, pulling more people in. So if you think about the cybersecurity trend, for example, that is really needed. So is the Indian economy, India as a country, focused on cybersecurity? Absolutely. So big praise there, in fact. So we have an MOU with CERT-In, your national cybersecurity agency, to ensure that across the board the ecosystem is secured. So, innovations like biometric passkeys, where you look at any kind of your device and use your biometric identity that's linked to your identity database that you have built in the country, is just a major, kind of leg up versus many other countries on that. So we're excited about that. We talked about agentic commerce, so there's already conversations on where that could go.
Welcome back to our continuing coverage here at Davos 2026 from the annual summit of the World Economic Forum. We've been bringing you headliners, newsmakers, global business leaders, but we've also bringing you an insight of what Indian states are showcasing here as their stories. Remember, as I've been pointing out, this year we've seen the largest representation of Indian states, and one of the new states that's making their Davos debut is the state of Assam. Joining us now is the Chief Minister, Hemanta Biswa Sharma. Thank you very much, sir, for joining us here. So it's your first Davos. How do you feel?
I think for me it is a great experience because we came for the first time. So we try to learn, and we for us many things were new, but we try to get accustomed immediately. And last 3 days, it's really rewarding. And I am very happy that I took the correct decision to come here.
But what have been some of the conversations that you've had? And more importantly, as you said, you took this as an opportunity to learn. What are some of the learnings that you take away with you?
Yeah, first of all, what I learned, because in Assam or back in India, there is a conception that you only talk with the investor, sign MOU. So that was our limited knowledge. But coming here, when I attended many sessions of World Economic Forum, I could realize that what is coming for next 10 years, what is coming next 15 years, next 20 years, you can learn a lot. And as we are in a that level where we make policy, for a policy makers, it is very important to listen, very important to participate in various sessions in the Congress, because you can anyway meet investor in any places of the earth. But this session you will never able to experience sitting in India or sitting in Assam. So I took full opportunity. I attended 8 to 9 sessions. Today also I attended 2-3 sessions. So that is on academics. That is on the way what we should learn from this forum. Then, of course, in the evening, we are interacting with many people, many global investors, many people who wants to know about Assam. And, of course, we have also get some commitment for investment in Assam.
Well, you know, speaking of commitments for investments, you were part of a roundtable that Tata Sons Chairman N. Chandrasekhar had organized with the semiconductor CEOs. And of course, Tatas have set up their semiconductor facility in the state of Assam, which will be operational by the end of this year. Take me through what that investment, that single investment has meant for the state, and how you intend to now leverage on that investment to build out a surrounding ecosystem.
First of all, post-independent India, Tata's investment in Assam is the highest. And it has opened the eyes of other investors that no, Assam is an investment destination. Before Tata took that bold decision, nobody thought that Assam is a place where one can invest. Following that investment, we got commitment of a huge investment in Assam, that is something around rupees 5 lakhs crore in our Advantage Assam Summit. And more important, that we quickly convert 3 lakhs crore and we grounded that investment. We are now started 3,200 megawatts of thermal power, almost 2,500 power storage in form of PSP. We have started a 12 lakhs metric ton of ammonia, urea projects. We started almost 4 cement plant with 10 million ton of capacity. So lot of things has happened quickly post Tata investment. So Tata investment has created a buzz.
So the Tata investment was in a catalyst.
It acted as a catalyst, number one. Number two, we do not see semiconductor investment in isolation. Our larger game plan is to set up a electronics and semiconductor ecosystem around the Tata Semiconductor. So we quickly acquired land and we named Ratan Tata Electronic City, where now semiconductor facilities coming up. We are negotiating with Tata for another investment on electronic sector. Discussion is going on, not yet happening, but Mr. Sandra has already assured to us that he is going to bring a equal amount of investment in next 1 or 2 years. So that's the public commitment he has made. Apart from that, we are closely interacting. Tata is helping us to interact with the every institute or every company which is there in the ecosystem, because a semiconductor OSAT cannot stay in isolation. It has to get support from the ecosystem. So we are bringing some important players to Assam to support Tata ecosystem. So one, we are trying to develop a semiconductor ecosystem. Also, parallelly, we are focusing on electronic ecosystem.
You can place more, but you know, many states here, your neighboring states, at least in the India Pavilion, are offering land at concessional rates virtually free at 1 rupee 99 paise. Is that something that you would consider?
Because in every state, the industrial policy is almost same. So if Bengal provides land at 1 rupee, I'll provide land at free. Sometimes.
But should you?
I should, because it is a competition. So if nobody provides, I will not provide. But if another state provides, then I have to provide, because I can't lose out in competition. It is, frankly, it is a competition, healthy competition, and nobody wants to lose out. And people are perfectly happy that as long as you are taking care of employment, as long as you are promoting state, as long as economy is growing, people doesn't have problem on that.
So what is the one big idea that you would like to implement if you were to come back to office?
I think my big idea, I think whatever we have seen here and we have seen there, my big idea will be to take Assam at least within the 10 big states of the country. Today from GDP, from per capita, we are 16, 17. So I want to take Assam into the 10 prominent states. And at least when an investor comes, talk with somebody where I have to place the money, where I have to invest, at least people start taking Assam's name. So that's the kind of
buzz,
the kind of value I want to create around my state.
Well, Mr. Sarma, thank you so much for joining us here in Davos. We wish you the very best of luck and safe travels back, and good luck on the election trail.
Thank you so much, and thank you for inviting me to your show.
Our pleasure entirely. That is the Chief Minister of Assam and his takeaways from his first Davos. And of course, he heads straight to the election trail as soon as he leaves Davos, but with the promise of putting Assam in the top 10 states of India. We're right outside the India Pavilion. This is where Indian states are showcasing their individual stories to the world in Davos. Joining us now to talk about the state of Gujarat is the Minister Harsh Sanghvi. Many thanks for joining us here on CNBC TV 18. Let me start by asking you about how the meetings have gone so far, what's the level of interest, and any specific sectors that people are talking to you about.
Shirin, I'm representing India, although I'm Deputy Chief Minister and Industry Minister of Gujarat. I'm here with clear vision and mission to develop aggressively industry in my state. I want to handhold and nurture industries of Gujarat to make them national champions in first phase. And in second phase, I want to see them as a global leaders in their own field. So we are in Davos for the first time.
Right.
And we are having a delegation of 5-7 officers from various departments. Science and technology, industries, Dholera, Gift City.
Yeah.
So here in Davos, we have met various industries, various sectors, such as AI, textile parks, textile industries, various manufacturing sectors, GCC, and other financial models. So we are here not for just MOUs, and we are not running behind MOUs actually.
Right.
Because we have a trend of vibrant Gujarat in Gujarat since many years.
Yes.
In 2024, Vibrant Gujarat, we have got proposal of more than 45 lakhs crores MOU. And in recent, we have launched a regional Vibrant conference, which has been in Mehsana and Rajkot recently. In very short time, we have got a proposal of more than 9 lakh crores MOU. We are here to find a new way, new opportunities, and it went very well.
Okay.
You have seen it very well that how India is representing in Davos. When the world was sleeping at 7:30 a.m., India House was full packed.
Yes.
It was jammed. And the way international interest is getting, you can see a new India. You can say New India is performing one of the best. So for the first time, everyone is speaking, everyone is talking that no one has ever imagined that Assam, Jharkhand, and other states will be in Davos.
Yes.
Yes.
You
So
know,
this is a new trend.
Yes, it certainly is a new trend. We've seen many new states
Yeah.
make an appearance here in Davos. But, would it not make sense for you to focus on your strengths, which are really manufacturing, as opposed to going
Obviously.
down AI, etc., which are strengths for other states? So do you intend to double down, for instance, on manufacturing?
We are we have already proved our capacity in manufacturing, and we are doing very well. But we are, finding some more opportunities in other fields also. And you can see the Gift City, Dholera. These are one of the most favorable platform for any other fields also. So we are just finding opportunities.
Right.
Although we are working very well in getting new investments in manufacturing. Before coming to Davos, the same day we have done MOU with Maruti of 35,000 crore.
Yeah.
So once this a new expansion of Maruti will be done, only Maruti will manufacture more than 20 lakhs car per annum in Gujarat. So our major focus is on manufacturing only.
Commonwealth Games, that's the next big opportunity that's coming up. What can we expect on that front in terms of an infrastructure build out and how the state prepares itself for the same?
So you are aware about Gujarat. Gujarat is always ahead in infrastructure wise. So not only Commonwealth Games, we are also getting international police and fire games in which more than 12,000 athletes will take part. The numbers are equivalent to Olympic. In 2030 Commonwealth, we have already planned out for infrastructure, and basically we are not getting Commonwealth just for an event. We are getting it to make a culture, sports culture in Gujarat or India. So infrastructure will be ready by 2028, end of the 2028, and the major Sardar Patel Sports Corridor will be ready by 2029.
Okay.
Yeah.
And then the aspiration for the Olympics.
Yeah, obviously. We are working on it, and you know it very well that India is now a superpower. We have good ideas, and I hope we will get Olympic for sure.
So 2026, what should we look forward to from you in terms of next steps, big announcements for Gujarat?
So we are working on getting more and more investments, more opportunities for the people of Gujarat. And as I told you, as I said right now only, that I want to see industries from Gujarat to be a national champion, global leaders in their own field. I want to be handhold and nurture them, and we want to make Gujarat more accessible for all the global companies in all sectors.
Well, we wish you the very best of luck with that. Thanks so much for joining us here in Davos. And it was nice to speak with you and nice to meet you as well. Well, that is the Deputy Chief Minister of Gujarat taking us through the conversations that they've been having here in Gujarat and more importantly, the next milestones that the state is working towards. We'll take a break here on CNBC TV 18. The conversations will continue. We're right back with you in a moment.
Bye.
Hello and welcome to this special broadcast right here on CNBC TV 18. We're coming to you from the office of OpenAI right here in New Delhi. We're coming to you after OpenAI has completed a 4-city hop, what they're calling a not-profit jam, stretching across the cities of Bengaluru, Mumbai, Kolkata, and then finally ending with New Delhi. This jam essentially aiming at a workshop to ensure that there's greater acceleration, encouragement for the social sector to adopt and to implement AI devices, AI technologies for furthering their social goals. Let me begin by asking, I remember this conversation that we had a few days before the jam, when you talked about how you're seeing similar faces when you talk about the social sector and that you're keen on having more penetration. At the end of this jam, can you give us a sense as to the number of stakeholders you've met, some of the ideas that have come to your table, some promising use cases that you came across that you think could be game changers if implemented at scale?
Yeah, you know, as always, Ashmit, you packed a lot into that question, but I'll kind of break it down and thank you for doing this and being here. It's been just an incredible last about 4-5 days, traveling across the country and meeting these nonprofits. And when I joined OpenAI in 2024 as their first hire, I would go out and talk to a lot of nonprofits, and that's also because I noticed that nonprofits were at the bleeding edge of AI adoption and transformation. compared to the enterprise or even the startups for that matter. And they were really leaning in and understanding the value and impact that AI can bring both in their work and also the communities they serve. And that's also because nonprofits are, always working in a very strapped situation, whether that's resources, whether that's, just economic and fundraising. And so they really leaned on tools like OpenAI to make sure that they build in internal efficiencies. They're able to, do a lot more with just one person on the nonprofit, and then be able to obviously take it out in their communities and serve not just thousands, but lakhs of people. So we had over 200 nonprofits who came and participated across in these 4 cities. And again, we partnered with Karya and with Vadvani to do this, but with a clear goal to making sure that AI is accessible. How can we remove friction, and how can we make sure that we democratize access of OpenAI tools for nonprofits to be able to serve their communities at scale and meet them where they are.
Ankit, let me come to you. Haq Darshak, you're the co-founder there. Tell us about how you're engaging with this technology, how it's helping you, and at the same time, some of the challenges that you face.
At Haq Darshak, we've essentially built a database of government programs in India, and there are theoretically 20,000 government schemes in state and center combined, which keep changing with every elections, every budget year addition. So I think when we started 10 years back, we were building this database literally state by state, department by department. So what took us about 4.5 years between 2016 and 20 to build a database of 7,000 schemes in 14 languages. In the last 2.5 years, when we've revamped using OpenAI, using platforms and workflows, we've been able, now we can update a scheme within 24 to 48 hours. And in all local languages because of the models that we've built. So that just means that any change or tweak in eligibility can be put up in the system automatically in all languages, verified, tested, and to our field agents and field partners. So that's been a big change. Also, information on government schemes which is made simplified. If you read through the government documents, none of us will be able to make any sense. They are in pure Hindi or pure Marathi or pure English. So even the simplification of the regular day-to-day language of how to understand a government program and what it takes in terms of documentation, access, for a farm worker, for a gig worker, for a construction worker. So that's something that has really helped. In terms of the challenges and a lot of ways to go, I think, like Pragya was mentioning, I think social enterprises, social organizations are always constrained with budget. Ideally, in a country like India, where majority of the data is resting with the billion who are still not effectively probably using AI, we as social enterprises need to spend a lot more on R&D.
Right, Aditya, coming to you, when we talk of diversity that the Indian market offers, what I want to get a sense on is that when we talk of the models that we're currently using, trained on international data, the question that naturally arises when we talk of the Indian social sector is, do they have enough local understanding, local context to help address some of the requirements of the Indian NGOs?
Yeah. So firstly, we have to look at, all these sort of large language models, and there's a lot of information available in the public in terms of how good they are and the rate of progress that we're seeing over the last few years. So just out of the box, when you access a ChatGPT, you're able to see, or other such models, you're able to see that these models are very good. They can already do a lot of things that can add a lot of value in the social sector for smaller organizations or even mid to large scale nonprofit organizations. Having said that, what you just said about contextualization is really important because these are, as the name suggests, they're large language models, often for specific use cases like the ones that were just talked about. There's a lot of local language, a lot of local sort of context, nuance, cultural sort of aspects, diversity that are very specific to how the AI is being applied in that specific use case, what the data that's inflowing into the system, and what's the output that's going to be useful to the user in that particular context. So for that purpose, often fine-tuning these models, collecting local data, contextualizing these models is a very useful step in order to help trust and adoption from the user and the institutions.
We'd like to end this conversation here, but do keep watching CNBC TV 18 as we build up to the AI Impact Summit. We will be reaching out to some leading stakeholders to get you a gist of the key conversations that you should be keeping an eye on at the summit as we head into February 2026. Thank you so much for watching.
Hello and welcome to CNBC TV 18 special coverage here from the World Economic Forum's annual meeting in Davos. I'm Shireen Bhan, and we've been bringing you headliners, global business leaders to help understand what 2026 holds. What is the promise, the possibilities, the risks and the challenges. Joining me now is someone that we have had the pleasure of interviewing on the channel for many years, but more importantly for the last 3 years since he took over at Cognizant and put a turnaround plan in place. Ravi, thanks very much for joining us here on CNBC TV 18. It's great to have you back in Davos, and 3 years on the clock.
Yeah, thank you, Sharon. I've met you every year at Davos in the last 3 years, and we've spoken about progress. So thank you again for hosting me.
Well, so 3 years on, I want you to give us your report card.
So Shireen, if somebody said this is what I'm going to get at the end of 3 years, I would take it. I would say the first 3 years was about stabilization, and the next 3 years is actually going to be about bold bets. In the first 3 years, we climbed up the charts, and on relative scale, till the end of Q3, which we have publicly announced our earnings, we are on the upper quartile, top performance on relative scale. So I'm very happy with where we are, but looking forward to the next 3 years, which is going to be big bets and bold bets.
When you talk about big and bold bets, explain to me what those will mean in terms of investments, the kind of investments, and the size of investments as well.
Yeah. So Shireen, when you go back to the history of companies like ours, way back when we wrote custom software, bespoke software, we were called builders. We assembled everything for clients, and we translated that to enterprise transformation. Here we are, fast forward, with 2 generations of enterprise software, one with SaaS and one with on-prem software. We relegated our roles to a system integrator. Now with AI, we get to build bespoke agentic capital, so we can go back to being the builders, which means we have a much broader role and a much bigger addressable spend because technology is intertwined with operations of companies. So not only are you addressing the technology needs, you're addressing the transformation needs of operations of enterprises. So I see this as a uniquely big opportunity. I kind of spoke about it. There are 2 swim lanes on which this opportunity falls into. The first is to take classical software, which we wrote for the last 2 or 3 decades, and write it in a different way. Write it alongside machines. And Cognizant ran this vibe coding event where we got all our employees, in fact 250,000 employees on a Guinness Book of Records, vibe coded concurrently. And that's the culture we are inculcating for writing software for the future in a very, very different way alongside machines. I believed in the paradox of doing more for less, and if you do more for less, you get to do more. The second swim lane is building agentic capital, which is very different to software development cycles. It is agentic development cycles. I call it software 2.0. And what you can do here is the art of the possibilities, because agentic capital, or writing software which can be assisted by machines, is software which you can write if you can verify it with humans, versus software we wrote before, which was about software we wrote which was specified by humans. So it's the opportunity is much bigger, but equally we have to disrupt what we did before and do it differently.
Well, I'll come to what you're going to do differently in just a second, but speaking of big, bold bets, you did publicly state that you are looking at the possibility of a secondary listing or an IPO in India. Where have things progressed on that front? How close are we to an actual decision being taken?
So Shireen, we are working with the regulators in India. The last time something like this happened was many, many years ago when Standard Chartered did this. Right now, we will be the first company who is attempting this, which means we have the burden of actually helping the regulator to work alongside us to get to the finishing line. So that's a journey we have to go through.
How close is the finishing line?
Regulators in India are very receptive for new instruments. This is an American listed company which has the opportunity to list in India as a secondary listing. I mean, that's what Indian companies did in the 90s. They actually listed primary in India and then they went to the US.
Yes.
We think we have a pool of investors in India who are very keen to invest into tech services. Tech services is a proxy for AI. We also think there's a lot of mutual fund money which is being fed from the middle class of India, the vibrant middle class of India, we think we can capture that opportunity for Cognizant and get a new category of investors. It's going to be a journey to do this, but we'll give it a try.
And what are the questions the regulators asking?
I mean, there are a variety of things because this is the first time we are doing it, but they are in a constant dialogue and we are iterating, and it's very constructive. So I'm very pleased with all the meetings we have done.
And do you think 2026 could be?
Hard to say. I mean, these are things which is very hard to say, but we're going to give it a try.
Okay.
We should do everything what our shareholders will get value from, and if we can attract new shareholders. Look, IT services is a bellwether industry in India. It has retail investors, it has mutual funds, it has index funds like pension funds in India which are invested. So it's a very attractive proposition.
Well, we'll see if 2026 is the year that the regulator gives you the green light, so to speak, for a secondary listing in India. But I want to go back again to the big bold bets theme that you laid out for us as you look at the next 3 years now. Acquisitions, that's been a big part. You've done a very big one with Belcan. What is the appetite that you have now for large deals, for large ticket acquisitions, large ticket M&A?
Shireen, I've always believed that M&A should be layered with organic growth. We've got our organic growth back. We've got it back with a relatively higher growth than the rest of the peers in the industry. So it's our opportunity to look for big bets. And the big bold bets could be on AI, building platforms. We're a platforms company. Way back in 2017, we bought Trizedo, and we translated that to being the #1 healthcare service provider in the market. So we have a culture of platforms, and we have a variety of other things which we could do. For example, our presence in Europe, our presence in Asia Pacific is lower than our peers in terms of percentage of revenue. So we could address that. We could address industry verticals. So there's a lot of things which we can do and integrate M&A to organic growth. I'm a big believer that organic growth has to be the foundation on which you do M&A. But right now, here we are, now that we're getting into this phase where we believe we have the confidence. I mean, our attrition rates are on an all-time low, our customer satisfaction scores are on a high. We are the only company in our peer group which actually audits percentage of code written by machines and assisted to humans, and we actually put it on our earnings. So we are excited about our large deals. We are excited about the ecosystem we are now operating in. So M&A is a good one to layer on. We are also investing into partnerships. We put up a partnership with Anthropic. We put up a partnership with Google. We put up a partnership with Microsoft. And we think as a builder, it's not just about lending a human capital. We want to own that value chain all the way from LLM access to compute, to platforms, to human capital, and give it as a bundle to our clients so that our clients actually buy services from us as a builder and draw from us, and we own the risk and the outcomes in a way. This is the first time in tech services we have the unique opportunity to price ourselves with outcomes versus pricing linearly with effort, and that's a big bold bet we want to take as well.
You talked about the fact that you're now verifying how much of the code is being done by machines or by AI. What does that number look like today, and what is that number potentially going to look like?
So at this point of time, 30% of our code is assisted by machines. That number can go all the way to more than 50%. And when that happens, more code is going to be written. I mean, that's the paradox of technology. It has the elasticity that you could actually do more. I mean, what's going to happen though is the capability you need is going to be very different. AI is like a quarterback. It's going to be in the middle. We're going to have jobs on the front which are related to authentication, ideation, problem finding. And on the other end, you're going to see verification and validation jobs. So we are going to see a ton of jobs on both sides with AI being in the middle, and that's why I call it a quarterback.
Well, it's very, very clear that you have now firmly switched to the US. There was no cricket analogy. You brought in a quarterback and a football analogy into the conversation. But Ravi, I know here in Davos you're going to be talking about what AI is going to mean as far as jobs are concerned, what it's going to mean as far as the workforce goes, and you're slightly more optimistic than many on that front.
Yeah, so the pivot on AI today has been to look for opportunities where it can displace human capital. That is a wrong thing. It's not going to take us far. The real pivot has to be about amplifying the potential of humans, and that's the real pivot. What's really going to happen is in the future, and that's what we hope we would do, is we take AI tooling and embed it into the workflows of companies, embed it into the process flows of companies, embed it into the rhythms of work. And when we do so, you're going to actually see more productivity. And if you see more productivity, it's going to be deflationary growth. And that's what the world is looking for. The world is looking for growth which can happen with increased wages, lower interest, and lower inflation. And it is in some ways an opportunity for us to do that. I mean, productivity has not gone through a bump for the last 15 to 20 years in spite of technological advances. This is a unique opportunity to do so. I think we're going to see a significant number of jobs going away, but we're going to see a significant number of new jobs coming in. We did research at Cognizant. We did it in 23, and then we updated with a new version in 2026. And 93% of the jobs will have some connection to AI embrace. But what we have actually been fascinated about is the velocity of change from 23 to 26. 50% exposure, almost 60% of the jobs have more than 25% exposure, and 30% of the jobs have more than 50% exposure to AI. So the point is, if you can pivot this in the right direction, you can translate this to digital labor, which can integrate with human labor, and the human labor uses digital labor to amplify themselves. We're going to live in a very different world.
welcome to this special broadcast. We're coming to you live from CNBC TV 18's open studio here in Davos on the High Street, the Promenade. We're joined by a company that is making big, bold bets, in the words of its CEO, as it looks to the next 3 years. Surya and Jatin, many thanks for joining us here on CNBC TV 18. Always a pleasure to have you with us. Surya, let me start by drilling this down to what is happening in America. The focus here in Davos 26 is all about President Trump and what President Trump is doing. But from your client's perspective, what are you seeing in the U.S. today?
First of all, thank you, Shireen, for having your show again here in Davos. Well, you know, across the American clients, based on the guidance that we gave in Q3 and the commentary from the peer group, there is definitely acceleration as we exit 2025 into 2026. So, well, you know, that could be read as optimism in one format, but the clients will finalize their budgets towards February or March of this year. That's exactly when we'll know if the aperture is opening and if it's opening by how much.
But what is the sense that you get? Do you believe that it's likely to open and be better than the previous year?
Well, there is no negative signal so far from clients on their budgets.
The only reason I'm asking is because there's so much uncertainty and everybody's talking about the geopolitical uncertainty and the geo-economic confrontation and so on and so forth. But you're saying that there's no visible indication of that impacting investing sentiment.
That has leveled out in many ways, Shireen, over the last few quarters, the geopolitical tensions, the tariffs and other issues. So now the clients are feeling the pent-up demand. So while there is no clear signal yet, but there is no negative signal that it's going to be, you know, worse than this year. And added to that, across the industry, we are seeing that there is acceleration in Q4 compared to Q4 of last year.
That's right.
Which makes us believe that, you know, hopefully 2026 is the year.
2026 is the year. What is that going to mean, Jatin, in terms of the kind of growth that we can expect over the next 3 years? I know that Ravi said, you know, the company has stabilized. The turnaround plan that was put in place has delivered the results, but now it's time to accelerate. It's time to go for big, bold bets. What is that going to look like, you know, in terms of numbers?
So let me take a step back and share for first 3 quarters of 2025 on the growth table, our position is second. So we have clearly demonstrated that we are accelerating even if the environment is slowing down or is unsure. As we look at next few years, we have articulated that we want to be in a top tier growth company, relatively speaking, with our peers. We want to continue to expand margins in a gradual manner. And we are making all the right investments. We were the first to invest with Anthropic in creating a go-to-market partnership. We were the first to speak about $1 billion investment in AI. We are putting right stakes on the ground to convert whenever the flow of demand comes. We'll be ready for it.
Well, speaking of the flow of demand and speaking of opportunities, I mean, M&A has been a large part of where the growth has also come, 250 basis points on account of M&A. Do you see that being a big lever and a big driver of growth going forward as well?
I would say yes, not from the quantum standpoint, but the impact that M&A can make in times like this, where it can provide you an exit velocity or escape velocity, which is very different than any other players, because you bolt on something which is really transformational. So yes, it is going to be a critical component of our growth strategy. One of the things that we have always spoken about is AI is our big thing, and we invested in 3Cloud. It is right in Surya's domain, where we have invested in a company which has grown 20%. So clearly it is operating in the sphere of double-digit growth that you are speaking about, and we will continue to invest in businesses like that.
Well, you know, investing in businesses of the future, investing in capabilities of the future. What we are now starting to see the business model pivot to, which I'm hearing from your peers, is outcome as a service. So, you know, break that down for me. At Cognizant, what does that mean exactly? How are you doing deals differently? How are you pricing deals differently? How's the customer expectation, the fulfillment expectation changing?
Actually, Shireen, outcome as a service, the concept is not new. It has existed for many years now. But it's a different story that we did not engage with clients or contract with clients in that format in a broad way. But now with AI proliferating everything, impacting everything, clients are looking for partners who have skin in the game, who can share the risk, and who can vouch for the outcomes. So they're beginning to push us on contracting, in contracting for outcomes, in contracting for the business outcomes and KPIs, where we co-invest with the clients and share the gains. So yes, we have started structuring some of our large deals in that format, where we have gain sharing, outcome-based, kind of things. But yes, that is going to be.
Is that where the playing field is now moving to?
It is pivoting towards that. It is pivoting towards that. But well, it's while the deals are far and few at this point, but we see the directional pivot in that aspect.
But speaking of deal flow, and it's been good, it's been strong, in this quarter for you as well as for your peers. What's the sense that you get in terms of transformational deals? Are we now likely to move to those being much more frequent? And what is the typical deal size that you envisage going forward?
So if you look at the past 12 to 18 months, Shaveen, most of the activity was on the productivity space, leveraging AI to unlock the productivity across the tech stack, across the enterprise. So we have seen a ton of large deals in that format. Now we are beginning to see the deals which are graduating upwards, which we call it as industrializing AI, which includes getting the data layer ready, building the entire tech stack, and then again building the agents and the hierarchies of agents and the orchestration. Recently, for one of our healthcare clients, for the last 12 to 18 months, we have helped them unlock the productivity in their tech estate. Now we are graduating to help them build the entire AI stack. And not only that, we are also helping them build the AI agent hierarchies. So we have structured a large deal with them. And so we are seeing many such deals in the market. And we also want to pivot in that direction because it helps both ways. So.
Well, speaking of making the AI pivot, which as you both pointed out is a big focus and a big priority area for you, we're now starting to see your peers also give out AI-specific revenue. But what do you make of it? Some believe that this is, if everything is AI, then do you really need to move to a different line as far as AI spends are concerned? And should there be a more credible, more transparent way of measuring that?
Actually, we have dealt with it in the digital era. If you recollect in 2014, 2015, 2016, and suddenly we started seeing that everything is digital, so everyone backed off. I see a similar syndrome here. I mean, AI is ubiquitous right now. So AI is in every project we do, in every deal that we sign with our clients. So AI is there everywhere. Rather, the more quantifiable and more credible measures would be what we just spoke earlier, defining the right outcomes, AI-driven outcomes. AI, whether it is driving the business value, business growth, or the margin improvement for clients, or for example, for one of our clients, we have discussed with them on a KPI which includes launching products much faster than they did in the past. Let's say earlier they took 6 or 8 months to launch a product. Leveraging AI, we said we're going to commit to launching it in 2 months or 3 months, as an example. So things like that are more credible than, rather than declaring, AI revenue. And in fact, we were the first ones to go to the street and start declaring the AI projects, which we are still doing. But now the projects are increasing in number, and almost every project has AI component now.
Yes.
So, I mean, I'll just add on to Surya's comments. We have started publishing our own view of what we think is relevant, and that is revenue per employee and profit per employee. Because finally, AI in every shape should drive a superior throughput or superior positive GDP with lesser human effort. So that's what we have started doing. So that was just to round off on what Surya was saying.
Well, one of the big possible events in 2026 is likely to be the regulator's nod to going for a secondary listing in India. And I know that there's a lot of back and forth at this point in time with the regulator. But Jatin, how do you believe that could change things for the company?
I think there are 2 or 3 very important strategic rationale for us to consider it. One is we have a large base of our employees to whom today we probably are not able to offer ownership as easily as we would like to. The second is we are a large brand, large presence in the country, and if we are present on the stock exchange, it only further enhances our employer brand. And third, there are investors in India who know us well, who track us today, but today do not have a direct access to investing with us. So we are clearly something that we find a lot of merit in. As we have discussed, we continue to work with our partners to understand it more, look at how the rules work, and see where this goes. But we are looking at it closely.
Okay, looking at it closely, and we'll know which way the regulator decides to move. But what do you believe, Surya, will be the trends that will shape 2026? I mean, a lot of the AI-related work, and again, I was pointing out that last year, the messaging, for instance, here on the promenade was much more in your face. Everything was AI. It's a little bit more subtle and nuanced today. So are people finding their niches? Are people finding their specializations? And what does that mean then for Cognizant?
Actually, across the spectrum, Shireen, the clients have now leveled out on the hype curve. So now it's not hype anymore, it's the reality. So clients are pivoting more towards, how do they infuse AI across their tech stack? What is the ROI? Because for the last 2 years, a ton of money has been spent at the chip and the infra layer. Now there is a pressure in boardrooms across our clients asking for ROI.
The question staring me literally in my face right now is where AI meets ROI. Is that being answered?
That is going to be one of the significant trends where every single client of ours is going to think that is one. And now making AI real. Last year we spoke about pivot from experimentation to scale. So it started happening, but albeit not at the pace that we wanted to. But now there is a forcing function on the client side that they have to adapt and enable this at scale, and then start having the ROI conversation. And these two are going to create friction, and that's going to be a significant trend in my opinion.
Hello and welcome. You're watching News Center with me, Parikshit Luthra. Lockheed Martin is considering setting up a final assembly line for the C-130J Super Hercules military transport aircraft in India. This would be its first such facility outside the United States. India is looking to procure 80 new military transport aircraft, and Lockheed Martin is pitching the C-130J as a strong contender. The C-130J is a 4-engine medium transport military aircraft designed for tactical missions and capable of operating in harsh conditions. Lockheed Martin has delivered more than 560 C-130J aircraft worldwide, with 28 operators across 23 countries. The Indian Air Force currently operates 12 C-130Js. To understand how the aircraft could bolster the IAF's airlift capabilities, we're joined by Rob Toth, Vice President, Strategy and Business Development, Air Mobility and Maritime Missions at Lockheed Martin Aeronautics. Mr. Toth, thank you so much for being with us. India operates a C-130 Hercules aircraft. The requirement is 80 more. Could you give us a sense of the kind of improvements to the aircraft you're offering to the Indian government?
Sure. I'd like to start off with discussing the 12 airplanes that are already operated by the Indian Air Force. The 12 C-130J-30s that are operated by the Indian Air Force really brought a tremendous capability to India, not only for operations for their special operations, but for humanitarian operations in the country. As those airplanes have been operated here in India, we have continued to evolve the C-130J, and we will continue to evolve it as we bring on new capabilities, hopefully winning the competition here for the medium transport airplane.
Right. Could you give us a sense of the kind of investments you've already made in the Indian ecosystem, and how important does your Indian partnership and Indian infrastructure play in the global ecosystem of Lockheed Martin?
Yes. So Lockheed Martin's been proud to be here in India for the past 30 years when we established an office here in India. About 15 years ago, we established 2 joint ventures in Hyderabad with our partners at Tata. And those 2 joint ventures have really been the catalyst for developing the aerospace and defense ecosystem within India. From those 2 joint ventures, we've done a significant amount of investment in India in growing the global supply chain. Right now, we have over 500 different Indian suppliers that are providing support to those 2 joint ventures in Hyderabad. In addition to that, we have about 90 different Indian suppliers that are importing parts into the global supply chain for Lockheed Martin. And that includes 140 MSMEs, so medium or micro, small, medium enterprises for the Indian ecosystem. So it's really been that long-term commitment that we've had here in India, and we continue to grow that and look at opportunities to expand the capability within India.
Right. I would also like to ask you that when you speak about the C-130J, how does this score over other aircraft of its kind, other military transport aircraft such as the KC-390 or A400M in terms of capability, cost and industrial benefits?
Yeah, so as far as industrial benefits, I talked to a little bit of those. And the industrial benefits really to India, you can look at what we've done with the C-130 here in India with the C-130 empennage, or the horizontal and vertical tail section of the airplane. When we made our investment into our joint venture in Hyderabad with Tata, we started producing the C-130J empennage here in India, and that structure is 96% indigenous content here in India. And then it is exported back to the United States and assembled into all C-130s coming off of our production line in Marietta, Georgia. The last 250 C-130s built have had an empennage from India built. It is the sole provider of that section of the airplane coming out of India globally. So we will continue to look at opportunities where we can compete different structures on the airplane or different capabilities to have them produced here in India, and we'll continue to do that forward. When you look at what the C-130J brings to India as far as capability, and